insurance entities. Yash is joining in with more details. Yash, good morning. Take us through the contours of this deal.
Well, that is correct. As you rightly pointed out, a big shake-up when it comes to the general as well as the life insurance market. Bajaj Finserv and its promoter companies will acquire the entire 26% stake which is held by Allianz SE in both the life entity, that is Bajaj-Allianz Life Insurance, as well as the general insurance entity. As far as the deal is concerned, it will give 100% ownership to Bajaj Finserv and its promoter entities in both the insurance entities, and the share purchase agreement for the same transaction was signed just yesterday. As far as the money which will go towards this transaction is concerned, Bajaj Finserv and promoter companies will pay about 13,780 crore rupees for a 26% stake in Bajaj-Allianz General Insurance. Now that will value the general insurance entity at more than 53,000 crore rupees. Also, for the life insurance entity, about 10,400 crore will be paid, which will value the life insurance entity at more than 40,000 crore rupees. The deal, as per valuations, is being done at a fair valuation to what the industry valuation currently trades at. In terms of the final shareholding after the acquisition of 26% stake in both life and general insurance entity, Bajaj Holdings and Investments, which is the listed holdings company, will acquire the majority stake out of this 26% of 19.95%. Bajaj Finserv, another listed entity, will acquire about 1.01% stake, and finally Jamnalal Sons will acquire about 5.04% stake when it comes to, out of the 26% stake in both life and general insurance entity.
Indeed, Yash, thanks a lot for that update. We'll keep an eye out on these names, as Yash mentioned and Sudarshan also mentioned a few minutes earlier, both Bajaj Finance, Bajaj Finserv, and of course, Jio Financial Services. We take a short break. On the other side, we get your cues from the commodities market. Stay tuned. Welcome back. Now, as President Donald Trump's tariff policies continue to keep the equity markets on the edge, there have been significant news points and developments that need to be highlighted. And today, in our special segment, Trump Watch, Diya Epen wraps up the latest developments.
U.S. President Donald Trump announced on Monday that Chinese leader Xi Jinping would soon visit Washington as trade tensions continue to rise between the world's two largest economies. If the visit occurs, it will mark the first meeting between Trump and Xi since the Republican leader returns to the White House.
We had the head of China coming in to top people right underneath President Xi, and he'll be coming in the not-too-distant future. When we had India last week, we had France last week, we had a lot of people. We had Ireland, we had UK, and they come in, and I say, how's it looking? They say, oh, it looks much better.
Moving on to West Asia, President Trump has warned that any future attacks by Yemen's Iran-backed Houthi rebels will be treated as actions taken by Iran itself. He emphasized that Iran will be held fully responsible for any assaults on the U.S. and foreign vessels in the Red Sea attacks. Taking to social media, President Trump stated that he will authorize his administration to ramp up coal power production. This move is aimed at countering China's economic advantage stemming from coal-based electricity. Turning to economic matters, Trump's top economic advisor, Kevin Hassett, has cautioned that the U.S. tariff agenda continues to create uncertainty for the global markets. Despite this, Hassett expressed optimism that the administration's upcoming reciprocal tariffs plan set for next month will bring more clarity and resolve some of the existing economic instability. Let's listen into what he had to say.
Between now and April 2nd, there'll be some uncertainty, but as April comes along, markets will see that the reciprocal trade policy makes a great deal of sense, and that for a lot of countries, they play by the rules. They're not going to be very upset at all at the way that the U.S. moves.
That's all for today's updates surrounding President Trump's actions both domestically and globally. Back to you, Hormaz.
Diya, thanks a lot for that update. Diya, Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. What's on your radar today?
Well, all that has been happening, and we've been hearing about in the global markets, Hormuz, that there is one thing that is unstoppable, and that clearly is the gold prices. Now, not just touching $3,000 an ounce, but holding above it at this point in time. The U.S. dollar index at a 5-month lows, and all the data that we have seen coming from U.S. has been on the weaker side, whether it is about retail sales, new home builder sentiment, New York manufacturing contracts, all of these numbers have come in on the weaker side. And to top that, OECD now has cut G20 growth forecast as well. So that clearly seems to be supporting the gold prices. We also are looking at various central bank meetings this week from US to Japan to UK, and that would give you further direction as well. So while the gold prices continue to trade firm, what is also following is the metal prices. Copper, after 1.5% gains in the overnight market, is now trading near 10-month highs in US. The U.S. aluminum prices also are trading near 9-month highs. We've seen strong gains come back in case of zinc as well. That one is trading high. Tin is trading at a 4-year highs. Nickel prices at near 2-year highs. So all metals, precious and base metals, have started Asia yet another on a very positive note.
Well, all that glitters is gold and possibly metals as well. Manisha, thanks a lot for that. We call time on this edition of Power Breakfast with that update from me and the team that put this show together. Thank you so much for watching. Bazaar Morning Call sets you up for the day's trade.
be speaking to President Putin on Tuesday. A lot of work's been done over the weekend. We want to see if we can bring that war to an end. Maybe we can, maybe we can't, but I think we have a very good chance. We're talking about land. It's a lot of land. It's a lot different than it was before the war, as you know.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call, Tuesday morning, and we've got positive cues from Wall Street again, second day in a row, and I think that's good news, bodes well as we start our own session. Yesterday was a decent session as well. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Mangalam. Guys, hi, good morning.
Hi, good morning. There's some red, there's some green. I wonder what's it going to be, but I think we're giving you both the options today between Mangalam and myself.
You know, I'll tell you what, in sport, they say you celebrate small wins as against looking at the larger target here, right? We're celebrating small wins. The good part is yesterday we managed to close above that 22,500 mark. The FIs, yes, they sold in the cash market, but DIs bought a lot more. So we had net inflows coming in. And all said and done, crude is contained. All the other macros are contained. So small wins.
Small wins.
I'll tell you, expectations low.
I'll tell
the last 5 months have sufficiently lowered those expectations, I think.
I'll tell you small wins. You said in sports, celebrate small wins. I think in life also celebrate small wins. I'll tell you a small win I had this morning. I boiled eggs without breaking them.
Oh, wow.
Brilliant. Excellent. On that optimistic note.
I played 3.5 hours of paddle yesterday
nice.
without breaking anything else. So, small wins, small wins.
All right, well, let's just take it from the start then in terms of what you need to know as we begin another session. And, as I said, second day in a row, you had the US markets which were higher. S&P was up about 0.65%. It's the first two-day gain for the S&P since February. And that's saying something, right? I mean, and this is the question we put out yesterday as well, that is the US market correction ended. From the high to the low, it was about 10%. Typically, 10% is a turnaround point. The dips get bought. This time, though, like every time, I mean, every time is new, but it's also the same in some ways. And there is a lot of uncertainty into that April 2nd reciprocal tariff event. But anyway, Nasdaq was up about 0.3% as well. But the mega cap tech pack ended lower. So you look at Tesla, which was down 5%, Nvidia, which was down 2%, Amazon, which was down about 1% as well. So, what did well? The China ADRs did very well. You had a bunch of telecom stuff which did okay. Consumer names did well. But mega cap tech essentially is what has led the US markets higher. And of course, I mean, it's led to this, I don't know about US exceptionalism, but stock market exceptionalism for sure. 10-year yield down 2 basis points, nothing. I mean, dollar index was down about 0.25% as well. I mean, I think that's more meaningful. 103.46 on the dollar index. Again, from the year-to-date highs, the dollar has slipped almost about between 5 and 6%. US February retail sales print was mixed. The control group was better, but largely mixed. The prior number was revised a little lower. And I think it kind of tells you that this, economic momentum, there is a bit of a loss in economic momentum as well. High frequency data seems to indicate that. Two things to watch out today. The Trump-Putin phone call on Ukraine-Russia war is today. And expectations built up quite massively about 2 or 3 weeks back that a resolution around the Munich Security Conference time, that a resolution, some kind of ceasefire is around the corner. But, well, that those hopes faded. There's a phone call today, and Trump has promised that he'll have something for his audience and all of us a little later. So hopefully maybe a ceasefire. And of course, the German parliament will vote on the fiscal package which has been proposed. And that typically happens towards the end of the European session. So we'll see what happens. I mean, it'll be after our session for sure. And that's a big one. Europe has started to, do well. And many are wondering whether other EU countries will follow the lead. France and other countries as well. How much they're able to, because it's a pretty dramatic shift with Germany is embarking on. So I think it's important in that sense. And of course, from an equity perspective, I mean, it throws up more opportunities, more options in the world for global investors. All right, let's just tie in the levels here. Nifty, of course, tested the 20-day moving average yesterday, but could not close above it. The number is 22,561. We're about 50 points, 52 points away from that number. So, that's the first level on the upside. And then 22,676, which is the high, the recent high, needs to be taken out for the market to do better. The supports remain the same, which I put out yesterday as well. Some more distance after yesterday's 0.5% move, 22,315 on the downside, 200 clean points away. And then below that, you got the 22,236, which is the retracement, 61.8% retracement of the 700-point rally that we had from the lows. For the Nifty Bank, the resistance comes in at 48,520 and then 48,839, which is the daily swing, high, 48,839. And support, of course, now is 47,700, which of course is the low that the Nifty Bank saw last week. GIFT Nifty will give you a sense of how we're likely to start. 160 points. Is that momentum going to start to come back a little bit? I'm not so sure that momentum is coming back now, but I think, as we've been saying, the signals are there that the texture of the market is changing. It's not selling the rallies. Maybe at the margin, it is trying to buy the dips wherever they may emerge. Just one thing, broader markets yesterday did see advanced declines skewed towards what was down, not up, although volumes were with stocks which were higher. And I think that is also at the margin indicating that even though it's not all clear, but things are perhaps improving there as well. So more volumes on what was up, many more stocks down, but with little volume. I mean, that's not a bad sign at all. Surabhi.
Oh, absolutely. Things have been improving over the last couple of trading sessions, yesterday included. And today, the reason why the implied open is showing you such a bright shade of green is because Asian markets are rallying across the board. There's a nice, upward lift across the region, whether it's the Japanese markets, Chinese markets, Korea, everything is up and about. By the way, in China, talk about Chinese tech. BYD shares have been quite the headline makers this morning. That stock's been surging 5-6% because BYD claims it's got such a supercharged EV technology, EV charging technology, that your car can be charged in almost the same time as it would take to fill a full tank of petrol or gasoline. So that's been the talk of town, at least in the Asian market region, doing very, very well. It's also a week of central bank action, so we'll talk about the Fed, obviously. That meeting kicks off later tonight. There's also Bank of Japan. They have a two-day meeting. It's kicking off today. Tomorrow we'll have the BOJ announcements. There's also Bank of England, and that comes in on Thursday. So major central bank action week. And all these central banks, by the way, are expected to remain on hold. Even the BOJ, which later in this year is expected to hike because the Japanese economy is doing well, is expected to not do anything, not this week at least. So that's on the central banks. On retail sales, the US number, why did the market not sell off? The number was still very soft. The number was 0.2% versus estimates of 0.6%. However, X of autos, the number was in line with estimates. The growth was about 0.3%. But of course, there was that downward revision in the Jan number. Anyway, for what it's worth, it didn't really shock the system, so to speak. So the market continued to cruise along. There are downward revisions from the OECD, by the way, in terms of global growth forecast, US growth forecast. So just to leave that data on the table for you. OECD has cut the global growth forecast for 2025 from 3.3 to 3.1%. So, and it's all because of tariffs. They're saying that in their commentary. For the US itself, the estimate for this calendar year, 2025, has been lowered from 2.4% to 2.1%. And for the next year, 2026, the US is expected to grow only 1.6%, but they're still talking growth. Remember, the bigger issues are about stagflation and maybe even a recession. But those are the OECD latest numbers. Now, yesterday, the only glitch for our market was the return of FPI selling. Remember, we've been, discussing the let-up in FPI selling for the better part of last week, but yesterday was pretty big. Maybe it had something to do with the fact that a lot of these shareholder lock-in periods were ending, so perhaps there was, a bit of a skew in the data because of that. But for what it's worth, you can't ignore it. 4,500 crores of near about selling coming back on the system. It was offset very nicely by DII buying, 6,000 crores of DII buying. Now, the Nifty, if it remains on that cautiously optimistic path, it could perhaps head to the upper end of the current trading range. We've been in this range for a good 6-7 trading sessions. The higher end is around 22,650 to roughly 22,700. And maybe that would be the first aim that the market will take. Lots of stocks in focus. I'll just leave some names for you. Obviously, Bajaj Finserv and Finance will be watched very, very carefully. It's finally happened because Bajaj Finserv, along with a couple of other promoter group entities, they have bought out Allianz's stake in the life insurance and the health insurance joint ventures and spending a big amount of money, almost 24,200 crores in that transaction, and we'll talk about it. IndusInd Bank, now Moody's has placed the baseline credit assessment on review for downgrade. The rating is the same. That's not the problem, but it's this baseline credit assessment because of what's happened in the derivatives portfolio. We'll see if the stock reacts or whether it's already done that reaction in the 27% fall that the stock has already seen. And finally, remember, we keep telling you that the sign of promoters buying their own stock in the market is usually taken as a positive. Well, yesterday we noted that in Suryodaya Small Finance Bank, the promoter group has increased its holding from 22.3 to 22.4%. So another stock I'll keep on the radar because of that positive indication. But overall, as you're saying, happy to take the small wins, Mangalam, this morning.
Happy to take the small wins entirely. And the biggest win of that was the Nifty closing above that 22,500 mark. Why is that important? Largely because it's the first time in the month of March that has happened itself. So let's tell you a little more about the way trade is set up as well. So the Nifty closed above that 22,500 mark. But more importantly, the GIFT Nifty is indicating a very strong start above the zone from where we've seen a lot of supply emanating as well. So if you look at a bunch of highs on the Nifty over the last few trading sessions, you'd notice that yesterday's high on the Nifty, 22,577, exactly coincides with the March 12 high as well. And now after consolidating a little bit, the market's finally opening at a much higher level. So those are a couple of things that we'll most definitely keep an eye out on. The most important thing for bulls is that dollar index is contained at around 103.5. We've seen crude prices contained at around $71 per barrel as well. Wall Street indices, while they gained about 0.3 to 0.8% yesterday, Intel is up close to around 7% higher post after hours. So that's good for Nasdaq today as well. And oil prices are contained. What we need to do, however, is stay above the 20-day moving average. At the open, the Nifty conquers that, stays above that. But does that happen to the Nifty Bank as well or not is the big question. The FIs, yes, they sold about 4,500 crore in the cash market, but that was not only offset by DII buying, that was also offset by FI's own buying. They bought about 1,900 crores in index futures and they bought about 3,300 crores in stock futures as well. So all these factors doing well. In fact, in index futures, after a very long time, we saw FIs add 2,500 long contracts and cover about 10,000 short contracts as well. And if you notice, over the last 3 trading sessions, the FI longs have inched slightly higher from 18% to 19% and now 20%. Talk about small wins for the bulls itself. If you look at the options that are active, 22,500. The Nifty conquered that and the put writers have become active here. On the way up, the 22,700 call writers are playing for a premium of 44 rupees. The GIFT Nifty indicating a start around the 22,750 mark will be the first test of the open itself. And were we to sustain that, there is a fair amount of punt buying at the 22,850 call as well. So short point, option writers are positioned for a range of 22,400 to 22,750 on the Nifty. But were we to break out, then there have been some punt buying at the 22,850 call itself. So maybe they are playing for that 30, 40 rupees sort of pop after a 15 rupee premium on that 22,850 call itself. We've been talking about financials, how they will be in focus, but I'm looking at some of these large private sector banks which are non-HDFC. Yes, HDFC has been doing well, but what's doing better is ICICI Bank, Axis Bank, and surreptitiously we've seen a lot of capital move to names like Kotak Mahindra Bank as well. So can these sustain their outperformance or not is something that we'll most definitely track this morning.
Okay, all right, Mangalam, got that. So lots of cues to watch, largely looking constructive, can we say that for sure. Well, let's start off with the equity call of the morning. Mahesh Nadurkar of Jefferies says, the Jefferies economic indicator for February 2025 shows that activity levels grew at 6%, similar to the trends of the past 4 months. He says steel and cement volume growth at 10% for the past 3 to 4 months and recent uptick in electricity consumption are key positives. He adds that consumption indicators are uneven with auto sales GST data patchy. He says RBI's consistent liquidity injections, CPI at 7-month lows and FX reserves at 4-month highs provide some macro comfort.
All right, well, some macro view now. This is Upasana Chachra of Morgan Stanley who says that lower trailing inflation driven by decelerating food prices opens up room for additional easing. She expects CPI inflation to average 4% in FY26, which implies cumulative easing of 75 basis points. She says the key trends to track are food prices and growth, especially credit growth. Okay, let's welcome in Lynn Alden, founder at Lynn Alden Investment Strategy. Lynn, good to have you with us here as always. Thank you very much for your time. I mean, is the U.S. market fall over, you think? 2 days now. Market's been up 2% on Friday and about 0.5% last night.
So I think that it's oversold and it's due for this bounce here. I think some of the key headline risks are still present. And I think that there's a larger chance of a pretty large, like a more long-term rotation here. I think for a very long time, global capital has been overweight U.S. stocks. It's kind of been one of the main places to invest in town. And some of those macro things have kind of started to structurally shift. And some of those things feed on each other. So, for example, the U.S. is very financialized. And so lower U.S. stock prices can damage the wealth effect. A weaker dollar has a similar role. And with increased uncertainty around tariffs, business investment conditions, and stock investment conditions, there are just more headline risks now. And so I think that while these moves don't go in a straight line up or down, I still think that there's really more attractive opportunities outside of the U.S. in a lot of areas that have been kind of considered uninvestable for a number of years.
Okay. Lynn, what's your sense? Yesterday, at least, the U.S. retail sales data, that did not deliver any shockers. The market's kind of cruising along for the time being. But do you see this as just a bit of a pullback from maybe oversold levels? Or do you think we're past the worst of the whole tariff tantrum?
So I think the sharpest activity is behind us, both in terms of headline risk and in terms of the impacts on the economy. I still think there's some to go because some of these downstream effects impact the lag. Because if businesses are delaying CapEx spending until they have more clarity, that can take months to resolve. And even the ongoing retaliations and negotiations are still ongoing. And when we look at kind of the not just tariffs, but also the fiscal and monetary support, we're in a place where the U.S. has kind of been gradually pulling back fiscal support. There's things like the DOGE program that are attempting to trim the budget deficit. We still have a Federal Reserve that's on the hawkish side. Meanwhile, as Europe kind of ramps up defense, which is a form of fiscal stimulus partially, and as we see China continuing to drip out various types of stimulus, some of these dynamics have shifted because in the past several years, the U.S. was the very kind of fiscal heavy economy, while we saw more austerity out of a number of other economies. And at least around the margins, there's been a little bit of rotation there. And I think that will probably continue to translate to equity performance.
What about India, Lynn? Always the question, right? Because we've underperformed versus China lately, and that's largely because of China's earlier underperformance. Now that people are finding value in China, a lot of flows going there, the Indian valuations have moderated as well. What are your expectations here? And any particular stock sector that you like here?
So I'm fairly bullish. I think it's showing a good sign that it's stabilizing here. As you pointed out, China was, really like oversold. They were at very low valuation levels. India has always been considered investable from, say, the perspective of here in the U.S. or elsewhere, whereas China went through a multi-year phase of largely being considered uninvestable. People were worried about, potential sanctions, potential, geopolitical risks, as well as the fact that, they had that period of going after their big tech stocks. But as a lot of that has shifted, that's become more investable from a very low base. So I think that maybe that explosive move is behind in China. I still think they have room to go higher. And I do think that while India was never as oversold or as cheap as some of these other places, I do think it's due for potential stabilization and heading north from here.
All right, Lynn, thank you very much for that. It's always a pleasure. Quick conversation, but insightful. Thank you. Let's quickly run you through the corporate interactions which are lined up through the course of the day. 9:35, you'll hear from the management of Senco Gold. We'll ask them how's jewelry demand holding up, even as gold prices continue to rise. Not just gold, actually, silver as well. 9 o'clock, we'll have the banking analyst from Bernstein to talk about what's happening in that space. What does he like? What does not? A lot of action in banking over the last 10 days or so. Mahir Vora is a market match today at 9:15, 9:30. Berger Paints will be with us and we talk to them about demand outlook. Shriram Finance, stocks done very well, will be speaking with us at 9:40. They raised some money from development financial institutions. Yashish Dahiya of PB Fintech will be with us after the announcement they're investing 696 crores in PB Healthcare. And of course, it's the economy. Lata in conversation at 10:15 with Niranjan Hiranandani of Hiranandani Group and Gulam Zia of Knight Frank to discuss if stock market decline has slowed the real estate sector.
Okay, so all of that coming up. But first, let's focus on the macros. Now, India's goods trade deficit fell to a 3.5-year low of $14 billion. This is thanks to a steep fall in imports. Imports actually declined 16% year on year, while exports fell by about 11%. Lata is here with some of the key takeaways from the numbers. Lata, these are numbers before the full extent of the trade wars hit us. What is your key takeaway?
Well, trade deficit being lower sounds good, but this is the lowest in 3.5 years, 41 months. The last time we had such low deficits were during COVID. The monthly trade deficit normally ranges between 15 billion and 25 billion. That's the average. But of course, like I told you, during COVID years, 2020, it was 6 billion to 12 billion. Again, in 21, those delta months, it was at that same level. But in a normal month, we should at least do about 15 to 25 billion. That's why I worry about this 14 billion trade deficit as very low. The Commerce Ministry officials just put it out to, high base, lower crude prices, perhaps even lower gold imports. But, the high base, yes, February of last year had one more day. It was a leap year, so 29 days. That can account for about 3% fall, not for a 16% fall in imports. And therefore, I would worry if, we should take away some worries from this. Anyway, let me give you the positives. If you count the trade deficit with the, when you say trade deficit, it's the goods trade deficit. In services, we've always been posting a surplus. But if you count the two together, we are posting a surplus for the month of February. Normally, in spite of the services surplus, the overall is still a deficit. This time, it is a surplus of $5 billion. And chances are, and again, this is the first surplus since the COVID year, 2021. The Feb numbers imply that March could also be a surplus because March always is a record for exports. People are, finishing up, meeting targets. So we are going to have 2 months of current account surplus, which means it will be a current account surplus for this quarter also. And as I spoke to economists, most of them are bringing down the current account deficit for the full year. Because the fourth quarter is a surplus, they were all working with 1 to 1.2% current account deficit as a percentage of GDP for this year. Now they're all bringing it down to maybe 0.7 thereabouts. But the negative is this fall in February imports. 16% fall in February imports. Does it mean that the economy is slowing? And the products that have slowed, petroleum products, iron and steel, transport equipment. I mean, you remember North American trucks to which Bharat Forge exports. These are the kinds of things that are showing a slowdown. So I would worry about this list. Many of them are, core Indian industry. Of course, gold and silver are a class apart, but the rest of them would give me a worry if you put it along with the fact that cars and bikes did badly. I would worry whether fourth quarter is not going to be a gung-ho growth quarter.
We'll keep a track of this. Thank you very much, Lata. So maybe an indicator of the continued slowdown in the economy, the slowing of imports. So we'll take a quick commercial break here. A list of top stocks to watch with the research team coming up in just a bit from now.
The other problem is I'd like to see the market do better on a day when Trump is talking about tariffs. I've come to the conclusion that any day without Trump talking about tariffs is a good day for the markets. Well, I think a lot of us on Wall Street are disappointed with Scott Bessent. We thought he was one of us. We thought he was a market guy and that he understood that markets mattered. But now he's kind of dismissing us. He's now one of us.
Welcome back. So we've been telling you that Asian markets are a nice bright shade of green, and the implied open is telling us that we should, get a nice pop at the open. Whether it's a whole 150 points in the Nifty or not, we'll find out. But generally, the cues have been quite positive. So what about individual stocks? Well, our team is standing by with the CNBC-TV18 list of top stocks to watch. Good morning to all of you guys. So I'll start with you first. There's news coming in on Manappuram Finance. They're looking to raise some equity capital.
That's true. So first, before talking about the news, if you look at the stock performance, it's up 4% this month and up 11% 2025, and it's around 10% away from the record high. Now, what's the announcement? Manappuram Finance has today, early morning, has announced that its board will meet on March 20th to consider fundraising proposals via various options, including equity, debt, or via QIP or rights issue. Now, today, stock is in F&O band. In the last week of February, Manappuram Finance had clarified on the reports related to acquisition of stake by Bain Capital that might be valued at $1 billion. And what did company say? It says that it continues to evaluate various strategic and growth opportunities. So normally the news related to board considering fundraising is a normal news, but in this case, it's important because there have been several reports related to stake buy in Manappuram Finance over the last few months.
Take that point, Sudarshan. Thanks a lot for putting that into perspective. Remember, Nimesh had highlighted the possibility of this happening in his D Street chatter, and at the same time, the stock has gone into F&O ban as well, as Sudarshan pointed out. But the other one is IRCON. We've been talking about order wins for a lot of companies and them increasing as we move towards the end of the financial year, and IRCON is one in focus as well. Vamakshi joins in. Vamakshi.
Well, good morning, Mangalam. Yes, it's an order win for a JV of IRCON and BRC. Keep in mind that the JV has been awarded an EPC contract which was floated by the government of Meghalaya. The broad consideration for this project is worth 1,096 crores, out of which IRCON's share stands at 285 crores. So order win coming in their way bodes well for the company, going with the green for this counter.
All right. Well, let's talk about Star Cement now. Vinny is standing by to tell us why that should be in focus. Vinny, morning.
Hi, so we're keeping an eye out on Star Cement today. Mainly the company subsidiary has been declared as a preferred bidder for one of the sites, that is Boro Hundong limestone block that is in Assam. They've won this via the e-auction that was conducted by the government. Now, when you're looking at it, the estimated limestone resource for this is 146.75 million tons. Do not forget, in the recent past, the company has also been won a lot of mines. One was in Rajasthan, which you talk about in Q2 FY25 before, and in the recent times, we have Assam, where that one limestone block as well of, I beg your pardon, a mine which was of around 193 million tons as well. So a lot of mines that they've won in the recent times, expansion plans on that front, what they'll be working on, and that is why we're expecting a green coming in for Star Cement.
All right, so big limestone block in Assam, that's what they've got. Got it, Vinny, thank you very much. Let's move to the other big story. Bajaj Finserv, of course, is going to be in focus because it's finally happened. After 26 long years, Bajaj Finserv, along with the promoter entities, has decided to buy out its insurance JV partner, Allianz. Yash is here with a lot of the details. Big news coming in last evening, Yash.
Well, absolutely. And you spoke about 26 years. Those 26 years have had its ups and downs when it comes to, Allianz wanting to increase, not being able to increase its stake in both life and general insurance entity. But finally, the news is out. Bajaj Finserv and its promoter companies will be acquiring that entire 26% stake from Allianz in both general insurance as well as the life insurance entity. First big takeaway out of this particular transaction, as far as valuation is concerned, both sides, on the general insurance as well as life insurance side, the valuation is quite fair at which the transaction has happened. On the life insurance side, at about 1.84 times trailing, price to emerald value, and on the general insurance side, 4.9 times price to book value. So fair valuation as far as the transaction is concerned. Out of the 26% stake in both general and life insurance entity, Bajaj Holdings and Investments would be acquiring a major portion of that stake of about 19.95%. Bajaj Finserv, another listed entity, will acquire about 1% stake, and Jamnalal Sons will acquire about 5.04% stake in both life and general insurance entity. As far as the funds which would be used to acquire this 26% stake is concerned, for the life insurance entity, Bajaj Finserv and promoter companies will pay 10,400 crore and Bajaj Finserv and promoter companies will pay about 13,780 crore for the general insurance stake.
You know, amidst all this, Bajaj Finserv, etc., will be in focus. The other stock which should be in focus is Jio Financial Services, because there were news reports that because you read Allianz's statement as well. They're saying, well, we will use these proceeds
to
for
reinvest in the market,
and they're very much committed to India. They will stay in India. And who knows, maybe, and there were reports suggesting that maybe, you know, Jio could look at, because this transaction was long in the making. Now this has happened. Will they tie up with Jio? What would be the equity partnership? I mean, we'll have to wait and watch, but I think certainly the stock should be in focus.
Totally. You know, the other thing is that while the stock of the last 1 month has been underperforming, just this month, in the month of March, it's up 6%. So some part of street was sussing that. And the other part is also there could be passive flows coming in Jio Financial Services, because this is the next Nifty entrant as well. So we'll keep an eye out on both Jio Financials as well as the stocks that Yash mentioned. But Aditya Birla Real Estate, that's another one which is in focus. Vinny joins in. Vinny, a project in Pune is what they've launched.
Absolutely, not only a project, but this is the first one over there. So they're debuting, they're making a debut on in the Pune market. Birla Estates debut coming in with Birla Punya is the project name. Revenue potential of around 2,700 crore rupees. The company has acquired around 16.5 acre land parcel as well just last year itself. So they have a lot of development and plans in the Pune region for itself. And now this is one of the first projects coming in the recent time. A lot of launches that have come in NCR region, Bangalore region as well. So they want to expand and grow their market as well across regions, and that is clearly seen in this strategy coming in. And an important project coming in, luxury project, luxury market, premium side, which has been doing well. So that is why we're expecting green on the screen for the company.
All right, well, more stocks with news flow. Vinny, thanks for that. Vamakshi is here with those. Vamakshi, morning.
Good morning, Prashant. First up is Suryoday Small Finance going with the green for this counter because the promoter and MD and CEO Bhaskar Babu Ramchandran has bought nearly 1.5 lakh equity shares from the open market. Post this transaction, the promoter holding now rises to 22.44%, while his own holding rises to 5.18%. Shilpa Medicare is the next one I'm watching out for, going with the green for this counter as well. It's because its arm Shilpa Biologicals has signed a binding term sheet with Switzerland-based Maptree Biologics. The scope of this includes co-development of an NBE, that is a new biological entity asset, which includes manufacturing as well as commercialization across geographies. This is a novel biological asset which will be used for immuno-oncological applications. Morpen has announced the launch of Empmapor, which is a treatment for type 2 diabetes. This comes at a fraction of the cost as compared to the drugs available in the market. So therefore, they plan to acquire a significant market share in the diabetes market in India. So going with the green for Morpen as well. Swiggy, on the other hand, Instamart has expanded its quick commerce to 100 cities across India, driven by the growing demand in Tier 2 as well as Tier 3 cities. So going with the green for this counter as well. And lastly, keep an eye out on NBCC. This counter is expected to open higher because they won an order worth almost 44 crores.
All right, Vamakshi, got it. Thank you very much. So plenty of stocks. Let's quickly recap the list. The ones that have positive news flow around them: Manappuram Finance, Aerocon International, Star Cement, Bajaj Finserv, Aditya Birla Real Estate, Suryoday Small Finance Bank, Shilpa Medicare, Morpen Lab, Swiggy and NBCC. And actually, there's no stock which has negative news flow around it this morning. So it's an all-green list. All right, that's stocks. What about commodities? We've got Manisha Gupta joining in with a quick roundup of the overnight action. Manisha, good morning.
Morning, Sylvie. Thank you for that. I'll start with the gold prices because we are holding above $3,000 an ounce on a sustainable basis now. So this is an all-time high that we are looking at in the Asian markets yet again. We are looking at weaker data from the U.S. markets, whether it was retail sales, consumer confidence, home building. All those numbers have come in weaker than the expectations. And then the OECD also says that the global growth that they're looking at for this year, they've revised it on the downside. That is what has led to safe haven buying come in for gold. But it is the other metals as well which seem to be doing quite well. Copper, for example, gained 1.5% overnight. Copper is an outperformance of a commodity within the metal space with 25% gains already in this year now. Aluminum is trading very close to its 9-month highs. We've seen tin prices trade at a 4-year highs. Nickel is trading at a 13-month highs. So everything that says metals, whether it's precious and base metals, seems to be doing quite well. What the street will watch out now is, of course, the US Fed meeting, but you also have central bank meetings from Japan and UK this week as well. So continues to be a volatile happening week.
All right, Manisha, thank you very much for that. We take a break. We are back. We connect with Hemang Jani and we discuss, what's happening with the individual names. We talk about the Bajaj story and many others as well. Stay tuned. Coming up.
They're kind of like messing around with nitroglycerin. This is very, very dangerous to, basically tell people that the administration doesn't care very much if we have a recession because the short-term pain is going to be for long-term gain. This time around, the Fed has indicated quite explicitly there are no hurry to lower interest rates. They think the economy is still resilient. Meanwhile, they have all the uncertainty as the rest of us do with regards to tariffs and whether tariffs might boost inflation. And the last thing they want to do is lower interest rates.
On a bottom-up basis, now I find a lot of companies that look very interesting on valuation. So I think bulk of the damage is done. From a medium-term perspective, I think one should be constructive and do some bottom-up idea picking here. In the small and mid-cap space, there are plenty of domestic consumption-oriented stocks which are trading at extremely attractive valuations with very solid balance sheets and free cash flow profiles. One has to just look deeper. Unfortunately, I'm not in a position to share names. The one space that I think we should all pay a lot of attention to are the financials. I mean, financials are really very, very attractively valued.
Welcome back. You're watching us here on Bazaar Morning Call. In case you just tuned in, we're setting ourselves to a strong start. That's what the GIFT Nifty indicates on account of a good handover coming in from Wall Street and decent enough opening in Asia as well. 165 points after a decentish sort of gain yesterday as well. 111 points is what the Nifty put on in yesterday's trading session. Hemang Jani, market expert, now joins us. Hemang, good morning. You know, the big stock that we'll be tracking today would be Bajaj Finance. What do you make of the deal? 26% is what they've bought from Allianz, and Allianz says that they will reinvest this in the Indian markets itself. So in light of that, do you look at other stocks as well, potentially Jio Financial Services?
Good morning, Mangalam. Yes, I think this deal is very important and it's been a long pending deal, as you all know. I think key takeaways from our perspective is that compared to the consensus fair value of both general insurance and life insurance companies, the deal has been done at 19 and 14% discount. The general insurance is at 19% discount. The life insurance is at 14% discount. So I think in the negotiations, the Bajaj Group has been able to get a slightly better edge or advantage, which is important. It will give them a bit of a control because of the stake that they have. So I do think that Bajaj Holding, which is a holding company of the Bajaj Group and has a 36% stake in Bajaj Auto and 36% stake in Bajaj Finserv. If you consider the current market cap of Bajaj Holding and versus that when you value all these components, I do think that there is a case for some sort of unlocking of value when it comes to Bajaj Holding also. So that's my takeaway. And as far as Alliance's entry into the market, yes, they could go solo, they could tie up with any of the incumbent players. It remains to be seen whether what exactly decision they would take, but you might have some possibility of the deal being done with Jio also, and that would be a stock that we will be watching out for.
No, absolutely, and we'll see how that one goes as and when it happens. Just a quick word on IKS, which was the big casualty yesterday. Hemang, good morning. That lock-in ended, stock ended about 12-13% lower. Any thoughts at all? Hemang, can you hear me?
Prashant, your voice.
IKS.
Yeah, I can hear you, but IKS you're asking about, right?
Yes. I mean, IKS Health, the 3-month shareholder lock-in ended. And I think we got some calls as well. I think JP Morgan has got a call out. We'll have Hormus talk to us about that. But if you have coverage, if you've looked at the business's recent listing, any thoughts at all here?
So typically, Prashant, I think was because of the lock-in, getting over. Also, IPO flavor is pretty much not there, right? So I think that some of these companies where you have this issue, you might have to go through a bit of a pain point. But overall, when I look at that company, it looks quite decent. I think the space it's operating in, the latest quarterly numbers were also quite okay. It's not too negative on the stock only because of this reason.
All right, we take that point, Hemang. You know what we'll do is we'll ask you to stay, perhaps listen into this conversation, and we'll get your views on the gems and jewelry sector as well. Senco Gold, the first management on the show. The stock, remember, is down about 70% from the highs. And to discuss the business outlook, the impact of higher gold prices, what the company is doing in the lab-grown space as well, as they've been speaking about it too. Suvankar Sen, who's the MD and CEO at Senco Gold and Diamonds, joins in now. Suvankar, the last 2 quarters were rather weak when it came to margins. But more importantly, there wasn't any, supernormal growth that the street was anticipating as well. You grew pretty much at the same level as the leader. And the street has, perhaps given its verdict by the kind of decline that we've seen in the stock price from the highs as well. So the question, obviously, after this big drop, and you recently raised funds via QIP as well at 2x the price at which the stock is currently trading. What are your thoughts on growth? What are your thoughts on margin? And, the kind of wealth disruption that has happened from the peak. What are your, clarifications to shareholders, if any?
See, from the beginning, we've been saying that, every year we will be targeting 20 stores that we would open year after year. Be it this year, we've already opened 15 stores and about 4 to 5 stores are in the pipeline. In the coming year, we also have plans to open 20 odd stores. If we look at the growth rate, very surprisingly, we'll see that we've been growing top line at the rate of approximately 20%. So whatever we have been estimating and guiding, the markets and our investors, we have been achieving those numbers. It is true that in Q2 and Q3, the numbers have not been that good in terms of the bottom line, but that is mostly driven by the fact that the duty cut that has happened, in terms of the initiative of the government, which in itself was a very good thing considering the fact that the international gold prices have moved up so high. So this 9% duty cut has been a great relief for the consumers at large, and that has led to a lot of volume growth. Is just a one-time impact, and I think that once Q2 and Q3, where we have taken the loss that had to be taken, a one-time loss, and now as we move on to Q4, again things are back to normal. I think that the EBITDAs and the gross margins that we are expecting and what we have been guiding from before is going to go back to the same levels of close to 7% EBITDA and the gross margins back to its own level. So I think that yes, the markets and the investors have been a little jittery and uncertain with all the various things that is happening around the world. But fundamentally, I do not see any change happening. Business continues to grow in a very sustainable level. The new initiatives and with what we see right now, that the international gold price has been all-time high. Even in India, the gold prices have been all-time high, has been playing in its own way. You see the consumers, the wedding season continues to remain in the month of June, and we are seeing a very solid demand from the wedding market. Yes, the normal consumers who would want to buy products worth 50,000-60,000 rupees, they are being a little confused whether to buy now or wait for the prices to correct. But another good thing that has happened is that, in Q1, Q2, Q3, the demand for diamond jewelry was a little on the lower side because people were seeing that the prices of gold were moving up. So diamond, lab grown, what will happen? But in Q4, we have seen that trend has changed. People have started buying diamond jewelry in 14 karat and 18 karat back as well, which will have a positive impact on the margin. So I think that in general, whatever the markets have been and the prices have come down, it is unfortunate that investors are getting a little panicky. But from my side, I can only assure that business continues to grow, and fundamentally, it's in a sustainable manner. We will continue to grow 20 stores, and we are expecting a top line growth of 20% this year and hope to continue this 20% growth year after year. So this is what I would like to say from my side.
We expect 20% top line growth. The street was perhaps pricing in a lot more, and that is the correction that has taken place. To your credit, you have been guiding for this 20-21% sort of growth every year. Margins an aberration itself. But 2 points that you said. One, that lower ticket gold items, say 40 to 50,000, people are on the tenter hooks out there because of rising gold prices. And second, diamond sales have come back as well. So to that extent, if you could give us a sense on, the kind of studded ratio that we can expect in the fourth quarter, the studded ratio target that you have for next year as well. And is there any problem when it comes to gold sales for this year, in the fourth quarter, because lower ticket items are being postponed or perhaps people are on the tenter hooks? And at the same time, silver sales as well, because we've looked at silver prices. They are up to about 1.1 lakh rupees per kilo. Have you seen an increase in silver, product sales as well? How does that do for your margins?
So if we look at the growth rate, silver, in spite of the increase in value in terms of volume and in terms of value, has grown at a much higher rate compared to gold and diamonds. Because I think silver is becoming one of the assets that consumers either for gifting or for lower ticket size investments or buying something for the home. I think silver has going to have a great future with 100 rupees per gram kind of a price that we see and the potential of silver going up. So while silver is growing at about close to 18 to 20% in terms of volume as well as a little more in value terms, we have seen that gold has grown to a marginal 1-2% volume growth, but value-wise it has grown like close to 20%. And diamond, which we have seen that in the first half of the year or even till Q3, the volume growth was negative. I think that trend is changing. Diamond volume growth is now becoming almost 1 to 2% and a value growth of 15%. Now here, there's something very interesting that is happening with diamond, is that with the bigger size diamond prices that have gone down a large extent, I think consumers have realized it. And we are also trying to educate the consumers that now with the Russian and the Ukraine war trying to, get solved, I think that gradually the diamond prices that had come down will start picking up, and it's a good time to buy your diamonds as well. And as far as lab-grown diamonds is concerned, yes, we've opened 4-5 stores. That itself is a separate segment where we are seeing that consumers are appreciating it. And it is not for your wedding that you will want to buy a lab-grown diamond. You would rather buy a natural diamond. But for your fashion, for your various other occasions in life, just to fulfill that aspiration of owning a big size diamond, lab-grown diamond is creating its own market, but it will take some time, maybe a year or two, to really start giving the return. So that is how we are looking at the scenario. And as far as small ticket size items are concerned, I think the shift from gold jewelry to diamond jewelry will be happening very drastically in the small size, because that is where the daily wear, everyday wear is coming in. So that's how one has to look at it and be prepared for the upcoming season. Akshaya Tritiya is in the end of April. So we are already in the middle of March. So full preparation for the upcoming season is also happening in place.
Not on time. Just a quick yes/no question on, will promoters buy? The stock is down 70% from the highs. You've increased your shareholding from 64% to 68%. Will promoters buy?
So just to give you an information that yesterday we have, as promoters, started buying. So we have bought yesterday, and hopefully we'll buy today, because though I don't want to kind of emotionally kind of appeal to anyone, but the fact is that we feel that the value is there. Business continues to remain strong.
How many shares, Divankar, yesterday?
We've bought shares valued close to about 4 crores. So so that is what, and today we'll also buy some more. So that's how we would like to look at it.
All right. Well, I think thank you very much, Divankar. Good to have you with us here. Appreciate it. Thank you for joining us. We'll take a quick commercial break here. Technical trades coming up on the other side. That's with Chandan Tapari and Mitesh Thakur coming up. Okay, welcome back. We've got Mitesh and Chandan with us to tell you what you should be doing, how should you be positioned as far as indices are concerned and stocks that one can look to trade. Gentlemen, good morning. Great to have both of you here. Chandan, let's start with you. Good morning. How things set up? What's the skew like? I mean, market generally has been sort of trading better and better given everything which is happening around, and this has been true for the last 3-4 days now. Your sense and what would you do?
Good morning, Prashant. Thanks for having me. So Nifty has been consolidating in a range, and the good part is that yesterday we opened on a negative note and market made the open low formation and witnessed sustained buying interest for most part of the day. However, it failed to surpass 22,580, which has been working as a hurdle from last couple of days. But the good part is the base of the market is shifting higher. So I believe that with support of 22,330, index has potential to extend the recent recovery towards 22,800 to 23,000. So looking for a recovery in broader market and expecting some short covering trigger as well. Bank Nifty also witnessed higher highs, higher lows from last 3 trading session. And I believe some support-based buying could be there. If it manages to hold 58,000, then the recent recovery can take it towards 48,750 marks.
Okay, all right. Chandan got that. Mitesh, hi, morning. So what would your approach be? I mean, we finally managed to come to this level of 22,500. Where from here?
Good morning, Surbi. So, been indicating that the market is now doing a new range of 22,300 on the downside, about 22,600, 650 on the upside. And if you look at the data starting from 6th of March, we've had about 8 or 9 sessions, and on multiple occasions we've gone to 22,300 and bounced back from there, and we have similarly failed at higher levels. The good thing is that the indicators are rebounding from oversold levels, so eventually I think the immediate bias should be on the upside, which means that we should retest 22,700, 750, 800 zones. And once we start clearing them, then I think, we have a much stronger chart to look at. But at least for the timing, I'll keep that as a target. So 22,600 being the first level, but I eventually expect 22,750, 800 to be tested in the next few days.
And what stocks are you backing today, Mitesh?
Morning, Mangalam. I have a buy on Cipla, and pharma as a sector is looking good on the short-term chart. So Cipla is a buy with a stop at 1478 for targets of 1525. PI Industries is a buy with a stop at 3320 for targets of 3480. From the banking pack, ICICI Bank was a call yesterday as well. Today I'll repeat it with a fresh stop loss and a fresh target. So buy here with a stop below 1259 for targets of 1295. And Adani Green is a buy as well. Keep a stop at 879. Look for targets of 935.
Thanks for that, Mitesh. Chandan, what about you? What would your trades be?
So my first trade will be buy on Indigo. We have positive view on the consumption theme, and Indigo is one of the strongest name in the entire market setup. Technically, it has given a breakout from its triangle formation on the weekly chart and has been making higher tops, higher bottom with hold of key moving averages. We have seen build-up of long positions and expecting better rollover activities as well. So recommending to buy with support of 4680, and Interglobal or Indigo can head towards 5,000 marks. Second trading idea that will be buy on Bajaj Finance. We have seen a positive price action, and it seems that now a positive pole and flag pattern is getting for a breakout. Major trend is positive, and small follow-up can lead for further 3 to 5% up move. Put writing started to witness, which is an early sign for the fresh breakout. So one can buy with support of 8,400 for an upside target towards 8,900. Last trading idea that is buy on Muthoot Finance. Gold is glittering and shining, and I believe that selective gold finance companies can do well. So Muthoot Finance already seen the good run up in last few days, and positive momentum with trigger of the gold could take the counter to higher level. So one can buy with support of 2240, and Muthoot Finance can head towards 2380 to 2400 zone.
All right, we take that point. Chandan, thank you so much for joining in with your picks as well. Take a short break, come back. We have the pre-opening, and also with us will be Pranav of Bernstein, who will discuss the key trends in the banking space.
Welcome back. You're with us on Open Exchange. We're live from the CNBC-TV18 Motilal Oswal studios, and it's 9, so the first of the rates will start trickling in. The anticipation is that we'll have a nice gap up, and the task for the bulls will be then to run with that gap up and not give it away. Right now, it's very euphoric, 500 points. Maybe not that good, but let's see. It should be an optimistic start for sure. Well, let's discuss a couple of stocks and some ideas. We've got Hemang Jani, of course, still with us. Hemang, on financials, what would your picks be? There's just too much going on. We were earlier discussing Jio Finance as well because of what's happened with Bajaj Finserv, right? Allianz will go their own independent way. They have said in writing in that statement last night that they're not giving up on the Indian market. What would you do with some of the other insurance stocks, looking at the action in this space?
I think financial Surabhi as a space has done well, and I do think that insurance, because market was awaiting some clarity on the GST part, and the regulatory changes have been there. The numbers have not been that great, so not too positive from a short-term perspective on the insurance place. But something like a Manappuram, I do think that if you have some fundraise and the fact that the stock has been trending well. Depending upon who comes into the company, what kind of fundraise is there, I do expect, re-rating over there because the stock is quoting at 1.15 price to book, about 16% ROE. Also, banks, I think, relatively better placed. You're seeing some traction come through in ICICI Bank, Axis Bank. So I do think that those are the, companies where I would be more comfortable getting into.
Well, the rates right now on financials are really going through the roof. Clearly, this is extreme optimism that's playing up right now. On Bajaj Finserv, that stock in the pre-open is up 10%. But the other banks, HDFC, IndusInd, etc., they're all up, 4-5%. So let's see. Maybe we won't have this level of euphoria, but the indications have been fairly positive, at least at this point in time. Hemang, very quickly on the cement space, a lot of positive reports have started coming in, and both brokerage reports, also we know production numbers themselves, they've been improving over the last few months. Any picks here?
Well, large cap Surabhi will go with Ultratech, and the mid cap we like JK Cement. I think compared to other guys, particularly southern based companies where you have some issues about that tax, I think JK Cement appears to be better placed.
Okay, by the way, on cement, I must also mention that Star Cement, which is this big, giant limestone block in Assam, that's a stock which is in focus. It's up almost 6% right now in trade. That is Star Cement, and some other stocks in news that are doing really well. Suryodaya Small Finance Bank, promoters have bought shares from the market yesterday. The market likes that. So in the pre-open, that stock is also higher. Now we seem to have a more settled rate. It is very much in sync with the implied open. So almost 140 to 150 points gap up. That's what the pre-open Nifty is indicating. And this will take us right at the top of the recent trading range. Last 7-8 trading sessions, this is the top zone. Let's see if the index can break past that. Actually, since we're talking financials, let's quickly bring in Pranav Gundapalli as well. He tracks the banking space at Bernstein, and Bernstein has an outperform rating on IndusInd Bank, saying that asset quality is less of a concern right now, and perhaps cheap valuations could provide some upsides from here. They also like HDFC Bank, I believe. So, Pranav, let's ask you about the details. Since we started with IndusInd, I mean, that was the big event that happened last week, right? And it really shook up a fair amount of confidence with respect to the bank. This morning, we saw the Moody's release as well, where they haven't lowered the rating or the outlook on the bank, but there are certain, or there could be certain credit implications. Do you think the episode is over and done? And now from sentiment perspective and stock price recovery perspective, we're on an upward path?
See, I think the stock is cheap. There's no big debate on that. But I think it's not fully done with the episode because there are a couple of risks that still linger around. I think two of them would be, one is the stock pledge. I think a reasonably large part, almost 50% of the promoter holding is pledged. An adverse reaction could push the stock into a vicious cycle. So that's the biggest risk at this point, removed from the operating metrics of the bank, more to do with the promoter holding and the pledge. So that's the first risk. I think the second one is more around the high reliance on wholesale deposits. So that's always been a known issue for the bank. So in times like these, the risk of a huge outflow of deposits and its implication on growth and profitability, etc., again comes back. So that's the second risk that investors would want to wait and watch out for. We should get a good indication on how both of these factors are playing out in a few weeks' time when the bank reports its headline numbers for the quarter. So those would be the two big risks. In terms of asset quality, we think the bank is largely followed in line with the industry and with the industry trends suggesting that we are hitting the plateau or at least are not seeing further worsening. I think that's becoming less of a concern at this point.
Pranav, but really just a terrible... who knew, right? I mean, I think we've spoken about Indocent before this episode as well. The stock was at $1,100, and it looked attractive then. Of course, it's now even cheaper. But of course, cheapness in the eyes of the beholder. But this incident is just is crazy. Does it, so is it right to expect valuations to re-rate to a prior level, or you think there is a bit of a multiple derating here because of what has happened?
Right. See, I think this is the second episode of a big derating. I think first we had a big derating event happen around the ILFS period. And then you had a management change, and then there seemed to be some sort of stability, and now again you have this episode. So here we do think a key catalyst would be the appointment of a CEO with a 3-year tenure. I think a change of guard would provide some comfort against concerns of there being further issues with accounting or any of the other areas that they could crop up from. So I think beyond the stock pledge and deposit outflows I talked about, I think a key catalyst for the stock would be the appointment of a CEO, most likely an external CEO with a 3-year tenure. I think that would be critical. A continuation of this 1-year tenure story, or worst cases, RBI is forced to appoint a CEO of their choice. I think those would be negative events that create a further downside risk from here.
But this is only after this 1 year, fresh 1 year runs out, right? I mean, so it's some time
happen earlier as well. I guess that's the maximum tenure. I wouldn't be surprised if it happens a lot earlier than that.
Not exactly with regards to a specific company that's innocent, but this Bajaj deal which was announced yesterday, Bajaj and Allianz. Any thoughts at all on where this goes from here? I mean, it's a space in which a lot of banks are very active. Allianz is a big player, has been in India for a long time. They look for a partner. I mean, the name Jio Financial Services has been thrown into the mix over the last many weeks. What's your sense?
See, I think we are seeing a bit of a churn in those partnerships. I think with banks, many of the banks trying to create the entire set of financial offerings, which include the distribution of insurance, asset managers. And there are quite a few that lack that offering. So you will see some bit of a realignment of partners. So that's what is playing out. And this particular news was known to some extent, so not a complete surprise out of the blue. So it doesn't affect the larger banks. I think the mid-sized and smaller ones would be the ones where you will see some changes in these partnerships.
There's an interesting analysis that you've done, a deep dive between HDFC Bank and ICICI Bank. The conclusion of that suggests that HDFC Bank is a better purchase right now than ICICI Bank. What I'm curious about is your thoughts on Kotak Mahindra Bank, because over the last 6 months, Kotak Mahindra Bank has actually gained about 8.5% as against ICICI and HDFC, which have been in that 1.5% sort of zone itself. So HDFC versus ICICI Bank, your preference is HDFC Bank. But among these three, what are your thoughts on Kotak?
Yeah, I think Kotak benefited from rally up from the lows it had dropped to following the RBI action, etc. So on a 6-month basis, it does look to have outperformed. To us, I think the choice between the two or even the three boils down to the deposit growth that we see, especially the CASA deposits. For Kotak to see a big re-rating, we would expect to see a market improvement in their low-cost deposit accretion before we pick them over the larger banks. The smaller size is a help, but it doesn't really help unless you're seeing deposit growth which is faster, or at least on par with HDFC and ICICI. Otherwise, given where the valuations are not particularly cheap compared to an HDFC and ICICI. So it all boils down to the deposit growth. In fact, our discussion on HDFC was ICICI. ICICI was also largely based on the ability to grow their CASA franchise. That becomes the key reason to pick one versus the other.
Okay, all right. So deposit growth is where, the key factor really lies. Got it. Pranav, thank you very much. Great context and perspective as always. Thank you for joining us today. And I must say that financials is the hottest part of the market this morning. Look at the bank Nifty, it's up about 1%. But even non-banks, life insurance stocks are excited. SBI Life itself is the biggest winner on the Nifty right now. There's ICICI Bank, there's IndusInd Bank, Bajaj Finserv up about 1.5%, HDFC Bank and Shriram Finance. And perhaps why not, right? At the end of the day, it shows commitment. 24,000 crores is not a small sum of money, which, the Bajaj Group is willing to pump back into the business. Let's actually, since we're talking financials, talk about Manappuram Finance as well. We've got Sudarshan back to remind us about this equity fundraising that Manappuram is perhaps considering. Sudarshan.
So this gold loan financier is set to open with a gain of nearly 2% today, and it's on the back of announcement that company has made that its board is going to meet on March 20th to consider fundraising proposals, and that might be through equities or debt or rights issue or qualified institution placement. So there have been reports going on that Bain Capital might acquire majority stake in the company, and the deal might be valued at $1 billion. On February 24th, company had clarified on that report, saying that it keeps evaluating several proposals as it comes. Now, where does Manappuram Finance stand if you compare with peers? So, on the price to book value, Manappuram Finance current price to book value is 1.5x against 5-year average of 1.3. For Muthoot, price to book value is 3.3x versus 5-year average of 2.6. And for IIFL Finance, it's 1.1x versus 1.7x. As far as analyst recommendations are concerned, 41% of analysts covering Manappuram Finance have buy call, while 18% have sell call. For Muthoot Finance, 76% of total analysts have buy call, no analyst has a sell call, and for IIFL Finance, 60% of the analysts have a buy call and no one has a sell call. So on the valuation front, it's trading below Muthoot Finance but higher than IIFL Finance.
Right, Sudarshan, thanks a lot for that. So that's Manappuram Finance. The analyst calls the deal which is likely, and at the same time relative valuations. But I'm looking at a bunch of consumer stocks and all of them in focus on account of very interesting reasons. Pidilite is the one that I'm watching out for. Remember, prices with regards to raw materials have been largely maintained. The company is holding its analyst meet today. Remember, Bharat Puri's term, a glorious term, if one may, ends on March 31st. Sudhanshu Vats will succeed Bharat Puri. So transition, management strategy, outlook on demand, raw material prices, and more importantly, their paint business foray is something that the street will keep an eye out on. Analysts may put pen to paper on Pidilite tomorrow, so we'll watch out for that one. Godrej Consumer was an outperformer yesterday. It's meeting a group of investors at the India Consumer Tour with CLSA today. And we also have a Goldman Sachs note saying that, the third quarter was an aberration in an otherwise strong volume growth trajectory for the company. In fact, they believe that this will be the fastest growth FMCG company in their coverage in FY26. They maintain their target price at 1370. Varun Beverages is the other one. Remember, start of March, as we move into summer, beverage stocks do well. And in that, Varun Beverages is one of them. They reported their annual report, or they released their annual report a couple of days ago, and we had a bunch of analysts, notes that came in as well. This morning, it's from DAM Capital, which says that they believe that the recent stock price correction offers an attractive entry point as against all the competition coming in from Campa, etc. They have a fair amount of capacity headroom, not just in India, but the Africa business for them ramping up as well. So a big cut from the highs we saw in Varun Beverages. This may well be stock to buy the dip on.
All right.
Up 20% in this month when the market's been correct. Varun Beverages.
Down 40% from
summer is coming, and you know, you need the cooler stuff. We got market open 22,645, 22,650. So, you know, the first things first. We've now once again for the second time we are back above the 20-day moving average. Yesterday there was a throwover, but then the market ended under the 20-day. But this morning, 22,600 plus. So that's a good start. The Nifty Bank is even better, 0.6% higher. It's private banks. It was yesterday as well. It was the private bank space which was buzzing. And I suspect that's again the case this morning, powering the gains as far as the Bank Nifty goes. The mid-cap index is up about 0.5%. And I think you've got the small-cap index, which will come up on your screen, which should also be higher. Lots of stocks at the bottom of the screen in terms of what's starting up. There's one lone name in the red in the Nifty 50. The heat map is coming into view. 49 up, 1 down. And as I've been saying, the market has been trading much better last few trading sessions. Looks like at the margin, don't want to jinx it, but maybe price-wise perhaps, you know, hopefully a bottom is in. And of course, what it does from here is another question. What shape, form, how fast? We'll see, but 22,600 plus as far as the start goes. Let's get to stocks. Surabhi.
Well, it's pretty diverse today, and it's not just one sector or, you know, one set of stocks that's taking the market higher. Metals are definitely shining bright. Hindalco is the top gainer on the Nifty, 2% higher. Financials are very, very strong. Financials, banks and non-banks put together are the smartest trade this morning, you'd have to see. Bank Nifty is up almost 0.8%. ICICI Bank, Axis Bank, these are gainers above 1%. In the non-banks, we've got Shriram Finance. Let's also talk about, of course, the stock of the moment because of the news flow, which is Bajaj Finserv and Finance both. 0.5% up on these two for the time being. I just want to check what Jio Finance is doing. If there's any excitement around Jio, let's get that stock up on the screen as well. About 0.7% higher. That's Jio Finance. Beyond the financials, by the way, Shriram Finance as well, up about 1%. You'll hear from the company as we go along in the show. HDFC Bank is also contributing, and so is IndusInd Bank. So financials looking very good. But beyond financials, there's Reliance, there's L&T. So there are plenty of legs to this move that we are seeing this morning. The only actually slightly sobering spot is technology. Once again, big concerns around what's happening with the US. HCL Tech, TCS, Infosys, these are your stocks on the way down. But barring these 2-3 names, it's actually a very green-looking Nifty screen.
You know, Prashant said that from a price standpoint, we perhaps have made a bottom. And every time we do that, it's the mid and small caps which actually outperform because the street then becomes a lot more risk-taking. And we have, you know, exactly that playing out. 1,700 stocks in the green. Remember, we opened with 1,300 stocks in the green. So that ratio is firmly in favor of the gainers. And look at the bunch of stocks that are gaining today. We have Ircon. They, you know, the joint venture won an order worth 1,100 crores, of which the company share is just 285 crores. Stocks up 7.5%, almost 8%. Not a very big order win, but an order win nevertheless, enough to take the stock higher by 8%. You have NBCC. Again, just a 45 crore order that the company has gotten, regular course of business, but that stock has been well bid as well, 2.5% higher. Manappuram, board meet on March 8th to consider fundraising proposals. Is Bain coming in or not? That stock up around 1.5%. Senco, this morning we had the management join us say that they bought shares worth 4 crores in the market yesterday, perhaps are likely to buy today as well. What has the street done? 5% upper circuit on that stock as well. The only one stock which is lower, notably with reason, is International Gemological Institute. Remember, seen a big cut from the highs itself, from the IPO highs, and now the stock down 5%. The anchor lock-in opens today, so maybe more supply coming in on that stock, likely to be underbid in today's trading session as well, so down about 5%. But by and large, the mid-cap screen looks like a very bright green.
Absolutely. 100 points on the Nifty is what we have. So holding above the 22,600 level. Just a few other names with very large volumes. Ircon, I think Mangala mentioned that, 7%. Varun Beverages is the number 2 biggest volume-led gainer. It's a 3% pop. MobiKwik sold off sharply yesterday. It's about 4.5% higher. Recent listing, Bluejet is up 3.5%. You got Triveni Turbine, which is up 3.5%. Motilal is up about 2.5%. Car Trade is up 2.6, 2.7%. And I think PVR Inox is coming up with about a 3% again as well. 361, the wealth manager, 4% higher. PG Electroplast. Senco is now limit up. Senco is up 5%. Yeah. management was telling us
But they're buying more shares apparently in the market today, they were saying.
Maybe we don't know who's buying that is, but stocks up. You got Sula. Sula has got a 7% gain. 265, completely bombed out name, but 7.5%, 8%. And there is NetWeb, which is up about 4% as well. It's a good-looking screen. 1,850 stocks are higher, about 400 stocks are lower at this stage. We'll talk more individual names, but let's get a broader flavor and idea of what's happening out there in the market. Mihir Vora is with us in the studios now, Chief Investment Officer at Trust Mutual Fund. Mihir, good to have you with us here. Good morning.
Good morning.
So price-wise is a bottom in. What's your sense?
I hope so. I think so. We've had a lot of pain, and the small cap index, for example, was down by 25%, but before we realize it, it's almost up by 8 to 10% from the bottom. So markets, correct very sharply. The rises are probably a bit more, measured. But you got to do what you got to do.
Stay as an elevator.
Stick to your convictions.
So where are those convictions now, Mihir? And has anything changed in this 5-month long sort of recession? Not recession. What am I saying? Correction. Imagine that. That's how the mind works, right? When you hear so much of negativity, recession, correction, all the words kind of mix up. But they also say that every time you have a new phase of a bull market, if at all we're entering one, the leaders are different. So in terms of your conviction, what has changed and what remains the same?
Sure. So just like to spend a minute on, what happened exactly. The point is that part of the correction was justified by valuations. Part of the correction was justified because of slowing fundamentals. And we probably took a little longer to realize how sharply the government, cut down on spending in the first half of the financial year, right? So the government spending, especially the capital expenditure part, it was much sharper. The cut was much sharper than expected, which impacted stock prices, in those segments the maximum. Second is the RBI also kept things tight. And third is the dollar, right? Now, I think all these cyclical factors are coming to a positive territory, I would say. And if you step back and think, now in the June 25 quarter and the September 25 quarter, we actually have a much lower base to start from.
Earnings
as well as top line. Even if government spending comes back to normal levels, you have almost a 20% YOY increase in capex in the June quarter and the September quarters coming up. So we have a good favorable base effect in valuations. We have a good favorable base effect in top line as well as bottom line. So I think the next couple of quarters you can actually see good numbers on a year-on-year basis. And then if the momentum sustains, then you actually have good momentum even without a low base.
So from an investment standpoint, the obvious question is that should you now look at aggressively buying or should you look at selectively buying? And if yes, for aggression, what sectors? If yes, for selection and capital protection, what sectors?
Sure. I think the sector that needs to drive the market has to be financials.
Yes.
Because we've discussed so many times that the valuation equation as well as the growth equation seems to be in favor. And balance sheets for most of the large NBFCs and banks are pretty clean. So if we are on the back on the growth path, then I think financials should lead the pack, so to say, especially in the large cap and the diversified indices. In the small cap and mid cap indices, the financials weightage is much lesser, but they will drive the diversified and the broader indices.
Anything that you specifically bought, not necessarily in financials, but in this big correction that we saw? You said that the small cap index, before you blink, was up 8% from the lows as well.
Correct.
Did you benefit from any of those declines?
I mean, we don't take big cash calls, frankly. So we were, anywhere between 90 to 92% invested in any case. So there was not much churn that we did. But in the diversified fund, we did increase exposure to the financials as banks. But we are still sticking to the larger ones.
Okay, so larger financials.
Yes.
That's one aspect. Coming back to and since you're saying that now, you explained the base factor, right? That government spends anyway will start looking better because of the base factor. What is your stance now on the capex side of the market? That was the previous leader, which is why I come back to that question, saying, will previous leaders continue in this phase or will they kind of give way to someone new?
I think they will continue because this story that we talk about is a multi-year story. It's not about only this quarter or next quarter. The government has to spend. The private sector has to come in. The government is rolling out PLIs. We have to indigenize defense production. So all those themes have not changed. We need massive investments in distribution for power generation because of the thrust towards renewables. Renewables targets are being scaled up. So all those themes were multi-year themes to start with, and they will continue. And stock prices are down like 40 to 60% in many of these segments. So I think that will definitely continue. Probably financials, which lagged almost for 1.5 to 2 years, should now not lag that much and actually maybe lead the pack a bit. Okay. So maybe the kind of multi-bagger returns that you saw between 22 to 24 in some of these segments, the capex segments, may not be there because even after correction, they are at normal valuations, but you will still see them outperforming.
Earlier, up move was expected to be capex led, and now post the budget, people are talking about consumption. There is a recovery in rural consumption. There is expected recovery in urban consumption. Where do you stand in the consumer stocks?
I think FMCG will continue to underperform. I mean, it may do better than what it itself used to do, but it's still a boring number.
Okay.
Because most of these categories are well penetrated, 80-90% penetrated. And I was just looking at one of the studies that Motilal Oswal did on the institutional equity side. Most of the large cap FMCG stocks have less than 10% CAGR in turnover over the last 10 years, right? So even if you remove all the seasonality and cyclicality, we are talking about, maybe single digit or low double digit kind of a growth number, which is not what we want in our portfolio.
Okay.
No, got that. By the way, Amir, with full disclosure, and of course not asking, would you want to name one or two, I have a few ideas in the small and mid cap space where price damage has been quite a bit. How are you thinking about, what kind of framework are you building when you look at names, businesses? Because just simply price damage cannot be it, right?
Absolutely.
So just to give us a sense, maybe one name and just to kind of sort of build the thesis around it.
Sure. I mean, name is not possible, but we have always been saying that the domestic economy makes more sense to play than the global economy. And we have been mostly underweight on large cap IT stocks, for example, and we've been mostly bullish on the domestic themes. Within the domestic themes, as I said, we were kind of underweight on the financials till now, more on the capex and physical asset creation side. So that means capital goods, infrastructure, construction, railways, defense, those kind of themes, which we continue to be overweight on. And then specific stock picking in the healthcare segment. So within healthcare also we have generics, we have CDMO, we have we have the hospitals, and we also have the diagnostic plays. So across healthcare also we are overweight. So we are structurally overweight on industrials and the physical asset creation, including real estate. We are structurally positive on the healthcare segment. Typically, that's what we tend to do. But now incrementally, as I said, I would play more of the domestic financials.
When you speak about real estate incrementally, we've seen an up move come by on Aditya Birla Real Estate. Remember, the company has launched a project, their first project in Pune, eponymously named Punya, Aditya Birla Punya, and they expect sales in that business to come to around 2,700 crore rupees. So AB Real Estate up 4%, the street takes note of that. On real estate specifically, where in the cycle do you think we are? Because at one point the prices were going extremely high. This is flat prices that we're talking about. Now, there are pockets of problems in the entry and mid space, whereas luxury continues to do okay-ish. Where do you think we are on the real estate space, and what sectors would you back? Would it be Bangalore, Hyderabad, or Bombay, or Delhi?
Market segments, because we have seen good price appreciation in the last 3 years in most of the segments. But volume growth, especially for the organized players, I don't see a problem. Because even now when quality builders are launching projects, they are getting lapped up. There might be a bit of a froth in the NCR market, especially the Gurgaon, where things are a bit wonky. I don't know how much is bookings and how much is genuine sales there. But in general, I think volume growth is something that we need to play for. And as you mentioned, the affordable housing still needs a bit more push, I guess. It's not the strongest segment. We still continue to be in the K-shape of the real estate space.
You mentioned financials. I just want to come back to that. By the way, just let's pull up the stocks as well. Bajaj Finserv, and I think in finance, they have now turned slightly lower. That's the situation. Look at the other life insurance stocks as well. Pru, Lombard, there's some green over there. SBI Life also started out positive. Let's talk about the non-banks, because you're positive on overall financials and what makes sense to you over here. With insurance, the thing is that there are so many regulatory changes. Every quarter you run into something from IRDAI or something on taxation, which kind of truncates the wider move. But we know there's commitment in this deal. I mean, this morning's deal tells us that there is serious money being put to work over here. What do you like in non-banks?
So in non-banks, we've recently, not recently, we've basically always been positive on the capital markets theme.
Okay.
Of course, that theme has taken a beating for lots of reasons. First of all, in some of the exchanges, etc., because of regulatory changes, volumes have come down and all that. So we have seen stock prices take a beating. But now they've, I think, formed a good base in any case. So structurally, in the capital markets theme, because we think the savings pool will continue to increase. So everything linked to the savings pool, which is wealth management, broking, asset management, and then of course you have more trading, etc., exchanges, etc., mutual fund distributors, for example, they'll continue to do well. They will continue to grow at a rate which is faster than the rest of the financials. So structurally, I think the capital market segment will grow even faster than the lenders.
And the vagaries of the market don't worry you, because typically the sentiment is that, the stocks will fall every time the market falls.
They will be pro-cyclical.
Yeah.
They'll be high beta in the direction of the market. But, point to point, if I were to take a 10-year view, I think they will
overall
outperform.
it will give you better returns. And what about lenders? You're saying some of these, the capital market players will outperform, let's say, lenders.
Over the longer term, but they'll be high beta.
But in lenders, because it's not a, paint everybody with one brush situation anymore.
Correct.
So what is governing your stock picking when it comes to banks?
Absolutely. So as I said, in the lenders, I'm bullish both on the NBFCs as well as the banks. NBFCs probably in the shorter term might benefit more by the rate cut cycle, because most of the NBFC lending is fixed rate, again, as compared to the banks, which is floating rate. So when rate cuts happen, the bank's asset book will get repriced faster downwards. The liability book will take a little while to, so they might not be able to improve their margins immediately. But NBFCs, because their borrowing costs can come down sharply immediately, they can improve their margins in the shorter term. And plus, the RBI had been really coming down heavily on the NBFCs last year, which they are now easing.
They have some reprieve.
So they have a bit of a regulatory tailwind also.
What about hospitality? We've been speaking about, that being in a cyclical uptrend, also demand-supply dynamics favoring the industry, unorganized to organized, and all FMCG, yes, under-penetrated, but consumer discretionary doing a lot better, and hospitality is one of those spaces.
Absolutely. So, the K-shape continues in the economy, while rural is catching up. I think as far as growth rates are concerned, all the premium segments will continue to do well, whether it's hospitality or airlines or, hotels or even your high-end jewelry, for example, watches, high-end cars, SUVs versus cars. So that, I think, theme will continue.
Mir, pleasure having you with us here. Thank you very much for joining us.
Thanks for having me.
Appreciate your thoughts, as always. Now, let's focus on the big story from last evening, right, which is, of course, the Bajaj-Allianz separation in that sense after actually decades of working together. And my colleague Yash, of course, has been tracking this for the past many months now. This finally happened. And Yash is now picking up some more plans with regards to what Bajaj Finserv's what Bajaj Finserv wants to do with both the life insurance and the general insurance entity. Yash, good morning. Take it away.
Good morning, Prashant. So, of course, with this particular announcement of the transaction, one thing which is clear is that Bajaj Finserv and its promoter companies will have 100% ownership of Bajaj-Allianz General Insurance as well as Bajaj-Allianz Life Insurance. What that does is it gives them freedom in terms of what they want to do with that 100% ownership, a lot more flexibility. Now, a natural question was, of course, that after, a termination of this JV with Allianz, would Bajaj Finserv go out and look for another investor, a like-minded investor, to bring in capital as well as expertise in both the JVs? What we've been given to understand from our sources is that the intention is completely opposite of that. In fact, Bajaj Finserv does not want to get any new investor, strategic investor in the life as well as the general insurance JV. And the intention is to have it owned entirely by Bajaj Finserv and its promoter group companies, essentially Bajaj Group. But, over a period of 1 to 2 years, the intention is also to unlock some value out of these two entities. And the way to do it, as per the company's consideration, would be to look at a public listing of both life and general insurance entities. But at the same time, there are a lot of moving parts in terms of regulations at this point of time. So any potential listing, as I've been given to understand, would only be a FY27 event. The valuations we have, Bajaj-Allianz General Insurance, the deal values the company at over 53,000 crore rupees, the life insurance entity at over 40,000 crore rupees. So combined valuation at this point of nearly about 1 lakh crore rupees.
All right, take that point. Yes, thank you for bringing us up to speed with all the developments out there. We will, keep an eye out on Bajaj Fin and Bajaj Finserv. But The stock on our radar, the sector on our radar right now is the paint space. Brent crude prices are contained around that $71 per barrel. Will this impact margins of paint companies? How's demand holding up ahead of any sort of up move that we'll see in terms of urban demand as well? Abhijit Roy, who's the Managing Director and CEO at Berger Paints, joins us now. Abhijit, this paint space always buzzing, right? Right now it's raw material prices which are contained. That should bode well for your margins. But in light of competition, are you passing all of that value to consumers and perhaps keeping your market share intact as well? The question, so many moving parts, right? How has demand been in the fourth quarter so far? What are your expectations in terms of volume growth, volume value equation, and margins?
So, good morning, Mangalam. And yes, there's been some improvement, and as expected, we had indicated that quarter 3 was better than quarter 2, and quarter 4 is likely to be slightly better than quarter 3. So that trend continues, and we expect that the volume growth will be in high single digit and value growth will be in mid single digit. The gap which was there earlier was almost 6%. That gap will get narrowed to about 3% from the volume and the value. So that is how it looks like in quarter 4. Demand is not, very strong, but it has picked up definitely from what it was in quarter 3. So there will be a marginal improvement, therefore, in the value growth. As far as profit margins are concerned, we haven't passed on anything because these profit that you are seeing, in terms of the raw material prices going down because of the oil prices going down, that takes time to filter down, because immediately it doesn't happen. Some of the raw materials do get impacted immediately, but most of it takes its time. So as of now, there's been no passing down the profit margin. So it will possibly be retained a little bit, whatever comes this quarter.
So what would your EBITDA margins in the fourth quarter be?
Slightly better than what it was there in terms of quarter 3.
Okay, 15.9% is what you did in quarter 3. I just wanted to get a sense of how much better they would be in the fourth quarter, and if you are releasing any targets for FY26 on volume and profitability front.
So it should be better, second half specifically in financial year 26 should, be better than what it has been this year. This is the expectation. In general, we expect the consumer demand will pick up next year. As you know, all the FMCG companies, including, paint category, has been impacted by a little bit, headwind in terms of demand scenario. Government has taken some action. We need to see, from April onwards, whether the demand really does pick up and to what extent it picks up.
What about competition? There is a lot happening. We've been speaking about Birla Opus. They did their first festive season. Relatively resilient on the east side is you because they didn't have as much presence. But now they are planning to, open their plant in the eastern part of the country as well. Chances are that there could be further intensified competition in areas that you operate in. What are your thoughts on that? And what are your feelers from the ground on their product quality, on their distribution strength, and what they've done so far in the festive season?
So they are, I would say a player who's serious, in the paint industry, and therefore, there's no doubt that they have some presence built up now. As far as the East is concerned, they are already there across locations. I don't think factory coming in is going to add significantly to whatever they are doing today. Largely because, the paints are coming from different locations, north, south, east, west. If you look at even the leader, which is Asian Paints, they don't have a factory in the east, but they are, quite strong as far as the eastern market is concerned. So it doesn't matter actually, whether you open the factory immediately or, we have in fact 2 factories, but that doesn't make us, the clear leader here or something like that. So we are strong, definitely. And, we are there in this place, for a long time. We have our own strengths in terms of brand equity, in terms of distribution network, in terms of our relationship with painters, applicators, builders, architects. So that will hold true. I don't see that changing, in any significant way just because the factory is going to be built. As far as Birla's performance is concerned, they have been saying that, they have large network now. on the ground, which we are tracking, and we see that network expansion has happened. As of now, YTD basis, they have about 3.5 to 3.8% market share, which is likely to, if you look at the monthly run rate, maybe it is about 5 to 6%, in terms of market share. So that is how it is placed. Some of it has come from the organized, some of it from the unorganized. As far as we are concerned, even though there has been 2 headwinds this year, 5% in terms of price drop, which we had to face this, plus, the competition from the new entrant. In spite of that, we are still growing, so next year when, the 5% goes away and the competition intensity will remain, but possibly, it will be muted than what it has been this year. So we expect that the growth rate for us will continue.
Mr. Roy, hi, sir. Great to have you on the show this morning. Just 2 quick questions from my side. One, given this prolonged period of, of pain and pressure, slower volumes, just curious, what sort of capacity utilization levels would your plants be operating at right now?
65 to 70%,
Okay.
This is where we are operating.
Okay, got that. Now, in that context, obviously there's just so much happening in the sector, right? We discussed Birla's. You in the past have told us that if it's the right price, if it's the right strategic fit, then you'd also consider Axos India assets. Where is that? I mean, they've started that formal process, but have you entered into any discussions?
No, we haven't. So we found the valuation to be on the higher side, so we dropped out, of the race. At the stage, when they wanted more serious discussions. So as of now, we are out. But in case there is an opportunity which opens up later, we may again look at it seriously.
You found the valuations high, at least in the first round, so you're not interested.
That's right.
Just one question. Morning, Sir Prashant here. Oil prices have come off very sharply. And I think 40-50% of your raw material cost comes from crude oil derivatives. Could you give us a sense of how this is likely to, if prices stay here and maybe even head lower, as is widely expected, will that provide a margin fillip to you? Give us, if you can provide us with some numbers here going forward.
Prashant, it depends. It's not that high, in terms of the oil impact, because direct oil impact is in the solvents. And then on the monomers, these are the 2 products where oil impacts, the prices. And, there are other factors like, the demand supply situation, how much of supply is there in the market. So a lot of other factors come into play. It does impact, some softening will happen, but it doesn't get passed on immediately to our raw materials and then on to finished goods, because we have inventory, which takes time, therefore, to liquidate. So if it comes, it will come more towards the first quarter, unless the prices again start rising, because these things are very unstable. You never know. Now it has decreased. 2 months back, it was increasing.
Abhijit, Mr. Roy, while we speak about margins in your business as well, while we speak to you, we also speak through you for the industry. There are murmurs of a lot happening at the leader itself, because the leader has lost some market share. You have a significant competitor. All of that, you've been gaining market share. Is there anything that we can hear from Asian Paints? Is there any market chatter that you have picked up?
No, I can't comment on what they are doing. I would like to focus on my team and our company. So we are relatively very stable. We have a good stable team here. We continue to therefore, perform in the market, continue to grow. So that's all that I can say. I don't think I am in a position to comment on competitors like that.
All right, take that point. Thank you so much, Abhijit. Always a pleasure speaking with you. Wish you good luck for the 4th quarter and the quarters coming ahead as well. Take a short break, come back. On the other side, we have the management of Shriram Finance joining in, as the company has raised over 300 million from development financial institutions.
Welcome back. Just a quick check on the market before we carry on with more corporate conversations. Market's holding actually quite nice and steady, 160 points up. So that opening gap has not been sold into. In fact, we are trending at the highest point of the morning so far. So it's looking really good. Financials are leading and the mid-cap index is also doing very, very well. It's a solid Tuesday morning of trade. Well, speaking of financials, let's put the spotlight on Shriram Finance. There was some fresh developments at the company, which they shared yesterday. The company has raised over $306 million from development financial institutions. To talk about this and, of course, to discuss the overall business environment, we have Mr. Umesh Revankar, Executive Vice Chairman at Shriram Finance, joining in. Mr. Revankar, always a pleasure having you on the show. Thank you so much for joining in. So I was going through your press release that came in yesterday. This is an external commercial borrowing, and you've got a lot of marquee institutions who've chosen to participate. So congratulations on that. But what does this do to your overall borrowing cost? Just give us a whole mix. How much is local borrowing? How much is overseas? And at what rates did you pick up this financing? What does it mean for overall cost of finance?
Yeah. See, basically what happens is overall, if you look at my total liability side, 24% is the deposits. We are deposit taking NBFC, and the bank term loans are around 20%. Then we have a securitization done by a bank on the priority sale. That's around 18%. The external commercial borrowing, ECB loans and bond put together, it's around 18%. So overall, we would like to keep around 20% each. Around 20% is the capital market from the capital market NCDs. So we would like to have 5 large sources with around 20% each. That is the strategy we have. External commercial borrowing, especially if it is a loan, normally comes at better rate because development institutes, when they participate for a social loan, we are able to get a better rate. So landed cost will be less than 9%, around 8.5 to 8.6, I can say, with all hedging cost added. So we hedge all international borrowing in the bond market or even the whatever we raise in dollars.
So you're saying that the total cost of this new loan that you've raised is 8.5 to 8.6, including hedging. Now, we're anyway in an environment which has become a little more easier for NBFCs, right? The risk weights that were hiked, they've been rolled back. The RBI has been pumping in a huge amount of liquidity in the system as well. So overall, in the last 2-3 weeks, what's the easing in liquidity conditions? And give us some sense of also what that means for your margins as you look at Q4 and then Q1.
See, Q on Q, if I look at for incremental borrowing, then 10 basis point, there is improvement, that is lesser. So to that extent, yes, we have the margins a little expanded, but I cannot say that it will translate into total what we call margin improvement. We need to wait till the quarter end for getting the numbers, because typically in the month of March, we also do large new vehicles, and new vehicle lending will be at little lower rate. So it may not have a big impact on net interest margin, but yes, it will be positive, definitely, better than the previous quarter. But going forward, I feel the liquidity situation being good, and as you rightly put it, the risk weight, there has been changed by the regulator, and the banks would be passing on some benefit to us. Immediately, you don't see that in this quarter. But going forward for next couple of quarters, I see bank translating that into a lower cost for us. That will help industry as a whole.
So just reiterating, you're saying you've seen 10 basis points improvement quarter on quarter in your cost of borrowings, and NIMs overall Q4, I mean, you see a favorable move. Just a last question, sir, on growth itself. Just tell us, in terms of AUM growth, and the reason I ask you this is that there's a debate going on in auto financing. I mean, there are some analysts that are saying that the reason why two-wheeler sales are falling is that financing has become a constraint. But large OEM makers like Bajaj Auto say that's not really a concern. You tell us, you're in the lending business. Is there any constraint to financing of CVs at the lower end? CVs, used PVs, two-wheelers, etc.
No, two-wheeler especially, third quarter is always a large, and fourth quarter will be lesser than the third quarter. That's every year, because third quarter being the festive period.
Right.
So you can't compare between the third quarter and the fourth quarter. But we have not seen, compared year on year, we have not really seen any negative growth. It is a little flat. It has not grown big, yes, because there were some geographies where
Mr. Revankar, no, point taken. Thank you very much for joining us. Good to have you with us here. Yashish Dahiya is now joining us. He's our next guest, Chairman and Group CEO at PB Fintech. Mr. Dahiya, good to have you with us here. Good morning. We spoke early February extensively about your plans for the healthcare foray, and that foray is taking shape. You're investing almost 600-700 crores in the business. Could you let's start with that. Tell us a few things. When will this venture be rolled out? You're setting up some hospitals, subscription-based. And will there be further investment? You've said you'll bring in outside investors as well. Will you be putting in more money? When is that going to happen? And then tell us, there have been some concern in the market that the focus here is not profitability. At least that's the view of some analysts that I've spoken to. If you can clarify on that as well. Go on, sir.
Sure. So, sorry about that. Essentially, what's happening is we have about 4 crore people in India who buy health insurance. And what we are creating is a facility for the health insurance industry, which includes everybody who has a health insurance to have essentially their own family doctor who advises them on what's the course of action they need to take. This person is not incentivized by how much they get treated or by what operations they have. This person does not make a referral fee. And what that implies is that this person can be fairly unbiased and be like a friend to the consumer, and thus advise the consumer on whether they need to go to a hospital and which kind of hospital is right for them. At the next level, there is a network, which is a narrow network compared to the wide network that exists today. The wide network is about 14,000 hospitals in the country. You may select a small percentage of them, whatever the number be, 200, 400, 500 hospitals. And these are the hospitals where these consumers can go. And as long as they go there, their experience on the claim side is made very smooth. That is the whole approach. Now, out of this network, in one particular city, we would own that network. And the reason for doing that is principally to make sure that the experience from a technology perspective, from a consumer service perspective, is built to a different level, which we envisage can be a game changer for the consumers in terms of their experience. And then perhaps once that is proven, to roll that out across the network per se. Now, when you talk about PB Health, it is there is an investment going in of about 2,000 to 2,500 crores from various investors. Many of them are pure financial investors, and they have no reason to invest except for the financial return they expect to make out of that. I don't think it is for everybody and anybody, for the entire market to agree on what is the return they expect from that. They believe there is a return, that's why they are investing. A bit like when InfoEdge invested in Policy Bazaar way back in 2008. Many people believed it was not a great financial investment. They have made about 100x return. So I would say let them who are putting their money be the best judge of whether putting their money is worth it or not. Yes, you are absolutely right. From a PB Fintech perspective, it is not just a financial investment. From a PB Fintech perspective, the fact that the health insurance customers get a better experience helps the industry do better and helps PB Fintech, which is a large, player in the health insurance industry, do better. And so clearly we have a bias, strategic reason to do this beyond the financial investment. But that does not mean that is the case for everybody. A lot of the investors coming in are pure financial.
No, I completely agree. But the only thing is that PB Fintech will have about 34% stake, right, in this entity.
Yes.
So you are kind of the prime driver. So
I think by the time round 1A and 1B are over, because it's done in 1A and 1B, I think PB Fintech would be down to about 25-26%. And from a strategic perspective, because I know who the other investors are, I do not believe PB Fintech is the long-term strategic driver of this project. It is at best an incubator and a catalyst. It is not the long-term owner of this project, and nor is it the long-term driver of this project. At least two of the investors coming along are much more in that category than PB Fintech.
Can you tell us who are the other investors?
I have confidentiality. Like in any agreement, you cannot disclose people till the deal is done. And that is a pretty obvious thing. I don't know why people want to know that before the deal is completed. And the deal cannot...
So you are saying after the second round of fundraising, your PB Fintech stake will...
It is after the first round is complete, which is 90 days after the shareholder agreement is signed.
Right.
PB Fintech would be about 25%.
Okay, so PB Fintech stake will be down to 25%. That's an important point. You're saying for PB Fintech, it is not purely a financial investment, but one should not assume that, I mean, there are outside investors who want a return on their investment. So
I would hope so, unless they don't like their money.
But, and you're saying, the only problem is that you right now also said that for PB Fintech, it is not. So 25% is also a significant stake, and you are the man driving things, right? I mean, people are betting on you, Yashish. So when you say that financial return is not the sole driver, the sole motivation for this, hence that question. That is the only thing.
Let me explain. Financial return is not the sole driver for Policy Bazaar either. The primary objective of Policy Bazaar is to grow insurance penetration in India, specifically in health insurance and term insurance. And that's why it takes us 14 years to have broken even. And yes, we will make profits as well, like we are doing right now. But that is not the primary objective of our business. The primary objective is the purpose with which it is set up.
Absolutely.
For PB Health, the primary objective is giving the customer a great experience, making the insurance smoother. The primary objective is not to just make a profit.
Sure.
For any mission-driven business, your primary objective is not always to drive short-term profits.
No, absolutely. That's a very sort of noble, way of looking at it. But just to get back to some specifics,
I can't see any other way to look at it.
Now, the thing is that there are also shareholders, there are public shareholders, so we have to ask you the profit questions as well. I mean, that's the compulsion from our side. So just to go back,
the public shareholders have got enough information to make a decision, which they have to make over the next 25 odd days on whether this is a good project for them or not.
Absolutely. So Yashish, just to
do it, and I don't think the profitability of this particular venture should be the primary decision maker for them on whether they need to invest or not invest.
That's an important point, and thank you for being candid enough to say that for shareholders, they need to think beyond profits as being the primary motive when they're coming to that decision. But just let me get to the specifics. What you're saying is that over the next 90 days, by the time the first round is over, PB Fintech's stake in this entity, PB Health, will come down to 25-26%. That's point number one. Since and for how long do you foresee PB Fintech holding at least this 25%? I heard you. You said over the long term, PB Fintech will not be the owner and driver. So for the foreseeable future, 2-3 years, do you expect PB Fintech, the listed entity, to continue holding at least 25%?
I don't know. PB Fintech, as of now, I don't envisage PB Fintech investing anything further. Now, what that means is, if 1 year down the line we raise more capital, PB Fintech is not participating, so of course it will get diluted. How much we will raise, I don't plan things to that level of detail right now.
Okay, sure.
We are raising
take that point
for the first 3 years, But that does not mean we will not raise more capital.
Okay. Okay, fair enough. So there could be further dilution, but you don't know how much and when at this point.
Yeah, at this point, I do not envisage PB Fintech ever having to invest again. Now, that is not a commitment that we will never invest. But what it means is I don't actually envisage it. I don't see it.
You don't see that need. You don't see that need at this point. Now, I must ask you the question of some basic assumptions, because like I said that, as of now, there are public shareholders and they will have to decide whether to sort of participate in this or not. For their sake, just some estimates, because you would have done some basic homework. This kind of an investment, I mean, what is the kind of IRR, ROI, what is the kind of profitability margins? I'm sure you and the teams have done some basic math around this. If you could,
I think there's a 50% chance the project will fail. There's a 50% chance it might succeed. If it succeeds, it'll be very big. In a way, when we started Policy Bazaar, how much projection did you want me to make in 2008?
Right.
I, of course, have a projection. And I have shared that with our board. And we have shared some of the things with our own shareholders in terms of why we are doing this project.
Right.
We have also shared it with the other financial investors. And I don't think, for a private company out there, we are going to put, our projections every year out there. We don't even put projections for Policy Bazaar or PB Fintech. You do appreciate, right? I don't even disclose what our profits next year are going to be for PB Fintech.
No, we understand that, but past has it, and you said that shareholders have enough public information to make a call on what they want to do with their investments in PB Fintech.
Yes, and I'm clearly saying there's a 50% chance the project will fail.
Right. We take that point. And, apart from just this foray, there have been concerns around growth for your own core business as well, as there have been for Paisa Bazaar too. Though there have been, yes, please go ahead.
Your fear on the core business. In the year of the IPO, we did about 5,000 crores of premium. Right? This year, the core business alone, outside of POSP. So we are doing 23,000 crores. Let's say 5,000 crores is POSP. That's 18,000 crores. How much growth do you want? Is 5,000 to 18,000 not enough growth? In 3 years.
We get that, but it has to be relative to the industry as well, right? The street is betting on you growing.
Industry, my friend.
1.8 to 2 times industry is what the street is penciling in.
Yeah, I think it's about 3-4 times the industry. If you really do that math. From 5,000.
And you believe that you will continue to grow at 1.8 to 2 times?
What is that?
No, you believe that you will continue to grow at 1.8 to 2 times industry?
I don't think we give projections in that manner. I hope that we do grow faster than the industry. But all I'm saying is in the last 3 years, we have grown at about 3 to 4 times the industry.
Okay, and what about the disbursement growth in Paisa Bazaar?
Over the last 3 years, that is also the case. However, of course, during last year, there was a credit squeeze. So the disbursal would have gone down. That is obvious.
Have you seen signs of improvement, and do you expect them to improve?
Month on month, we are seeing signs of improvement now. I think if you were to think about it, maybe November was the lowest month. And since then, month on month, we are seeing signs of improvement. But I don't think anybody was, on the unsecured business side, able to display, significant growth as a market till November. But yes, now we are seeing signs of easing and signs of growth. Plus, the secured business has grown very well.
Yashish, by the way, I must say, Prashant, I love it. 50% chance success or 50% chance of failure. But, I think only you can say it and get away with it. You build the business,
there's nothing to get away with it, my friend.
No. I mean it as a compliment. I don't mean it in the sense that, I started by saying investors are betting on you because you built that business. And you said, and towards the tail end, you said if it succeeds, it'll be very big. So I think point taken. Just a quick thing, Yashish. When is this
what we are attempting to do is a very big change in the market.
Correct. Absolutely.
What we're attempting to do today, when you go to a hospital, a person at the back of the mind thinks, why is this operation happening? Is it because the doctor or the hospital is making money from this?
Yeah.
Right? Yeah. And it's a very big, serious problem.
Yeah.
So there are reports out there of various sorts, right? But let's not go by that. We're trying to solve that fundamental problem. Without that, how will the middle class have health insurance? How will it work?
Okay.
Just to complete that loop on the healthcare business itself, we take your candor, that 50% chance of it failing, etc. What I just want to understand is your rationale of currently valuing it at close around 2,100 crore? What
No,
went
we are valuing
into
it at
that?
zero, my
Yes.
friend. Again, you are getting it wrong.
No, the amount that you've put in versus the stake that you've got.
Please
Yes,
hear me out.
okay.
Please hear me out. There is cash coming in of 2,500 crores odd. The valuation is 2,500 crores after the cash comes in. There is something called pre-money and post-money value, very important for your, readers, because all of them are not financially very savvy. The pre-money valuation is zero, absolute zero.
No,
Okay,
no,
there is no premium.
No,
Everybody is coming in at cash. 2,500 crores of cash is coming in. I'm saying
Yes. Post money is absolutely.
Post the investment is 2,500 crores. So if I put
point taken.
500 crores, I have 20%. It is as simple as that.
So which is what we wanted to understand. What was your rationale for giving 20% for that 500 crores as against 100% or 80% for that 500 crores or as against say 10% for that 500 crores?
Everybody is coming in like an equal partner, putting in their money to buy the share.
And
the company is being set up from scratch. There is no value attributed to the concept or to any other thing out there, right?
Yes.
It's like a typical thing, and I want to be very clear about it. The company is valued at the cash balance, nothing else.
Correct. Now, before we run out of time, because I want to ask a couple of other questions as well. So our colleague Yash did a story recently, very important story, on the regulatory front for your main bread and butter business, saying that the regulator, IRDAI, is not happy with general insurance companies, general and health, on how they have managed the EOM, expenses of management. Within that, what they're saying is, well, commissions actually have been very high. And, the regulator has communicated that unless this is brought down, there could be a cap on commissions. I'm sure you've seen the story. It was put out recently. I just wanted your thoughts, Yashish. How do you think about this? And how, if there were to be a cap on commissions, how will this affect your business? Because that is bread and butter. Go on.
See, our take rate is about 16%. That's the total revenue we make divided by our premium. Okay. The expense of management is at 30% in general insurance and 35% in health insurance. Besides that, this is a very large topic. It is more for the regulator to decide than for me to comment on. The regulator is the principal of this school. You are asking the prefect or the student to comment on the principal.
No, but will your business be
unfair?
The
regulator in their wisdom will decide what is right.
Yeah.
All I'm clarifying is we are at 16% and the expense of management limit is at 35%.
The point is the regulator is saying EOM is OPEX plus commissions. They're saying you've cut OPEX but not commissions. The way you manage that EOM number is by doing this. But commissions are high. Commissions have been climbing. So bring that lower. And hence the question, Yashish.
Yeah, so I think it's for the regulator. I don't really have a view on this, my friend. It is more for the regulator to decide. It's a bigger question than, I can answer.
Okay, Yashish, so to circle back to where we started, and since we've spent so much time, trying to make sense of PB Fintech's interest in PB Health, just leave us with some timelines now. The cash has been coming in, you're getting in the investors. When does the business come off the ground? And just remind our viewers once again, while you're talking about experience.
I just wanted to clarify, the cash has not come in yet. The cash will come in over the next
commitments are in. Days. Yes, the commitments are in. So therefore, what are the timelines? No, absolutely.
I wanted to explain. The money will come in by July end.
By July end, the money comes in. And then what are the timelines to get this network up and running, the better experience you're speaking of?
We should have an operation ready, some sort of an operation ready by about December, which is about 5 months after the cash comes in.
And by when do you decide that on which part of the 50% are you? 50% success rate, 50% failure rate? Is there any timeline?
I think we will know in about 4 years' time.
All right, 4 years' time. Okay.
All right. Well, Yashish, but we look forward to many conversations over the next 4 years, and it's always interesting speaking to you. We wish you all the best of luck as you build out that business, and I'm sure it'll be a success. It's not 50-50 with you at the helm. Thank you very much for joining us, and look forward to our next one. All right, that's Yashish with his perspective on the business, the underlying business, of course, the healthcare foray as well. We'll take a quick commercial break here. Manisha will be focusing on the commodity space. Stay tuned, coming up.
Do you worry today, Sabya, that we are at a point which is almost an existential crisis for a whole host of arts and artisans across this country? I mean, you were talking about the fact that this shouldn't be treated like a charity. It shouldn't be treated like a CSR project. What kind of interventions do you believe we need at this point in time to ensure that we keep this soft power alive?
You know, we don't need to do much because evolution will take care of itself. Because I'll tell you, so we were at the age of influence, which is moving into the age of intelligence. AI is going to come in. And I personally think that AI in many sectors, especially in performing arts and art, will be very short-lived.
All right, welcome back. Well, the equity market's been holding up quite nice and steady. Let's figure out what's happening in commodities. We have Manisha with the latest. Manisha, so what's the headline there today?
Well, I want to look at metals really, Surbi. On top of my list clearly is gold, because the kind of run-up that we've seen into this one has been unstoppable. Last year was 28% of gains, and this year we're already up by 15%. We are trading above $3,000 an ounce, and last time I saw was $3,012, and we still are running on the higher side. The latest trigger really came in from the weak US data. Every number that's come in the last 24 hours, whether it has been about retail sales, new home builders, New York manufacturing contract, all of that came in on the weaker side. That has been supportive. And the inflation numbers were higher. Remember, the US Fed meeting starts today for 2 days. And ahead of that, we are looking at buying coming into this space. OECD report that came in yesterday also has cut the global growth forecast. That's supporting the markets there. And then US also has launched some airstrikes on Houthi men at rebels in Yemen. That has been yet another the geopolitical tensions that seem to be supporting the prices as well. That's about gold. Silver has been trading on the higher side as well. And when you look at within the industrial metals, copper is your space to be, because we've seen prices gain 1.5% overnight. Copper prices are up 25% in this year already right now. If you look at the US copper prices, they are much higher and are trading at a 10-month highs with a premium of almost $40 to $60 a ton. And when you look at the LME copper prices, they are trading at a 9-month highs as well. Aluminum is yet another metal which has continued to do quite well for itself. We've seen prices trade at around 9-month highs. 5.5% up in this year until now. There is low supplies coming in from major producers. And for aluminum, it also is about Chinese markets where you are looking at exports muted, especially after those tax rebates were ended. Now talk about the US markets, and with 25% import tariff imposed, you're looking at US aluminum trading at a premium of $990 a ton right now, with 60% of a jump up in premium from the start of this year. The other metal on my screen also is zinc and nickel, where we are looking at multi-year highs onto those one as well. And major support coming in from the US dollar index, which is trading at a 5-month lows. There also are more expectations of stimulus coming in from China. And then we already have seen China come out with a plan on Sunday. The clarity of that is awaited. And then finally, it is going to be about the central bank meetings. You have the US Fed happening today and tomorrow. It's also Bank of Japan and Bank of England, all of them meeting in this week. So any statements, any changes from there also will impact the markets.
Okay, all right. Thank you very much, Manisha, for that. With that, we have to quickly slip into a break. On the other side, our special segment, It's the Economy. Lata today will be in conversation with Niranjan Hiranandani of Hiranandani Group and Gulam Zia of Knight Frank India to discuss whether the stock market downfall has led to any sort of a slowdown in real estate sales.
After the age of intelligence will come the age of wisdom. And when the age of wisdom comes in and people realize that the greatest gift to humanity is humans themselves, and we should not robotize our existence so much that we forget to be human beings, then people will realize that art and craft is going to be the most important expression of humanity. We don't have to do much. Evolution will take care of itself.
We certainly hope so.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajaj at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years.
Welcome to It's the Economy. The Nifty Realty Index is the worst performing index in 2025 and even in the past 12 months. While the Nifty is down 4.2% from Jan 1st to today, and the mid-cap index is down 14.5% year-to-date, Nifty Realty is down 23%. Likewise, on year-on-year terms, while Nifty and mid-cap indexes are in the green by about 2 to 5%, as you can see. The Nifty Realty Index, so even in year-on-year terms, is down 3.2%. That's from year-ago levels. So is there any underlying slowdown that this fall is reflecting? More importantly, is the fall in the stock market hurting the wealth effect and thereby impacting real estate sector at all? For all these questions, I'm joined by two seasoned people. One is, of course, a seasoned realtor, Niranjan Hiranandani, and a statistician, if you please, a consultant, Ghulam Zia of Knight Frank. Gentlemen, thank you very much indeed for your time. Ghulam, I'm going to start with you because you gave me some data only on Bombay sales. Mumbai is not indicating much of a slowdown, but some pockets are. Can you take us through what you have found?
Thank you so much, Lata, for inviting us on this show. It's always a pleasure talking to you. And since we're talking data, and since specifics are coming in from Mumbai, let's talk about what's really the trend across various layers of markets. When we're talking about the topmost market, and that's something which everybody's talking about, that last 3 years, the market has been completely driven by the luxury sales and premium apartments selling like hotcakes, etc. So that's one segment which is in any case doing well, but that is obviously largely dependent on the wealth creation on equity markets. And that segment, the super premium, when you're talking about, say, 50 crore plus kind of a category, is actually going on as usual. In fact, the number of sales I've shared with you last 5 quarters, there is hardly any slowdown there. But the worry is actually in the immediate next slab, which is 10 crore to 50 crore of segment, is showing cracks. And why is what I will try to explain. Because if you look at the inventory that has piled up in that segment is dangerous. It is going to take at least 4 to 5 years to absorb that inventory. In the upper end, only 2 years to absorb all the inventory existing in 50 plus category, 50 crore plus. But the 10 to 50 crore category is where there is a lot of sweat already. And the category which is below that, which is below 10 crore, is once again showing not more than 2 years to 2.5 years to absorb. So when you're looking at overall situation, it is that segment which is already showing cracks. And while anecdotally, if you're talking to many of the stakeholders, they are talking about slowdown, no inquiries, no conversions, etc. But all of them are just lead indicators for me. The data says barring one category, which is 10 to 50 crore, in other categories, it is not much of a sweat. So overall, that's Mumbai number. But when you're looking at the other cities as well, while Pune and Mumbai are still looking...
Okay, we'll come to that. Okay.
Sure,
no,
sure,
I'll just come to the... I'll come to the cross city in a minute, but just wanted to explain the data that we have been showing. What Ghulam Zia is saying is that there is only one category above 50 crore, which in year-on-year terms has shown a lower growth of 22%. But even there, quarter-on-quarter, this quarter is better than last quarter. Likewise, if you look at the pile-up of inventory for the 10 crore to 20 crore houses and 20 crore to 50 crore houses, you need some 4-5 years to clear out the inventory. But for the topmost category, you need only about 3 quarters to clear out the inventory. That's the point he's making. Mr. Hiranandani, your thoughts. Is the stock market wealth effect hurting at all or not at all? Demand is good.
Lata, the stock market fall always hurts, because everybody has some investments into the stock market, so they always feel unhappy about that situation. So I think it's more about the feel bad factor rather than the feel good factor, which would happen when the stock market is going up. But on the other hand, I don't see a reduction in terms of demand interest in the real estate market at all. So the kind of inquiries that are taking place, the closures that are taking place, and the demand potential that has happened is in fact going up. And that is exactly what Knight Frank's report, which Ghulam has presented, is actually indicating a quarter-on-quarter increase as far as property sales are concerned. The only segment which worries me is actually the affordable segment. and not the higher segment. The higher segment demand, interest, and other thing has gone up, barring the sentiment that you are talking about, which always will affect any sentiment which is negative. People will kind of feel, oh, should I buy now or not? But on closures taking place, I still see things are going as they were. In fact, the inquiry is quite high and strong, and they're still continuing to grow. Except affordable housing. Affordable housing is a very big challenge. And I'm a little worried about that segment of the society because, you know, the taxation and other issues have really created a problem in that segment. And I don't know really how the government...
You define affordable as under 1 crore or under 50 lakh?
Under 50 lakhs is the government's definition. So I go by that definition, no?
Okay.
So I'll stick to the definition which government has given, Reserve Bank is giving, all the other agencies are giving, PMAY is talking about 45 lakhs. So 50 lakhs and below is very challenged, but all the other segments are still, demand is growing and we still see closures taking place. I don't see a problem in the short run.
Okay.
In the long run, if
one minute, Mr. Hiranandani, 1 minute. Ghulam Zia's data, which you are aware of, is showing that 10 crore to 20 crore, 20 crore to 50 crore, or rather 10 to 50 crore, it will require about 16, 17 quarters to clear out, which is about 4 years. You're not worried about the inventory pile up in that 10 to 50 crore bracket? Won't that push down prices? You know, along with inventory, you also have a stock market which has not been exactly exhilarating. Would you worry that in that sector prices may fall?
Of course, there is a possibility because if there are a lot of branded players and unbranded players in the segment who have got into. So I think many of the unbranded segment is challenged very much, and you will see there's a skewed situation. The branded players are able to make the sales, and the sales are much faster, and the stock available with them is smaller and shorter. Okay. But if you're seeing people who are unbranded, who have come first time into this segment and are trying to get into the market, obviously the sales will take a longer period of time because these are not the people whom the people recognize as regular players in that segment. So while we talk about it, if you look at the kind of sales that take place with the branded builders, whether it's in Mumbai or you saw it in Delhi, in both the places, the sales in the branded segment is strong, very strong in fact.
Okay. Ghulam, I'll come to the affordable housing. Okay, let's discuss that first. Would you equally worry that affordable housing is a problem? Is it a sales issue? Is it that people are not interested in that segment because the profits are thin?
Absolutely the case, as you said, Lata. The problem with affordable housing, and just to take you 4 years back, or 4 to 5 years back, COVID and pre-COVID, affordable housing used to be almost 2/3 of overall sales in the country. I'm talking about top 8 cities. And that today has shrunk, that pie has shrunk to actually just about 1/3 or even lesser in many markets. And that's a big worry. And that's a big worry only because that in that period, at least there was a transition from Pradhan Mantri Awas Yojana 1 to Pradhan Mantri Yojana 2, which started in October 24. And that's where the new segment has opened up for affordable housing, but supplies are just not there. Developers are not coming on to affordable housing purely because the margins are low, and you will require much more efforts to sell in that category because right now what is selling is mid to upper end. So obviously it is simple economics, commerce, they're all here to make money and quick money, of course. And hence, developers have actually been ignoring the affordable housing completely. And that is what is supposed to hurt in times to come when things change. That rental, the interest rates are now climbing down. So that segment is expected to come up, but there is no inventory there.
Okay. Very quickly, Ghulam, city-wise, you gave us Mumbai data. You were telling us about the cities that are doing well.
Yeah, in fact, it's Pune which is breaking all records. That's one of the top 8 cities which has actually not showing any impact of any kind of slowdown anywhere in India or abroad. And Hyderabad is flattish, but the ones which are really hurting are Delhi and Bangalore are the 2 cities which are showing clear signs of slowdown. The sales are actually looking impacted. Chennai is showing slightly better performance, but on one end you have Pune doing excellently well. On the other end you have Bangalore and Delhi which are not doing too good.
Okay, Mr. Hiranandani, would you want to add to that? City-wise, is there any spot of bother and any spot of satisfaction?
On the higher segment, I don't see a problem. But what Ghulam is saying is correct. You do see problems which are taking place in pockets. Lata, that is the case which has always happened. Yeah. In good times also, there are segments where you will see slowdown. There will be oversupply. There will be temporary reduction in demand. You can't have it across all the board all the time. So what Ghulam is saying is perfectly correct. But if you're looking at an overall growth story, real estate is still strong. In fact, Lata, I have a different thought process on this, which I'd like to put it across to you.
Yeah.
Lots of people disinvested their investment from the real estate market and moved into the stock market a couple of years ago, where there was rapid growth in the stock markets. Many of them have now burnt themselves terribly, and in fact are looking at the way by which they can re-enter the stock market in terms of investment portfolio.
Got it.
So we are getting a lot of people who otherwise had stopped investing in the real estate sector because they felt the stock market has gone down, and just now some of them are burned so badly you can't imagine. Those who are short-term players have really been burned. Yeah.
Out of time, sir. Thank you very much. But that's a very important point that both of you are making, that demand is still very strong, although there are pockets like the 10 to 50 crore where perhaps there's oversupply, but really no problem with sales or with interest. The stock market fall may actually be abetting interest. So the fall in the stock prices of these stocks still remains unexplained. Thank you very much, Ghulam Zia and Niranjan Hiranandani, for joining me. That's it on Bazaar. Chartbusters coming.
Biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shriram Finance.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Bajaj twins under pressure after Bajaj-Allianz partnership ends. Bajaj Finserv and promoter companies will acquire Allianz's 26% stake in life and general insurance businesses. Sources tell CNBC-TV18 that Bajaj Finserv is not looking for a new partner and may look to list both entities in FY27.
Ircon and NBCC both trade higher on the back of order wins. Ircon's JV bags an EPC contract worth 1,100 crores, while NBCC has won an order worth 45 crore.
Aditya Birla Real Estate climbs more than 3% after Birla Estates debuts in Pune with a luxury residential project with a revenue potential of 2,700 crore rupees.
GCPL is the stock in focus after Goldman Sachs has come out with a note on the stock with a price target of around 1,300 rupees. The stock ahead of the company's meeting with investors as well. The stock is up almost 3.5%.
PB Fintech rallies from lows as the management clarifies on their plans for healthcare business. Speaking to CNBC-TV18 Group CEO Yashish Dahiya says PB Fintech will not be the long-term driver of the healthcare project. Also says the primary objective of the venture is not profit. Instead, it is in growing insurance penetration. You're watching us here on Chartbusters. Great day for trades. The Nifty up 250 points, 800 points, 900 points higher for the Sensex. Mid-cap and the Nifty Bank doing extremely well. You're watching us live from the CNBC-TV18 Motilal Oswal studio. I'm Mangalam Malu. With me, Hormas Fatakia. Hormas.
Very good day. Continuing from where we left off yesterday, right, Mangalam, and crossing important levels as well on 22,750. But is there more upside? We'll ask Shilpa Raut of Prabhudas Leeladhar exactly that question. Shilpa, good morning. Thank you for joining in. You know, we've crossed an important hurdle at 22,600. Is there more upside towards 23,000 now? And your stock recommendations as well for the morning.
Good morning and thank you for having me on the show. Yes, yesterday when we spoke about, we were discussing that above 22,600, Nifty should move towards 22,800, and then we are almost there. From here, I believe the strength in the market is such that 23,000 levels cannot be ruled out as well. And talking about Bank Nifty definitely 49,500 is the next stop, and if it holds there, you should see 50,000 to 50,200 also coming in a few days. Individual stocks, I have two buys. The first one would be a buy in Policy Bazaar. Policy Bazaar with a stop loss of 1361 should stay long. 1400 call writers, we see that there's some sort of unwinding happening. So from here, 1440 should be the next targets. The other one would be a buy in Muthoot Finance. Muthoot Finance also has given a brief, a small breakout above 2300 zones. As long as it is holding above that, we can see levels of 2345 to 2380 coming.
Right, Muthoot Finance and PB Fintech is the call coming in from Shilpa. Thank you so much for joining in, not ruling out an up move towards 23,000 on the Nifty as well. Let's get you some more ideas for profit coming in from our colleagues at Money Control Pro. Anand Chaudhary joins in.
So today's stock idea is TBO Tech Limited, a leading global travel distribution platform where travel agents and travel management companies can book flights, hotels, car rentals, cruise, and many more packages. We are positive on TBO Tech due to rising outbound travel globally. Young first-time travelers from countries like India, Indonesia, Brazil, and China, they often rely on offline travel agents for their complex bookings. These travel agents lack the necessary infrastructure to manage their clients and the extensive inventory database. TBO also solves payment issues by enabling suppliers to be paid in their local currency while allowing travel buyers to collect payments in their preferred currency. TBO has an existing base of large buyers and suppliers and plans to expand it further. With network effect at play, a large buyer base attracts higher supply, which in turn helps in the even higher number of transactions on the platform. GTV generated by buyers in their 6th and 7th year is 5 to 6 times higher than the first year, which showcases the platform's ability to retain buyers. TBO has a huge operating leverage to play as there is zero marginal cost for new transactions due to technology automation, which allows all the incremental benefits to flow directly to the bottom line. So due to very niche business model and no listed peers, valuation of 44 times on FY26 earnings appears reasonable to us.
All right, with that, we'll take a short break. On the other side, we'll be joined by the management of Signature Global. Rajat Kathuria, the CEO, joins in to discuss the company's growth plans. There has been a recent initiating coverage by Nuvama on Signature Global with a target price of 1436. What's the business prospect? Rajat tells us.
Welcome back. It's a good day for the benchmark indices, where the broader markets are not very far behind. There are plenty of movers within the broader markets as well. Mastech, the top gainer on the Nifty 500 today, 11.5% higher now on the stock at the highest point of the day. Midcap IT has been taking a battering in recent times, and the stock seeing a bit of a rebound now from there. 11% higher for Mastech. Netweb Technologies, another midcap IT name, 8% higher on that stock as well. And of course, Ola Electric did not have a very good day in the office yesterday, but has recovered most of those losses that it had in yesterday's trading session. 9% higher on the stock as well, back above the mark of 50 rupees a share. Some flashes on your screen as well. Engineers India, the PSU stock that has won a services contract worth around 253 crores for the Numaligarh refinery, and that stock too has seen a bit of a spike after that order win. We take a short break. Back on the other side with the management of Signature Global. Stay tuned.
Speaking to President Putin on Tuesday. A lot of work's been done over the weekend. We want to see if we can bring that war to an end. Maybe we can, maybe we can't, but I think we have a very good chance. We're talking about land. It's a lot of land. It's a lot different than it was before the war, you know.
The market continues to do well, and the real estate pack is actually back in focus. We recently heard from Niranjan Hiranandani this morning. There was an update that came in from Aditya Birla Real Estate as well. The stock that is on our radar is Signature Global, as the brokerage firm Nuvama has initiated coverage on the stock, a buy call with a target of 1436 rupees. The firm cites the company has built up a robust pre-sales momentum among other factors. So to discuss all of this and more, we have Rajat Kathuria, who joins us now. Rajat, always a pleasure speaking with you. You know, brokerages are bullish on your business right now, but the question we ask always, this year you'd given us a target of 10,000 crores in terms of pre-sales and 6,000 crores in terms of collections. Every conversation that you've had, you were fairly confident that you'll cross that 10,000 crore mark. In fact, almost 12,500 to 13,000 crores is what you'd said you'd achieve in pre-sales this year. But collections of 6,000 crores, you may fall short on that target. We're just about 15 days away from this quarter getting over. How much shorter of the 6,000 crore will you fall on collections, and how much above the 10,000 crore will you go on pre-sales?
Mangalam, good morning to you, and thanks for reiterating, the same question you asked me last time. So, Mangalam, see, to put things in perspective, if you look at our this year's of, the year is about to close expected performance vis-a-vis the previous year, we are seeing a very good spike, both in terms of sales and collections. So, if you look at the sales, pre-sales effectively, we were around that 7,300 crore mark last year, and we'll cross, let's say, 10,000 crores this year. So, which is effectively more than a 35% rise in pre-sales, which we are achieving. As far as collections are concerned, again, there's a very strong spike vis-a-vis the numbers we achieved last year. It's possible that we'll probably not touch 6,000 crores, but, if you look at with perspective to previous year collections, I think there's a strong, hike in that collection number. And the other very simple correlation between the two parameters is that most of our sales are happening on construction-linked plan. So both the numbers tend to move up in tandem. It could always be that, collections happen a month or two later because there's a wide spread of customers whom you're dealing with. But the broader trend is that both pre-sales and collections are looking very healthy.
Rajat, good morning. Thank you for joining in. But that still does not answer our question, right? That Mangalam asked. How much of over 10,000 will you cross for pre-sales, and how short will you fall off that 6,000 mark? You did mention that you will fall short, but by how much, if you could specify that for us?
So, rather the numbers, talk for themselves. It's a matter of, couple of weeks. So I don't want to predict any particular number, but I go with your judgment that we'll cross or very comfortably achieve the pre-sales. But, on the collections, we'll probably be better than previous year, but not achieving 6,000 crores.
I'll tell you something that what it overall does is if your pre-sales cross, say, 12,000 crores and your collections don't touch 6,000 crores, say end up at closer to some 5,000 crore odd mark itself. The collection efficiency of 60%, 10,000 and 6,000 crore turns quickly south of 50% itself. So that was one of the concerns. But like you said, over a month or two, those collections would come by as well. But, from a fundamental standpoint, what we wanted to understand is that brokerages are now betting on the premium side of things in your business itself. If I remember correctly, Signature Global did start out as a mid-premium, affordable sort of company. What prompted you to shift to premium? Was it the lack of profitable opportunities there, or was it the supernormal growth that we saw in premium? What caused you to shift?
So I would say that, we have pivoted the model away from affordable because post the pandemic, the land prices went up and it was not very viable to do affordable housing business, which, we started with and basis which, the organization got set up. So, but, we've shifted out of affordable. We are not closing ourselves to any opportunity in times to come. But, I would say that as of today, we are coming up with mid-income products across the micro markets, we are working with. And we've really cemented our position in all these micro markets with fairly good, land situation, at all these three key micro markets. We are coming up with mid-income products. So in today's, even for this year, if you will see, let's say if we sell close to, let's say, 4,000 plus units with an average, unit price of close to, let's say, 2.5 odd crores per unit. I won't say that we are more towards premium. I would still say that, we are more of a mid-income housing player with, working across the price spectrum in the mid-income housing space.
Now, one of the factors might also be because there was no demand in the affordable housing space. Rajat, if you could corroborate that. And part two of my question being the fact that what about margins this time around? You're expecting to be around 35%. When do you see them progressing higher?
The affordable housing has not an issue of demand. It's like supply is constrained to a level that multiple players of, our size can just keep operating in affordable, housing space, and those homes will keep getting sold. So demand is of that, quantum. So it's beyond your and mine imagination, the number of affordable units which are needed. point is that with the current land prices, and if you want to, and the current infrastructure status, if you want to give affordable housing units within city limits or just on the peripheral of city limits, the land prices do not support the kind of, end product price we've worked with for a long span of time, We used to sell homes for like 25, 30 lakhs for almost like 5 to 6 years. We've done close to 20,000 such housing units. But with the current land prices within Gurugram, we can't afford to do it anymore. So it's unaffordable for us, very much affordable for endless number of customers which are there. So that's why, that's the reason we've pivoted to, mid-income homes. As far as margins are concerned, we will enjoy very healthy margins on whatever pre-sales are being done. We are comfortable with, that 35% EBITDA margin, guidance which we've provided, because our land inventory has come at a fairly good price. A lot of that land banking was done while, prices are not spiked. So we are very comfortable with those, margin numbers for this year, or even for the coming year. We'll maintain that guidance.
Right, because, Nuvama does believe that you can be net cash by FY27, and your cash operating margins, which are currently at around 35%, can potentially reach 40%. So we just wanted to put on board their expectations and your, whether your reportage will be in line with their expectations, or if you could exceed that as well. Finally, from a real estate company standpoint, the important part is what happens to the ongoing portfolio. You have about 11.2 million square feet of that. By when does that get launched? And what does your launch pipeline look like? This year, you had a target of close to around 16,000 crores. Will you manage to do that? And what have you set yourself up for FY26 and FY27?
So see, launch pipeline remains quite healthy. We are very focused in terms of the micro markets, and even in terms of the ticket size, of the apartment which we want to offer to our customers, so that, while prices have gone up over the last couple of years, we've seen that price rise has moderated, and, we want to offer products at a ticket size which becomes, affordable for the customer. So we are happy that, price rise in the market's not happening at the pace it was happening, in the previous 1 or 2 years. Rather, had it continued to rise at a steep pace, we would have also felt a little uncomfortable. So given the market, prices should not, go up in a, little, I would say, steep manner. They should, they've moderated quite a bit. In terms of our pipeline, we'll continue to come up with projects in our key markets, like on the Southern Peripheral Road and across the, Dwarka Expressway or the Sona Corridor. We have upcoming launches in each of these markets. We are yet to decide the quantum, which we'll do at the start of the coming financial year. So pipelines stays very robust, and, since we are creating strong operating surplus, I agree with Nuvama that, our operating surplus is almost inching closer to 40%. It was about 38% for the first 9 months. But with about 48% of operating surplus post-taxes, there is room for us to consolidate further.
And this year you'll cross that 13,500 crore mark on launches, right?
We had crossed that within the first 9 months.
And where do you end?
We'll be in between 13.5 to 16, because we are doing some of the larger launches in the first quarter of the coming financial year.
Right, Rajat, thank you so much for sparing time, joining us this morning. Wish you good luck, and we hope to hear more numbers from you the next time we speak to you after your results. There's a management there of Signature Global. But as we wrap on this edition of Chartbusters, here is some good news for our viewers. India's business news leader is now just a click away, and that is the CNBC-TV18's all-new app. You can get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. You can download the app from the App Store or the Google Play Store, or scan the QR code that comes up on your screen. That is the QR code. But with that, Manglam and I take your leave on Chartbusters. Thank you for watching. Trading Hour on the other side.
Good morning. Welcome to Trading Hour. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. It's a Tuesday morning. I'm Reema Tendulkar. With me is Vivek Iyer. And it's a super strong Tuesday morning as we speak. The Nifty surged 250 points, well above at that 22,750 mark. And in a very short span, we've covered considerable ground. So earlier in this month, the Nifty low was just shy of the 22,000 mark. It was 21,965. So from that level, it's been a good 800-point recovery on the Nifty. The mid-cap index has recovered 5%. The small cap index has swiftly recovered 7%, all from the recent March lows. And this happened just a couple of days back that the recovery started. And we've been picking up ground, small cap index in particular. Look at the advanced decline ratio today. Nearly 5 stocks advancing for one in the red. Mid caps are outperforming yet again. The mid cap index has crossed that 49,000 mark. And the good part is leadership is coming in from the two key sectors, banks and IT. Up until now, it was always one rising and the other one faltering. But today, both the mid-cap, the banks and the IT are moving in step with the frontline indices. And that's where the strength comes in from.
Absolutely. Good morning, Reema. Like you mentioned, very good to see markets completely, and it's across the screen that you're seeing green, the mid-cap, small-cap index, both very, very strong. Like you mentioned, it's the frontline bank indices, the frontline bank index that's doing very well. ICICI Bank, one of the top gainers in this session today. The FMCG pack, especially some of the names that have seen a significant sell-off in recent past, have bounced back quite sharply. GCPL, a positive note coming in from Goldman Sachs in this particular name. Warren Beverages, Citi adds this particular name to its positive catalyst watch. These names are recovered. And even names like Colgate-Palmolive and Marico are seeing some buying in today's trading session. The other set of stocks that have seen some recovery is actually the defense pack. So names like HAL, UBS sales that FY26 may be an inflection year. They also feel that the recent sell-off could be overdone. And on the back of that, they feel that this particular stock, HAL, can do quite well. Ircon is the other stock that's doing quite well, and it's on the back of an order cheer. And the realty pack, something that saw significant selling pressure in the recent past, that also has seen quite a bit of buying. Today's trading session, DLF up almost 3%.
Many of these stocks retracing some of the losses that started towards the end of September. But let's get to the big story. that's happening in the insurance sector. Bajaj Finserv, top index loser also, by the way. Allianz is all set to exit Bajaj Insurance joint ventures after 24 years. So Bajaj Finserv and the promoter entities will be acquiring 26% from Allianz in both the life and the general insurance JV, and the amount that they will be shelling out will be 24,180 crore rupees. Yash is here joining in with the details on this. Yash.
Well, certainly a very big shake-up for India's insurance sector and a big moment when it comes to Bajaj Group's investment towards India's insurance sector. Late last night, that important news came through that Bajaj Finserv and its promoter entities will be acquiring that entire 26% stake held by Allianz in both life insurance as well as the general insurance JV. That is Bajaj-Allianz Life Insurance and Bajaj-Allianz General Insurance. The share purchase agreement for this transaction was signed yesterday, and as per that agreement, post this particular transaction, Bajaj Finserv and its promoter entities will have 100% control when it comes to both life insurance as well as the general insurance entity. As far as funds that Bajaj Finserv and its promoter companies will have to pay towards acquisition of this stake, Bajaj Finserv and its promoter companies will be paying about 13,780 crore rupees for the 26% stake in the general insurance entity. This will value Bajaj-Allianz General Insurance at about 53,300 crore rupees. When it comes to the life insurance entity and the 26% stake to be acquired there, Bajaj Finserv and its promoter companies will be paying about 10,400 crore towards that 26% stake, valuing Bajaj-Allianz Life Insurance at about 40,000 crore rupees. Most importantly, the joint venture between Bajaj Finserv as well as Allianz will get terminated as soon as the first tranche of 6.1% stake is acquired by Bajaj Finserv and its promoter entities. A quick look at the valuations. The valuations have been quite fair as far as the transaction is concerned. When it comes to the general insurance entity, the transaction will value that entity at 4.9 times price to book value and 2.6 times price to GDPI. This is on a trailing basis, that is FY24. For Bajaj-Allianz Life Insurance on a trailing basis for FY24, the deal values the company at 1.84 times price to embedded value. Post this particular transaction, what will be the shareholding and what stake will be acquired by individual entities out of this 26% stake? Bajaj Holdings and Investments, the holding listed company, will acquire the most crucial part of this 26% stake, that is 19.95%. Bajaj Finserv will acquire about 1.01% stake, and Jamnalal Sons will acquire the balance 5.04% stake. There's an important statement which has come from the companies involved in this transaction. They say that once the joint venture between Bajaj Finserv and Allianz is terminated, the Bajaj Group and Allianz aim to independently pursue their insurance strategies in India.
Thank you, Yash, for all those details. And the other big stock in focus today is PB Fintech. If you remember, the stock had fallen 10% over the last two sessions after the company announced its plan to invest nearly 700 crore rupees, 696 crore to be precise, in its subsidiary PB Healthcare Services Private Limited in the next financial year to expand operations. In the new venture, PB Healthcare, co-founder of PB Fintech, Yashish Dahiya, will hold a 4.2% stake for an investment of 87 crore rupees. Alok Bansal will hold 2.1% stake with an investment of 43.5 crore, while Sarabveer Singh, along with Mandeep Mehta and Bhaskar Joshi, will hold about 0.1% stake. In fact, earlier today, we had a chat with Yashish Dahiya, and he said the primary objective of shareholders agreeing to participate in PB Healthcare must not be profit. There is always a chance that things don't work out. He said there is a 50% chance that the foray will be successful, 50% chance the foray will fail. He also added that PB Fintech's stake in healthcare venture will fall to 25% versus the current 33.6%.
By the time round 1A and 1B are over, because it's done in 1A and 1B, I think PB Fintech would be down to about 25-26%. Financial return is not the sole driver for Policybazaar either. The primary objective of Policybazaar is to grow insurance penetration in India, specifically in health insurance and term insurance. I just wanted to clarify, the cash has not come in yet. The cash will come in over the next 120 days, right? Yeah, but without the cash, nothing can happen. No, I just wanted to explain. The money will come in perhaps by July end. So we should have an operation ready, some sort of an operation ready by about December, which is about 5 months after the cash comes in.
And the street is also taking note of the upgrade on PB Fintech today, and that's come in from Kotak Institutional Equities. They've upgraded PB Fintech to an add. Their target price stands at 15.25. They've added that, yes, the stock is corrected, and that's reflecting the concerns on growth and profitability. But according to Kotak, the company has the ability to deliver 1.8 to 2 times industry-level growth, along with improving leverage, which will drive strong profitability. In fact, last week, we also spoke to Nilesh Shah of Kotak AMC on PB Fintech's healthcare foray, and this is what he had to say.
Many other players in this space, hospital companies moving into insurance companies. Here is an insurance distribution company trying to kind of get into healthcare to improve the consumer experience. So I clearly believe that it's honestly not a very material kind of event. Unfortunately, the market sentiment is not really the best right now, and therefore these are probably being looked upon as markets as being some bit of a distraction kind of thing. But I honestly don't think this poses any kind of a structural headwind to their medium to long-term growth plans. And I don't see that as an issue of any serious capital misallocation.
Well, PB Fintech recovering sharply in today's trading session, up over 3%. But let's now slip into a short break. Up next, we'll discuss what's buzzing in the commodity space with Manisha Gupta.
नागपुर के महल इलाके में जिस प्रकार से तनाव की स्थिति निर्माण हुई, ये बहुत ही निंदनीय है। जिस प्रकार से कुछ लोगों ने पत्थरबाजी की है, पुलिस पर भी पत्थर फेंके हैं, ये बिल्कुल गलत है। मैं स्वयं इन सारी घटनाओं पर नजर रखकर हूं। मैंने पुलिस कमिश्नर को ये कहा है कि कानून व्यवस्था बनाने के लिए जो भी कड़े से कड़े कदम उठाने की आवश्यकता हो वो उठाए जाए और शांति को बनाया जाए।
Welcome back to Trading Hour. Well, let's now shift focus to the commodity space. Manisha joins in, and today we are focusing on crude.
Oh, well, yes, that is because the crude oil prices continue to hold above $70 a barrel. Well, that's the case that we've seen across commodities where we are trading in the positive, even as we are dealing with a lot of uncertainty and contradicting fundamentals there. But as you can see on your screens, we're way off the kind of lows that we saw the prices in the previous week there. So some more buying recommendations continuing here. The support clearly comes in from the fact that the US dollar index is trading at a 5-month lows. That has been supportive. And then it is also about expectation of more stimulus that could be coming in from China. We already have seen it being initiated on Sunday over the weekend, and there is some more expected. Apart from that, it also is about US launching airstrikes on Houthi rebels at Yemen. So the geopolitical tensions also continue to support. On the other side, the street is also watching out between the conversation of ceasefire between Russia and Ukraine, and then there are global growth concerns, tariff trades, and all of that continues to weigh onto the market as well. And then there was a report from OECD where they have cut the output growth for G20 countries going forward for the rest of this year. That could be weighing onto the markets, the reason that you haven't seen the prices run up very strongly. So as I said, there is contradicting fundamentals equal on both sides weighing onto the markets there. More importantly, it is going to be about the US Fed meeting. The 2-day meeting starts today. We will hear some announcement tomorrow. But apart from the US, there also are central bank meetings coming in from Japan and England, and the street will take further cues from this one.
Thank you very much for that, Manisha. We will slip into a very short break on that note. On the other side, market technicals lined up with Apurva Sheth from Samco Securities. Stay tuned.
Welcome back. You're watching CNBC TV18. It is now time for the big newsmaker, the big CNBC TV18 exclusive. The news coming in from the insurance space. Allianz is set to exit the Bajaj Insurance joint ventures 24 years after they got into an alliance. Bajaj Finserv and Bajaj Group promoter entities will acquire 26% from Allianz in Bajaj-Allianz Life and Bajaj-Allianz General Insurance for 24,180 crore rupees. The transaction will give the Bajaj Group 100% ownership in both Bajaj-Allianz and Bajaj-Allianz General Insurance, as well as the life insurance business. Joining me now to talk to us about the road ahead post the exit of Allianz is Sanjiv Bajaj, the Chairman and Managing Director of Bajaj Finserv. Sanjiv, many thanks for joining us here on CNBC TV18. It hasn't come as a surprise. This was anticipated. It's also been a fair amount of an overhang as far as the businesses were concerned. But finally, this 24-year alliance, this 24-year joint venture partnership has come to an end. I want to understand from you, to start with, Sanjiv, how prepared are both businesses for this exit at this point in time?
Shireen, good morning. And let me start by saying that this has actually been a great win-win deal for both partners. Both partners have reinforced their strategic intent for India, but with different paths. And from Bajaj's point of view, the Bajaj Group reinforces its focus in India on the insurance business at 24,180 crore that we are going to be investing to buy the 26% stake in both our insurance companies. I believe this should be the single largest investment in the insurance space ever in India, and one of the largest investments in the financial services space. Once again, reinforcing Bajaj Group's commitment and belief in the India opportunity. As far as both our companies are concerned, these are managed by very well qualified boards and by senior teams that have been with us for very long periods of time. And hence, we see no change at all at any operational level. Our partnerships will continue to be the same. Our distribution continues to be the same. Products are the same, so no change on the ground.
So no change at all on the ground as far as operation is concerned, Sanjiv. But let me ask you whether you are going to scout for another partner, whether that is at all something that you would like to even consider at this point in time, or do you believe that going solo now after this 24-year arrangement is the preferred route for you?
We are very clear that given the capabilities that have been built in both our companies now, almost 24 years old, both the companies are perfectly capable on going solo. Effectively, as I said, the board has been running both the companies, a board that is controlled by Bajaj, and with the right support from Allianz as and when required, but fully empowered board and management. And as a result, no, we don't need another partner. If you also see the Indian insurance space in the last decade or so, this is not new. There have been multiple companies, including most of the leading companies, where the Indian promoter has gone solo, and most of those businesses have actually even done better.
Okay, so going solo, that is the route forward. That's the road ahead. Let me also ask you about the possibility of listing, Sanjiv, because this has been the regulator's nudge to industry as well, that large insurance companies need to consider a public listing as well. With this eventuality out of the way now, is that an imminent possibility for you?
Well, as you mentioned, Shireen, correctly, the regulator has been engaging, especially with the larger, older insurance companies, to talk to them about the possibility of listing, to put a glide path and timelines towards that. This is something that has been taken up by both our boards as well, given the significance of this current action with Allianz exiting the insurance companies. It will take us some time for the rebranding once we get all the regulatory approvals, etc., etc. And as a result of that, the board at a suitable time will consider the nudge, as you said, from the regulator and put out a path forward.
Indicative timeline, Sanjiv, and I understand that you are going to go through this process of Allianz exiting, which will, of course, require the rebranding as well as other regulatory approvals. Number one, by when do you anticipate all of that getting done? And two, what could a realistic, practical timeline for an eventual listing be? Are you working towards an FY27 kind of scenario?
I think FY27 is early. The board and the management has been fully involved. Well, the board and Allianz as FinServ as a shareholder has been fully involved in the current transaction, and the management will now roll out the necessary changes. So for us, the next year or two is going to be busy with this. I believe at a suitable time, the board will seriously evaluate IPO as a possible option for both the companies. As you know, both the companies are very well capitalized. Our solvency positions are the highest in the industry. The businesses have not really needed external capital now for over 10 years. So we have truly built two businesses that are balancing top line and bottom line, focused on customers as best as I think is possible in this country without being immodest about it. And hence we are in no hurry. Yet we understand the nudge from the regulator. So in a suitable time, the board will consider this, and once it comes out with clear direction, we will actually share it.
Okay, we'll wait to hear from you on that. But Sanjiv, a little bit about what happens now as far as Allianz is concerned. And I know that you don't really have a say in that any longer. But what we did see from Allianz in its press release last night was that it's going to use the proceeds to make strategic bets in India and look at opportunities in India. I just want to understand from you, is there any kind of a cooling off period that's been factored into this arrangement, into the agreement between you and Allianz as they exit?
And the answer to that, Shireen, is that once the first part, the first tranche of the shares are bought by Bajaj, post all the nationally regulatory approval, the cancellation of the JV and stuff, we release Allianz from the non-compete, so then they are free to go ahead and get into binding agreements in India. This was their desire and one of their asks, and we completely understand that as a large player. And that's why I think the discussions, the negotiations have been such that it's created a win-win on both sides.
And just to understand that, so you're saying that once that 6.1% is done with, Allianz is free to tie up if it wishes to with any other Indian insurance company, any other Indian promoter, if it so desires?
Very much so. Along with that, technically the JV agreement falls away, the name change happens and stuff, but yes, in effect.
So how do you see the competitive landscape? It seems pretty clear that Allianz is going to be in India, who we don't know quite yet. But how do you see the competitive landscape emerging post this transaction ending and the possibility of another transaction starting?
You know, there are two ways you can look at this. There are 50 insurance companies, so there will be a 51 in what is a crowded and competitive space. We have seen that for the insurance companies started in the last decade or so, it's not been very easy to build scale profitably just because the large companies are doing a great job. On the other hand, our own long relationship with Allianz tells us that they're a high quality company, and we would welcome a sane competitor, a high quality, measured, conservative competitor into the market to just help balance the market. But I think it takes some time for them to get in, assuming that's what they will finally do. I've also read the press release like you, and it takes time to build a good quality business.
Well, speaking of building a good quality business, Sanjiv, I want to understand what the growth appetite and the growth aspiration is for both businesses from here on. IPO is a separate matter altogether, but let's talk about growth. It's been a relatively slower year in comparison to what you've historically seen. What's the expectation and the anticipation from here on in terms of growth?
You know, the general insurance business is very much an asset-led business. And since we've seen a slowdown in asset purchases, you've seen that industry slow down to 10-12% growth. We've been growing a little faster than that, but also with a key eye on being fair to customers and on profitability. On the life insurance side, the last 7 or 8 years has seen Bajaj Allianz Life significantly outgrow the market with a set of new relationships on distribution, new products, and building top line and bottom line quite well. Given the significant change that happened last year with surrender values, it has been an opportunity for us to rejig again our focus and look at growth with a much higher level of profitability. And that's what the team is currently working on. So I see both the businesses growing at healthy levels at or a little higher than industry levels in the coming years. Keeping in mind also that, we're going through a significant period of global uncertainty. India is one of the few markets which is still managing to grow 6+%. And I think that's something for us to celebrate. But of course, plan how can we get to 7, 8, 9%. And I'm very confident that you will see this in the coming decade. And for low penetration industries like insurance, it's going to be a great decade ahead for us.
Well, you believe that it's going to be a growth decade ahead for the insurance sector, which continues to be underpenetrated. But it's also happening at a time where the FDI regime for the insurance sector has changed. And ostensibly, that's the reason, I would imagine, that Allianz has decided to exit this 24-year partnership, Sanjiv. So did it eventually boil down to the fact that they wanted majority?
Very clearly, I think that's something that you have to ask Allianz and have them answer. But as they have said, India continues to be on the strategic radar for them, and we'll hear more as they move ahead.
But do you believe that we are likely to see more foreign players looking at the India opportunity, specifically the India insurance opportunity, now with this FDI regime change and 100% FDI now on the table?
I think they should, because when you look at, again, as I said, the companies in the last 10 years, most of them have stayed small. They are not able to bring in the right amount of capital. They end up then cutting corners to build growth. We need good quality players, because keep in mind, insurance is a long-term business. It's a business with a very high level of risk. You get your risk assessment right, you can have one large incident in the general insurance space that can wipe out your capital, get you bankrupt. On the life space as well, guarantees, long-term guarantees have been known to wipe out businesses. Hence, you need good quality promoters, companies that understand these businesses. Plus, we have such low penetration levels in India that it doesn't worry me at all that as Bajaj continues to grow, there will be the opportunity for many more players, because we need so many more Indians to get that security cover.
Right. You said that there's unlikely to be any operational change at this point in time, Sanjiv. But, it has been a partnership that's gone on for over 2 decades. So I would imagine that there will have to be a fresh roadmap of some sort that you draw up. And I'll ask you this in the context of another eventuality, which is, on the anvil now. Rajiv Jain, 31st March is just round the corner. What do you believe is likely to be the role that Rajiv is likely to play as far as each of these businesses are concerned?
So firstly, as I said, a board of both the insurance companies controlled by Bajaj has been running the business for over a decade. And there is going to be no change, I can tell you, on the ground. Day-to-day competitive activity continues, but there is going to be no significant change. As far as Rajiv Jain is concerned, we have a board meeting coming up later this week, and Rajiv is fully committed to the group and the business. And the board will evaluate, as we know his term comes to an end of March. The board is evaluating next steps, and you will hear about it soon.
If I may, because this is something that the market and the street is watching very closely, and different scenarios are being painted at this point in time. I wonder if you've had a look at that. But, if you could give us some color and clarity on what some of the options are that you are exploring, that the board may consider as far as Rajiv's engagement post the 31st of March is concerned with the group.
Well, I think the board meeting is in 2 days. This is the NRC and the board that will decide that. I don't have any absolute right on that, so let's wait 2 days.
But he's very much going to continue to be with the group in some form or fashion, perhaps in an elevated form or fashion.
2 days, he's fully committed to the group.
Okay, I'll leave it there. I did try, Sanjiv, but I also want to understand from you the contours of this transaction. By when do you think the 6.1% will be done, and the funding for the transaction as well, as far as the promoter group companies are concerned?
So again, Shireen, this requires IRDA and CCI approval, which we hope will come in the coming months. But naturally, we have to leave it to those regulators to decide. We will be in the process of applying now post yesterday's signing of the agreement. The funding is where of the 26%, a little over 1% will be bought by Bajaj Finserv, so that Bajaj Finserv then is in absolute control of both the insurance companies. And keeping in mind the speed with which we needed to and moved ahead, and the funding opportunities available, because Bajaj Finserv is a unregistered CIC, a core investment company. It cannot borrow. So keeping in mind that the Bajaj Group has lent support and reinforced its commitment to Bajaj Finserv and to the two insurance companies by Bajaj Holdings and one of our group companies, Jamlal & Sons, chipping in for buying the rest of the stake. So that is the current plan right now.
Sanjiv, if I can understand from you in terms of prioritization now, as you wait for the process of regulatory approvals to come in, what will the next steps be? I believe that you've also held an employee town hall this morning, I would imagine, to give clarity to internal stakeholders on what the future looks like. If you could share some of that with us as well.
It's a big event for us, and that's why it's our responsibility to reinforce our commitment, support as a group, as a board, as senior management, whether it's to our customers, to our employees, to our partners. And we've started that process from today, and that's why we had the town hall this morning. Our senior leaders will reach out now to all our large relationships, will reach out to the agents who've been supportive of us for over 2 decades. To give them the comfort that nothing changes. With our 74% ownership, I think that's reasonably obvious. But these are the times where we need to over-communicate, we need to reach out, we need to handhold if somebody has a worry or an apprehension. And we will do that in the coming weeks as we line up our funds as well, so that as and when approval comes, we can move ahead. Both Allianz and we are clear that we want to get this over with as soon as we can, so that we both go our own way into doing what we need to do. We are very excited, as I mentioned earlier, about the prospects about insurance in India. And with this additional flexibility that we have of 100% control of both companies in the group, it allows us to build these businesses with our own ambition, our own focus, our own entrepreneurship, our own assessment of risk.
And I'll pick up from that last point that you made about your own growth aspirations, your own ambition, as well as your own risk-taking ability now that it's 100% controlled by you. You said that you will, of course, try and deliver on industry-leading growth as you have been doing. But does the growth ambition, does the risk-taking appetite change now, Sanjiv, with you in full control? And if you can quantify that for us, what it could mean potentially as far as business outcomes are concerned.
When you look at both the companies, you will see a great balance in top line and bottom line. And this has been core to both partners. But naturally, each partner has their own priorities. You have one partner that works in a European environment where 2% growth is great. You have another partner that works in an Indian environment where 15% growth seems to be low. Now that there is one promoter running the show, we will review some of these opportunities going forward. I don't have an answer beyond that. The agreement has just got signed last week. As our board goes with the management into our long-range strategy plan later in the year, some of these things will evolve.
Yes, I would imagine that some of these things will fall into place. But if I may ask you two quick regulatory questions, Sanjiv, which of course the industry is grappling with at this point in time. One, of course, is the government and the regulators nudge as far as the bancassurance side is concerned, and the reliance or the over-reliance in the view of the government as well as the regulator on bancassurance. How do you see that impacting the sector, and what do you believe it could potentially actually mean as far as you're concerned? Do you imagine being a net beneficiary if the wheels were to be slowed down on that front?
Very clearly, we will be a net beneficiary because we don't have a exclusive tie-up with any bank. But having said that, our general insurance company has over 250 bank tie-ups, the largest in the country, even though we are not promoted by a bank. Our life company has, again, more than 50 partnerships with banks, and that's growing. But yes, as we open up distribution, it will naturally end up being beneficial to companies like us, which is not part of a banking conglomerate. I believe the interest and direction towards this should be based on what is right for the customer. Because on the other hand, you have also banks, they have their own ownerships, they have their own focus areas. So while in my own selfish interest, naturally, as it opens up, it's great for us. If it's good for the customer, and I believe it is, it makes sense to open up. And most banks have opened up. There are just a few that are still closed. In addition, what's important is for us as an insurance company, we have de-risk distribution. So if you look at the business we get from banks, what we get from agency, what we get from direct channels, our own proprietary team is very well balanced. And this is something we have done in the last 7 or 8 years so that we are not reliant on any one large partner. Doing that makes you unnecessarily dependent.
Right. You know, my other question, again, to do with the regulator, is on the possible capping as far as commissions are concerned. Again, nudging industry that, look, take self-corrective actions or we will have to step in. What do you make of that, and how do you believe industry is likely to respond?
So this is something that the regulator did a great job a couple of years ago by defining an overall cap on expenses, including commissions. And that is the right way to go. You don't want to be micromanaging below that. There are certain younger channels where we end up paying a higher commission, but we are still within the overall limit. When we go direct, we have no commission, but our expense costs are higher, especially the fixed cost of running a digital direct business. So if you micromanage, you end up losing on innovation. I think the overall cap has been a great direction that the regulators put in place. There are still some smaller companies that are busting that cap. They have to fall in line and the regulator has to work with them. But overall, as long as you're within the cap, the policyholder is protected.
Okay, so before I let you go, Sanjiv, and we do appreciate you joining us here on what has been a busy morning for you. But before I let you go, I just want to reiterate that no leadership changes at either business at this point in time. Is that what you're confirming to us? And two, you spoke about a decadal opportunity for growth. Again, leave us with some color of what the decade ahead could potentially hold.
So clearly, no leadership changes in the insurance companies. The same senior leadership continues and is committed to building the business going forward. The next decade is going to see India moving from $2,700 to $2,800 per capita to 2.5 times that. We have seen in many parts of the world when per capita income crosses around $3,000, by and large, the savings required for somebody for security of the house, children's education, health, basic purchases are taken care of. And the remaining money ends up going into financial services. It goes into financial assets because those then end up being productive and give a higher return. And that is something that we're going to see in the coming decade. This is what gives us that confidence that this, driven by high quality businesses that are focused on the long term with solid teams, a significant focus on technology, leveraging the cloud, leveraging AI, and you've heard about some of the early stuff that we're already doing in AI, is going to enable us to create competitive businesses going ahead.
Well, Sanjiv, it's been a pleasure. Many, many thanks for joining us and giving us some clarity on what the road ahead looks like. Important to note, Sanjiv Bajaj saying that they will go alone as far as the insurance businesses are concerned. They're not looking at bringing on a new partner post the exit of Allianz. No leadership changes at this point in time being envisaged, and the appetite for growth and for risk perhaps will be higher at the end of this. Sanjiv, many, many thanks. We look forward to having a deeper conversation with you as you crystallize some of your plans for the future. Appreciate you joining us here this morning. That's the Chairman and Managing Director of Bajaj Finserv, Sanjiv Bajaj, also clarifying that in 2 days, a board meeting will take a call on Rajiv Jain's future with the group. Seems very clear that Rajiv Jain will be committed to the group, but what exactly the role will be is going to be decided by the board. That's the big CNBC-TV18 exclusive. We will take a break here, but return with the market action right after this.
Do you worry today, Sabya, that we are at a point which is almost an existential crisis for a whole host of arts and artisans across this country? I mean, you were talking about the fact that this shouldn't be treated like a charity. It shouldn't be treated like a CSR project. What kind of interventions do you believe we need at this point in time to ensure that we keep this soft power alive?
You know, we don't need to do much because evolution will take care of itself. Because I'll tell you, so we were at the age of influence, which is moving into the age of intelligence. AI is going to...
Welcome back to Trading Hour. Well, Nitin Raheja from Julius Baer joins us to discuss market fundamentals and his top sectoral picks. Thank you so much for joining us, Nitin. First up, you've written quite deeply as far as market valuations are concerned. In terms of the key indices, especially the Nifty and the broader end of the markets, where do valuations stand now currently? And at this point of time, are you looking to deploy incremental capital both in Nifty, the index stocks, as well as some of the broader index stocks?
Yeah. So I think when you look at how valuations stack up, right, I think our belief is that a large part of the correction as far as the large cap, Nifty 50 index is concerned is probably done with. We are probably close to searching bottom, maybe another 4 or 5% from here. And that's because when you look at a 10-year average on this, currently they're trading, the market is trading at below 10-year averages. So I think we are seeing that part of the index largely being done. And it's only fair because when you look at the composition, a lot of the larger bits of the index, such as if you take the Nifty bank, it's really hasn't done much, and the valuations are very attractive. If you take the larger names in oil and gas, and even if you take IT, it's corrected. So a lot of that has already been done, and so it's our belief that the margin of safety in the larger cap Nifty index is far higher. As far as mid and small cap is concerned, we believe that given the kind of run-up that they've had, they yet trade at least about 1 standard deviation higher than their long-term averages. So hence, there is yet some way to go for of pain out there in both those indexes.
Nitin, hi, morning, and thanks for joining in. So just quickly first tell us, as we start the interview, how is your portfolio constructed right now? What are your key bets?
So we have a large cap bias in our portfolio. In fact, we have different portfolios. So, if we take our global portfolio, we are primarily almost 85-90% large cap oriented. If you take our domestic portfolios, we have almost a 65% large cap tilt in that. Now, within that, of course, the BFSI and the banking space is an area which we believe is looking very good. And that's primarily led by the fact that if you look at one of the key reasons for also the slowdown recently, it was the whole tightening by the RBI and the huge regulatory overhang that existed because we had seen this unbridled growth in credit and especially in unsecured loans. So we had seen a big tightening happen there. In the last sort of month, 45 days, we've seen the RBI see the impact of that tightening, create a slowdown, and banking system was tight. And now we've seen a loosening out there. Plus, I think intuitively, the whole policy moves are of, loosening the regulatory framework. So I think in that sense, banking and finance is looking good. We clearly see that there is a call towards rate cuts. We saw the first of them happen recently. It's going to be a little more long drawn and more shallow, but clearly, I think directionally we are seeing that, and hence we believe that one of the largest overweight positions we have is banking. On IT, which is our second largest holding, we are largely neutral, given the uncertainty as far as the US is concerned. Consumer and discretionary is especially premium consumer discretionary is another large overweight position that we have. And within that, travel, which is aviation and hospitality, are two of our large bets.
Thank you so much, Nitin, for joining us, giving us your view on the markets, your view especially on the BFSI space, and also what lies ahead as far as market fundamentals as well as valuations are concerned. Thanks once again. Well, moving on, have a look at the markets. Some stocks have seen significant buying and the market continues to trade with significant gains. The small cap index now up almost 2%. Some of the names that are doing quite well, especially in the broader end of the markets, are the NBFC pack. So names like AB Capital, REC, PFC, these are some of the stocks that are now trading near the day's highest points. The other set of stocks that are doing very well in the session today are actually the capital goods names. So Larsen & Toubro, the largest capital good maker in the country, that particular stock today seeing significant gains, one of the top gainers on the Nifty. Even names like Siemens have bounced back quite significantly from the recent low. The other set of stocks, Nima, that are doing quite well is actually the consumption pack. So some of the consumer names, especially names like VBL, something that we highlighted earlier today, that stock is up almost 5%, and there's a positive catalyst watch from Citi as far as Varun Beverages is concerned.
Okay, we will get into a short break, but as we do that, a quick programming note. CNBC-TV18 and HSBC India are back with Season 2 of SME Champion Awards. This prestigious platform celebrates SMEs that are pushing the boundaries, making an impact, shaping the future. Nominations are open. Scan the QR code now. Submit your entry for SME Champion Awards Season 2.
And I personally think that AI in many sectors, especially in performing arts and art, will be very short-lived, because after the age of intelligence will come the age of wisdom. And when the age of wisdom comes in and people realize that the greatest gift to humanity is humans themselves, and we should not robotize our existence so much that we forget to be human beings, then people will realize that art and craft is going to be the most important expression of humanity. We don't have to do much. Evolution will take care of itself.
We certainly hope so.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajaj at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning.
Welcome back. It's now inching towards 24,800 in the Nifty. Just 2 Nifty stocks in the red. One of them is Bajaj Finserv. We've been discussing them. And the other one is Bharti Airtel, which is just down close to about 0.3%. And one of the reasons could be the FT article, which talks about Sunil Bharti Mittal weighing increasing his stake in British Telecom. And the street fears that this could come at the expense of selling his stake in Bharti Airtel, because that's the only way for him to get the money to up his stake in British Telecom. So that could be a factor weighing on Bharti today. But outside of that, look at the way individual stocks are moving. Ola Electric, 14% higher. So it's erased yesterday's 7-8% loss and gained some more. Big move. It's added about 4-5% in the last 1 hour. AU Small Finance Bank is now back in the green. Mastec is a big mover, 14-15% up on that. You've got MobiKwik, Paytm. MobiKwik fell yesterday because of that IPO lock-in coming to an end, 3 months. But today it's rebounded. Paytm is a big mover. Aircon on the back of the order win is up nearly 5.5%. So things are looking up. Triveni Turbine is a smart volume and price buzzer today. Stock up close to about 10.5%. Very smart looking screen. Positive advance decline ratio inching towards 2,200 stocks, advancing for just about 450 stocks in the red right now. Well, that brings us to a close on Trading Hour from the entire team. Thank you for watching. Don't go anywhere. Halftime report is up next.
India Business Hour drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shriram Finance.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Bulls in control as the market recovery continues. Nifty gains about 250 points. Global skews are steady. Financial stocks leading the charge. And we do have the Nifty Bank, which is outperforming the gain of 1.5%. Broader market too sees a momentum with almost 5 stocks advancing for every 1 stock which is declining.
Bajaj Finserv and Allianz part ways after 24 years, with Bajaj Finserv and promoter entities buying out Allianz's stake in the life and non-life insurance JV for a little over 24,000 crore rupees. Sanjiv Bajaj tells CNBC-TV18 exclusively that the 100% ownership will give the insurance companies more flexibility to grow. He adds that there will be no leadership change and Bajaj will not look for another partner.
Shareholders investing in PB Health must not only do so for profits but for a purpose. That's the word coming in from PB Fintech CEO Yashish Dahiya, as the listed entity invests close to 700 crore rupees in the healthcare foray. Dahiya clarifies that PB Fintech's stake in PB Health will not cross 25-26% for now.
Ircon shares have rallied on bagging a contract from the Meghalaya government. Senco Gold has also hit a 5% upper circuit as promoters have confirmed buying shares from the open market. Berger Paints tells CNBC-TV18 that it has dropped out of the race for AkzoNobel's India business due to its high value.
International Space Station to bring 4 NASA astronauts, including Sunita Williams, back home to Earth. The trip, along with complex descent maneuvers, is expected to last 17 hours.
It's a very, very good afternoon if you are a bull and you're watching Halftime Report live from the CNBC-TV18 Motilal Oswal studios. I'm Hormas Fatakia. With me as always is Manglam Malu, and it is a very, very good looking screen. We've crossed some important hurdles. We are now heading towards yet another hurdle on the index, which is 22,800. But for now, almost 900 points up on the Sensex, a 270 point gain on the Nifty. You would take that with both hands, considering the market that you've been in recent times, and the broader markets are not far behind as well. Both the mid-cap and the small-cap indices seeing very, very good gains, and plenty of stock-specific activity as well within the broader markets. And Mastech is up 14% now, 14.5% actually is up, the top gainer on the Nifty 500 index. Ratnamani Metals is up 10%, Kirloskar Oils is up 10%, and of course Kirloskar Oils, after that Motilal Oswal note projecting an upside of almost 76% on the stock, that is doing very well for itself. But in our Insight Edge segment, we are putting the spotlight on Senco Gold, and that is also one stock, Manglan, that has seen a lot of drubbing from its highs. What's the buzz today?
Well, you know, a couple of things before we move on to Senco Gold itself on the market. I was just looking at a couple of data points and the numbers. 48 Nifty stocks are in the green right now. If you look at the top 50 Nifty stocks, you top 5 Nifty stocks which are gaining. You have Hindalco, which is the top gainer. Following it is Asian Paints. Then you have M&M, and thereafter is Tata Motors and ICICI Bank, along with L&T. So the top gainers on the index belong to diverse sectors that speak about the market breadth. And similar is the case with the broader markets as well. These are names which have been seeing a lot of drubbing, but now seeing some bit of an uptick. Varun Beverage is up around 5%. Strides Pharma is the other one, up 5%. We're seeing some traction in Zomato. Alongside that, we have Emphasis and PB Fintech as well, all of them gaining. So market's looking fairly good, and in that market it is Senco Gold which is doing good in today's trading session as well. Mind you, the stock has corrected about 70% from its highs, so you know there is no ruling out of some bottom fishing on that. And who better than the promoter who does this bottom fishing? And that's exactly what happened. So, you know, the last couple of quarters, their margins were lower because of a one-time impact on account of the customs duty. This morning, we spoke with Suvankar Sen, and he said that they will, in the fourth quarter, return to their normalized range of 7 to 8% margin itself. And on growth, they've been maintaining that 20% growth guidance. First 9 months as well, they've grown at around 21%. They will continue to do that in FY26. And the other worry for all the jewelry companies is with the fall in diamond prices. Are diamond products selling or not? They said that in the fourth quarter, they've seen diamond sales increase, and gold volumes have grown just 1 to 2% because of the high gold prices. But silver volume growth has been 18 to 20%. So maybe a lot of people substituting gold jewelry for well-designed silver jewelry as well. But most importantly, after the big decline, the company said that the promoters have bought shares worth 4 crore in the open market yesterday, and did say that we'll buy more today as well. The second part we may take with a pinch of salt, but the fact that they did go ahead and bought shares worth 4 crore yesterday is something that we'll keep an eye out on in terms of disclosures that will come to the exchanges as well. So watch out for that. Bottom fishing done by the promoter of the company. Remember, they raised funds via QIP at around 500 odd rupees as well. So even if the stock doubles from here, it will only reach the break-even point of those QIP investors, and it has to triple from here to actually reach its earlier high. So it's a big 70% decline that we've seen already, and now at lower levels, we are seeing some purchase on Senco Gold. In fact, let's go across to the bite that we got from Suvankar Sen this morning itself in our Insight Edge segment.
Things are back to normal. I think that the EBITDAs and the gross margins that we are expecting and what we have been guiding from before is going to go back to the same levels of close to 7% EBITDA and the gross margins back to its own level. So I think that yes, the markets and the investors have been a little jittery and uncertain with all the various things that is happening around the world. From my side, I can only assure that business continues to grow and fundamentally it's in a sustainable manner. We will continue to grow 20 stores and we are expecting a top line growth of 20% this year and hope to continue this 20% growth year after year. If you look at the growth rate, silver, in spite of the increase in value in terms of volume and in terms of value, has grown at a much higher rate compared to gold and diamonds. Because I think silver is becoming one of the assets that consumers either for gifting or for lower ticket size investments or buying something for the home. I think silver is going to have a great future with 100 rupees per gram kind of a price that we see and the potential of silver going up. So while silver is growing at about close to 18 to 20% in terms of volume as well as a little more in value terms, we have seen that gold has grown to a marginal 1-2% volume growth, but value-wise it has grown like close to 20%.
The management of Senco Gold buying shares from the open market yesterday, intend to buy more today. The stock in a 5% circuit, but as Manglam highlighted, still has a long way to go before it reclaims its earlier highs. The other newsmaker in today's session is PB Fintech. Now, the stock was down over 10% in around 2 sessions last week, and that is after the company announced its plans to invest around 700 crore rupees in its healthcare subsidiary in the next financial year to expand its operations. Now, the new venture, PB Healthcare, which is co-founder of PB Fintech, Yashish Dahiya will hold 4.2% stake for an investment of 87 crore. Alok Bansal will have a 2.1% stake for a 43.5 crore investment, while Sarbvir Singh, along with Mandeep Mehta and Bhaskar Joshi, will have a stake of around 0.1%. Now, in fact, earlier today, we spoke to Yashish Dahiya and he said that the primary objective of shareholders agreeing to participate in PB Healthcare must not be profit. Now, there's a 50% chance that this foray will fail. He also added that PB Fintech's stake in the healthcare venture will fall to 25% from the current 33.5%. Now, let us also listen into some excerpts of that conversation.
By the time round 1A and 1B are over, because it's done in 1A and 1B, I think PB Fintech would be down to about 25-26%. Financial return is not the sole driver for Policybazaar either. The primary objective of Policybazaar is to grow insurance penetration in India, specifically in health insurance and term insurance. I think there is a 50% chance the project will fail. There's a 50% chance it might succeed. If it succeeds, it will be very big. When you talk about PB Health, it is there is an investment going in of about 2,000 to 2,500 crores from various investors. Many of them are pure financial investors, and they have no reason to invest except for the financial return they expect to make out of that. Like in any agreement, you cannot disclose people till the deal is done. I just wanted to clarify, the cash has not come in yet. The cash will come in over the next 120 days, right? Yeah, but without the cash, nothing can happen. No, I just wanted to explain. The money will come in by July end. So we should have an operation ready, some sort of an operation ready by about December, which is about 5 months after the cash comes in.
All right, interesting. And, as a result of which we saw the stock move higher as well. The management speaking about bets that they're taking with a chance of a failure. But at the same time, we are seeing, an up move on that stock because the management does believe that they've limited their risks out here. They are conservative when it comes to capital allocation out here. And the drubbing that the stock has seen already. And they were also sanguine on the growth prospects for the core business. So that's PB Fintech up around 5.5%. We'll take a short break. Come back on the other side. We focus on PVR Inox. That stock is a buzz in today's trading session as well. We'll tell you why.
Welcome back. And there are plenty of movers in the broader markets, as we were mentioning. Paytm is one of them. It's up 7% in today's session. Some news flow as well coming in earlier this morning with regards to a SEBI approval that has come in for the stock, and also the fact that it has also rebounded exactly from where its 200-day moving average was. 200-day moving average was 689, and that is from where the stock has seen a rebound in today's session, 7% higher on Paytm. The other stock that's doing well though is PVR Inox, and that is gaining on the back of a Nuvama note. Vamakshi is here with more details on that. Vamakshi, good afternoon.
Good afternoon, Hormaz. You know, Nuvama has come out with a report on PVR Inox, wherein they've maintained their buy rating, given a target price of 1,765 rupees per share, which is a significant upside as compared to the current market price. Now, the first rationale behind it is the promoter buying. Now, keep in mind that the promoter has bought 29,000 odd shares so far, which is a very minority stake, which is 0.03%. But nevertheless, what Nuvama believes is that promoter buying, even in a small amount, is still a positive indicator for the stock. Now, as far as the calendar year 25 is concerned, it is turning out to be much better off as compared to calendar year 24. Keep in mind that gross domestic box office collections stood at 2,264 crores. This is an uptick of almost 39% in the month of Jan and Feb, and this largely was driven by Chhava. The month of Feb 2025, in fact, was the highest grossing month for the industry post the pandemic, so that bodes well. And this comes at a time when the audience is getting very selective about their preferences. Only the high quality content that is coming through is being rewarded in the current urban consumption slowdown that is underway. So overall, this bodes well for the company. Now, quarter 4 is the numbers will likely come out next month. Now, keep in mind that quarter 4, Nuvama believes could actually be much better than what they were earlier anticipating. Sikandar is also slated for a quarter 4 end release, and this in turn could also drive some opening numbers that could be very strong and which could get added to the box office collections in the month in the quarter gone by. Now, Hollywood content pipeline also looks very strong in their opinion, with Thunderbolts as well as First Step. So overall, given the promoter buying, the kind of gross box office collections that we're seeing, they're quite bullish on PVR Inox.
All right. So good box office lineup. At the same time, promoters buying from the open market. Does that, take away from the woes, the long-time woes that PVR Inox has been facing? Something we'll keep an eye out on. Currently holding with a gain of 4%. Take a short break, come back. Sachidanand, who take care of Trade Bulls, will join in with some trading strategies.
I'll be speaking to President Putin on Tuesday. A lot of work's been done over the weekend. We want to see if we can bring that war to an end. Maybe we can, maybe we can't, but I think we have a very good chance. We're talking about land. It's a lot of land. It's a lot different than it was before the wars,
But what a day it's turned out to be so far. 250 points on the Nifty, 850 on the Sensex, Nifty Bank, and the broader market's doing a lot better. So perfect time to get you an update on what the F&O markets are penciling in. This morning we had told you that, there is an outside chance of the Nifty breaking out, and that's where a lot of call writers or call buyers were positioned at around that 22,850 mark itself. So that call is making money for a lot of people. But the important part is what from here. Now, if you look at the Nifty holding around that 22,750 mark, the Nifty Bank doing a lot better. Both of them have actually, underlined two factors. One, the lower level for the market has been protected. And every time that happens, the broader markets do a lot better. So if you look at, the advanced decline ratio, this morning opened with 1,300 stocks in the green, went up to 1,600 stocks. And this is now like a parallel train track without any movement. The green line much above the red line, and that distance has been maintained. So that's positive. The second part is that we are seeing both the Nifty and the Nifty Bank having conquered the 20-day moving average, and they're fair distance from here. So unless there is a big decline from the highs, these are likely to close above the 20-day moving average itself. So that is a positive. But now let's look at what's the other thing that is fueling this rally. A large part of this is also short covering in calls. So 22,500 call, there you see short covering. The premium has surged by 138% rather, 181% rise in premium for the 22,600 call as well. So those writers have been caught on the wrong side, and the 22,700 call writers as well have been caught on the wrong side. While this call short covering has taken place, a lot of put writing has come by as well. So the 22,700 put writers active for a premium of 75 rupees, telling you base for the market has moved higher to 22,600 thereabouts, which is closer again to the 20-day moving average. 22,600 put writers as well, fairly active for a premium of 50 rupees. 22,550 to 22,600 is where the support for the Nifty after this up move lies. The important part, however, is that how much higher can we go from here? Chances are we might get into slightly overheated zone. Why do I say that? Because one, put call ratio from 0.7 has moved to 1, and now as we speak, the kind of put writing that we've seen has taken the put call ratio to 1.3. Typically, it indicates overheated zones at around 1.25 to 1.3, so we are higher end of that zone. And secondly, one would like to see the wicks fall a lot more with the kind of market up move that we've seen. The markets moved higher by about 0.1%. Yesterday as well, there was a 101 point rise on the Nifty. But now if you look at the India VIX, that hasn't fallen by much. It's fallen just by about 0.35%. So that indicates that maybe at lower levels, we are seeing some sort of put buying as well in the form of protection. So we'll keep an eye out on that. And a bunch of stocks are on our radar. Asian Paints, which is up around 2.5%, was under pressure yesterday. So some short covering out there. A couple of stocks, we're seeing some, OI additions on the long side as well. But Macroeconomics Finance, that's the interesting one, where the open interest is now 82% of the threshold. If it falls below 80%, it may exit F&O ban after being an F&O ban for an extended period of time. So we'll keep an eye out on that one.
Indeed, you have to keep an eye out on that one specifically versus board meeting as well. And the stock being in the F&O ban for a better part of the series is now looking to come out of the ban. But Sachidanand Dutekar of Trade Bulls is joining in now on the show for a quick chart check and some trading ideas as well. Sachidanand, good afternoon. Thank you for joining in. Mangalam was just mentioning that it's now become a parallel train track, and when the train tracks are usually parallel, the train moves faster. Do you expect the train to move faster towards 23,000, or do you expect some consolidation around 22,800? And your stock ideas as well for the afternoon.
Good afternoon, almost. Good afternoon, Mangalam. And absolutely bang on. I think, last week we discussed a very similar setup wherein we highlighted the base at around 22,400, 450. And that base was very prominent, being the fact that it managed to, maintain its closing above its 5-day exponential moving average. This week we have already seen a breakout now above its 20-day exponential moving average when it comes to Nifty. And the move now looks very dynamic. In fact, last week we were of the opinion that the eventual move could be towards 22,900, 23,040. But the way, there has been a sectoral shift, the way the constituents are behaving right now, it looks like, the Nifty is well positioned for a dynamic move towards its 200-day exponential moving average, which is placed somewhere close to around 23,450. And this move may unfold during this particular series itself in case that 23,040 mark is crossed, in this particular week itself. So I think the case is very strong until unless we don't see the Nifty again, closing below that 22,500 mark. the potential for this particular expansion is quite high, and there would be a very strong momentum play which we may see in the days forward. The immediate stop loss for the trade is placed somewhere close to around 22,630 on a closing basis. Any declines towards 22,700, 740 would again present a good opportunity to create fresh long positions. From a short-term perspective, I think 23,040 would be the first target, but eventually I see this particular move unfolding towards 23,400.
All right, 23,400, good one. Sachidanand, remember your call from around 22,400 itself. Now, 1,000-point uptick is what you are seeing from those levels itself. We've done about 230 or 300 points from the levels where you went, you suggested a long on. Individual stocks, if the market has to go to 23,400 eventually, has to be some of the heavyweights, maybe HDFC Bank, maybe Reliance. What are you betting on from here?
Well, Mangal, last week we highlighted the setups for Nifty Bank, the constituents there, and the capital goods which were turning into that positive zone. I think the focus is on the auto stocks, which are presenting a very good reward opportunity. If you look at the Nifty Auto Index itself, it has been showing a ending diagonal price pattern, and this usually occurs during the bottoming out phases. And the similar structure is very well evident in stocks like Maruti and Tata Motors. So I think the focus from here on should be on the auto stocks as well. We have already seen some good move in Tata Motors since last week, but if you look at the overall structure, the stock looks very confidently positioned. It took a very strong support near its 200 weekly exponential moving average, which was placed around 650. And post that, we saw very good consolidation towards 670. Now, I think the way its weekly RSI is shaping up, there's a positive crossover there, which is a good sign of directional momentum play, which we may see in this particular series itself. And that's why we are recommending, building long positions here in Tata Motors. The stop loss for the trade should be placed at around 652 on a closing basis. And we may see a dynamic move towards 740, 810.
All right, Sachidanand, thank you so much for sparing time, joining us with your views on the index and on specific stocks as well. We take a short break. On the other side, we get you excerpts from our mega CNBC-TV18 exclusive with Bajaj Finserv's Sanjiv Bajaj, as Allianz is set to exit the Bajaj Insurance joint ventures after 24 long years. Stay tuned, we'll be right back.
नागपुर के महल इलाके में जिस प्रकार से तनाव की स्थिति निर्माण हुई, ये बहुत ही निंदनीय है। जिस प्रकार से कुछ लोगों ने पत्थरबाजी की है, पुलिस पर भी पत्थर फेंके हैं, ये बिल्कुल गलत है। मैं स्वयं इन सारी घटनाओं पर नजर रखकर हूं। मैंने पुलिस कमिश्नर को ये कहा है कि कानून व्यवस्था बनाने के लिए जो भी कड़े से कड़े कदम उठाने की आवश्यकता हो वो उठाए जाए और शांति को बनाया जाए।
Welcome back. It's still holding on to some gains, but slightly off the highs is the index. Is up, still holding on to gains of around 200 points now. 22,720 is where the index is. So still a good day so far for the market, since facing some resistance at the 22,800 mark. But as Allianz is all set to exit the Bajaj Insurance joint ventures after 24 years, Bajaj Finserv's chairman and managing director Sanjiv Bajaj exclusively told CNBC-TV18 that they'll be investing 24,180 crore to buy back the stake from Allianz. He also spoke about their plans to list the insurance business, leadership changes in the company, and a lot more. Listen in.
It hasn't come as a surprise. This was anticipated. It's also been a fair amount of an overhang as far as the businesses were concerned. But finally, this 24-year alliance, this 24-year joint venture partnership has come to an end. I want to understand from you, to start with, Sanjiv, how prepared are both businesses for this exit at this point in time?
Shireen, good morning. And let me start by saying that this has actually been a great win-win deal for both partners. Both partners have reinforced their strategic intent for India, but with different paths. And from Bajaj's point of view, the Bajaj Group reinforces its focus in India on the insurance business at 24,180 crore that we are going to be investing to buy the 26% stake in both our insurance companies. I believe this should be the single largest investment in the insurance space ever in India, and one of the largest investments in the financial services space. Once again, reinforcing Bajaj Group's commitment and belief in the India opportunity. As far as both our companies are concerned, these are managed by very well qualified boards and by senior teams that have been with us for very long periods of time. And hence, we see no change at all at any operational level. Our partnerships will continue to be the same. Our distribution continues to be the same. Products are the same, so no change on the ground.
So no change at all on the ground as far as operation is concerned, Sanjiv. But let me ask you whether you are going to scout for another partner, whether that is at all something that you would like to even consider at this point in time, or do you believe that going solo now after this 24-year arrangement is the preferred route for you?
We are very clear that given the capabilities that have been built in both our companies now, almost 24 years old, both the companies are perfectly capable on going solo. Effectively, as I said, the board has been running both the companies, a board that is controlled by Bajaj, and with the right support from Allianz as and when required, but fully empowered board and management. And as a result, no, we don't need another partner. If you also see the Indian insurance space in the last decade or so, this is not new. There have been multiple companies, including most of the leading companies, where the Indian promoter has gone solo, and most of those businesses have actually even done better.
Okay, so going solo, that is the route forward. That's the road ahead. Let me also ask you about the possibility of listing, Sanjiv, because this has been the regulator's nudge to industry as well, that large insurance companies need to consider a public listing as well. With this eventuality out of the way now, is that an imminent possibility for you?
Well, as you mentioned, Shriram, correctly, the regulator has been engaging, especially with the larger, older insurance companies, to talk to them about the possibility of listing, to put a glide path and timelines towards that. This is something that has been taken up by both our boards as well, given the significance of this current action with Allianz exiting the insurance companies. It will take us some time for the rebranding once we get all the regulatory approvals, etc., etc. And as a result of that, the board at a suitable time will consider the nudge, as you said, from the regulator and put out a path forward.
You know, a little bit about what happens now as far as Allianz is concerned, and I know that you don't really have a say in that any longer, but what we did see from Allianz in its press release last night was that it's going to use the proceeds to make strategic bets in India and look at opportunities in India. I just want to understand from you, is there any kind of a cooling off period that's been factored into this arrangement, into the agreement between you and Allianz as they exit?
And the answer to that, Shriram, is that once the first part, the first tranche of the shares are bought by Bajaj, post all the nationally regulatory approvals, the cancellation of the JV and stuff, we release Allianz from the non-compete, so then they are free to go ahead and get into binding agreements in India. This was their desire and one of their asks, and we completely understand that as a large player. And that's why I think the discussions, the negotiations have been such that it's created a win-win on both sides.
And just to understand that, so you're saying that once that 6.1% is done with, Allianz is free to tie up if it wishes to with any other Indian insurance company, any other Indian promoter, if it so desires?
Very much so. Along with that, technically the JV agreement falls away, the name change happens and stuff, but yes, in effect.
You said that there's unlikely to be any operational change at this point in time, Sanjiv. But, you know, it has been a partnership that's gone on for over 2 decades. So I would imagine that there will have to be a fresh roadmap of some sort that you draw up. And I'll ask you this in the context of another eventuality, which is, you know, on the anvil now. Rajiv Jain, you know, 31st March is just around the corner. What do you believe is likely to be the role that Rajiv is likely to play as far as each of these businesses are concerned?
So firstly, as I said, a board of both the insurance companies controlled by Bajaj has been running the business for over a decade, and there is going to be no change, I can tell you, on the ground. Day-to-day competitive activity continues, but there is going to be no significant change. As far as Rajiv Jain is concerned, we have a board meeting coming up later this week, and Rajiv is fully committed to the group and the business, and the board will evaluate. As we know, his term comes to an end of March. The board is evaluating next steps, and you will hear about it soon.
The government and the regulators nudge as far as the bank assurance side is concerned, and the reliance or the over-reliance in the view of the government as well as the regulator on bank assurance. How do you see that impacting the sector, and what do you believe it could potentially mean as far as you're concerned? Do you imagine being a net beneficiary if the wheels were to be slowed down on that front?
Very clearly, we will be a net beneficiary because we don't have a exclusive tie-up with any bank. But having said that, our general insurance company has over 250 bank tie-ups, the largest in the country. Even though we are not promoted by a bank, our life company has, again, more than 50 partnerships with banks, and that's growing. But yes, as we open up distribution, it will naturally end up being beneficial to companies like us, which is not part of a banking conglomerate. I believe the interest and direction towards this should be based on what is right for the customer. Because on the other hand, you have also banks, they have their own ownerships, they have their own focus areas. So while in my own selfish interest, naturally as it opens up, it's great for us. If it's good for the customer, and I believe it is, it makes sense to open up. And most banks have opened up. There are just a few that are still closed. In addition, what's important is for us as an insurance company, we have de-risk distribution. So if you look at the business we get from banks, what we get from agency, what we get from direct channels, our own proprietary team is very well balanced. And this is something we have done in the last 7 or 8 years so that we are not reliant on any one large partner. Doing that makes you unnecessarily dependent.
Before I let you go, I just want to reiterate that no leadership changes at either business at this point in time. Is that what you're confirming to us? And two, you spoke about a decadal opportunity for growth. Again, leave us with some color of what the decade ahead could potentially hold.
So clearly no leadership changes in the insurance companies. The same senior leadership continues and is committed to building the business going forward.
Interesting conversation there. Remember, you can catch the full chat at 5:30 p.m. only on CNBC-TV18. So that's Sanjiv Bajaj. It's a big CNBC-TV18 exclusive after the deal that took place. But interestingly, he did say that later this week there is a board meet where the future of Rajiv Jain will be decided. And remember, Nimesh, just a couple of days ago in his special D-Street chatter had mentioned that, there could be a binary event for Bajaj itself. He joins in on this. Nimesh, this is a Value Plus segment. You've added a fair amount of value by whetting our appetite about this binary event that has happened. And what happens next?
So, Mangalam, just to put into perspective, what you heard from Sanjiv Bajaj very clearly confirming that Rajiv Jain is going to continue with the group, which is the Bajaj Finserv and Bajaj Finance. So that's one, there is this one big confirmation that he's not going anywhere and he's going to continue with the group. Interestingly, he also added that in the next 2 days, there is a board meeting and the board is going to decide on the next fate of Rajiv Jain. Now, Morgan Stanley actually put out a note yesterday and they put out a couple of scenarios in which how the stocks will react with regards to Rajiv Jain. So his term ends on 31st of March. So the clarity has to come before that. And now we know that there is a board meeting scheduled in the next couple of days. The first scenario is that that Rajiv Jain continues with Bajaj Finance. In that scenario, Morgan Stanley believes that there could be a further 5 to 10% upside on the stock for Bajaj Finance, even from current levels. Stock has outperformed, but there is further legs if Rajiv Bajaj continues. The second scenario is that while he continues with Bajaj Finance in some fashion, he also takes up responsibility in Bajaj Finserv. Even in that case, the possibility of a 5 to 10% upside remains for Bajaj Finance. The third option, which is a very less likely according to the Morgan Stanley note, is that he gives up his role in Bajaj Finance and only takes up a role in Bajaj Finserv. In that case, the stock may see a 5 to 8% correction on the downside, if that is the case. So, that's the reason why I believe, it's a binary event, so to speak. Now that we have a clarity from Sanjiv Bajaj that over the next 2 days, there is a board meeting scheduled and Rajiv Bajaj is going to continue according to Rajiv Bajaj. So, one, there is a clarity now that he's going to stay back with the group. The only thing which we need to know now after the board meeting over the next couple of days is what exactly role is. And as I said, if he continues with Bajaj Finance and he's taken up additional role in Bajaj Finserv, it will be positive and stock will react positively. Only if he leaves Bajaj Finance and only goes to Bajaj Finserv, then you might see a negative reaction on Bajaj Finance.
Indeed, and it's the best performing stock on the Nifty so far for 2025. Nimesh, thanks a lot for that. All eyes on Bajaj Finance for the next couple of days ahead of its board meeting to determine the future of Rajiv Jain. We take a short break, but before we do that, here's some good news for our viewers. India's business news leader is now just a click away, introducing the all-new CNBC TV18 app, on which Mangalam is already on, where you can get all the financial world updates on your fingertips. You can download the app from the App Store or the Google Play Store, scan the QR code on your screens as well. That will take you to the app as well. We take a short break, back on the other side.
Welcome back. Joining us now is Rishi Nathani. He's Chief Business Officer at MCX. Rishi, hi. Thank you for joining in. And good days, clearly, as gold hits all-time highs. The volumes on MCX have been rising. Would be nice to understand on what percentage of overall volumes really is gold.
Thanks, Manisha. Gold is performing and so is silver. But having said that, all commodities on MCX are doing well. So all segments, whether it be bullion, energy, industrial metals, they're all doing well. So gold, we've seen certain highs on 28th February. We saw the gold large option doing an all-time high, and on 24th February, the mini doing an all-time high. So the bullion segment, to answer your question, comprises of around 15 to 20% of our overall volumes.
As you said, and we've been getting those messages from MCX all the time on how futures and options are doing really well. We've been hitting record highs there. How is futures growing, and what is the kind of very strong growth that you would say has been seen in case of options there?
Well, both segments are growing in this current year as compared to the previous fiscal. Futures have grown 37% and options have grown at 114%. So giving a blended growth of about 101%.
Rishi, also, when you look at newer product launches, I know I keep asking you that question over and over again, but we haven't seen something happen for a long time. I remember having a conversation about electricity futures and single commodity weekly options as well. So what really is coming in? What can we expect?
So in the new fiscal, I'm sure you will see various new product launches. And as soon as the circulars are out, we can come and discuss with you. But we do have a robust pipeline of products which we plan to bring out in the market. And as and when we get regulatory approvals and we think it's apt to bring it to the market, we will definitely bring it up.
Rishi, also a new CEO has stepped in with a change in guard. Is there a change in strategy on ground?
Well, MCX continues to focus on growth, and that is what we plan to do.
Rishi, also a lot of commodity exchanges are now talking about equities vis-a-vis. There is a strong growth that we've seen across asset classes. Is MCX looking at that?
Well, I can't comment on that, but all I can say is we are completely focused on business. And as and when, wherever we get opportunities in the commodity space where we are right now, we are exploring that. For the others, I cannot comment as of now.
Rishi, in the recent past, we've seen stricter restrictions from SEBI come in for F&O norms. Has that in any sense impacted MCX? Have you seen more volumes, more activity happening because of that too?
Well, as far as I understand, those have been for the equity segment. So we've been rather insulated from all that, and we continue to focus on our business. So I don't think that our business would have much to do with the equity side.
But have you seen those volumes, that activity happen in commodities? Would you say some of that, yeah?
Yeah, so see, point being that volumes in commodities have been growing steadily, and that is what we've been seeing now. Whether you can attribute it to restrictions in equities, I wouldn't say that is fair, because commodities had anyways been growing, and that is what we continue to see, the growth in commodities, especially because of the global uncertainty and geopolitical issues and the need to hedge more and more. So I think that is the reason why we are growing.
Rishi, also, since now the technology's changed, everything seems new, do you see that impacting numbers in this quarter?
Well, yes. So the technology platform has stabilized to a very, very large extent. We are seeing, because of that, the ability to handle business in a better manner, and members are also getting a pretty seamless experience. So I think, that would also help our overall business growth to be handled by the technology platform in a very seamless manner.
Point taken. Rishi, as always, thank you so much for joining in and promising us that the new financial year will perhaps bring in more products, more instruments for the commodity players there. With that, that's all the time that we have on Halftime Report. Business Lunch will take all the action ahead.
Bulls in control as the market recovery continues. Nifty gains 250 points on steady global cues with financial stocks leading the charge. Bank Nifty gains 1.3%. Broader markets see momentum with almost 5 stocks advancing for every one declining. Bajaj Finserv and Allianz parts ways after 24 years. With Bajaj Finserv and promoter entities buying out Allianz stake in the life insurance and non-life insurance joint venture for a little over 24,000 crore rupees. Sanjiv Bajaj tells CNBC-TV18 that 100% ownership will give the insurance companies more flexibility to grow. Says there will be no leadership change and Bajaj will not look for another partner. Shareholders investing in PB Health must not do so only for profits but for a purpose. That's the word coming in from PB Fintech CEO Yashish Daya as the listed entity invests close to 700 crore rupees in its healthcare foray. Daya clarifies that PB Fintech's stake in PB Health will not cross 25 to 26%. Ircon rallies on bagging a contract from the Meghalaya government. Senco hits 5% upper circuit as promoter confirms buying and the company shares from the open market. Berger Paints tells CNBC-TV18 that it has dropped out of the race for AkzoNobel's India business due to high valuations. The SpaceX Dragon spacecraft kicks off its journey from the International Space Station to bring 4 NASA astronauts, including Sunita Williams, back home to Earth. The trip, along with complex descent maneuvers, is expected to last 17 hours. Hello, good afternoon. You've tuned in to CNBC TV18. You're watching Business Lunch, coming in live from CNBC TV18, Motilal Oswal Studios. I'm Vinny Motiwala, and thank you so much for tuning in today. Quick look at what the market is doing, right? A good picture coming in on the screen as of now. The Nifty is managing to hold on to strong gains that are seen since the get-go. 22,750 levels. Almost near the day's highest point is what the Nifty is trading at. Up almost 1% in today's trading session is what the Nifty is at. Other than that, look at the broader markets. That's also seeing a very good performance in today's trading session. So we have seen the Nifty mid and small cap holding on to very, very strong gains. Mid cap is up 1.5%. Small cap is seeing 2% gains. So outperformance is coming in from the broader markets. Banks, that's also doing well. So Nifty Bank is holding on to gains of almost 1.3% in today's trading session. Let's pull up those contributors for the Nifty as well as the Sensex and where that is headed in terms of the pullers as well as the draggers. Now, banks are doing well. Nifty Bank is obviously holding on to gains of 1.3%, but with that, we've seen performance coming in from ICICI Bank, HDFC Bank, L&T and M&M is something that is supporting the market. While in terms of a drag, we're seeing a bit of a fall coming in where we had from Bharti Airtel, Techem and Shree Cement among some of those, drags for the market. But other than that, advance decline ratio today clearly in the favor of advances versus declines that we've seen coming in today's session. So yes, a good day coming in. Media, metal, autos among the top sectoral gainer. So keep an eye out on that. But on that note, let's get started with the top story for today. And Bajaj Finserv and Allianz part ways after a 24-year partnership with Bajaj Finserv and the promoter entities buying out Allianz stake in the life insurance as well as the non-life insurance JV. And this is going to be for a little over 24,000 crore rupees. Sanjiv Bajaj, who is the chairman and managing director of Bajaj Finserv, tells CNBC TV18 that the deal is a win-win for both partners, and he also laid out the roadmap for growth and potential listing of the insurance business. Listen in.
This has actually been a great win-win deal for both partners. Both partners have reinforced their strategic intent for India, but with different paths. And from Bajaj's point of view, the Bajaj Group reinforces its focus in India on the insurance business at 24,180 crore that we are going to be investing to buy the 26% stake in both our insurance companies. I believe this should be the single largest investment in the insurance space ever in India, and one of the largest investments in the financial services space. We see no change at all at any operational level. Our partnerships will continue to be the same. We are very clear that given the capabilities that have been built in both our companies now, almost 24 years old, both the companies are perfectly capable on going solo. Effectively, as I said, the board has been running both the companies, a board that is controlled by Bajaj, and with the right support from Allianz as and when required, but fully empowered board and management. And as a result, no, we don't need another partner. If you also see the Indian insurance space in the last decade or so, this is not new. There have been multiple companies, including most of the leading companies, where the Indian promoter has gone solo, and most of those businesses have actually even done better. Once the first tranche of the shares are bought by Bajaj, post all the naturally regulatory approvals, the cancellation of the JV and stuff, we release Allianz from the non-compete, so then they are free to go ahead and get into binding agreements in India. This was their desire and one of their asks, and we completely understand that as a large player. And that's why I think the discussions, the negotiations have been such that it's created a win-win on both sides.
And when asked about any possible management change, Sanjiv Bajaj reassured that the Bajaj Finserv Managing Director Rajiv Jain remains fully committed to the business and commented that there will be no change in leadership at both insurance companies. Listen in.
So firstly, as I said, a board of both the insurance companies controlled by Bajaj has been running the business for over a decade. And there is going to be no change, I can tell you, on the ground. Day-to-day competitive activity continues, but there is going to be no significant change. As far as Rajiv Jain is concerned, we have a board meeting coming up later this week, and Rajiv is fully committed to the group and the business. And the board will evaluate, as we know his term comes to an end of March. The board is evaluating next steps, and you will hear about it soon. So clearly, no leadership changes in the insurance companies. The same senior leadership continues and is committed to building the business going forward.
And moving on to another big story and a stock that has been in focus today, PB Fintech. Now, the company has announced its plan to invest 696 crore rupees in its subsidiary, that's PB Healthcare Services Private Limited, in the next financial year. And this is going to be to expand its operations. In the new venture, PB Healthcare, the co-founder of PB Fintech, Yashish Dahiya, will hold 4.2% stake for an investment of 87 crore rupees. Alok Bansal will hold 2.1% stake for an investment of 43.5 crore rupees. While Sarabveer Singh will, along with Mandeep Mehta and Bhaskar Joshi, will hold 0.11% stake. In fact, earlier today we spoke to Yashish Dahiya as well, and he said that the primary objective of the shareholders agreeing to participate in PB Healthcare must not be profit. There is a 50% chance that this foray will fail, and he does add that PB Fintech stake in healthcare venture will fall to 25% versus 33.6%. Let's listen in to the conversation and what he had to say on this front.
By the time round 1A and 1B are over, because it's done in 1A and 1B, I think PB Fintech would be down to about 25-26%. Financial return is not the sole driver for Policybazaar either. The primary objective of Policybazaar is to grow insurance penetration in India, specifically in health insurance and term insurance. I think there is a 50% chance the project will fail. There's a 50% chance it might succeed. If it succeeds, it will be very big. When you talk about PB Health, it is there is an investment going in of about 2,000 to 2,500 crores from various investors. Many of them are pure financial investors. And they have no reason to invest except for the financial return they expect to make out of that. Like in any agreement, you cannot disclose people till the deal is done.
And more news flow for the insurance space, where LIC's CEO Siddhartha Mohanty has confirmed that the discussions are in the final stage to acquire stake in health insurance company, with a decision expected before the end of March this year, end of March this time, so 31st March. Let's listen into what his comments are coming in on that front.
Health insurance, definitely we are proposal discussion is going on at final stage. So, and that is a natural choice for LIC to be in health insurance. Within this financial, because regulatory approval takes time, and I am very much hopeful within this financial, before 31st March, I think some decision can be taken. It will be not a majority stake, means there will not be, LIC will not have 51% stake.
So it will be a minority stake?
No, it will not have 51% stake.
And on that note, we're going to step into a short break. And as we step into the break, here's some good news coming in for our viewers. India's business news leader is now a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store, Google Play Store, or you can just scan the QR code on the screen.
Do you worry today, Sabya, that we are at a point which is almost an existential crisis for a whole host of arts and artisans across this country? I mean, you were talking about the fact that this shouldn't be treated like a charity. It shouldn't be treated like a CSR project. What kind of interventions do you believe we need at this point in time to ensure that we keep this soft power alive?
You know, we don't need to do much because evolution will take care of itself. Because I'll tell you, so we were at the age of influence, which is moving into the age of intelligence. AI is going to come in. And I personally think that AI in many sectors, especially in performing arts and art, will be very short-lived. Because after the age of intelligence will come the age of wisdom. And when the age of wisdom comes in and people realize that the greatest gift to humanity is humans themselves, and we should not robotize our existence so much that we forget to be human beings, then people will realize that art and craft is going to be the most important expression of humanity. We don't have to do much. Evolution will take care of itself.
We certainly hope so.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajaj at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBC-TV18.com.
Welcome back to Business Lunch on CNBC-TV18. Now let's get you some global news updates. US President Donald Trump's top economic advisor has warned of some economic uncertainty stemming from the United States' evolving tariff agenda. Let's listen to what he had to say.
Between now and April 2nd, there'll be some uncertainty, but as April comes along, markets will see that the reciprocal trade policy makes a great deal of sense, and that for a lot of countries, they play by the rules. They're not going to be very upset at all at the way that the U.S. moves.
And moving on, the Union Commerce Ministry has indicated that the American investigation leading to reciprocal tariffs is likely to go on till the 1st of April, adding that it's not sure if it would necessarily mean that the imposition of reciprocal tariffs from 2nd April onwards itself is what we could see coming in. Abhimanyu is joining with us to give us more details on this front. Abhimanyu?
India and the United States are looking to increase their bilateral trade to $500 billion by 2030, and both the sides are currently in midst of finalizing the scope, schedule and contours of a multi-sectoral bilateral trade agreement which would be mutually beneficial for both the countries, and a decision would be taken at an appropriate time. That is something which has been indicated by India's Commerce Ministry. Also, the Commerce Ministry has said that the US probe on issues pertaining to reciprocal tariffs is already underway and is slated to end on the 1st of April, which implies that reciprocal tariffs on several products and product lines may not directly kick in from the 2nd of April itself. It remains to be seen how early a decision would be taken by the American authorities on this aspect, even as both the sides are looking to increase their bilateral trade and are looking for several concessions as far as removal of trade barriers is concerned. Also, India is assessing the positive and negative impact of US tariffs and is engaging in stakeholder consultation. The Commerce Ministry also indicated that tariffs on several other countries may also act as a benefit for Indian exporters. So that's another aspect which is going to be evaluated by India going ahead. Also, India's Commerce Minister in the first week of March had met several American officials in his visit to the US, and talks were undertaken. It remains to be seen how early a decision would be taken, even as both the countries remain committed to signing a bilateral trade agreement within 2025 itself.
Thank you so much for that, Abhimanyu. But in some other geopolitical news updates, US President Donald Trump has announced that Chinese leader Xi Jinping would visit Washington soon as trade tensions continue to rise between the world's two largest economies. Listen in.
We had the head of China coming in to top people right underneath President Xi, and he'll be coming in the not too distant future. When we had India last week, we had France last week, we had a lot of people. We had Ireland, we had UK, and they come in and I say, how's it looking? They say, oh, it looks much better.
And as tensions between the US and China build up due to tariffs, Chris Wood of Jefferies believes that the relationship between US and China could improve under Donald Trump. Let's listen in to why he thinks so.
On the external front, my own personal base case is that relationship between US and China, despite a lot of noise, is likely to improve under Donald Trump relative to the Biden administration. I believe the US president wants to do a deal with China extending beyond trade, and I believe there's a possibility that the Chinese will meet Donald Trump's agenda by moving production to the US. By employing Americans, which I think Donald Trump would view as a win. So in that sense, the US-China issue has the potential to turn from a negative to a positive if we see big China manufacturing companies entering the US market.
And moving on to some more international updates, President Trump is just hours away from his high-stake call with his Russian counterpart Vladimir Putin. And Trump says that he hopes to iron out more details than just to stop the fighting. The call is likely to also include details of Ukrainian territory and division of these assets between both the countries. And some updates are from West Asia. The US brokered ceasefire fell through earlier today after Israel-pound strikes across the Gaza Strip, killing over 200 people as reported by the Palestinian Health Authority. The Israeli military commented that it has hit dozens of Hamas-linked sites and stated that the operation will continue as long as necessary. Even the Prime Minister Benjamin Netanyahu instructed the IDF to take strong actions against Hamas terrorist organizations in the Gaza Strip, and the attack followed after Hamas repeated refusal to release hostages as well as its rejection of all ceasefire proposals. Okay, on that note, we're actually going to slip into a very short break, and after the break, we'll come back with some more news and updates, so don't go anywhere.
CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shriram Finance.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Thanks for staying tuned to Business Lunch on CNBC-TV18. Now let's move on. And the government has set up a committee to study regulatory issues facing the fintech sector. Sapna is joining us with us to give us the latest update on this front. Sapna, what's happening here? What are you picking up?
Well, what we have understood so far is the fact that this is a high-level panel that has been recently constituted, and it has diverse membership, of course, from the government, from the regulatory bodies, as well as from the industry. So the aim and objective here probably is to, take a fresh assessment of the growth that has happened in the fintech sector is more important, trying to address policy and regulatory gaps, if any, on issues, regulatory issues that are being faced by the industry primarily. That is the objective. This is what we are given to understand. So you have the Department of Financial Services, Department of Economic Affairs from the Finance Ministry, which are part of the panel. Then you also have representation from DPIIT, also from NITI Aayog, from MeitY, very important, as well as the regulators, basically SEBI and RBI. So this is a power-packed panel, and obviously you'll also have industry players here. So given to understand that probably representations from, or rather representatives from BillDesk, Jupiter, a couple of them. So they're all part of this panel, and as I've just explained, this is basically to assess and to understand what are the policy gaps, challenges, and especially regulatory issues being faced by the industry. So given to understand that from the first meeting of the panel, I think coming in 4 months, the report will be ready for submission, and we'll have to have a look and see what kind of trajectory comes to in those report recommendations.
Okay, Sapna, thank you so much for the latest update coming in here. We'll surely keep an eye out on that. But let's move on. And Sunitha Williams and Butch Wilmore, the two NASA astronauts who were stranded at the International Space Station for over 9 months, are finally on their way back to Earth. Earlier this morning, a SpaceX Dragon capsule departed from the International Space Station with 4 astronauts on a 17-hour journey, and the spacecraft is set to splash down somewhere around Florida tomorrow. So that's the latest update coming in here. Okay, and with that, we're absolutely out of time on this edition of Business Lunch at CNBC-TV18, leaving the markets almost near their day's highest point. All the sectors in the green. Thank you so much for tuning in. Up next, your Midcap Radar.
Good afternoon, it's Midcap Radar time, live from the CNBC-TV18 Motilal Oswal studios. I am Hormas Fatakia. With me as always is Vivek Iyer, and it is a very good day if you are a bull, because the market is back at the highest point of the day after seeing some profit booking from higher levels, and we are back at that 22,800 mark, Vivek.
Absolutely. Good afternoon, Hormas. Small cap index up over 2%, mid cap index over 1.5%. Nothing much more that a bull can ask for, especially if you're invested in the smaller or the broader end of the markets. We have quite a lot lined up on the show. Let's start off with the top headlines. Bulls in control as the market recovery continues on steady global cues. Broader markets lose momentum. Consumer durables, auto and metals lead the charge.
Shareholders investing in PB Health must not do so only for profits but for a purpose. That's the word coming in from PB Fintech CEO Yashish Daya as the listed entity invests close to 700 crore rupees in its healthcare foray. Daya clarifies that PB Fintech's stake in the healthcare entity will not cross 25 to 26%.
Godrej Consumer also climbs higher as brokerage firm Goldman Sachs says it's bullish on the stock with a target of 1,370 rupees a share. Says the company is poised to be the fastest growing FMCG in their coverage in 2026.
HAL or Hindustan Aeronautics has gained on the back of a UBS note. The brokerage has issued a buy rating but has cut its price target to 4,800 from 5,700 earlier. It has added that the market's negative perceptions are misplaced and it expects no impact from the recent weakening central government capex.
Varun Beverages gains over 4% after DAM Capital issues a buy call with a target of 670 rupees a share. Says the recent stock price correction offers an attractive entry point.
Back at the highest point of the day is the index, and it's nearing a key resistance zone which is at 22,800. Remember, for a better part of the February series, that 22,800 zone became a very important support. It managed to defend that, but then once we broke below that, we saw a very sharp 1,000-point fall on the index, and now after making that 21,964 low earlier in the series, the index has now gained almost 800 points from those lows, and now we are headed back towards that 22,800 mark. So it'll be interesting to see if we manage to sustain at these levels and B go beyond that as well. But as Vivek was mentioning earlier, the broader markets are not far behind. The small cap index is up 2%. The mid cap index too is having a very good day for itself, up 1.5%. So the recovery continuing there as well from lower levels. Remember, the broader markets have taken a bigger beating compared to the benchmark index, and there are plenty of movers in the broader markets, and Vamakshi is here to tell us just that. Vamakshi, good afternoon.
Well, good afternoon, Hormas. It's a good afternoon for the mid-cap index as well, right? And let's look at some of the stocks that are actually contributing to the gains that we're seeing on the mid-cap index. Mid-cap index was up nearly 1.5%. Mastech is one such name, up nearly 17% today. Keep in mind that the stock was under pressure since the last 5 sessions, and today it is seeing a very strong comeback, up nearly 18%. Ratnamani Metals too trading close to the day's highest point, up nearly 8.2%. This is in fact the biggest intraday advance since Jan 2024. Welspun Living too up nearly 10% higher, and Raymond trading close to 12% higher. Keep in mind the capital marketplace continue to be in focus. They were beaten down since the beginning of the year, but all of these stocks have now reversed and are recovering quite well. 361 WAM is up nearly 6%. Motilal Oswal CAMS as well as CDSL are some other counters that are gaining in the trading session today. Apart from that, we'll also focus in on some industrial names. Triveni Turbine continues to gain up nearly 10%. Kirloskar Oil Engine, keep in mind that there was a note from Motilal Oswal and they saw a significant upside in this stock yesterday, and the stock continues to build on to that momentum today. Today, that stock is trading higher by almost 8%. Apart Industries as well as CG Power, all of these counters are trading anywhere between 2 to 5%. Apart from that, let's also focus in on the media index. Keep in mind that media as a sector was one of the top sectoral losers yesterday, and today it has reversed and in fact is the top sectoral gainer today. Dish TV is one such counter which is pushing the index higher, up nearly 4.6%. We also have PVR Inox in the back of a brokerage note from Nuvama. They appear to be quite bullish on this counter, up nearly 5%. Tips Music as well as Z Entertainment too holding strongly in the trading session today. On the flip side, let's look at the stocks that are actually trading lower in an otherwise very strong market. That list includes Hitachi Energy. The stock was up yesterday, so some profit booking out here. Home First Finance, on the other hand, is trading at its support level. Right now, it's trading at 979. So it'll be interesting to watch out for whether or not this level sustains. Krishna Medical as well, that stock is down nearly 2.2%. And Bharti Hexacom as well, that stock is down nearly 2%.
Thank you so much, Vamakshi, for joining us and giving us a clean gist of what exactly is transpiring and moving as far as the broader end of the markets are concerned. Let's now welcome Shrikant Chauhan from Kotak Securities for a quick technical check on the market. Good afternoon, Shrikant. Thank you so much for joining us. Give us a sense of what exactly you expect indices to do from here on. There's been a sharp bounce, the Nifty up over 1%. Do you think this particular rally can sustain?
Good afternoon, Vivek. Good afternoon, Harmas. Nifty, yes. Today, Nifty has given many bullish indication signals. It has broken the level of 22,600 with a gap, and now it is sustaining above the levels of 22,700, 750, which is certainly positive for the market. Based on its technical formation, I am of the view that the stock has spent a lot of time between the range of 600 and 300, and now the next level to watch out for would be 23,000, and in the best case scenario, 23,300. So I am of the view that we should look for adding long position even at current levels, more on dips, and we have to keep a stop loss around 22,500. So that should be the final stop loss for creating any positional long trade on the Nifty. The Bank Nifty is also supporting, and Nifty IT has also already fallen to its extreme levels. So there we could see some consolidation, but Bank Nifty should support the entire breadth of the market. So broadly, I think from here, we should look for 23,300 in the near term.
What about specific stocks, Shrikant? What's on your radar?
Afternoon, Hormas. In this particular up move, we saw specific buying interest in chemical and fertilizer stock. And in that space, Chambal Fertilizer is definitely doing well. It is relatively outperforming. But we also like Deepak Fertilizer, which is currently trading around 1110, 1120 sort of levels. And if we consider its current up move, then the next leg of the rally should be somewhere around 1400 levels. So at current levels, Deepak Fertilizer looks very attractive to buy and hold with a target of 1400, and we can keep stop loss around 1050 for the same. We also like CDSL, and there also if we see the daily technical pattern of the stock, then it is diverging positively on RSI as well as on few other momentum oscillators. And as per MACD, it is not lagging the momentum. In fact, it is gaining the momentum. So here also I'm expecting stock to move towards 1300 levels, and we can keep stop loss around 1000 for the same.
Thank you so much, Shrikant, for joining us, giving us a view on markets, the index levels, as well as your individual stock picks. Well, as we now slip into a short break, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.
Be speaking to President Putin on Tuesday. A lot of work's been done over the weekend. We want to see if we can bring that war to an end. Maybe we can, maybe we can't, but I think we have a very good chance. We're talking about land. It's a lot of land. It's a lot different than it was before the war, as you know.
Welcome back. Some very interesting movers that Vamakshi highlighted just a few minutes earlier. Mastech is one of them. Now, even at the highest point of the day, 18% higher now on the stock. And as of now, we've seen almost 36 lakh shares being traded on the stock already, and yesterday's volume was only 2 lakh shares. So it shows the kind of volume surge that Mastech has seen, and only 14% of the total number of shares that have been traded so far are marked for delivery. So interesting move seen on Mastech. And the other one is Paytm, and that stock too continues to hold on to gains of around 7%. The stock reversed exactly from its 200-day moving average, which was around 689, 690, and since then it has moved from there. So 6% higher for Paytm as well. But the other stock that's doing well for itself in today's trading session is Hindustan Aeronautics, or HAL, and that is on the back of a brokerage note from UBS. Upasna is here to tell us more on that. Upasna, good afternoon.
Good afternoon, Hormaz. Well, certainly the stock continues to remain in focus today. The UBS has given a buy rating on the stock and cut the target price by 15% to 4,800 per share. And it has also lowered FY26 revenue by 3%. Now, the brokerage believes that the market's negative perception is misplaced and has also reiterated a constructive view on the stock, as it believes that the LCA MK1 Tejas delays are transitory, with revenue only delayed and not impacted. It expects no impact from the recent weakening central government capex and estimates a total addressable market of nearly about $86 billion for HAL in the medium term, and it has also emphasized that HAL has delivered on P&L expectations led by stable, profitable MRO business of the company. It also believes that the current share price is overly factors in the manufacturing delays that were seen by the company, and company is working with GE on accelerating the supply of F404 engines, which was a key trigger for the stock, which led to the downfall in the past few months, which was one of the main market concerns. Now, the brokerage says that overall it limits the impact of FY26, FY27 earnings with an upside risk to the consensus orders. When it comes to defense ordering, it believes that the FY26 may be an inflection year, with HAL being a key beneficiary. When it comes to the order book of the company, it may ramp up by 3 times by FY27 is what the brokerage believes, also coupled with stable execution over FY26 to FY27, implying a 19% CAGR is what the brokerage has highlighted. So all in all, this was the key takeaways why the stock is buzzing in trade today.
Thank you so much, Upasna, for joining us and telling us what exactly UBS had to say as far as HAL is concerned. The stock at the day's highest point up over 4% in this session. But moving on, the other set of stocks that are doing very well in the session today are consumer stocks, and the focus on the back of multiple brokerage notes that have come in. Mangalam is here with more details.
Well, one of the top gainers yesterday was Godrej Consumer, even as the other consumer stocks were not doing particularly well. And today we know the reason why, because there has been a note that has come in from Goldman Sachs this morning. They are positive on the stock. They have a target price much higher than what the current stock price is as well. For Godrej Consumer, they are looking at close to around 1,700 rupees in terms of a target price. And what they like is that the third quarter was just an aberration from a growth standpoint for the company and a margin standpoint. They believe that, going forward with the levers that the company has posted, the growth would return for them. And for FY26 itself, among all the consumer stocks that they track, Godrej Consumer would be the fastest growing. So as a result of which, they reiterate their positive stance on the stock. The other one that I'm looking at is, Varun Beverages. But just a word on Godrej Consumer, also in focus because investors are meeting the company today at the CLSA, India Consumer Tour. So to that extent, it will be important to know, whether there is any action coming in from any of the investors in terms of purchase decisions on the counter as well. The other one is Varun Beverages. Over the last few trading sessions, it's been buzzing this month itself after a big decline. So, brokerages were writing on that over the last few trading sessions. And we also got the annual report of the company that came by. And in that, there were levers that the company had posted, which says that, it could do better than competition when it comes to their capacity, their reach, and also the growth prospects coming in from their Africa foray itself. We have DAM Capital, which has written that this correction in the stock provides a great entry point, and they are buyers on the stock as well. And remember, seasonally too, between March and May, we see higher sales of summer products, including the likes of those that Varun Beverages makes, and as a result of which, we are seeing some further purchase in this counter.
So up 10% in the last 5 trading sessions. Mangalam, thanks a lot for that. Regaining some of the lost fizz is Varun Beverages. We take a short break, but we get you more on the markets and specific stocks on the other side. Stay tuned.
नागपुर के महल इलाके में जिस प्रकार से तनाव की स्थिति निर्माण हुई, ये बहुत ही निंदनीय है। जिस प्रकार से कुछ लोगों ने पत्थरबाजी की है, पुलिस पर भी पत्थर फेंके हैं, ये बिल्कुल गलत है। मैं स्वयं इन सारी घटनाओं पर नजर रखकर हूं। मैंने पुलिस कमिश्नर को ये कहा है कि कानून व्यवस्था बनाने के लिए जो भी कड़े से कड़े कदम उठाने की आवश्यकता हो वो उठाए जाए और शांति को बनाया जाए।
Welcome back to Midcap Radar. Well, one stock that's doing very well today is Policy Bazaar or PB Fintech. Remember, the stock fell 10% over the last 2 sessions. This is after last week the company announced its plan to invest 696 crore rupees in its subsidiary PB Healthcare Services Private Limited in the next financial year to expand operations. The new venture, PB Healthcare, co-founder of PB Fintech, Yashish Daya, will hold 4.2% stake for an investment of 87 crore rupees, while Alok Bansal will hold 2.1% stake for an investment of 43.5 crore rupees, while Sarbavir Singh, along with Mandeep Mehta and Bhaskar Joshi, will own 0.11% stake each. In fact, earlier today we spoke to Yashish Dahiya and he said the primary objective of shareholders agreeing to participate in PB Healthcare must not be profitability. There is a 50% chance that this foray will fail as PB Fintech stake in healthcare venture will fall to 25% versus the 33.36% initially envisaged. Let's listen in to excerpts of this conversation.
By the time round 1A and 1B are over, because it's done in 1A and 1B, I think PB Fintech would be down to about 25-26%. Financial return is not the sole driver for Policy Bazaar either. The primary objective of Policy Bazaar is to grow insurance penetration in India, specifically in health insurance and term insurance. I think there is a 50% chance the project will fail. There's a 50% chance it might succeed. If it succeeds, it will be very big. When you talk about PB Health, it is there is an investment going in of about 2,000 to 2,500 crores from various investors. Many of them are pure financial investors, and they have no reason to invest except for the financial return they expect to make out of that. Like in any agreement, you cannot disclose people till the deal is done. I just wanted to clarify, the cash has not come in yet. The cash will come in over the next 120 days, right? Yeah, but without the cash, nothing can happen. No, I just wanted to explain. The money will come in perhaps by July end. So we should have an operation ready, some sort of an operation ready by about December, which is about 5 months after the cash comes in.
Interesting comments from PB Fintech. The stock is at the highest point of the day as well. But with that, we call time on this edition of Midcap Radar. We leave you with the Nifty on the cusp of 22,800 at the highest point of the day. From Vivek, me and the team that put this show together, thank you so much for watching. MF Corner for the next 30 minutes.
Hi, good afternoon. You've tuned into Mutual Fund Corner on CNBC-TV18 and I'm Vinny Motiwala. Last week, we did have the AMFI data that came in. Some key points came in from that front. Now, equity inflows in Feb 2025 saw a bit of a fall coming in on the back of the volatile market movements that we've seen. They came in at around 29,241 crores. Sectoral thematic funds that continue to see a bit of a decline, 36% decline. And the mid and small cap funds that also saw a bit of a decline on the monthly basis. Now, there are certain concerns coming in. Is this the trend that will continue? Is it signaling some bit of a fundamental shift in terms of the sentiment of the investors? What should you all be doing while investing? Looking at this AMFI data, today we do have Chirag Mehta, Chief Investment Officer at Quantum AMC, joining in with us to decode the AMFI data, expected trends going forward, and what should you all be doing as investors. Chirag, thank you so much for joining with us on the show. And, at a time when everyone is so worried about the data points, you keep hearing people wanting to know whether to shut SIPs. But equity inflows, for this month, in the month of February, has seen a decline, right? So this is the lowest level that we've seen in terms of for the equity inflows since April 2024. What do you think that has triggered the sharp pullback that we're seeing? And is it maybe just investor fatigue in terms of the market or volatility that's a major concern, or valuations that are shaping up as a concern for investors? Anything that you have read on this front?
So yes, Winnie, if you look at valuations, they were a concern. We were trading at very high valuations, especially in the mid and small cap. Even large caps were, one standard deviation over and above the long-term averages. So yes, we were trading with high valuation per se. But if you look at the flows data, right, it is, if you decompose that, it is made of net flows, inflows, and what redemptions you have seen, the net becomes net inflows. So from that perspective, in September, October, we were seeing some sort of redemptions hitting mutual funds, and that led to net inflows still staying high, but because inflows were supportive at that time. Now we have seen redemptions start to decline a bit, a tad lower than what we were seeing in September, October, during the peak market levels. And what has happened is inflows have started coming down. So earlier it was more redemption pressure, and now it is more inflows declining per se. And I think this augments in terms of the shift in some sentiment, because, there was a lot of money or liquidity moving in mutual funds. And it was across the board that we were seeing flows come in. And over the last 2 years, it was more driven by thematics, small cap, mid cap, as opposed to, hybrids or large caps taking the place. And from that perspective, given the fall, which was really sharp in the small and mid cap segment, given valuations were even higher there, it led to the outflows. It triggered the outflows in some sense.
Absolutely. So because of this valuation, so now coming to the point of specifically mid and small cap, then given that if valuations were high, and we have spoken, everyone knows about valuations being high in mid and small cap, then do you think this is going to be something more permanent for the mid and small cap side, at least in the near term or the next 1 year? Flows for the mid and small cap funds could be a bit lower.
I think, everyone needs asset allocation, right? And also within the asset allocation buckets, like equities, there is a place for large caps, which becomes the liquid foundation aspect of the equity bucket. And then you add on mid and small cap to increase your returns, while you also are aware that you are taking risk in that segment. So small cap, mid cap valuations are still high. But I think there could be some rotation and some rejig and proper way of building the equity portfolio, of moving money out of small cap, mid caps to some extent, and moving to large caps or hybrids to some extent that we may see over the next 6 to 12 months. So yes, valuations have come off and are looking reasonable in certain pockets. But on an aggregate basis, they're still high, and probably, may lead to investors moving from this high valued zone towards large caps, which are more reasonable, closer to the long-term averages. And therefore, that could trigger some shift from the small mid-cap thematics to large cap kind of allocations.
Okay, yeah. So that could be. So thematic funds also maybe could continue to see this decline, right? What we've seen right now, this 36% decline on a month-on-month basis is what I'm talking about. Then that is something that will continue in this front as well. And maybe hybrids could start seeing an increase is what you're highlighting.
Yeah, absolutely. I think we may see that shift towards a proper asset allocation per se, and moving from expensive pockets to pockets which are showcasing some reasonable valuation levels, and therefore investors should be looking at very closely now.
Okay, just to follow up on that front, for sector thematic funds, do you think there are any opportunities that could come in going forward as well, or looking at the market trends where we could see that increase? And where do you think increase in terms of NFOs would come in for? Is that new fund offerings? Could we see an increase on that front, or that will also maybe take a bit of a backseat?
So we have been seeing a lot of thematic fund launch over last 1.5 years, right? And a lot of inflows have moved into those pockets. Themes are generally launched when, you can showcase a better performance of those themes. And therefore, it becomes easier for you to take that product to the market. But having said that, that typically are not great times to invest into per se. I mean, from an investor perspective, they are better off in an active, diversified equity fund as opposed to a thematic or sectoral fund. So I, as an active fund manager, if I like a theme or if I like to, like a certain sector of the market, then I will have that allocation even in my active equity schemes. Why do you need a thematic or sectoral fund per se? Is what defies to some extent. Some investors who are learned, who are very savvy investors, may want to have a higher allocation to certain pockets which they understand will do well over next 2, 5, 10 years. And therefore have some portion more allocated to those segments. For them, thematic is fine. But on an aggregate basis, on a generalized, for an average investor, I think they are the active equity diversified funds would be a better place for them to allocate as opposed to the sectoral thematic funds.
Okay. Surely that's interesting to be better diversified than just going in for a sector thematic fund. And especially if you don't have in-depth knowledge, I think it's safer to go in for those diversified funds than opting for any options there. Chirag, there are several market voices, top market voices, who have been, raising concerns about those excessive valuations like you were talking about right now as well in those small cap funds. Do you think the SEBI's increased vigilance that has come in for this small cap froth, and reducing that froth in the market, that is also something that is playing a role in terms of the outflows, and people are becoming more cautious than they should have been?
I think the SEBI's vigilance or regulations that they brought about on disclosures of small cap funds was the thing in the right direction. Given that liquidity is a challenge in that space, and given the significant increase in flows that we had seen to that segment, it warranted a disclosure, at least from an investor perspective, to take an increase aware call per se. So if you look at liquidity of many funds out there, with the small decline in markets, we had seen an increase in number of days that took to liquidate as compared to what it was earlier when the regulations was introduced. So it did tell you that liquidity in this segment is dear, and it can dry up significantly as there is differences in market movements. So from that perspective, I think it was warranted in terms of disclosures. Also, you had to and then disclose the liquidity. So to that extent, it was a bit relaxed as well. But disclosures were warranted. So I think it was in the right direction. It didn't do much in terms of triggering this pullback that we've seen in small caps. It was trading at a higher valuation, and it warranted a fall or a decline or a correction, per se, if I may put it that way, given the valuations that we were trading at. So we were trading at significantly much higher valuations. And if you look at our small cap fund, we were holding on to higher cash, which is not a call that we take, but it's a residual of our process. And we were sitting on about 17-18% cash in our fund because of the lack of opportunities at the valuations that we would love to buy. So from that perspective, it kind of validates that it was trading expensive at that juncture.
Absolutely, Chirag. And a lot of other fund houses also are holding a lot of cash, because I think that's a data point that has come out as well, because everyone is holding on to those cash reserves and finding the right opportunity to invest in. But one thing that really caught my eye, Chirag, was the SIP stoppage ratio. I mean, it's not a very good pretty sign that comes in when you at least look at the number, right? It was around somewhere 60% stoppage ratio in October 2024. Today, when you look at it, Feb 2025, it is 122.8%. That is the stoppage ratio that's come in. This is a bit of a worrying, right? Because if they're discontinuing their SIPs, and they're not starting new ones, one, what would you say, and is to an investor in terms of an advice, as well as in terms of, is this a warning sign, or maybe retail investors are starting to panic and stress a bit more?
Vinny, we are in uncharted territory per se, because there are a lot of new investors, at least 2 to 3 crore investors who have come into the mutual fund fold post-COVID. And if you look at markets post-COVID, haven't really seen the kind of decline that we are seeing currently. So I think it's about the behavioral aspects of these new investors, which will get tested. We don't have a textbook version of how this will pan out. But overall, I think it should lead to some rejig in terms of allocation if one were over-allocated to, say, certain segments of the market and didn't have a right allocation in place. I think this is the time that that rethink will come. And from a suggestion perspective, I think investors need to embrace equity investment. There is no two ways about it. If you have taken a call to do it in form of SIP, systematic investment plans, I think one needs to continue with that, because given the decision that you had taken at the start of your investment journey, that needs to continue over a period of time to reap the benefits that SIP brings to the table. So far, investors are investing in a rising market. This is a time that they will average out their cost when markets decline and correct. And hence, over a cycle, they would be much better off with continuing their SIPs as compared to stopping it now. Of course, one needs to, again, reevaluate their portfolios, which segment of the market they were exposed to, what risk it could bring, and hence invest in the right way going forward. That rejig is necessary, but I think SIP investments or continuing the investment should continue going forward as well.
Okay, Chirag, one point what I'm not understanding in this, while stoppage ratio has surely increased, SIP inflows, they have not seen that much of a fall. 25,999 around the 26,000 crore mark, right? So what is this indicating? While flows are SIP inflows in terms of rupee amount is there, but the stoppage ratio is also increasing. So what is this trend then?
So there could be new investors that are joining in and signing up for SIP. Some may earlier have said that valuation expensive, let me be away from the market. With the current decline that we have seen in small caps about 24-25% and in large cap about 14-15%, would say that now it makes sense to go into the market. I don't know where the markets will bottom out, but let me at least start my investing through SIPs, and therefore a new breed of investors who are away from the market may be joining, and all those who were investing earlier and now seeing declines in their monthly statements in terms of returns that they are fetching may be stopping. So it's two different kind of investors reacting at the same time that is causing this dichotomy that we are seeing in SIPs overall. That stoppage is ratio increasing, but still flows being maintained overall.
Okay, and if there's a new investor who's starting SIP right now, right? It looks attractive to start right now. Markets are falling. When you see that fall coming in, you find it attractive. Where should they start their SIP with? What sort? There are so many options out there. So which is the best option in the current scenario? Like whether you go hybrid or just mid cap, large cap, small cap, what is it that you would say?
So if one is new to investing, I think they should start with something that's very, very liquid in the equity space and very large cap oriented. So they should set that as the foundation. Hybrid, I don't think that you need SIPs. You can do SIPs, but you are asset allocated if you're allocated to a good hybrid fund, then you are already asset allocated, and therefore you can also do lump sum there. But if you want to do SIPs, probably large cap liquid allocation that makes the foundation of your equity assets, I think that should be your starting point. And as you become more mature and as valuations correct in the mid and small cap, you can augment your allocation over a period of time towards that segment as well. So I think that is how one should look at. One should look at the allocation, asset allocation, and allocation within each asset class as a triangle. And, the bottom of the triangle has to be that liquid, less risky segment of the market. And as you go up the curve, you take more risk and therefore you get more returns in that space.
Okay. On that note, we're going to slip into a very short break. Don't go anywhere. We're going to be continuing this discussion with Chirag. So stay tuned in for that. Welcome back. You're watching Mutual Fund Corner on CNBC-TV18. We are talking about the AMFI data that came in for 2025. We're continuing the discussion with Chirag Mehta. Chirag, what is interesting also that, and what has piqued interest of investors across the globe is gold. And gold ETF schemes also, they continue to see a bit of a trend. This geopolitical tension, gold is surely shining bright. There's no stopping that one. Do you think this gold ETF trend maybe could further see an increase in the next couple of years? And is that an interesting bet that an investor could look at right now?
Yes, I think we have seen continuing flows in gold over the last 7-8 months. We have seen positive flows coming in gold ETFs. If you look at investors from an asset allocation perspective, I think are under-allocated. Though we may have a lot of gold in the family, but from a portfolio allocation perspective, I think investors are under-allocated to gold. These times where we're seeing stress, uncertainty increase, we are seeing that investors are moving into gold and gradually allocate a portion of their portfolio towards gold-like assets. So I think this trend is here to stay, given that it's nowhere close to the allocations that one should have of their portfolio. And each time we have seen stress in equity markets, gold has done well. So I think it's kind of self-reiterating its importance in one's portfolio. And I think investors will continue to allocate. And today, gold ETFs emerge as one of the best forms of allocating to gold and having it from a portfolio context. So I think gold ETFs will continue to see inflows. Awareness for gold ETFs is increasing significantly. Investors are adopting that in a bigger manner. And gold, given that we have seen good returns, back it up in times of uncertainty, it will lead to more flows coming to gold ETFs overall.
Okay, and with gold, do you think even silver is something that could start seeing an increased interest now?
See, we have a view in terms of how one should look at silver, right? Silver as a commodity, 65% of the usage of silver comes from industrial uses. People put it as poor cousin of gold, but overall, if you see, whenever there is uncertainty or a decline in equity markets, given its association to growth, silver also falls along with what we see fall in equity markets. So it gives you a similar exposure to what growth assets like equities will give you. And hence, from a portfolio context perspective, you need to have gold in your portfolio as opposed to silver. We have seen 3 bull markets in silver, and all 3 of them were speculative in nature as opposed to anything fundamentally led. So if you understand silver's supply demand balance, and if you want to look at it from a trading perspective, it's fine. Right. But from an allocation perspective, gold suits the best.
Gold suits the best, but gold, debt and equity funds, if you have to pick in the next 12 months, what would you be looking at the most and what interests you the most?
So I think asset allocation is what one should look at. But if you put a gun on my head and ask me to pick one of them over the next 12 months, then I think it's going to be equities. I think equities will give you a good opportunity to build an allocation over the next 12 months. Sure. And I think in a market like India, where you see high rates of inflation, currency devaluations, etc., I think equities will help you protect or earn better returns than the inflationary trends that you will see over a period of time, and help you wealth create in a true sense. So I think equity is what one needs to embrace and build an allocation over the next 12 months.
Sure. And just one last word, March 25, how are we expecting these numbers? What has shaped up so far? If you could just give us quick details on that front for the mutual fund industry.
Sure, absolutely. So I think what we saw in Feb is going to be very similar in March. Markets have corrected a bit further and stabilizing at current levels. But I think from an investor behavior perspective, we will see very similar trends to what we saw in February. So I think people will continue to allocate, and you will see interest increase as valuations become more sanguine and give you an opportunity to buy. So we will see similar trends in March. But hopefully over a period of time, as we see more buying opportunities, I think the flows should start reversing and coming more positive. Until then, I think we will see the same trends that we are seeing now.
Okay, so this trend that we're seeing in Feb 2025, that will continue in March 2025 as well. And maybe in the near term also, next few months is something that would be similar, right? Or there could be a different story in the new financial year is what you're watching out for, or this similar trend?
Should be similar, but we don't know the behavior of many of these new investors. That will be tested, and we will come to know in terms of how they behave, if they continue with their resolve to invest or they panic.
Okay, absolutely. This is a time that, I think the market is testing the new investors. So it's time to, just pass this test, get through this, continue with your SIPs, I think. Do not just panic and stop, I think, is the word coming in from everyone. But Chirag, thank you so much for joining in with us, explaining us, the details about how the AMFI data showed up in 2025, as well as what it could look like in March going forward as well. So yes, that's about the AMFI data, where we did see a bit of a decline in terms of equities flows in Feb. But overall, maybe this is a trend that could continue in this next couple of months. That is what we're keeping an eye out on. Stoppage ratios increase, but inflows have been maintained because there are new investors maybe who are starting to see some bit of a bet coming in as a better opportunity. And that is what the understanding we've gotten right now from Chirag Mehta as well. So with that, viewers, we are absolutely out of time in this edition of Mutual Fund Corner on CNBC-TV18. Thank you so much for tuning in. As always, up next, you have Closing Bell.
Do you worry today, Sabya, that we are at a point which is almost an existential crisis for a whole host of arts and artisans across this country? I mean, you were talking about the fact that this shouldn't be treated like a charity. It shouldn't be treated like a CSR project. What kind of interventions do you believe we need at this point in time to ensure that we keep this soft power alive?
You know, we don't need to do much because evolution will take care of itself. Because I'll tell you, so we were at the age of influence, which is moving into the age of intelligence. AI is going to come in. And I personally think that AI in many sectors, especially in performing arts and art, will be very short-lived. Because after the age of intelligence will come the age of wisdom. And when the age of wisdom comes in and people realize that the greatest gift to humanity is humans themselves, and we should not robotize our existence so much that we forget to be human beings, then people will realize that art and craft is going to be the most important expression of humanity. We don't have to do much. Evolution will take care of itself.
We certainly hope so.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The outperformer is the Hang Seng, as has been the case for a better part of the year.
The head of China coming in to top people right underneath President Xi, and he'll be coming in the not too distant future.
22,676, which is the high, the recent high, needs to be taken out for the market to do better.
Bajaj Finserv and its promoter companies will be acquiring that entire 26% stake from Allianz in both general insurance as well as the life insurance entity.
22,650. So, you know, the first things first, we've now, once again, for the second time, we're back above the 20-day moving average.
I do not believe PB Fintech is the long-term strategic driver of this project.
The Nifty surged 250 points, well above at that 22,750 mark.
This has actually been a great win-win deal for both partners.
Sanjiv Bajaj very clearly confirming that Rajiv Jain is going to continue with the group, which is the Bajaj Finserv and Bajaj Finance.
MCX continues to focus on growth, and that is what we plan to do.
Earlier this morning, a SpaceX Dragon capsule departed from the International Space Station with 4 astronauts.
The market is back at the highest point of the day after seeing some profit booking from higher levels.
Okay, well, that's the day so far. It's a solid day. 300 points in the Nifty. We're coming to you from the CNBC-TV18 Motilal Oswal studios. Last hour programming coming up. I'm Prashant. With me, my colleagues Rima and Surabhi. Guys, good afternoon.
Hi. What a super Tuesday, right? Like a super strong Tuesday, building on yesterday's gains, and no signs of weakness anywhere.
You know, it's quite phenomenal. I'm just looking at the ticker above our heads on that screen there, 22,794, counting down to now 22,800. It's been solid, steady, strong, and no nerves. And this is a very different market compared to where we've been for the last 3-4 months.
Right?
Yeah.
So maybe we were talking about momentum.
Momentum. Right? You got your momentum today.
No, I'll tell you what.
You said escape velocity?
No, but different ways too. But the point is, I've been making the point that maybe the price bottom is in last few days. Momentum, we'll see. Some days we'll get momentum. Some days momentum will be broken. But at least I think, you don't have to maybe still once in a while look over your shoulder if there is some global event. And of course, that 2nd April still looms, right? I mean, reciprocal tariffs, it's not gone away. It's just a good day. And of course, it's been 2 good days in that sense. So just a few points, really. which sort of capture what's happening. Confident trading. That's the way I'd like to describe it. No real zigzags, no sell-offs, intraday sell-offs, etc. Through the course of the day, just staying higher. All indices, the Nifty, the Bank Nifty, the mid-cap and the small-cap indices have crossed over above their 20-day moving average today. So that is another one, which I think adds to some confidence. Typically, once you cross the 20-day, it should trade well into the rest of the month. Momentum or no momentum, you should typically, once this is taken out in a decent way like today, we should actually head higher. So we'll see. Advances outnumber declines by about some 4:1. This is all NSE stocks. And look at what's doing well, right? Capital markets, real estate, small caps. This is the pocket which is kind of high beta and, of course, also spaces which have really been beaten down quite a bit. Some of the maximum amount of pain has been in these areas, and these are areas which are starting to come back up a little bit. So, as I say, slow and steady, perhaps better than fast and furious. So I think today it's, of course, strong, 1%, 1.25%, and so far actually a pretty good week, all told. Although one must sort of put this in the context of what's happening in the rest of Asia. China, for example, has been trading very well. And the broad, if you think about it, the broad theme seems to be money moving from the west to the east. The big, magnificent 7 companies in the US, they seem to be deflating a little bit, and money is moving eastwards into, of course, China, and now here a little bit to India as well. That institutional flow number, important to track. It's, of course, been firmly in the negative zone on the FII front. We'll see how that pans out today. Rima.
Well, it does help that the upbeat global sentiment has carried forward to the rest of the global markets as well. So Hang Seng advanced more than 2% by the close of trade, 2.2%. And Europe is firmly higher right now. The CAC is up close to about 0.6%. The DAX has gained over 1%. And remember, this is the big central bank action week. You've got Bank of Japan, Fed, and BOE. So in the central bank land, it's going to be a very, very busy week. For our own markets, we've crossed the recent high of 22,676. And from the recent low, just last week, the Nifty had gone below 22,000. So very swiftly. And the low that day was 21,965. So from that level, we've advanced close to about 850 points. The mid-caps have advanced close to about 5% from their March lows, and the small-cap index has advanced close to about 7% from its March low. And we've broken out of this consolidation. The Nifty was trading between 22,300 to 22,600 for the last couple of days, and today it is higher. And it helps that banks and IT, both those leadership sectors which carry the maximum heft, are doing well today.
Absolutely. Banks have been leading from the front. Look at that Nifty Bank chart, almost 2% higher. Let's pull up the Fin Nifty as well, Nifty Financial Services, because it's not just banks. Even non-banks have had a pretty decent session for themselves. Obviously, the big deal in the insurance space has been the talking point. So there you see, beyond banks, overall financials as well, it's a very, very healthy looking screen. And IT at least is no longer as big a drag as it used to be. So that's a point that Rima made. It's a point well taken as well. I also want to talk about the fact that this is a bit of a global rally in nature. If you're looking at the Hong Kong market today, the Hang Seng, by the way, has been up over 2% once again. So global markets have been looking fairly firm. And India is absolutely in step with that. It's among the leader markets today. So Hang Seng is up 2.5%, and we're looking at smart gains of about 1.2%. So solid performance. On mid-caps, just to give you a bit of a flavor and a texture of the kind of move and momentum that we're seeing. Okay, let's look at the price plus volume charts and what's topping it. Zomato is up about 6%. Ircon announced that one of its joint venture partners has won a big order from the government of Meghalaya. And Ircon has been up and about right from the morning. Beyond that, even non-news stocks, Sri Renuka, there is Bajaj Hindustan on the sugar side doing really well. RBL Bank in Tier 2 financials is having a great session for itself. Actually, financials, like I said, look at 361 Wealth Management, 7.5% higher. PB Fintech, of course, we'll tell you more about our conversation with the company today, but that stock's up about 6-7%, looking very, very good. Ola Electric is undoing a lot of yesterday's price damage. Ola is surging now 12% higher, but it's a very, very beaten down stock. So short point, there's a lot of flair in the market, and that advance decline ratio is looking fantastic. There are over 4 stocks advancing for everyone that's declining at this point in time. So how should you position yourself for this last hour when momentum is so strong? Well, let's ask Mitesh. Mitesh, it's a real green afternoon after a long time, right? Across the board, a higher up move. What would your advice be now? What are the trades?
Yeah, Good afternoon. So, I've been advocating that we will possibly move higher and test 22,800. We have done that. The high is 22,798, so practically it's there. What we've done is that we kind of flipped positions, taken profits on the long which we were carrying, and now waiting for 22,8, 10, 15, 20 to be taken out before adding on to fresh long positions. So take some part profits, but stay long. There is one important thing which I want to point out, that today was a gap up day and there was no attempt to fill the gap. So 22,600, which is where the gap is, that becomes your stop loss, which means that any 100-point decline should invite fresh long positions. So take some profits over here, either buy about 22,820, 825 or add on a 70, 80, 100-point kind of a decline. I think that's the way we'll approach it. And on the stock side also, in the morning we have all longs. Right now also my recommendations are all on the long side. PFC is a buy with a stop at about 395 for targets of 415, 420. And Bosch is another one which is on my radar. Sorry. Bosch is a buy with a stop at 27,000 for targets of around 27,950.
Got that. M&M, top Nifty gainer today. Anything that stands out in the charts today, Mitesh?
See, M&M also, like other stocks, was extremely oversold, had done the correction, is now giving first signs of reversal. There is a modified moving average which comes in around 2820. So maybe it's not a good entry point right now. If you had bought it yesterday or maybe today morning was better. But now people can take some profits around 2820, and beyond that, once we see a breakout above that, then I think there's a good chance of stock heading towards 29,53,000. So positive view, but tactically not the best entry point.
Got that. There are just 4 Nifty stocks in the red. One of them is Reliance, which is practically flat. You've got a Tech Mahindra. You've got a Bharti Airtel, which is declining nearly 1%. That could be because of that FT News report, which talks about Sunil Bharti Mittal possibly weighing or considering increasing his stake in British Telecoms. So the street fears that money will be pulled out. He may have to sell his stake in Bharti Airtel if he has to fund incremental stake in British Telecom. So that news piece could be weighing on Bharti Airtel. And the other one is Bajaj Finserv. That is the big story of the day, and the stock is down 1.5%. Now, Bajaj Finserv and Allianz have parted ways after a 24-year partnership. Bajaj Finserv and the promoter entities will be buying out Allianz's stake in the life and the non-life, the general insurance joint ventures, and they will be spending a little more than 24,000 crore rupees. Sanjiv Bajaj, Chairman Managing Director of Bajaj Finserv, told CNBC-TV18 the deal is a win-win for both partners. Yash is here to tell us more about the deal and get us the key takeaways from the conversation.
Well, it's certainly a large shake-up in India's insurance sector with the news that Bajaj Finserv and its promoter companies would look to acquire the entire stake from Allianz in the life and the general insurance JV. We spoke to Sanjiv Bajaj, the chairman and the managing director at Bajaj Finserv, and here are the most important takeaways from that very crucial interaction he had with CNBC-TV18. The first one was with respect to business. Sanjiv Bajaj stating very clearly that it would be business as usual even after the transaction is concluded, with respect to the products, with respect to distribution partnerships, also with respect to the on-ground strategy in terms of acquiring business. All of those aspects would not change and it would be business as usual. The second one was with respect to having a potential new partner or a new investment in the insurance JV after Allianz's exit. Sanjiv Bajaj again very clearly stating that both insurance entities, that is the life and the general insurance entity, are mature enough to go solo in India's insurance sector, and they would not look for a new partner or a new investor when it comes to both businesses. In fact, he pointed out that in India, insurance companies with a single owner have been more successful as compared to otherwise. The next one was with respect to public listing or IPO of Bajaj-Allianz General as well as Life. Sanjiv Bajaj acknowledging the fact that the insurance regulator has been nudging insurance companies to consider public listing, but as of now, at this point of time, according to him, that moment for Bajaj-Allianz Life and General is still some time away, but it will come under consideration. But FY27 could be a little early when it comes to consideration or a decision on public listing of the insurance entities. The next clarity which came from him was on the non-compete for Allianz. Sanjiv Bajaj stating that once 6.1% has been acquired by Bajaj Finserv and its promoter companies from Allianz, only then, Allianz would be free from the non-compete agreement, and they can then choose to invest the capital which they receive into their ambitions, the insurance ambitions in India. The next one was very important, and that was with respect to the leadership at Bajaj-Allianz Life and Bajaj-Allianz General. Very clearly stating again that there won't be any leadership change when it comes to both life and general insurance entities, which means Mr. Tarun Chugh, who's the managing director and CEO at Bajaj-Allianz Life, and Tapan Singhal, who's the MD and CEO at Bajaj-Allianz General, would continue to lead both entities. Finally, as far as growth is concerned, as far as that setup of India's growth and the insurance growth is concerned, Sanjiv Bajaj stating that both companies would continue to outperform the growth as far as the general insurance or the life insurance industry average growth is concerned.
We are very clear that given the capabilities that have been built in both our companies now, almost 24 years old, both the companies are perfectly capable on going solo. Effectively, as I said, the board has been running both the companies, a board that is controlled by Bajaj, and with the right support from Allianz as and when required, but fully empowered board and management. And as a result, no, we don't need another partner. If you also see the Indian insurance space in the last decade or so, this is not new. There have been multiple companies, including most of the leading companies, where the Indian promoter has gone solo, and most of those businesses have actually even done better. The regulator has been engaging, especially with the larger, older insurance companies, to talk to them about the possibility of listing, to put a glide path and timelines towards that. This is something that has been taken up by both our boards as well. And as a result of that, the board at a suitable time will consider the nudge, as you said, from the regulator. I think FY27 is early. The board and the management has been fully involved. Well, the board and Allianz as FinServ as a shareholder has been fully involved in the current transaction, and the management will now roll out the necessary changes. So for us, the next year or two is going to be busy with this. I believe at a suitable time, the board will seriously evaluate IPO as a possible option for both the companies. Once the first part, the first tranche of the shares are bought by Bajaj, post all the naturally regulatory approvals, the cancellation of the JV and stuff, we release Allianz from the non-compete, so then they are free to go ahead and get into binding agreements in India. This was their desire and one of their asks, and we completely understand that as a large player. And that's why I think the discussions, the negotiations have been such that it's created a win-win on both sides.
All right, that's Sanjiv Bajaj spelling it out in terms of the road ahead, and they're going solo. He's clarified that, and very confident of boosting growth from here on as well. The stock, let's pull up a longer trajectory for the stock. Bajaj Finserv in the last 1 year is up about 16%. Finance is up about 33%, so Bajaj Finance. So those are the twins, which are part of the Nifty. Deepak Shenoy is with us now. Deepak, great to have you on the show this afternoon. So the deal is done. The body language, the commentary, all of that is extremely confident. And yes, there's commitment. I mean, he's right. When you're pumping in close to 24,000 crores, you definitely believe in the business, right? But what's the sense? The road to listing is still a while away. That's what we clearly picked up in that conversation. So what would you do with the Bajaj Finserv as a stock now?
So Finserv actually has two other levers beyond finance. One is the insurance piece and one is the mutual fund piece. So I think from that perspective, they are a holding company and eventually will get valued as one if they list all their individual arms. We're more interested in Bajaj Finance because I think the time for a broader recovery in credit is here. And a few of the NBFCs that seem to be better capitalized are in the right spaces actually will do well. So we have an interest there, but not so much in the insurance arms. I think the insurance still, we're seeing, penetration not moving significantly in life. Movements are more coming in the health insurance space, but competitive intensity is also quite high in health. So I think things are changing there quite rapidly as well. I would say at this point, I'm positive about the insurance industry, but specific players I would not want to overpay for. Within insurance, we have an interest in LIC, and I think that's relatively cheap as a play at 9 times earnings, and potentially earnings growth is going to be quite high this year and the next. Allianz, Bajaj-Allianz, for instance, has about a 9.75% new business premium growth. That isn't meaningfully high for a company whose parent has a growth expectation of more than 20%. So I would say at this point, not quite keen on the life insurance space. Within health, I think the space will move rapidly, but player profitability will reduce because of increased competition. So I'd rather wait and watch on the insurance space in general. We're positive on Bajaj Finance, so as a result, we're kind of positive on Bajaj Finserv as well. But that's not because of the insurance arm.
And on Bajaj Finance, there was so much uncertainty about what happens to Rajiv Jain, who's the current MD, whose term comes to an end on 31st of March. And Sanjiv Bajaj did provide that clarification that he's very much committed. Rajiv Jain is very much committed to the business and the group. We'll get Nimesh to talk more about it. But by the way, look at the markets. The Nifty has now touched 22,800. Our team points out that this is for the first time since 21st February. So that's nearly a month. And mid-caps, MobiKwik, 20% up move. It lost 7-8% yesterday, but it's added 20% today. Mastech, the IT name, is up close to about 16%. Raymond, big volumes, 15% gain. Triveni Turbines, Ola Electric, PB Fintech is now up nearly 7%. Paytm is another big mover. So it's the moves in the mid-cap space are absolutely phenomenal. But let's talk about Bajaj Finance. That's a stock which even Deepak likes. Nimesh is now joining in with more.
Well, Rima, same time yesterday I spoke about some scenarios for Bajaj Finance and how it's going to be a bit of a binary event. And that's exactly what Sanjiv Bajaj did confirm to CNBC-TV18 in an interview today. One, he said that Rajiv Bajaj is going to continue with the group. So that's been positive. And two, in the next 2 days, there is a board meet and then there will be a clarity on what Rajiv Jain's new role is going to be with that group. So that's the clarity now. In the next 2 days, we'll hear from the group on what Rajiv Jain's next role is going to be. In fact, Morgan Stanley put out a note yesterday and they had identified 3 scenarios in which this can play out and how it can impact the stock price. The first scenario is that Rajiv Jain continues with Bajaj Finance in some capacity. In that case, Morgan believes that it can have a potential upside of another 5 to 10% in terms of stock price even after the recent rally. That's the first scenario. The second scenario is that while he continues in some fashion in Bajaj Finance, he takes up a larger role in Bajaj Finserv. Even in that case, Morgan Stanley believes that there could be a potential upside of 5 to 10% for Bajaj Finance. The third scenario, which is a very less likelihood of that scenario, which is where he leaves Bajaj Finance completely and only focuses on Bajaj Finserv. In that case, Morgan Stanley believes that the stock can react 5 to 8% on the downside. So clearly, as Sanjiv Bajaj put out, that there is a board meeting in next 2 days. So there will be enough clarity on what exactly the role for Rajiv Jain is going to be in Bajaj Finance, and also the entire rejig of the new MD and CEO for Bajaj Finance will get announced. It's been a process which has been on for a while. So there is not going to be a big negative surprise or a big surprise, so to speak. But all eyes will be on what the role Rajiv Jain will take up in both Bajaj Finance and Bajaj Finserv. If it's only in Bajaj Finserv, then you might see a bit of a negative reaction. So it's a kind of a binary event to watch out for. But that's something which even Sanjiv Bajaj said that is going to continue with the Bajaj Group. So at least that's a relief. What role is something we need to watch out over the next couple of days.
Deepak, I know you like the business of Bajaj Finance, but how critical is the leadership issue at Bajaj Finance, the role that Rajiv Jain takes on, to your mind?
No, he's done a stellar job. I think anybody who's been with the company or watched the company over the last decade will say that there's been a phenomenal focus on data-driven acquisition of customers, risk management. They use a lot of work, stuff within AI and within a lot of the other concepts to make sure the business runs smoothly. Though, honestly, the downside has been you get too many calls. But, the idea would be that the successor to this business will not try and come in and change any of this stuff. It will probably enhance more of this. We'll have to see who it is, or whether it is Rajiv himself or somebody else will come and continue it. I think the organization is very large, and I think they've set up a system internally that allows them to kind of benefit from all the stuff they've learned. I don't think, therefore, that a management change will be detrimental to the business. And I would typically anyhow give new management a couple of quarters to define their vision or change in the thought process before I take a call on it. So in general, I don't think this is such a small business that is only like CEO led vision. They've imbibed this vision through the company itself and through their risk management practices. And I hope that it doesn't result in a stalling of growth, because growth has been their primary reason for us to purchase the stock in the first place. But I think if you look at the macro factors, the fact that Bajaj Finance is well capitalized, it has the ability to grow. RBI has now reduced the risk weights on NBFC loans as well. That means they want unsecured loans and NBFC loans to grow. I think they will do well going forward as Bajaj Finance itself. I don't think if Rajiv leaves, that it will be a big problem. But I don't want to make any assumptions on it. I'd still give anybody 6 months, even if it's somebody new.
Okay, all right. So we spent a lot of time talking about Bajaj Finance and Finserv in this group. But before we go, it seems, overall, I don't know, again, don't want to talk too soon, but it seems like the market's finding its feet again. So Deepak, give us some ideas. 1 or 2 ideas. What have you been buying in the fall? Something that's looking good now?
Yeah, honestly, we've been buying more to our portfolio companies, from large caps to small caps. Bajaj Finance is one, L&T is another. We've had the smaller caps also, likes of say Pennar Industries, companies relatively small. We have some small positions in the consumption space in the form of intermediaries like car trade. We've been actually adding on to a few of these positions, doing a little bit of portfolio rejigging, if you may. However, the core themes remain strong. I don't see a slowdown in India that's meaningful. We've still focused more on a surging India portfolio, which means companies that are focused on selling and manufacturing in India for India. So a lot of the defense and manufacturing companies still remain on our radar. We've been buying a little bit more of the NBFC, starting with Bajaj Finance, but a few of the others as well. We've actually, added more to our positions in some of the small caps. Because small caps will fall 40-50%. That's the way markets are. So you have to add to good companies at an opportune level, and let them kind of build into their growth story over a long term. So I've been, I've not been extremely bearish, but it's easy to get excited with the markets up 1%. This is too small an upside for us to say that this is the bottom. I think we're going to have a volatile few months at least from now. So we should assume that there will be more juicy points for picking stocks. So build the portfolios in the same way, just wait for the right prices. I think that's the only thing I can say. I don't think I'm very excited about today being like a big up day or a change in direction, really.
Okay, but it's human nature to get a little excited, Emotions, we have to keep at bay, but they happen nonetheless, right? It is a green day. It would be making investors quite relieved, traders quite relieved after a long time. Thanks very much, Deepak. Always a pleasure having you on the show. Thank you for joining in. That's the view from Capital Mind coming in. Have to take a very quick break. Markets looking rock steady and solid, almost 300 points up on the Nifty. As we take the break, here is some news for our viewers. India's business news leader is now just a click away, introducing CNBC-TV18's all-new app. You can get instant access to breaking news, in-depth articles, and financial world updates and analysis at your fingertips. Download the app from either the Apple Store or Google Play, or you can just scan the QR code on your screens.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajaj at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shriram Finance.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
This has actually been a great win-win deal for both partners. Both partners have reinforced their strategic intent for India, but with different paths. And from Bajaj's point of view, the Bajaj Group reinforces its focus in India on the insurance business at 24,100.
Welcome back. Half an hour to go and the Nifty is now above 22,800 for the first time since February, 21st of February. And the Sensex is 200 points above that 75,000 mark as it's raced away with a 1,000-point up move. Big day today. The other big story is PB Fintech, and the stock had fallen, remember, about 10% over the last 2 weeks after the company announced its plans to invest nearly 700 crore rupees in its subsidiary PB Healthcare Services Private Limited in the next financial services to expand their operations. Today, the stock is higher by 7.5% at the day's high. We spoke to Yashish Daya, and he said the primary objective of the shareholders agreeing to participate in PB Healthcare must not be profit. There was a chance that the new venture could fail. Listen in.
There is an investment going in of about 2,000 to 2,500 crores from various investors. Many of them are pure financial investors. And they have no reason to invest except for the financial return they expect to make out of that. I don't think it is for everybody and anybody, for the entire market to agree on what is the return they expect from that. They believe there is a return, that's why they are investing. A bit like when InfoEdge invested in Policy Bazaar way back in 2008. Many people believed it was not a great financial investment. They have made about 100x return. So I would say let them who are putting their money be the best judge of whether putting their money is worth it or not. I think by the time round 1A and 1B are over, because it's done in 1A and 1B, I think PB Fintech would be down to about 25-26%. And from a strategic perspective, because I know who the other investors are, I do not believe PB Fintech is the long-term strategic driver of this project. It is at best an incubator and a catalyst. It is not the long-term owner of this project, and nor is it the long-term driver of this project. At least two of the investors coming along are much more in that category than PB Fintech. As of now, I don't envisage PB Fintech investing anything further. Now, what that means is, if 1 year down the line we raise more capital, PB Fintech is not participating, so of course it will get diluted. How much we will raise, I don't plan things to that level of detail right now. Right? We are raising enough capital for the first 3 years, but that does not mean we will not raise more capital. I think there is a 50% chance the project will fail. There's a 50% chance it might succeed. If it succeeds, it will be very big. When you talk about PB Health, it is there is an investment going in of about 2,000 to 2,500 crores from various investors. Many of them are pure financial investors, and they have no reason to invest except for the financial return they expect to make out of that. Like in any agreement, you cannot disclose people till the deal is done.
Okay, well, that is Yashish Dahiya, outspoken and on the front foot. When we had that conversation, the stock was up 2%, and now it is the stock of the day with about a 7.5% move coming through on nothing, on no news flow per se, except, of course, the fact that you had that commentary coming through. And, of course, it's, the backdrop is a strong market in that sense. So 1450 plus on PB Fintech on some 3 million shares traded on the NSE so far. Ajay Tyagi is with us, Head of Equity at UTI Asset Management. Ajay, good to have you back on the program. Thank you very much for your time. I don't know if you have a view on PB Fintech, if you own it in one of the portfolios or the business per se.
Prashant, as you're well aware, we can't comment on stocks. And by the way, this is one stock which we do hold in some of our portfolios. So I'll have to skip this one.
Okay, got that. I understand. The market itself, Ajay, I mean, is it, just a, in the initial stage, all the mark-to-market losses will become a little better. And then maybe one will talk about fresh new gains. That's a general kind of tendency. But what are your fund managers at UTI doing? What are you doing? Give us a flavor.
I'll give you a big picture view that we hold here at UTI. Of course, our team of fund managers are executing their strategies commensurate to what their own scheme objectives are, and therefore, different portfolio managers are doing different things. But the big picture view that we hold is that the recent bout of correction that we have had over the last few months have brought in large caps into a zone which we can call as a fair valuation zone. They're not cheap, obviously. They're not pierced the average valuations at which they've been trading for a decade or beyond and gone into cheaper territories. But at least we have gotten them into a band where we can start using our dry powder. So that's our view on large caps. I'm afraid the same view we don't hold for the mid and small caps. That part of the market, to our mind, is still outrageously expensive. People are only looking at the 20% fall from the top. Therefore, in a way, anchoring, the present price levels to what they used to be a few months back, and therefore getting excited about the fact that these stocks have gotten cheaper by anywhere between 20 to 40%, in some cases even beyond that. But to our mind, this segment of the market is still expensive, and we would wait for some more time to start using our dry powder here. Yeah.
Hi, where do you stand on IT? There's considerable amount of concern that the slowdown in US will impact the tech budget, and therefore growth will likely stay muted for IT companies even in the coming year, and not the recovery that the analyst community was hoping for. What is the call that you all are taking on IT, large cap, mid cap, for the next 2 years?
See, unfortunately, anything to do with the US right now is as foggy as it can be. So, the views are changing pretty much overnight. They're changing every other week practically. One comment from the US president or, his team leads to a very different opinion that we hold about businesses that one way or the other are linked to the US. And since IT predominantly has its growth engines lying in the US, obviously this sector, which till about 2 months back, I would say, was looking extremely positive on account of the very steady and sure recovery that we were seeing in the US is now, getting hammered down because of the uncertainty on account of the tariffs and, the growth slowdown that these tariffs can usher in for the US economy. So, we have to play it by ear. By the way, we don't really know whether the US will for sure. So first of all, we don't even know whether, these tariffs are really posturing or these tariffs are going to be as harsh as they are made out to be right now. Maybe after a few months, we realize that this was, a bit of a bargaining chip that the US administration was holding out. And therefore, to that extent, we start, seeing more surer commentary coming in from the US, in which case, IT gets back into a zone where people start talking about IT budgets being strong. In any case, the valuations of these companies are, in the fair valuation zone. So I would say IT is a sector we have to play it by ear. You can't hold a very strong view one way or the other at this juncture. You also, in passing, spoke about a 2-year view. The 2-year view on IT is positive. Look, I mean, there is enough and more which has to be done in terms of spends by corporates, both in terms of not just AI, but also in terms of cloud migration. So our medium-term view is positive. Indian IT vendors continue to gain market share. It's just the very near term which we are uncertain about. Yeah.
Okay, so the near term is a cause of perhaps a little bit of concern right now. Got that, Mr. Tyagi. Just take us through how you have modified or moderated your call on the capex related side of the market, because I believe the house view is that while capex may revive, this may not emerge as the most loved part of the market. It was the big leader, right, for the last 1.5 years or so. What's your view now?
You're absolutely right. Let me also reply by saying that the leaders of the previous bull market are usually never the leaders of the upcoming bull market. So we don't know when the next bull market starts to get found. Maybe we have to wait for a few quarters, a year or more, but it's unlikely that the new bull market would be led by the same theme and the same names that were active between 2020 to 24. So that's point number one. On a more fundamental level, by the way, you're absolutely right. If you look at how the government is planning to spend its money right now, the clear predilection is towards reviving consumption in this country. So one way or the other, we are seeing more money being laid out and, more, I would say, more of these welfare schemes being rolled out. The government has realized that the multiplier effect that they were wanting to see on account of capex spends has actually not panned out. Now, economic theory very clearly states that capex does have the highest multiplier effect, but unfortunately, we couldn't see a commensurate impact on, let's say, reduction of unemployment here in India over the last few years, and therefore the government is keen to change its gear. That will have consequences on, growth in the entire capex sector, whether you talk about roads, whether you talk about defense, whether you talk about, power sector and so on. So yeah, I mean, even fundamentally, we are more inclined to believe that after a gap of a few months and quarters, there should be a consumption revival in this country. Income tax rate cuts was a step in the right direction. We're also hearing about GST rate cuts. If that were to happen, very clearly the consumption basket would be front and center. Yeah.
Okay. All right. Mr. Tyagi, thank you very much for that perspective. Good talking to you today. Thanks for joining us on the show. We look forward to more such conversations. By the way, as we move on, that's an interesting piece of news coming through for Mumbai Airport. This is our colleague Madiha reporting that the Mumbai Airport, which is obviously run by Adani's, they could be looking at, or they're at least proposing what looks like a fairly steep hike in the user development fee at Mumbai International Airport for local flights from zero levy. I think they're now asking for over 300 rupees, 325. And for international flights, 187 to be hiked to 650 rupees per passenger. Obviously, it's a proposal. It has to go through the regulatory process and it'll have to be then approved by the Airport Economic and Regulatory Authority as well. More on this story in just a bit.
I remember Madiha also talking about how the GMR, for Delhi as well, GMR airports had proposed an increase in UDF. So
Yeah. So let's see how this plays out. We'll quickly get to Nimesh in the meantime, talk about D Street Chatter as we're getting you more contours and more updates on that important story. But Nimesh is here with us as always with all the insights and the buzz from dealing rooms. What a good day, Nimesh. After a long time, I guess you would not be hearing complaints. How's the Josh out there? Is it high today?
Absolutely, the juice is high, Surbina. Clearly, this is called a trending day, right? After a gap we've just built on, and the markets are at days high. And the good part is there is a lot of participation now in the broader market stocks. The mid-cap index is up nearly 2%, and a lot of individual names are buzzing in trade. You know, a lot of the stocks are up 15, 18, 20% in today's market. So after a long time, we've seen such a big, a trending day, and a lot of individual stocks also participating on the upside. So clearly, that's something to cheer. Again, from an institutional flow perspective, for many days I've been saying that there is buying in the financial names, especially the private bank stocks. And again, the banks is leading the upside today. The index is up 1.5%, and a lot of flow seems to be very much active on the financial side and the private bank names specifically. Now we are at a very crucial resistance of 22,800. If that gets taken out, and consistently if we close about those levels for the next couple of days, you might see further short squeeze and a further upside towards the expiry. So that's overall feedback. But clearly a trending day, and the fact is that there is a lot of momentum back in the broader market stocks today.
Okay, Nimesh, in terms of individual names, what are you picking up?
So the first stock on my list today is ITC Hotels. After a long time, some buying interest seems to be back on that name as well. The stock is up 5%. The volumes are on the higher side, and I believe one domestic insurance company has been an aggressive buyer in the last couple of days. So that's ITC Hotels, first stock. The second stock is Zomato. A big correction in that name from the highs of 300 to 200, 210. And now there are some buy flows at HNI desk. In fact, there is a very strong indication that maybe one large influential HNI investor has been an aggressive buyer in Zomato at these levels. So that's the buzz there. The third stock is IIFL Finance. Again, a stock which has been extremely beaten down, from the highs there. The stock is actually recovered in today's days from the day's low. And also here, I understand the selling pressure from a large FI seems to be largely over. And also for IIFL Finance, there has been a buzz for the last few days that maybe there could be some corporate development in IIFL Finance as well. So that's a third stock. The last one is First Source. Stock ended 8% lower yesterday and on very large volume. So there was a bit of a puzzle on what went wrong. Looks like there was a forced selling from one of the PMS investors that got sold yesterday. In fact, this month the stock is down almost 17%. So clearly there has been selling pressure from the PMS side. My sense is that large part of the selling got over, and that's where the stock was up. It was down 7% yesterday.
All right, Nimesh, interesting names as always. Thank you very much for that. We'll take a quick commercial break here. On the other side, we get you short-term trading ideas with our technical experts. We'll also address that user development fee hike which has been proposed by the Mumbai airport, run by, of course, the Adanis. Madiha will join in to fill us in on that story. Stay with us.
That we are going to be investing to buy the 26% stake in both our insurance companies. I believe this should be the single largest investment in the insurance space ever in India, and one of the largest investments in the financial services space. We see no change at all at any operational level. Our partnerships will continue to be the same. Regulator has been engaging, especially with the larger, older insurance companies, to talk to them about the possibility of listing, to put a glide path and timelines towards that. This is something that has been taken up by both our boards as well. And as a result of that, the board at a suitable time will consider the nudge, as you said, from the regulator. I think FY27 is early. The board and the management has been fully involved. Well, the board and Allianz as FinServ as a shareholder has been fully involved in the current transaction, and the management will now roll out the necessary changes. So for us, the next year or two is going to be busy with this. I believe at a suitable time, the board will seriously evaluate IPO as a possible option for both the companies. We are very clear that given the capabilities that have been built in both our companies now, almost 24 years old, both the companies are perfectly capable on going solo. Effectively, as I said, the board has been running both the companies, a board that is controlled by Bajaj, and with the right support from Allianz as and when required, but fully empowered board and management. And as a result, no, we don't need another partner. If you also see the Indian insurance space in the last decade or so, this is not new. There have been multiple companies, including most of the leading companies, where the Indian promoter has gone solo, and most of those businesses have actually even done better.
Welcome back. So markets are still holding on to a bulk of its gain, but we don't quite have. Yeah, actually, it's building on the game. 22,835 now. So pretty much the day's high. What a rock steady session. Mitesh is back with us. Mitesh, would you be comfortable sort of leaving long index positions open, looking at this kind of a screen? What's the final advice also on stocks?
So disclaimers will be, we are leaving long index positions open. So, yes, I will be very comfortable. See, I think, very clearly, 22,800, the way, the ease with which it was taken out suggests that there should be more upside. Two, I think the bank Nifty, I was looking at a target of 49,500. I think it's reaching there. We had a swing high on intraday pivot basis of 49,550 if you take a closing chart, and 49,600. So I think that's the minimum target which the bank Nifty should do. And then in a good case scenario, even 50,450. So since the indices are very positive, I think, just maintain your long positions. There's no need to worry. I was only thinking that maybe 22,800 will, see some supply. But the ease with which the market has moved above that, and while we might still not get an average closing above that, I think, it suggests that momentum is likely to continue for next few days.
Got that. Let's also invite Jay Bala from cashthechaos.com on the show. Jay, from extremely oversold areas, we've seen a bounce back today. But are you skeptical from these levels, or do you think the bounce can extend itself? What's the near term and then a little longer term time horizon and the trade, and how you expect markets to play out?
Hi, Rima. Good to be here. See, I'm neutral on the market at the moment, but I'm not fully convinced that the low that we saw the early part of March could be a final low. So far, the market is moving up as anticipated. I had projected last week the market to bounce up to somewhere close to 22,750 to 22,900. It's here, and the market has come here, but the move has been with a seeming struggle. So that's not a best signs for bulls. And if you look at Reliance, that's also struggling. Even in today's session, it's just flatlining or even slightly negative. Again, that's a cause for worry for the bulls. But the main risk for the equity markets comes from the global markets, particularly from the big techs. And if you recall from our conversation on the November 5th, I pointed out that the NASDAQ had potential to clock a long-term top from 2001 to 2025. So that if that is what is playing out, we'll know in the next few sessions. And I'd also posted on my Twitter handle just a couple of weeks ago that whenever NASDAQ breaks below its 200-day moving average, after 300 sessions of staying above it, it's invariably led to a steep loss. And if the subsequent losses exceed 3.5% in the next 1 to 2 weeks, which it is actually done now, it's lost about 4.5%. It invariably, over the 1 year period, it loses about 20 to 48%. That has been the precedent before. But if this is going to be the case, and can Indian markets stay, unaffected? That's the thing that we are watching. I pointed this out. Is so far, with the U.S. markets decline, money is seeming to be coming into the Indian markets, but it's a struggle. It's not a trending move. So that's what we are watchful for. I believe there is one more lower low to come through. If the markets get rejected from 23,100 or even 22,900, where we are very close to, that'll be a very bad sign. And I look to drop my neutral stance and go to a bearish stance.
Okay, so if the market, the 23,100 level is rejected, you think we break below the earlier low, which is 21,964, perhaps?
That's right, Prashant. So the medium-term outlook was the September end top at 26,277 was either two forms of correction, or one was a long-term top. So when the Nasdaq and the semiconductor index, which this rally has been propelled by the AA-led stocks, and the semiconductor index is saying that that's also clocked a long-term top, at least from 2009, if not from earlier. So with this background in mind, there is a possibility that if the earlier low that we registered in early March, if that breaks, this could stretch to somewhere close to 18,000, subject to revision. But it's just a objective at the moment. But as of now, as things stand today, I'm being neutral, even trying to attempt some bullishness in the mid cap and the small cap space.
By the way, talking about Nasdaq, tonight you'll have NVIDIA's Jensen Huang speaking at an event, and he's pretty closely watched, maybe a little lesser so than maybe 2 months back, 3 months back, when the excitement was all around AI and the big US tech stocks. But still, I expect, I guess, a lot of enthusiasm for AI spend and scope, etc. So again, I mean, something to watch out for. But that's later today during the US session. We'll take a quick commercial break here. The Adani Airport story in terms of the UDF hike proposal on the other side. Madhya is here. Stay tuned.
Welcome back. Well, just about 4.5 minutes to go before the day winds up. Jay is, of course, with us. Jay, so what's the sense? I mean, and quick check on the US market itself, which is kind of try to sort of stabilize. So is the worst over, or is this, the proverbial dead cat bounce? What do you make of it, and what should the trading bias be?
Yeah, I'll start with NVIDIA because I had spoken about NVIDIA on the 19th of November. I had said that NVIDIA is likely to drop 50%. And it's already dropped 31%. This is eerily similar to what Cisco did in 2000 dot-com boom. In the first leg of the move, Cisco dropped 32%. And, so it's almost an echo from the past. And I think the US markets have got at least one more lower low to come through, even if this were a correction and not a downtrend like I'm talking about. So that we could see another a limited upside, something like 2-3% for the NASDAQ tech index, and probably slightly higher for the S&P 500. And then we should see at least one more lower low. If that lower low seems to be a hard hit, then it confirms that this is most probably a very strong downtrend. And if it's a very slow move and that clocks a lower low in a slow fashion, that will probably indicate that we are looking at a correction rather than a strong downtrend.
Jay, any trades that you would recommend?
Yeah, I have got two picks today. One is a conditional one is a outright one. Dr. Reddy's. I've been bullish on the pharma space for since the COVID lows, and I'm slightly negative in the short term. But if pharma is coming back, Dr. Reddy might be the best candidate. Yesterday's strong move looks like at least tradable counter trend bounce. So a stop loss at about 1090 and remain bullish on it. And the next one is from the auto space, Escorts Kubota. It's developing an inverse head and shoulders pattern. It needs to cross 3067. So the third trade doesn't trigger before that. Don't preempt the market. Wait for the stock to cross 3067. Once that crosses on a closing basis, that will confirm the inverse head and shoulders pattern is in play, and a stop loss of 28.25.
The Nifty IT index today has moved in sync with the frontline indices, 1.4% higher on that index. What is it telling you after the recent correction?
Yeah, not a good sign, Rima. See, I think the Nifty IT index is likely to correct below the June 2024 low of about 26,000 and change. Because if you draw a trend line from the pre-dot-com boom levels of 1996, the trend line passes through the COVID lows and the June 4th low. That has been broken and taken out, and trading below 37,000 is not a positive sign. I think there will be a feeble bounce for the Nifty IT stocks, and there will be a low low coming in the short term, and then further higher highs, and then resume the downtrend. So a little bit complex, and so basically I'm expecting further lower lows to come through in the very short term of 1 to 3 days time frame. I'm anticipating some bounce, but then selling to resume lower.
I have to say, it's quite incredible. There's no volume on the downside at all. No volume. I'm just looking at the broader market and what is down with volumes. Nothing. I can count three names. Hitachi, which is down 5.5%. There is Castrol, which is down 6%. And there is Gensol, which is down 5%. I mean, there's a Sharda Cropchem, which is down 4% as well. But you go down the list, nothing, no volumes.
And Castrol's gone ex-dividend, by the way.
Castrol. So, yeah.
It's not even a real fall. Yeah, so it's not a real fall.
I think it's just, and it was true even yesterday when actually market growth was negative. Gainers had all the volume, and stocks on the downside didn't have any volume at all. And today, of course, it's flipped 3:1, advance to decline ratio, actually almost 4:1. And everything, all volume is to the upside. Although Jay is still Jay is skeptical, right? 23,100 is that marker for you, Jay, and we'll chat more. So stay with us as we wrap out things. Just coming back to you. So 340 points on the Nifty, 22,850 very, very quickly. Last 2 days coming up nicely on the index. And the Nifty Bank ending 2% in the green. Small cap index strong, micro cap index strong, capital markets, real estate. These are where a bulk of the action really has been. Only one loser, noticeable news. Actually, the newsmaker stock of the day, Bajaj Finserv on the Nifty, that was the only one with losses in excess of 1% today.
An absolute up and away day. Look at the kind of moves in the large cap arena as well. ICICI Bank 3.5% up, L&T 3%. Auto stocks like M&M and Tata Motors have revved up 2.5 to 3% up on those stocks as well. Adani Enterprises, the story that we were just talking about, I mean, it's one part of their very large business. Looking at higher, or at least proposing higher charges at the Mumbai airport, 2.5% up on that stock as well. BEL, SBI, Britannia, Titan, Trent. So there's a fair amount of consumer play as well. All these stocks have done quite well. Actually, I mean, it's everything up kind of a market. And I don't remember the last time we said something like that.
Absolutely. And, so powering ahead in that sense. And, it's good to see that after many, many weeks of downward drifting kind of days. So, the week before this was good. The Nifty from lows to high went up 700 points. Last week was a chop. We ended about 0.75% down. And so far this week, although it's just 2 days in, it's about almost 500 points on the 450 points on the Nifty or so. Well, it's a wrap on closing bell, but markets forward coming up next. Rima and I'll take you through that action in just a bit. Taking cue from steady global markets, the Indian market maintains the positive momentum for the second trading session this week. Broader market ends with strong gains. Mid and small cap stocks among the top winners. Nifty hits the 22,800 mark for the first time in the last 1 month, while Sensex reclaims the 75,000 mark.
Bajaj Finserv and Allianz part ways after 24 years. Bajaj Finserv and promoter entities will buy out Allianz's stake in the life and the general insurance JVs for a little over 24,000 crore rupees. Sanjiv Bajaj tells CNBC-TV18 that 100% ownership of the insurance companies will give them more flexibility to grow adds that there will be no leadership change and Bajaj will not look for another partner.
PB Fintech's CEO Yashish Dahiya clarifies that the company will lower its stake in the healthcare venture. The stake will come down to between 25 to 26% in about 90 days' time from the current 33-odd%. He added that the foray into the healthcare hospital space is not primarily motivated because of financial returns, although he does see synergies for the existing underlying PB Fintech business. In the other sort of news flow from insurance space, LIC was up after the CEO of the largest insurance company said that they're in talks to acquire stake in a health insurance company. A fresh new edition of Markets Forward, your go-to show where we aim to get you everything you need to know as you gear up for the next trading session. I'm Prashant, with me, my colleague Rima. Rima, hi.
Hi, and we're going to be with you for the next 30 minutes with all the big news, key developments in Dalal Street, top corporate voices, the key events to track ahead. But first up, the markets. The Nifty conquers 22,800, Sensex 75,000. Across the board, it's all green.
It's all green. And, I think it started the week before last because, that is when we had the first signs of, we hit 21,964, which was the low. And then we got a 700-point bounce. And last week, because US corrected about 4-5%, here we got a bit of a chop. The market didn't do anything. The Nifty was down about 0.75%. And this week, we've resumed once again as US has stabilized. Friday, Wall Street was up 2. Last night, Wall Street was up. And of course, today we've had decent, very, very strong gains actually. Confident trading. All indices, the Nifty Bank, the mid and the small cap indices are now trading above near-term daily averages. The near-term daily average, which is the 20-day moving average. We've closed above it today. And typically, it kind of does tell you that maybe there is some more extension coming once you cross this in a strong way like we've done today. Although, given, the weeks of very tough trading environment we've had, it'll take some time for full confidence to kind of return. But just take a look at, just a few things. Advanced decline, some 4:1. Almost all volume on stocks which were higher. Nothing on the downside in terms of volume-led losses. I could just see 3 names on the downside which had any meaningful volume to talk about across all NSE. I'm talking about prominent names in that sense. And this was true yesterday as well when advanced decline was negative, but all the volume was on the upside. So maybe at the margin, the texture is changing. Capital market plays, real estate, micro cap, this is all high beta stuff which participated with some vigor through the course of the day. Rima.
And all sectoral indices also closing up in the green. The top gainers include in ICICI Bank, M&M and L&T. Let's also tell you what we've lined up for you on our show today. Top movers and shakers with Hormis. Today's market was all about insurance space. Bajaj Finance, PB Fintech, Bajaj Finserv, PB Fintech, LIC in focus. Stay tuned as we get you that and more. And then the big events to watch tomorrow. Not to forget, it's a central bank action week. But it's over to Hormis now. He'll get us up to speed with the big movers and shakers.
It's almost deja vu of early 2023 where everything you would name is in the green. But today was one such day. Benchmarks doing well, broader markets doing well. Particularly the beaten down names have done very well in today's trading session. MobiKwik was battered in yesterday's session after the lock-in ended. That stock was up 20% in today's session. Ola Electric too fell below 50 yesterday, had a 13% rebound in today's session. A similar rebound also seen in names like Raymond, Mastech and Triveni Turbine. All of them seeing gains on very, very strong volumes. Some positive brokerage commentary coming in for a lot of these consumption names like Varun Beverages, Godrej Consumer. Kirloskar Oil is a Motilal Oswal note. Yesterday, the impact today 7.5% higher there. PVR Inox also some positive brokerage commentary ending at the highs of the day. And Devyani International, where Macquarie expects the stock to double by FY28, also doing well for itself. Some of the newsmakers today, we'll talk about that. These as the show goes by. PB Fintech ending at the highs, as did Paytm. Bajaj Finserv, of course, not having a very good day, but Ircon on the order win, and IGI, the lock-in ending, opened in a lower circuit, ended in an upper circuit, considering the market mood in today's session. Autos were among the top sectoral gainers today, and every single stock on the auto index ending higher with gains between 3 to 5%. And lastly, if the market does well, it is only obvious that the capital market plays do well, as also the likes of CDSL, BSE, CAMS, Motilal Oswal, all of them ending at the highs of the day, gains of anywhere between 5 to 7%. Back to you guys.
All right, Hormis, thank you very much for that. But it was not just the the markets, equity markets, which did very, very well. It was also the currency market where I think there is some action, some activity coming back. And I think Latha will be with us in just a bit from now to talk about that. Jay Bala, of course, is with us. He's been talking to us. Sudeep Bandyopadhyay is also with us. Jay, the price action first. You think 23,100 is the key kind of a test for the market, right? If the price action fails there, you probably reverse all these gains. Is that how you're looking at it?
That's right. That's exactly how I'm looking at Prashant. And it's more to do with the structure. It's, the 23,100 level is more like a ballpark figure rather than a hard number. So from a very short-term perspective, intra-hourly perspective, the market's probably got a sequence of one more higher high to do. And I anticipate that to come around 23,100. If there was a rejection, that will be negative for the markets. And at the moment, bullish to neutral for the market. But we don't want to see the banking stocks, which have been trying to perk up the market for the bulls. The key level access should not reject under 1,066. HDFC should not close below 1,620. That's a bit of distance away. But ICICI, which has been doing well today, we don't want that to close below 1,280. If those happens, those will all lead to rejections on the Nifty.
Jay, you track macros and forex markets also closely. Let's talk about the rupee I was referring to. Today was one of the strongest emerging market currencies. Latha is here to tell us why. Latha.
Well, the rupee has had two very strong days, rallied by 0.3% today, one of the better performing emerging market currencies, and yesterday's 0.2%. So in the week, it is a 0.5% gain. If you look at the lows of, the recent lows or all-time lows, February 10th lows, 87.95. From there, it's a 1.5% gain. And of course, it's wiped out some 1.5 months of, losses. If you looked at the levels, what's gone good for the rupee is the current account data that came for February. We reported a current account surplus for the month of February itself. It's more a trade surplus, but if you add the remittances, etc., which are predictable numbers, we are bound to have a current account surplus for this quarter. Now, that kind of changes the attitude itself on the rupee. Now, the rupee bulls are back into their own. They're expecting a current account deficit to be as low as 0.5% of GDP in the coming year as well, because the services exports are doing so well and imports are falling, partly because of fall in crude prices. So the whole grammar in the current account has changed, and that's leading a lot of corporates to sell their long dollar positions or their short rupee positions. However, there is a goodish bit of dollar buying also. FPIs, we know that even the previous day numbers were some 4,400 crores. So that selling continues. Custodial banks tell us that there's a lot of dollar buying, but there's immense offering from the PSU banks. So it appears that corporates who have taken long dollar positions are selling. Now the mood is that rupee is seen rising to 86.50 or even 86.40 before the financial year runs out. However, there is still that hiccup of April 2nd when the reciprocal tariffs will be known. Barring that, the mood has clearly changed.
Absolutely. Radha, thank you very much for that. There's important macro context coming through as well, which stock markets will also watch closely. Now, the big deal which was announced yesterday late night was the Bajaj Finserv-Allianz parting ways after a 24-year partnership. Bajaj Finserv and its promoter entities buying out Allianz's stake in life and non-life. There's a general insurance joint venture for a little over 24,000 crores. We spoke with Sanjiv Bajaj, chairman and managing director of Bajaj Finserv, and he kind of sort of contextualized this for us. What they will do, what Finserv will do. Is Allianz free to do what they want to do? And of course, the road forward. Listen in.
We are very clear that given the capabilities that have been built in both our companies now, almost 24 years old, both the companies are perfectly capable on going solo. Effectively, as I said, the board has been running both the companies, a board that is controlled by Bajaj, and with the right support from Allianz as and when required, but fully empowered board and management. And as a result, no, we don't need another partner. If you also see the Indian insurance space in the last decade or so, this is not new. There have been multiple companies, including most of the leading companies, where the Indian promoter has gone solo and most of those businesses have actually even done better. The regulator has been engaging, especially with the larger, older insurance companies, to talk to them about the possibility of listing, to put a glide path and timelines towards that. This is something that has been taken up by both our boards as well. And as a result of that, the board at a suitable time will consider the nudge, as you said, from the regulator. I think FY27 is early. The board and the management has been fully involved. Well, the board and Allianz as FinServ as a shareholder has been fully involved in the current transaction, and the management will now roll out the necessary changes. So for us, the next year or two is going to be busy with this. I believe at a suitable time, the board will seriously evaluate IPO as a possible option for both the companies. Once the first part, the first tranche of the shares are bought by Bajaj, post all the naturally regulatory approval, the cancellation of the JV and stuff, we release Allianz from the non-compete, so then they're free to go ahead and get into binding agreements in India. This was their desire and one of their asks, and we completely understand that as a large player. And that's why I think the discussions, the negotiations have been such that it's created a win-win on both sides.
Sudeep, Bajaj Finserv going solo now on its own. How would you view the competitive dynamics of the industry and particularly Bajaj Finserv from here on?
There's absolutely no problem. I think it's a decision which was kind of expected for some time. Bajaj Finserv, under them, both the insurance companies are strong enough. They have been amongst the industry leaders. And there is enough and more opportunity for them to further grow and strengthen their position. So there was very little value add from the international partners at this stage of their journey after 24 years of being in business. So I think, parting in a mutually cordial manner is the right thing. Both of them will chart their own way forward, and Bajaj Finserv will continue to strengthen, with the growth of both these insurance companies as well as their NBFC and housing finance company also in the near future.
Right, let's talk about the other Bajaj company, Bajaj Finance, right, where Sanjiv Bajaj, the long-serving, very well-regarded MD, who's been CEO and MD since 2007. His term is ending on the 31st of March. What next? It's an important event. And my colleague Shriram asked Sanjiv Bajaj about that. Nimesh is here. He'd highlighted a Morgan note yesterday, Nimesh, and some clarity coming through. So looks like Mr. Jain will be in the fold. In what shape, form, we don't know yet.
Absolutely, Prashant. So that's exactly what Sanjiv Bajaj spoke, told to CNBC-TV18 in an interview with Shriram, that he's going to continue with the Bajaj Group. Now, in what form is going to be crucial. As you rightly pointed out, Rajiv's term gets over on 31st of this month. In fact, Sanjiv Bajaj did clarify that in the next 2 days, there is a board meet, and that's going to consider what role and what shape Sanjiv Jain's next role is going to be. Now, Morgan Stanley put out a note identifying 3 scenarios. The first scenario is that he continues with Bajaj Finance. In that case, there is a potential upside of another 5 to 10% as far as the stock price of Bajaj Finance is concerned. The second option is whether while he stays in Bajaj Finance in some capacity, he also takes up a larger role in Bajaj Finserv. Even in that case, Morgan Stanley believes that it has a potential of another 5 to 10% upside from current levels. The third scenario, which is a very less likely scenario according to Morgan note, is that he gives up his role in Bajaj Finance and only takes up a role in Bajaj Finserv. In that case, the stock may react 5 to 8% on the negative side, which means the stock can react 5 to 8% on the downside. So that's a third scenario, but a very unlikely scenario. As Sanjiv Bajaj pointed out, there is a board meeting scheduled over the next 2 days. So there will be enough clarity as to what Sanjiv Jain's next role is going to be. So it's going to have a binary event, so to speak, for Bajaj Finance. But if he continues to be on Bajaj Finance, and then you'll probably see further upside as far as stock price is concerned on Bajaj Finance. That's according to the Morgan Stanley note.
All right, Nimesh, thank you very much. And of course, we'll track this one over the next 2 days. Nimesh joins us in a bit with what he's picking up on D Street chatter. But Jay and Sudeep are with us. Jay, so, we got the Nifty view from you earlier. What should viewers do in terms of specific trades? You have a strong view on the downside as far as the IT index is concerned. There is one. And you have a few trades as well. And also, if you can tie in the US angle, You think that a top is in for the Nasdaq. So quickly, Jay.
I'm bullish on Dr. Reddy and conditionally bullish on Escorts Kubota. It's forming an inverse head and shoulders pattern, and that will complete if it crosses 30.67 on a closing basis. A stop loss of 28.25 will be very effective for it. When it comes to the U.S. markets, there's a great probability that the tech stocks, at least the tech stocks, have clocked a long-term top from 2001. So if that, and I put out the statistics that, when the NASDAQ 100 breaks the 200-day moving average after being about for 300 trading sessions, 8 out of 9 times it has resulted in a huge loss. And when the loss is below the 200-day moving average following the break is more than 3.5%, 3 out of 3 times it's gone to somewhere between 20% to 50%. So that is a very big negative for the US equity markets. And I believe that's unlikely to not impact the Indian market. It is likely to impact the Indian markets. And Nifty IT in particular has broken a long-term trend line from the pre-dot-com boom of 1996. And that was at 37,000. It's closed below it convincingly. So a short-term bump up in Nifty IT. And I think a considerable downside somewhere close to 26,000 possible for the Nifty IT index.
Got that. That's the view on Nifty IT. The other big stock in focus today was PB Fintech. The company announced its plan to invest about 700 crore rupees in its subsidiary PB Healthcare Services. Now, this was announced about 2 weeks back. The stock was under pressure, but today it ended up with a gain of about 7.5%. We had a chat with the company's chairman, group CEO, Yashish Dahiya, and he said the company will bring down its stake in the healthcare venture to 25% from the current 33%. Listen in.
By the time round 1A and 1B are over, because it's done in 1A and 1B, I think PB Fintech would be down to about 25-26%. Financial return is not the sole driver for Policy Bazaar either. The primary objective of Policy Bazaar is to grow insurance penetration in India, specifically in health insurance and term insurance.
Okay, that was a big mover today, right? I mean, 7.5% higher today. And it sort of went from strength to strength. Sudeep, any thoughts? Policy Bazaar here?
I think the market was a little unfair when they punished because of the announcement earlier. Obviously, they're not going to operate the company. It's going to be an investment, and there will be synergies as far as their insurance business is concerned. So, and they have clearly announced that their shareholding will be about 25-26%. So I think there is nothing to worry. Policy Bazaar, they have built a great business. Potential, of course, like he's talking, is humongous. And, the way forward looks excellent. So from a long-term investor's point of view, I think it's a good buy even at current levels.
All right, gentlemen, thank you very much for that. Sudeep and Jay, appreciate your time here on CNBC-TV18 and look forward to our next chat. Well, we're going to take a quick commercial break here. We're going to come back with some more corporate voices that we got through the course of the day, some events to watch when we come back tomorrow. Stay tuned.
Speaking to President Putin on Tuesday. A lot of work's been done over the weekend. We want to see if we can bring that war to an end. Maybe we can, maybe we can't, but I think we have a very good chance. We're talking about land. It's a lot of land. It's a lot different than it was before the wars, you know.
Welcome back. You're with us here on Markets Forward. Let's quickly run you through some of the corporate commentary that we got through the course of the day. And let's quickly have the graphics up. We had Berger Paints management who was with us. They expect high single-digit volume growth and a mid-single-digit revenue growth in the fourth quarter of FY25, the quarter we are in. Management says demand saw a marginal improvement from the last quarter. They will see further improvement going ahead. They also said that the company has decided to drop out of the race to acquire AkzoNobel's India assets after they found the valuation too high. They remain open to reconsidering if a suitable opportunity arises in the future. That is with regards to an acquisition.
We also chatted with Kolkata-based Senco Gold, and they're guiding for 7 to 8% EBITDA margins in Q4, and they anticipate 20% top-line growth for FY25. The management of MCX was also on our channel earlier. The exchange is seeing healthy growth in both futures and options segment, and they have new product launches lined up for the coming financial year.
Okay, well, before we wrap, let's just quickly run you through some of the events to watch out for tomorrow. Upasana is here with that list. Upasana, over to you.
First up, let me start with the global economic cues. In US, mind you that the FOMC meeting is scheduled to be held today and tomorrow, and the interest rate decision will be out tomorrow. US will be also reporting its crude oil inventory data. Now, Japan will be also reporting its interest rate decision tomorrow, along with trade balance data for the month of Feb. Europe will be reporting its CPI data on a one-year basis for the month of Feb, hence we'll be watching out for this as well. Now let us look at the key stocks that will be in focus on the back of corporate action scheduled for tomorrow. Now stocks like Tata Motors, IOB, NHPC, Dhanlaxmi Bank will be in focus as all these companies' board meeting is scheduled for fundraising. Tata Motors will consider an approved NCDs aggregating up to 2,000 crores. IOB will consider fundraising by way of long-term infrastructure bonds, and NHPC will consider an approved borrowing plan for raising of debt for FY25-26. Now, Power Finance will also be in focus as this stock goes ex-dividend tomorrow. And lastly, Midhani will also be in focus as the board meeting is scheduled to consider interim dividend for FY24, FY25. Hence, these are the top list of events that we'll be tracking for tomorrow.
Central bank action, though, will dominate all the headlines. Thank you very much for joining in. With that, it brings us to a close in this edition of Markets Forward. Don't go anywhere. We'll be back with more news and updates.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Sensex and Nifty hit their highest level in a month. Nifty reclaims 22,800 mark. All sectoral indices end with healthy gains. Rupee rallies against the dollar. The ceasefire in Gaza breaks down. At least 325 Palestinians are killed in a fresh wave of Israeli airstrikes. Israel's Prime Minister blames the lack of progress in truce talks. Hamas calls it a treacherous attack on defenseless civilians.
With the right support from Allianz as and when required, but fully empowered board and management, and as a result, no, we don't need another part.
Bajaj and Allianz part ways, ending a 24-year alliance. Bajaj Finserv and promoter groups will acquire Allianz's 26% stake in life and general insurance JVs for over 24,000 crore rupees. Sanjiv Bajaj says Bajaj will go solo and doesn't need a partner now. Adds there will be no change in leadership. Allianz will be released from the non-compete clause once the first tranche of the transaction is completed. LIC is all set to foray into health insurance. CEO Siddharth Mohanty says the behemoth will announce an acquisition in the health insurance sector by the end of this month, but will not hold a majority stake. Government sets up a panel to address regulatory challenges faced by the fintech sector. The new committee will bring all stakeholders together, signaling a concerted effort to streamline regulations and promote innovation. Get ready to pay more to fly in and out of Mumbai. Adani proposes an expansion plan to increase capacity, seeks to more than triple the user development fee for international passengers and introduce a 325 rupee fee for domestic passengers. Airport tariff regulator yet to take a final call. Aircraft maker Boeing is all in on India, says senior executive Brendan Nelson. The company is looking to increase manufacturing in India and expand its footprint. That's an exclusive. Over 50 people detained and 5 cases registered after violence in Nagpur. Vehicles were torched and 4 police personnel were injured after rumours that a holy book was desecrated during a demonstration by right-wing outfits, including Bajrang Dal. Chief Minister Fadnavis says the violence was pre-planned. Shares of Chinese electric car maker BYD hits a record high after it claims a new technology can charge the car almost as quickly as it takes to fill petrol. Claims the new technology can achieve 400 kilometers of range with just 5 minutes of charging. All right, let's start with the stock market action. A strong rebound on the last street as Sensex and Nifty posted their biggest single-day rally in nearly 2 months. Sensex gained over 1,100 points to move back above the 75,000 mark. All sectoral indices end in with healthy gains today. Prashant Nair is here with the market wrap.
Well, a strong session and a confident kind of price action today for the Nifty Bank, mid-cap, small-cap indices. Never looked back, no choppiness, and no chop really through the course of the day. Just steady upward kind of move. What that resulted in technically is the fact that all 4 indices today have crossed the daily near-term moving average, which is the 20-day moving average. Typically, a strong throwover over this level suggests further gains, at least in the near term. So we'll see how this proceeds. But if anything, in the last 30-40 minutes, the market actually did even better and piled on gains. What did well actually is also interesting. The capital market space did well. Real estate did well. And you also had the micro caps, small caps, etc., which participated quite enthusiastically. This is all high beta and kind of tells you about the texture of the kind of day that we had. Now, I'll just start with large caps and what did well and, where there was sort of action coming through. So on the Nifty, you had ICICI Bank, which was the biggest gainer, 3.5%. Mahindra & Mahindra was up 3%. L&T was up 3%. Shriram Finance was up 3% as well. So 4 names with gains of in excess of 3% today. On the downside, except Bajaj Finserv, which came off a little over 1%, there wasn't very much to really write home about. Now, as far as the broader space is concerned, that's, I think, where the enthusiasm really came through. 4:1, advances outnumbered declines. Zomato, after a long time, was the biggest volume-led gainer, 7.5%. Names like Triveni Turbine, Mastec, 14%. Ola Electric coming off very bombed-out levels, 13%. Mobi Quick was down 10, up 20 today. Paytm, after a long time, back up 8%. Raymond was up 14%. Policy Bazaar, we had the management with us 7% after that commentary. Wellspun Living was up 10%. Blue Star was up 8%. Finolex Cables up 10%. Morrison Laboratories, Shilpa Medicare, I can go on. Sula was up 12%. Of course, I mean, many of these names have been sold off very, very aggressively, and we saw some revival coming through. On the downside, Hitachi was the big loser, 5.5% loss. Castrol was down 6%. Gensol down about 5%. You had a couple of other names. But again, like yesterday, volumes very much on the side of stocks which went up strongly. I think that has been the hallmark for the broader market, which provides a little bit of sense that the texture in the market has been changing for the past many days. Back to you.
Right, thank you, Prashant, for that. In the money market, the rupee continues to regain lost ground against the US dollar. The rupee gained over 23 paisa today as the dollar index remains under pressure. The rupee was one of the strongest emerging market currencies. The rally has come after the February trade data showed that on a goods plus services basis, India will post a current account surplus in the current quarter. 10-year sovereign bond prices also perked up in trade, leading to a drop in the yields. Crude oil prices gained 1% owing to rising tensions in West Asia and weakness in the US dollar index. An improvement in China's retail sales also sparked hopes of demand revival and supported prices. Meanwhile, gold prices hit record highs. This as investors sought cover from economic concerns fueled by US President Donald Trump's tariff policies. The big story of the day: Bajaj will buy out Allianz's stake in its life and general insurance businesses. This brings the curtains down on a 24-year-old alliance and clears the runway for Allianz to chart a separate course. Bajaj Finserv and promoter groups will acquire Allianz's 26% stake in the insurance arms for over 24,000 crore rupees. The transaction will give the Bajaj Group 100% ownership in both the companies. The deal is subject to regulatory approvals. CNBC-TV18 spoke with Sanjiv Bajaj, the chairman and managing director of Bajaj Finserv, exclusively earlier today, calling the deal a win-win. Sanjiv Bajaj said that both partners reinforce their strategic intent for India, but with different paths. Allianz has said it will use the sales proceeds to support the company's strategic ambitions in India. Bajaj said that Allianz will be released from the non-compete clause once the first tranche of the transaction is complete. He emphasized that they are going to walk solo as far as the insurance business is concerned. He said that they have a fully empowered board and management and do not need any more partners. When asked about whether IPOs were on the cards, Bajaj said that the board will consider them at a suitable time and share details once they firm up plans, if any. Sanjiv Bajaj also asserted that the same leadership teams will continue steering the businesses. He said that the board, which meets later this week, will take a call on Bajaj Finance MD Rajiv Jain, whose term ends on the 31st of March. However, Bajaj reiterated Mr. Jain's commitment to the business.
This has actually been a great win-win deal for both partners. Both partners have reinforced their strategic intent for India, but with different paths. And from Bajaj's point of view, the Bajaj Group reinforces its focus in India on the insurance business at 24,180 crore that we are going to be investing to buy the 26% stake in both our insurance companies. I believe this should be the single largest investment in the insurance space ever in India, and one of the largest investments in the financial services space. We see no change at all at any operational level. Our partnerships will continue to be the same. We are very clear that given the capabilities that have been built in both our companies now, almost 24 years old, both the companies are perfectly capable on going solo. Effectively, as I said, the board has been running both the companies, a board that is controlled by Bajaj, and with the right support from Allianz as and when required, but fully empowered board and management. And as a result, no, we don't need another partner. If you also see the Indian insurance space in the last decade or so, this is not new. There have been multiple companies, including most of the leading companies, where the Indian promoter has gone solo, and most of those businesses have actually even done better.
And you can catch the entire conversation with Bajaj Finserv CMD Sanjiv Bajaj at 5:30 and 9:30 p.m. right here on CNBC-TV18. Right, staying with the insurance space, LIC is set to enter the health insurance space. Company CEO Siddharth Mohanty told CNBC-TV18 that LIC will make an announcement about its foray by the end of this month. However, he clarified that LIC will not hold a majority stake in the health insurer where it invests.
Health insurance, definitely we are proposal discussion is going on at final stage. So, and that is a natural choice for LIC to be in health insurance. Yeah. Within this financial, because regulatory approval takes time, and I am very much hopeful within this financial, before 31st March, I think some decision can be taken. It will be not a majority stake, means there will not be, LIC will not have 51% stake.
So it will be a minority stake?
No, it will not have 51% stake.
Shares of PB Fintech surged nearly 8% in trade after the company announced plans to invest nearly 700 crore rupees into its healthcare subsidiary. Speaking with CNBC-TV18, PB Fintech Group CEO Yashish Dhaya clarified that the company's stake in the healthcare venture will not cross 25%. He added that shareholders investing in PB Health must not do so only for profits, but for a purpose.
By the time round 1A and 1B are over, because it's done in 1A and 1B, I think PB Fintech would be down to about 25-26%. Financial return is not the sole driver for Policybazaar either. The primary objective of Policybazaar is to grow insurance penetration in India, specifically in health insurance and term insurance.
Tata Motors has said it will increase prices across its passenger vehicle range from April. The price hike will also be applicable to electric vehicles. The auto major said that it's increasing prices to partially offset the impact of rising input costs. The extent of the hike will vary depending on the model and variant. The announcement comes a day after the company announced an up to 2% price hike in its commercial vehicle segment. Bharti Enterprises chairman Sunil Bharti Mittal is considering increasing his holding in BT Group. According to a Financial Times report, Mittal had acquired 24.5% stake in the UK telecom giant last year. The report also stated that he is in the process of converting his current stake, which was partially acquired through derivatives, into equity. The British firm is currently undergoing a cost-cutting and restructuring phase under Chief Executive Alison Kirkby. The government has set up a committee to examine the regulatory issues that the fintech sector is facing. Government sources have said that the panel will submit the report in 3 months from the first meeting. Sapna Das joins us now with the details. Sapna, what are your sources telling you?
Well, what we are given to understand probably is the fact that this high-level panel will look into the risk factors which are there in the market as of now, the way the fintech ecosystem has shaped up, and more important, what kind of policy and regulatory challenges that it faces. So this panel is going to have representation not only from the government, but also from the industry. So, some of the founding members of, say, like, for example, BillDesk and, some other players, they're also going to be part of the panel. Of course, you're going to have representation from regulators like SEBI and RBI, and from the government side, primarily it's going to be DFS, DEA, from the Finance Ministry, METI, Niti Aayog, DPIIT to name the main players in this panel. So, as I just said, it's an assessment process that will be undertaken, and going forward, we'll have to wait and watch for the report that will come out. Because, over the last couple of months, as we are all aware about, the fintech industry is exploding. So, there can be regulatory gaps, which the industry has been talking about, probably a framework for the fintech sector, which has been asked for a long time, and what kind of policy challenges there are there, which the government probably at its end will try and resolve. So, these are things that are in the works. We'll have to wait and watch and see what kind of report actually emerges.
Right. Thank you, Sapna, for that. On that note, it's time for a short break. Coming up next, get ready to pay more to fly in and out of Mumbai. Adani proposes an expansion plan to increase capacity. More details when we return.
नागपुर के महल इलाके में जिस प्रकार से तनाव की स्थिति निर्माण हुई, ये बहुत ही निंदनीय है। जिस प्रकार से कुछ लोगों ने पत्थरबाजी की है, पुलिस पर भी पत्थर फेंके हैं, ये बिल्कुल गलत है। मैं स्वयं इन सारी घटनाओं पर नजर रखकर हूं। मैंने पुलिस कमिश्नर को ये कहा है कि कानून व्यवस्था बनाने के लिए जो भी कड़े से कड़े कदम उठाने की आवश्यकता हो वो उठाए जाए और शांति को बनाया जाए।
Welcome back. Get ready to pay more to fly in and out of Mumbai. Adani Group, which runs the airport, has proposed an expansion plan to increase capacity. It is seeking to more than triple the user development fee for international passengers and introduce a 325 rupee fee for domestic passengers. Airport tariff regulator is yet to take a final call. Madiha Mujawar is here with more. Madiha, what is Adani proposing?
Well, Adani Airports submitted this tariff proposal for Mumbai Airport on the 17th of March, which is yesterday, where they have specified the tariff they want. They had submitted a detailed expansion plan with the airport tariff regulator, ERA, earlier. ERA had put up a consultation paper on the 10th of March on its website based on the airport's proposed expansion plan, the capex and revenue it projects, and the tariff increase it would need. In that proposal, Mumbai Airport had proposed a capital expenditure of 17,439 crores, revenue target of 38,724 crores for the fourth control period from 2025 to 2026, and a hike of 675% in aeronautical tariffs. But ERA had slashed the capex to 7,800 crores. Target revenue was slashed from 38,000 crores to 7,600 crores, and tariff increase was slashed from 675% that Mumbai Airport proposed, Adani Airport proposed, to 18%, and asked the airport operator to submit its tariff plan accordingly. But in its tariff proposal submitted on the 17th of March, Adani Airport has hiked the UDF for Mumbai Airport from nil to 325 rupees per passenger for domestic flights, and from 187 rupees to 650 rupees per passenger for international flights. So that's an increase of over 300% on domestic side and 250% on the international side. But this may not be necessarily the final rates, as this is also a proposal by Adani Airports. It will go through stakeholder consultation, and there is a meeting that is scheduled on the 25th of March, and only after that the airport's economic regulatory authority will approve or finalize the final tariffs. Whether it will be slightly less or very less, we will know once ERA takes the final decision.
Right, thank you, Madiha, for that. We'll have to see how the impact pans out as far as the passengers are concerned. Shifting focus now, Boeing Senior Vice President Brendan Nelson has said that India is emerging as a superpower, and the airline giant is doing all they can to grow their presence in the Indian market. Speaking exclusively with Shireen Bhan, Nelson reiterated that the company is all in as far as India is concerned, and they are working with the government to build a world-class aero center.
Well, certainly India, and look, I should say that what Prime Minister Modi has done over more than a decade in transforming India, in reforms in finance, in IT, investments in infrastructure, the energy transition, and many other reforms, have created a country which is now certainly an emergent, close to a superpower. At the moment, India, Akasa, Air India, they have ordered 446 Boeing commercial aeroplanes, and we are working hard to make those planes and to deliver them. It's not for us to tell India what we should be developing. What we do is we say to India, what sort of capabilities do you want? And how might we be able to work with you in co-investing, co-developing this product in India, as I say, for India. So we're all in as far as India is concerned.
You're all in, but have you had some feedback come in from the government on where they would like you to partner with us?
Well, one of the constant refrains, I know you're going to ask me anyway, but one of the constant refrains, Prime Minister Modi, Minister Goyal, is, when are you going to build a final assembly line for commercial aeroplanes? I knew you were going to ask me. So, look, we're on a journey. We're working with India to build a world-class aerospace sector.
And you will catch the full conversation with Brendan Nelson, Senior Vice President at the Boeing Company, at 7:30 p.m. right here on CNBC-TV18. Israel has launched a series of strikes in central Gaza, killing over 330 people and shattering a fragile ceasefire that began in January. Israel's Prime Minister Benjamin Netanyahu said the attack was in response to refusal to release hostages and rejection of all ceasefire proposals. Israeli Defense Forces have said it was targeting what it called terror targets belonging to Hamas. Palestinian health officials reported that many of the dead were children. The strikes come after weeks of failed negotiations between Israel and Hamas over the remaining 59 hostages still held in Gaza. Hamas has condemned the provocation, calling it unprovoked. The militant group added that Israel has now put the fate of the hostages in jeopardy. Ukraine has insisted that it will not compromise on its territorial integrity despite its desire for a peaceful resolution to its conflict with Russia. Speaking at the Raisina dialogue in Delhi, Ukrainian foreign minister said that Kyiv is only interested in an unconditional ceasefire. He added that Ukraine will resist if Russia denies the proposal. US President Donald Trump has announced that Chinese President Xi Jinping will visit Washington soon. This comes amid escalating trade disputes between the two nations. Addressing the media, Trump said, and I quote, "He will be coming in the not-too-distant future," and quote, "If this fructifies, the visit will mark the first meeting between the two leaders since Donald Trump's return to the White House."
We had the head of China coming in, the top people right underneath President Xi, and he'll be coming in the not-too-distant future. When we had India last week, we had France last week, we had a lot of people. We had Ireland, we had UK, and they come in, and I say, "How's it looking?" They say, "Oh, it looks much better."
Telecom Minister Jyotiraditya Scindia has said that Starlink must meet all application guidelines to secure a license in India. Speaking with Money Control, Scindia added that the government remains open to competition in the satellite broadband sector. However, Starlink must check all the boxes to acquire its license. He also said that the TRAI is expected to announce spectrum pricing soon. After that, the government will allocate spectrum based on TRAI's recommendations. This has come after telecom giants Airtel and Jio platforms both announced partnerships with SpaceX to bring Starlink into India. Chinese EV maker BYD has unveiled a new system for electric cars that it said could make it possible for EVs to charge as quickly as it takes to refill a fuel tank. The company has claimed that its new battery and charging system is capable of providing 470 kilometers of range in 5 minutes of charging. The manufacturer will start selling vehicles with the new technology next month. The auto major also announced for the first time that it would build a charging network across China. And with that, it's a wrap on this edition of Business 360. More news and updates continue right here on CNBC TV18.
Hello and welcome to Commodity Champions. I'm Manisha Gupta. Well, starting with the gold prices, which have hit an all-time highs to rise above $3,025 an ounce, gaining nearly 15% in this year and holding 40% gains in the past 12 months. And it's not just about gold. While other precious metals, you have silver, which has gained up by 17% in this year till time. This is all supported by weak US dollar index, which is trading at a 5-month lows. And it's not just about precious metal prices, because when you look at the base metals, you have copper prices now trading at near 10-month highs. Aluminum is trading at a 9-month highs, and this is on the back of supply disruptions, strong demand coming in from US, and then you also are seeing support from China's stimulus measures. One part of that already has come in on Sunday over the weekend, and the second part is what the country seems to be pledging at. And then it also is about trade tariffs, which seem to be finding their way in case of many of these metal prices. When it comes to energy, the prices are holding firm, but it really is about Trump's tariffs measures, which are weighing on the sentiment here as well. And then it also has to do with the Chinese demand, which isn't looking really very strong even in 2025 till time. So what really is the road ahead for commodities in 2025? Joining me now to discuss this further is Ole Hansen. He's head of commodity strategy at Saxo Bank. Ole, hi, thank you so much for joining in. And the first question clearly is about gold. We've seen all-time highs multiple times in this year, but now we are looking at $3,000 an ounce and above. In Indian rupees, various other currencies, also gold prices have hit all-time highs. What's your sense now? From where are we headed from here on? There's a correction that the markets believe is long due now. Where do you see prices ranging from this place?
Oh, that's a $1 million question, isn't it, Manisha? I believe that the travel is still towards higher prices, but I think also this $3,000 level has been such a magnet for a while, so we may need to see some additional deterioration on the economic front in order for the rally to continue. So I wouldn't be surprised to see some consolidation here, perhaps a pullback towards 29.50. But generally, given the uncertainty in the world, maybe perhaps with the exception of a potential for a peace deal in Ukraine, then the overall picture still points to support, and that's why we're still maintaining our outlook for 3,300 for gold later this year.
All right, $29.50 on the lower side, but $3,300 an ounce on the higher side. But all the question really is on where do you see a lot of buying coming in now? At these current levels, I'm assuming a lot of people would not want to get into the market. But with $3,000 an ounce already done, are you looking at central banks buying at this level, or is it going to be ETFs? What kind of investment firms do you see coming in now at these current levels?
Well, the central bank demand remains strong, but just like we've seen before, whenever we've seen a fresh push to the upside, we may just see a bit of a pause while traders and investors get used to these new and higher levels. But what we have noted in the past 3 weeks is that the speculative interest in the futures market, especially in New York, has been fading a little bit, but at the same time, demand for ETFs has been picking up. And I think it is the prospect for, or the risk of stagflation in the US that's driving asset managers back into gold. Some of them have not really been involved in this rally. We saw this big sell-off in ETFs or ETF holdings in the past few years. Only now we're starting to see some of that flow coming back. And if we do get additional confirmation that the US economy is softening, that prices remains, or the inflationary input remains elevated, then I think we could see some additional demand coming from the ETF side. So I'm looking for ETF buyers and central banks to provide the underlying support.
While we do understand with these all-time highs in gold, the overall global gold capital market now is at $20 trillion. Silver not too far behind, because we've seen a good performance here, 17% of gains for silver prices till time in this year. How are you looking at silver prices from here on? I remember our initial conversation and you talked about $40 an ounce as well. Are you sticking to those levels now?
Well, in the short term, a lot really still depends on the tariff uncertainty related to US imports. We've seen the very, very strong rally in copper recently, with the copper price in New York now commanding a 10% premium over London. And that has also helped support silver to move up towards the level you mentioned. So in order for these levels to be maintained, we need to see obviously some clarification on the tariffs. But on top of that, we are seeing a tight silver market this year. Above ground inventory levels are likely to be reduced further due to lack of supply relative to demand. And that basically means that if we can see gold move towards 3,300 and the gold-silver ratio move back down towards the lows from last year, then I wouldn't rule out that we could see silver move up towards $44.
$44 an ounce for silver. Well, okay. While we are talking about metals already, what's your sense on the other metals now, the base metal prices? You spoke about copper right now, and you're expecting prices to move higher onto this side as well. So when you look at copper prices, it's trading at a 9 or a 10-month highs. The potential tariff threats on many of these metal prices have actually taken metal prices higher in US than where there are on LME, on China for that matter. How would you look at an overall impact in prices? Let's start with copper first.
Well, we do not really expect any impact on gold. I would be very surprised if that happened. Then the silver market is pricing in tariffs at this point, not to the extent that we're seeing in copper, where the market is obviously worried that it would be the same level as aluminium and steel, i.e. 25%, which means that the spread between the two would widen even further. But what we have to remember that this exercise we're seeing right now is shipping metals from around the world, both copper and silver, to the US market. And that means that we're seeing some of this metal eventually become stranded in the US, waiting for a consumer to pick it up. And that basically means the rest of the world will start to be drained. And we're seeing that already in the copper market, but potentially also in silver. So even though we're not getting any tariff introduction just yet, it is hoovering the global market for metals, which will help tighten the global market and thereby underpinning prices.
How are you looking at the aluminum prices going forward? I mean, as you mentioned, we've seen US markets trade at a premium at this point in time, and that has been the case with steel as well. Do you see this continuing? Do you see the arbitrage opportunity go away at some point in time in the first half of this year?
Well, now that the tariff has been implemented and we know what kind of spread level that there needs to be in between the two markets, then some of that arbitrage activity will probably start to fade. But it doesn't really remove the fact that the US aluminium production, which is obviously the whole idea about this exercise, to force producers to produce more aluminium within the US. That is not going to happen anytime soon. We had a comment recently from, I think, the aluminium board or whatever it's called, that they cannot see any sizable pickup in US aluminium production for at least 5 years, also because of the very energy-intensive process this refining is. So that basically just means that it boils down to higher prices for US consumers in the foreseeable future.
How are you also looking at the energy markets? And this is the area where we've seen tariffs that have been talked about in sense of remuneration. We've seen Chinese demand being not so strong as well. And then there's been a constant decline in crude oil prices. We've seen last 2 years in negative. This is a third straight year where we are trading in the negative for the crude oil prices. How are you looking at a slightly longer term scenario? Let's say until the end of this year, how do you look at the crude prices?
I'm actually fairly constructive, not outright bullish, because obviously we are still facing the risk of a global economic downturn. But the fact that we come down to the low 70s, and the fact that there is a risk that if we drop even further, we could see some production start to be curtailed, I think it's enough at this point in time to support prices near levels where we have reached recently. I think it's also worth remembering that the reintroduction or tightening of sanctions against Iran and potentially Venezuela as well could have a much bigger impact than the OPEC Plus announced increases in production. There we're talking about a few 100,000 barrels on a monthly basis, but we have to remember Iran and Venezuela in the last 4 years have managed to increase production by 1.6 million barrels. So that could have a bigger price supportive impact. So I think we are near the lows here in the oil market, simply because the supply side will start to negatively be impacted by even lower prices from here.
Ola, I also want to talk about the dollar index with you, because when we started this year, we were trading at 110, 111 kind of levels. From there, we're trading at a 5-month lows for the dollar index at 103.5 or therefore. Are we done all the bad news in the dollar index, or do you see further decline?
It really depends on whether we continue to see this rotation out of US stocks. There's been quite a lot of that in the past few weeks or past months, I would say. we're seeing this massive spending boom that is going to unfold now in Europe. It makes quite a few companies in Europe very attractive from profitability perspective, and also just it just raised the focus on the U.S. tech sector, whether these valuations can be sustained. So if we are continue to see a flow out of U.S. into other markets, it could be Asia as well, then the dollar is likely to suffer further losses. So in the short term, I think especially something like the euro, we could still see the dollar weaken further, and it's all to do about investment flows, which seems to be moving away from the US after we've been moving towards the US for a number of years.
Well, I also want to get a sense on the agriculture as a sector, and we've talked about tariffs, we have talked about US and China and India and US as well. Also, reciprocal tariffs could be coming in from 2nd of April, and that really seems to be hanging like a sword there. How are you looking at agriculture commodities as a segment?
Well, I think it all depends on the coming growing season and crop season. It looks like there was a few movements especially in the U.S. markets, which are going to be the most impacted if the Chinese buyers move their purchase somewhere else. But generally, the movement so far has been relatively benign. So we really need to wait to see how the current season unfolds. We're coming out of a crop year with ample supplies, even though they have been lowered a bit in recent months. But the coming months really will send a strong signal to the market whether these low prices we saw last year was the low if you look at the key crops, and we can find some support from here. And then a market which I know is also very much looked upon in China, the sugar market, has really been through a massive roller coaster in recent weeks. Not sure how much that relates to tariffs, but it really is quite a volatile market for now.
Oh, it sure is, and weather is yet another uncertainty that the markets will have to deal with. But thank you so much for joining in. Well, that is the view coming in from Saxo Bank, that the gold prices are headed much higher, $3,300 an ounce for gold, $44 an ounce for silver, and further gains in copper and aluminum are in place for the rest of this year. Well, that's about commodities, but coming up after this very short break is Mother Dairy's MD Manish Bandlish, who will join us as they celebrate 50 years. We speak to the firm's top boss to discuss the firm's growth blueprint coming from.
Do you worry today, Sabya, that we are at a point which is almost an existential crisis for a whole host of arts and artisans across this country? I mean, you were talking about the fact that this shouldn't be treated like a charity. It shouldn't be treated like a CSR project. What kind of interventions do you believe we need at this point in time to ensure that we keep this soft power alive?
You know, we don't need to do much because evolution will take care of itself. Because I'll tell you, so we were at the age of influence, which is moving into the age of intelligence. AI is going to come in. And I personally think that AI in many sectors, especially in performing arts and art, will be very short-lived. Because
Welcome back, and joining us now on the show is Mr. Manish Bandlish. He's MD at Mother's Dairy. Manish, thank you so much for joining in, and congratulations as you clear 50 years of Mother Dairy in 2024-25. Would want to start with the sense on numbers in turnover right now and the kind of product categories that you have, because we do understand it's not just about dairy, suffle, edible oil, and we do understand that bread and bakery also is joined in the ranks.
Thanks a lot, Manisha, and thanks for inviting me on this discussion. Yes, Mother Dairy, just to give a little bit of introduction, Mother Dairy is a fully owned subsidiary of National Dairy Development Board. Yes, we completed 50 years of our inception in December of 24, and in this year has been a very landmark year for us. We have 3 different brands under which we operate. One is the dairy under the Mother Dairy brand. We have Suffle, which is a unique proposition where we have fruits and vegetables and frozen category and pulp, which we export. And Dhara in terms of edible oils. This year we have it's been a very, very good year for us. Last year we completed 15,000 crores of turnover. And this year, with a very healthy growth of almost 15 to 16%, we will cross 70,000 crores of revenue, which is a great performance by our team. And I think we are slated for a very good year next year as well.
Mr. Bandlish, coming on the bread and bakery part of it as well. I mean, this is an area which is quite competitive. And how have you made inroads? What cities are you targeting with this new product?
See, bread and bakery is just an addition to our portfolio. It is not a mainstay category. We look at our portfolio in multiple ways. One is purchase occasion or consumption occasion based categories. From that perspective, this particular category fitted well with our proposition, especially in Delhi NCR, where we have more than 2,000 booths and kiosks across Delhi to service our customers. So customers coming for our dairy range of products are very happy to engage with these categories as well. So that is the reason that we got into this category. And so this is one of the additional category that we got into. It is not a mainstay category for us.
I understand that. Mr. Bandlish, also, since dairy is perhaps, 75-80% of your total business, what is the kind of demand growth have we seen in the last couple of years, and what are your estimates for this year now?
Dairy, as you rightly said, is the mainstay in terms of revenue. So around 70% of our revenue comes from dairy. And this year, 24-25 has been very, very strong on demand, coupled with a very strong summer that we saw last year. We got very good growth over last year. So almost 30% plus growth we got in our key summer categories. And that really helped us to drive our business to the growth that we're talking about here, upwards of 15%. So it's been a very encouraging year for us. Next year, if the predictions of summer, which we are seeing is going to be strong, turns out to be good, then we are really prepared to grow our categories by another 30% plus, especially the ice creams and the short shelf life products, as we call them, like chaach and curd. We have launched very exciting flavors in ice cream. Similarly, we are launching a few new categories also in our portfolio, which we expect to do very well.
Mr. Bandlish, summer has
new
been...
Raita, which is being launched.
Okay. Summer has been early this year in any way because Jan was the hottest year, Feb was the hottest in 124 years. And if you look at the IMD reports, March is going to be no cooler. Are you looking at that demand already start to come in? And what's your sense on this time?
Yeah, over last year, March, we are already in these key summer categories, we are up in our volumes by almost 35 to 40%. So ice creams actually is upwards of 50%. So there's a huge demand coming our way, and we are geared up to handle that in the coming few months.
Mr. Bandlish, also, how are you looking at milk availability and prices therein for this year? This is something that major consumers keep an eye on.
Yeah, milk prices have been fairly stable for the last almost 1.5 years. What we saw a spike 2 years back is stabilized to some extent. It's a very natural phenomena for milk prices to go up a little in the summer season due to the buffalo areas, especially in the north and some parts of the country. So that natural spike will definitely come, and we are geared up for that. And I think we have enough and more commodities in our system to be able to handle any incident which may happen in the market.
Mr. Bandlish, as you mentioned, there are some categories, products within your bouquet which you also export. Now, with the kind of tariffs that the industry is looking at, and perhaps some reciprocals could come in by 2nd of April, and then the Indian government is expected to respond before that as well. How do you find yourself? What kind of exports are we looking at, especially when it comes to US and to various other countries as well, which are important for you?
If we look at some of the countries, if you look specifically, we have a large portfolio of pulp products which we export largely. And from that perspective, it's spread out across the world. So we export to around 30 to 40 countries across the world. So we are not really expecting too much of a disturbance, if at all, on that front as of now. And as the situation unfolds, we will take it in the stride. And I expect this is likely to be common for each and every country which is going to be there. So from that perspective, the market will move up or down depending on how it functions across the world. So I would wait and watch to see if there is any strategy to be changed. As of now, we are going with the flow. And I don't see any major disturbance coming our way in the at least next 3-4 months.
Mr. Bandlish, the other thing that catches eye is you joining into the cola clash. What's led to that? What's the scenario there?
We're not really getting into the cola flash. We just saw an opportunity to tell our consumers that milk is a year-long and lifelong category for anybody to consume. And I believe that we provide a very, very healthy option for the consumers from all our category perspectives, be it charge, be it any of our drinks or summer products, and milk per se. I think it's a very, very healthy option which can really, really quench your thirst on the go or at home consumption.
All right, you clearly made it quite interesting as you got in there. But I also want to understand on what is the kind of capacity creation that you're looking at, what locations, and how are you spreading yourself out?
When we look at our capacities for the summer, at least we have geared up to handle around 30% more than last year, very easily. And in the medium to long term, we have approvals from our board to take up our capacities. We have investment plans of upwards of 1,000 crores already approved by the board, and we are taking further proposals as well. So we are bullish for our business across Safal and dairy business, especially to invest in our capex, increase our capacities in terms of new greenfield plants, and also increase capacities in our existing plants. So from that perspective, we are gearing up for the next 4 to 5 years.
Mr. Bandlish, one final question. And as we look forward to the new year, the first quarter is what we are into the calendar year. What are the new categories, new products that you're looking forward to establishing for this one?
Some of the categories are ice cream. We keep on refreshing every year because as the category demands, we need to introduce more and more flavors or products. So there will be exciting products for the young people especially the youngsters. We are launching very exciting flavors. And in terms of categories, we are introducing a new category in the form of Raita. That category is very, very small and exploited from giving a good healthy option for the consumers. So we will be launching that option. Jeera Raita will be launching very soon, within the month of March itself, for our customers. Similarly, multiple variants of our Chach and other products are going to be coming into the market very soon. So I think it's going to be an exciting summer. We will also test these products in the market. From a consumer perspective, people have really loved these products when we have tested with them. In the market, since these are some of these new categories, we hope that the customer will accept these products and we will be able to take it to the next level.
Well, we wish you the best for that. Mr. Manish Mandesh, thank you so much for joining in here at CNBC-TV18. We appreciate your time.
The age of intelligence will come the age of wisdom. And when the age of wisdom comes in and people realize that the greatest gift to humanity is humans themselves, and we should not robotize our existence so much that we forget to be human beings, then people will realize that art and craft is going to be the most important expression of humanity. We don't have to do much. Evolution will take care of itself.
We certainly hope so.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajaj at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shriram Finance.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
This has actually been a great win-win deal for both partners. Both partners have reinforced their strategic intent for India, but with different paths. And from Bajaj's point of view, the Bajaj Group reinforces its focus in India on the insurance business at 24,180 crore that we are going to be investing to buy the 26% stake in both our insurance companies. I believe this should be the single largest investment in the insurance space ever in India and one of the largest investments in the financial services space. We see no change at all at any operational level. Our partnerships will continue to be the same. The regulator has been engaging, especially with the larger, older insurance companies, to talk to them about the possibility of listing, to put a glide path and timelines towards that. This is something that has been taken up by both our boards as well. And as a result of that, the board at a suitable time will consider the nudge, as you said, from the regulator. I think FY27 is early. The board and the management.
Hello and welcome to News Center. I'm Parikshit Luthra. China and India are ready to hit the dance floor as tensions in the bilateral relationship seem to be thawing. In what comes as the latest signs of conciliation from the Indian government, Prime Minister Modi has said competition between the two nations should not turn into conflicts and differences shouldn't be replaced by disputes. Speaking to podcaster Alex Friedman, Prime Minister Modi said only through dialogue can a stable cooperative relationship that serves the best interests of both nations be built. Beijing welcomed Prime Minister Modi's remarks. A foreign ministry spokesperson said a ballet dance between dragon and elephant is the only choice of both sides. Last October, Chinese President Xi Jinping and Prime Minister Modi met on the sidelines of the BRICS summit in Russia's Kazan. This was the first official meeting between the two leaders in 5 years. Last month, China's ambassador to India had said ties between Beijing and New Delhi were entering the phase of recovery. So where do ties between India and China stand as of today? We'll discuss that in just a bit. But first, here is Prime Minister Modi on the China relationship.
इन संबंधों को ऐसे ही मजबूत रहना चाहिए, कंटिन्यू रहना चाहिए। ये हमारा जहाँ तक डिफरेंसेस तो होते हैं, दो पड़ोसी देश होते हैं तो कुछ ना कुछ तो होता है। उसी प्रकार से हम डिस्कॉर्ड नहीं, डायलॉग इसी पर बल देते हैं, तभी जाकर के एक स्टेबल कोऑपरेटिव रिलेशनशिप और दोनों ही देशों के लिए बेस्ट इंटरेस्ट में है।
Joining us now to take the discussion forward is Andrew Leong, China strategist. Thank you, gentlemen, for joining us. Andrew, let me begin by asking you, how do you see these statements from Prime Minister Modi at a time when India and China are trying to put their relationship back on track?
Well, because the whole world order has now been upended and the cards are being reshuffled, because the United States is no longer being seen as a reliable ally because it's putting huge tariffs and then quite antagonistic to some of its closest allies and neighbors. And also, the world is changing with the rise of the global south, and the world becomes more focused on where the markets are. And of course, that there is a lot of complementarity between India and China. China is still one of the world's largest marketplace, and China is more connected with the world and is seen to be even more defendant of a more connected global order, whereas under Trump 2.0 is all American first and rules of the jungle. So I think that in these changed dynamics, it's no surprise that President Modi very wisely want to recalibrate relationship with China, not that forming a solid bloc, because the idea of blocs don't make sense anymore. But then, of course, a lot of the trade is done where China's embedded in the whole world supply and value chain, and it's the largest trading partner to 128 countries around the world, compared with only 50 in the United States. So I think it only makes sense for India, and also there is not much that the United States can buy from India. Whereas the United States wants to impose a lot of exports to India without necessarily opening up its market. So I think that both from geopolitical perspective, and from an economic perspective, and from a change of the whole world order, it makes a lot of sense for India to recalibrate the relationship with China.
Andrew, what do you think is China looking from India at this stage?
No, I think that the first of all is the stabilizing the relationship, because I think that these border disputes and have been poisoning the relationship over the past couple of years do not make much sense, because they have been long-standing. So put these differences aside and focusing on a more cooperative relationship. And as I said, there are lots of areas where both countries can partner together and to be seen as a kind of counterweight towards an American first rules of the jungle world order.
Right. And finally, what do you think are the next steps which are necessary for India and China to undertake in terms of normalizing the relationship?
No, I think first of all is to not to allow the border disputes to escalate and stabilize them, but also seeking out areas for cooperation. For example, on climate change, on green economies, and also development strategies for Global South. There are lots of areas where both countries can create room for cooperation. Not that both countries would go against the United States, because the world is not divided into blocks anymore. But it's important that both countries could normalize the relationship and seek out areas for cooperation.
Right. Andrew Leong, thank you so much for joining us on the program with your view on what will it take for India and China to bring the relationship back to normal, and why are the two countries actually coming together in this volatile and uncertain global environment. Let's move on to a story just coming in, and this is with regard to an antitrust investigation taking place across the country. The Competition Commission, which is the antitrust regulator of India, is conducting raids at top advertising firms over alleged price fixing. Sources have told CNBC-TV18 that CCI officers conducted raids at approximately 10 locations in Delhi and Mumbai. Shibani Gharat, who has been tracking this story, is in touch with multiple sources on the ground, joins us now. Shibani, what are you picking up? What has led to these raids? Any word from the companies, the entities who are being raided?
So I have reached out to several advertising agency CEOs whose offices have been raided and their phones are coming out to be switched off. So to your first question, there is no word on it yet from the people who have been questioned. But yes, 10 different locations in different parts of the country, including Delhi, Gurgaon and Mumbai, offices of not just the biggest advertising agencies like WPP, like Dentsu, have been raided. Their leadership is being questioned. CCI officials along with police officers have raided these offices today from morning. In fact, this has been going on. And not just advertising agencies, I may tell you, it's also some of the industry bodies like the Indian Broadcasters and Digital Foundation, the IBDF, also the Indian Society of Advertisers. Their office has also been raided. Now, the larger issue that whatever I found out from the sources within these agency groups is the price fixing issue, and Competition Commission of India is scrutinizing the price fixing that is happening for advertising rates, that these agencies come together and decide on a price. So that is being scrutinized. More details are yet to follow. Probably in the next few hours, more details will unfold. But this is what I know so far. I've tried reaching out to these industry bodies. I've tried reaching out to these advertising agency offices that have been raided, and their phones remain switched off. But from the industry sources, I found out that this is the primary issue for the raids going on right now.
All right. Thank you very much, Shibani Gharat, for joining us with that important update. This is, of course, a developing story, and Shibani, of course, will get us more details as well. We're taking a break here on News Centre, but up next, India reboots its trade ties with New Zealand. After over a decade, leaders of both nations call for greater two-way investment. We'll bring you an exclusive conversation with New Zealand's Trade Minister up next.
Fully involved. Well, the board and Allianz as FinServ as a shareholder has been fully involved in the current transaction, and the management will now roll out the necessary changes. So for us, the next year or two is going to be busy with this. I believe at a suitable time, the board will seriously evaluate IPO as a possible option for both the companies. We are very clear that given the capabilities that have been built in both our companies now, almost 24 years old, both the companies are perfectly capable on going solo. Effectively, as I said, the board has been running both the companies, a board that is controlled by Bajaj, and with the right support from Allianz as and when required, but fully empowered board and management. And as a result, no, we don't need another partner. If you also see the Indian insurance space in the last decade or so, this is not new. There have been multiple companies, including most of the leading companies, where the Indian promoter has gone solo, and most of those businesses have actually even done better.
India and New Zealand have kick-started trade talks again after 10 years. Which way are they going, and how is this visit of the New Zealand Prime Minister to India build on ties between India and New Zealand in the years to come? Joining us to talk about this all is New Zealand's Minister for Trade, Investment, Agriculture and Forestry, Todd McLeay. Minister, thank you so much for joining us here on the program. Give us a sense of the takeaways from this big delegation that has been led by the New Zealand Prime Minister to India.
Well, we're very excited to be here, and of course for our Prime Minister, Chris Luxon, to receive a personal invitation from Prime Minister Modi makes it a very special occasion. This is our largest visiting delegation anywhere ever in the world. We've come to India, and it's very diverse, of course, from our business community to New Zealand culture and Māori, to some sports people, some of our very best cricketers, and of course we have a very large contingent from the Indian and New Zealand business and community more broadly. And it's because our government has said our relationship with India is a priority for us. So over the last 15 months since we established the government, we've been pulling out all the stops to demonstrate, you know, that we're putting a lot of effort in. And it's so pleasing this week to see India reciprocating. We are two nations that are very close historically. It's 100 years since our first sporting contact. We have reasonable levels of trade. Our largest city in New Zealand, 11% of its population is Indian, people from India who have chosen New Zealand as their home, and we're very, very keen to continue to grow that relationship broadly and, of course, including in the area of trade.
Both countries have decided to relaunch trade negotiations. Give us a sense of what's the ambition this time around. Currently, the trade, the two-way trade between the two countries is around $2 billion. What's the ambition on the table?
That's right, and we know that it can grow exponentially much more quickly than that, but we need a common set of good rules that the business community in India and New Zealand can rely upon so they have certainty. New Zealand's quite a low tariff jurisdiction already, although it's hard to get goods and services between New Zealand and India, and I think that's some of the reason why the scale of our trade is quite modest. We have said we want a comprehensive free trade agreement. That's the agreement between the two governments. Minister Goyal and I have met many times over the last 14 months. This is my fifth visit to India. He and I have met 8 or 9 times in India and around the world. So we're ambitious. We want it to be comprehensive. It must be balanced and fair for both Indian businesses and citizens as well as New Zealand. And our 2 prime ministers yesterday, when they meet, have encouraged us to get on with the job and do a high-quality deal that's good for the 2 countries as quickly as possible.
Which are the areas where you definitely want more market access in India?
Well, there's a number of areas, most certainly. Some of that is around the primary sector. But if I take wood as an example, we had traditionally have exported logs from New Zealand to India. There were some restrictions put in place because of changes we made on our side about the way that we fumigate the logs, and we constructively have found a solution to that. But there are businesses in New Zealand who export logs here, or they add value to the logs in New Zealand and want to send the finished product up. I've spoken to many of them. Some of them are on the delegation this week, and instead of doing the processing in New Zealand, they either want to partner in India or build new wood processing facilities here to send the logs up and to process them in India, and then, as I said, for the Indian market or to sell to other parts of the world. And so I think you'll see a two-way exchange of investment and businesses cooperating and working together. But to answer your question, there are many areas that the New Zealand economy has diversified that we think we can do more in India, and we think also there are some very key areas that, in partnership we can grow very, very well back down in New Zealand.
Right. Now, when you speak about agriculture and dairy, how important would it be for India to open up these sectors to New Zealand goods?
Well, look, I think dairy is important to both countries, but we've said we're not going to talk about the detail during the negotiation. But there are a lot of complementarity in what we do. We know that our farmers are some of the most innovative in the world. They produce a very high quality, safe product, and it is demanded around the world. We have a very diverse trade relationship. We have trade agreements with 80 parts of the world and so on. One of the things we've agreed to, and Prime Minister Modi raised it in his media statement alongside Prime Minister Luxon yesterday, is areas that we can cooperate. And he's talking about in the areas of horticulture or in dairy, the expertise that exists in New Zealand, the science, the innovation, and how we can bring that to India to help grow the income of Indian farmers across the board, including in dairy. That was a commitment that my Prime Minister has given to Prime Minister Modi, and we'll be working on that. And so there'll be lots of opportunities to talk about that, but anything we do should be complementary and it should be in partnership, and there will well be across the board areas where Indian business might want some products from New Zealand to add to Indian products to then be able to sell to the world. That's the type of partnership we're looking for.
Right. Mobility of services, that is also we're discussing. When it comes to your existing agreements, such as those with Australia and China, what kind of a mobility services agreement as part of the FTA can we expect, or can New Zealand offer to India? Well,
in all of our agreements we have rights of establishment for businesses to come down and set up there, and the key personnel to be able to come more easily and get visas to be stationed there or to come in and out. And so we'll look at all of those sorts of things. One of the things we've agreed to do is look at the agreements that India has with others and New Zealand has with other countries, and see what we've already done previously elsewhere and how that could be matched and be beneficial in our trade agreement. And so our officials will work through that. But there will be opportunities. We as I said, we have a large and growing Indian population in New Zealand. Our third largest ethnic group in New Zealand is now Indian. About half of the Indians that live in New Zealand were born in India. The others were born in New Zealand, but they continue to have very close ties to India. So that relationship is growing through people to people. We're just signalling that we want it also to grow and to prosper government to government. And that's why we're so very pleased to have such a big delegation out here this week. And this is one of our most successful visits anywhere in the world.
By when do you want to conclude these talks? Any deadlines?
No. Well, I understand the two leaders have set a deadline for Minister Goyal and I will be informed of that, and we do what our leaders tell us. But I think that it can be done within a reasonable period of time. We shouldn't drag our feet and take longer than we need to. We've agreed where there are issues to find solutions to them, not to keep negotiating the same point. I know the business community on both sides want us to do a very good job as quickly as possible so they can get on and do business with each other. But we need to take the time to get it right. because
so within a year or so?
Well, I don't want to put a time frame on it because media elsewhere will be counting down the clock. But we would like to get it done quickly, and a year or so may not be out of the question.
All right. I'd also like to ask you about digital payments. That was one of the areas that was mentioned in the joint statement. What are the two countries looking to do further in terms of cooperation on digital payments?
Yeah, we're going to advance that very quickly. We have the governor of our Reserve Bank here this week, and he's meeting with his counterparts on the Indian side. And I think there is a cooperation agreement that will say we're going to speed this up. And it's to allow digital payments more easily and more quickly between the two countries. But it could extend to the system you have for digital payments at the consumer level or retail in New Zealand, and it can be adopted down there. And that just makes it easier when people travel, but actually it also makes it easier for New Zealand consumers. And so it's something that we want to look at. When Prime Minister Luxon says we want to deepen our relationship with India and make it a priority and broaden it, it's in all areas. You know, they're talking about areas that we can cooperate around defence and security. We have a New Zealand naval ship here this week to mark the visit. There's been a naval ship from India has visited New Zealand. We want to explore areas, particularly around the Indo-Pacific or Asia-Pacific, where together we can work to make sure that for our citizens and for our traders, it is the safest part of the world for them to do business. And so from that to trade, to sport, to investment, to education, you will see us lifting our relationship significantly, starting with the announcement yesterday that we're going to increase our diplomatic footprint of India by 60%. So that's more people on the ground to help build the relationship and make sure that it continues to grow and flourish.
Right. What's your biggest worry in terms of the geopolitical situation with the new president in the White House? There is this looming threat of reciprocal tariffs that would come into effect on 2nd of April. We don't know exactly whether they'll come into effect on 2nd April or there will be a breathing room. But how do you see this impacting New Zealand? And in the current geopolitical context, when you've got two wars going on, how important does the India-New Zealand relationship begin?
Yeah, well, I mean, the President Trump campaigned on a tariff agenda, and so, you know, I don't think anybody can be too surprised that he is delivering upon that. We are working through a process now of what it might mean for us. Our trade is very well balanced. It's more or less the same in both directions. In essence, US exporters to New Zealand face much lower tariff rates, predominantly than we do going into that market, but it's complementary and we respect the rules, and so we're working through that. The one thing that I think this is doing for businesses and countries around the world is creating uncertainty, however, and in times of uncertainty, if a business can't be certain, they might not make that investment or they won't hire that extra person because they want to wait and see what's happening. And I certainly think we're going to see that for a period of time. But what it does mean is countries like New Zealand and India have to continue. Our businesses want to, you know, keep growing. They want to have markets that they can trade into, and that's why at this time a high-quality comprehensive trade agreement between India and New Zealand, at least even just the announcement of us negotiating, sends a very clear signal to businesses in both countries that we are going to look at rules that they can rely upon and bring the, you know, a degree of stability. That's the other reason we want to do the deal, you know, as quickly as we can, although we've got to do a good deal. And if we look elsewhere, there has always been uncertainty around the world, and governments' jobs are to, you know, agree common sets of rules that are sensible, that can be relied upon, and then work to respect those rules, to create that certainty for the businesses. And I know with Minister Goyal, you know, he and I agree on many things, domestically as well as multilaterally and in the WTO. We'll be able to do that, and our two leaders, our two Prime Ministers, have instructed us to. So we're going to be working as quickly as we can to deliver on their commitment for this high-quality agreement.
And finally, my final question, any possibility of any demand from your side to reduce non-tariff barriers?
Well, we've agreed previously on one of my earlier visits that we should look to reduce non-tariff barriers. In fact, I you know, said to Minister Goyal, outside of a formal negotiation, there are many things we can do to make it easier for our two countries to trade more with each other, and we've already seen that. The agreement of how logs can now come in on the Indian side. We've been able to agree the importation of mangoes to New Zealand, and the people of New Zealand have the best mangoes in the supermarkets now, and they're happy, and they don't even know why. And so we're committed to continuing to bring these barriers down. Where you need rules, of course we should have them. We need to protect each country against pest and disease and someone coming in, but we have agreed to find cost-effective, efficient ways to do that. I've invited Minister Gold to send officials down so we can look at ways to change the system, and I've had officials up here. And we've said we want to create a system that sees those non-tariff barrier problems coming before they happen, so they can be fixed before anybody's affected, and we may not get the thanks of fixing them, but actually the business will be able to grow. And so non-tariff barriers certainly will be an area where we will have a very strong cooperation. Final point, and an example of this, is I've given a commitment that we'll go back and have a look at the recognition of standards around education and professional services in New Zealand. Can we have mutual recognition so that if, for instance, a doctor or a nurse trained in India wants to come to New Zealand, do they have to do a new degree, or is there a way just to recognise their qualification from the university in India? And I'm not responsible for that, that's someone else, but it is worth looking at because that will make it easier for those goods and those services to flow more freely. And so through the negotiation, we'll find many areas that we can work more closely together, and that can only be good for the citizens of India and of New Zealand.
Minister, thank you so much for talking about the India-New Zealand partnership and why it's important for our two countries in the current geopolitical context to work even more closely in the years to come. Thanks once again for being with us.
Thank you so much.
You're watching CNBC-TV18. It is now time for the big newsmaker, the big CNBC-TV18 exclusive. The news coming in from the insurance space. Allianz is set to exit the Bajaj Insurance joint ventures 24 years after they got into an alliance. Bajaj Finserv and Bajaj Group promoter entities will acquire 26% from Allianz in Bajaj-Allianz Life and Bajaj-Allianz General Insurance for 24,180 crore rupees. The transaction will give the Bajaj Group 100% ownership in both Bajaj-Allianz and Bajaj-Allianz General Insurance, as well as the life insurance business. Joining me now to talk to us about the road ahead post the exit of Allianz is Sanjiv Bajaj, the Chairman and Managing Director of Bajaj Finserv. Sanjiv, many thanks for joining us here on CNBC-TV18. It hasn't come as a surprise. This was anticipated. It's also been a fair amount of an overhang as far as the businesses were concerned. But finally, this 24-year alliance, this 24-year joint venture partnership has come to an end. I want to understand from you, to start with, Sanjiv, how prepared are both businesses for this exit at this point in time?
Shriram, good morning. And let me start by saying that this has actually been a great win-win deal for both partners. Both partners have reinforced their strategic intent for India, but with different paths. And from Bajaj's point of view, the Bajaj Group reinforces its focus in India on the insurance business at 24,180 crore that we are going to be investing to buy the 26% stake in both our insurance companies. I believe this should be the single largest investment in the insurance space ever in India, and one of the largest investments in the financial services space. Once again, reinforcing Bajaj Group's commitment and belief in the India opportunity. As far as both our companies are concerned, these are managed by very well qualified boards and by senior teams that have been with us for very long periods of time. And hence we see no change at all at any operational level. Our partnerships will continue to be the same. Our distribution continues to be the same. Products are the same, so no change on the ground.
So no change at all on the ground as far as operation is concerned, Sanjiv. But let me ask you whether you are going to scout for another partner, whether that is at all something that you would like to even consider at this point in time, or do you believe that going solo now after this 24-year arrangement is the preferred route for you?
We are very clear that given the capabilities that have been built in both our companies now, almost 24 years old, both the companies are perfectly capable on going solo. Effectively, as I said, the board has been running. Both the companies, a board that is controlled by Bajaj, and with the right support from Allianz as and when required, but fully empowered board and management. And as a result, no, we don't need another partner. If you also see the Indian insurance space in the last decade or so, this is not new. There have been multiple companies, including most of the leading companies, where the Indian promoter has gone solo, and most of those businesses have actually even done better.
Okay, so going solo, that is the route forward, that's the road ahead. Let me also ask you about the possibility of listing, Sanjiv, because this has been the regulator's nudge to industry as well, that large insurance companies need to consider a public listing as well. With this eventuality out of the way now, is that an imminent possibility for you?
Well, as you mentioned, Shriram, correctly, the regulator has been engaging, especially with the larger, older insurance companies, to talk to them about the possibility of listing, to put a glide path and timelines towards that. This is something that has been taken up by both our boards as well, given the significance of this current action with Allianz exiting the insurance companies. It will take us some time for the rebranding once we get all the regulatory approvals, etc., etc. And as a result of that, the board at a suitable time will consider the nudge, as you said, from the regulator and put out a path forward.
But, you know, indicative timeline, Sanjiv, and I understand that you are going to go through this process of Allianz exiting, which will, of course, require the rebranding as well as other regulatory approvals. Number one, by when do you anticipate all of that getting done? And two, you know, what could a realistic, practical timeline for an eventual listing be? Are you working towards an FY27 kind of scenario?
I think FY27 is early. The board and the management has been fully involved. Well, the board and Allianz as FinServ as a shareholder has been fully involved in the current transaction, and the management will now roll out the necessary changes. So for us, the next year or two is going to be busy with this. I believe at a suitable time, the board will seriously evaluate IPO as a possible option for both the companies. As you know, both the companies are very well capitalized. Our solvency positions are the highest in the industry. The businesses have not really needed external capital now for over 10 years. So we have truly built two businesses that are balancing top line and bottom line, focused on customers as best as I think is possible in this country without being immodest about it. And hence we are in no hurry Yet we understand the nudge from the regulator. So in a suitable time, the board will consider this, and once it comes out with clear direction, we will actually share it.
Okay, we'll wait to hear from you on that. But Sanjiv, a little bit about what happens now as far as Allianz is concerned. And I know that you don't really have a say in that any longer. But what we did see from Allianz in its press release last night was that it's going to use the proceeds to make strategic bets in India and look at opportunities in India. I just want to understand from you, is there any kind of a cooling off period that's been factored into this arrangement, into the agreement between you and Allianz as they exit?
And the answer to that, Shireen, is that once the first tranche of the shares are bought by Bajaj, post all the naturally regulatory approvals, the cancellation of the JV and stuff, we release Allianz from the non-compete, so then they are free to go ahead and get into binding agreements in India. This was their desire and one of their asks, and we completely understand that as a large player. And that's why I think the discussions, the negotiations have been such that it's created a win-win on both sides.
And just to understand that, so you're saying that once that 6.1% is done with, Allianz is free to tie up if it wishes to with any other Indian insurance company, any other Indian promoter, if it so desires?
Very much so. Along with that, technically the JV agreement falls away, the name change happens and stuff, but yes, in effect.
So how do you see the competitive landscape? It seems pretty clear that Allianz is going to be in India, who we don't know quite yet. But how do you see the competitive landscape emerging post this transaction ending and the possibility of another transaction starting?
You know, there are two ways you can look at this. There are 50 insurance companies, so there will be a 51 in what is a crowded and competitive space. We have seen that for the insurance companies started in the last decade or so, it's not been very easy to build scale profitably just because the large companies are doing a great job. On the other hand, our own long relationship with Allianz tells us that they're a high quality company, and we would welcome a sane competitor, a high quality, measured, conservative competitor into the market to just help balance the market. But I think it takes some time for them to get in, assuming that's what they will finally do. I've also read the press release like you, and it takes time to build a good quality business.
Well, speaking of building a good quality business, Sanjiv, I want to understand what the growth appetite and the growth aspiration is for both businesses from here on. IPO is a separate matter altogether, but let's talk about growth. It's been a relatively slower year in comparison to what you've historically seen. What's the expectation and the anticipation from here on in terms of growth?
You know, the general insurance business is very much an asset-led business, and since we've seen a slowdown in asset purchases, you've seen that industry slow down to 10-12% growth. We've been growing a little faster than that, but also with a key eye on being fair to customers and on profitability. On the life insurance side, the last 7 or 8 years has seen Bajaj-Allianz Life significantly outgrow the market with a set of new relationships on distribution, new products, and building top line and bottom line quite well. Given the significant change that happened last year with surrender values, it has been an opportunity for us to rejig again our focus and look at growth with a much higher level of profitability, and that's what the team is currently working on. So I see both the businesses growing at healthy levels at or a little higher than industry levels in the coming years. Keeping in mind also that we're going through a significant period of global uncertainty. India is one of the few markets which is still managing to grow 6+%, and I think that's something for us to celebrate. But of course, plan how can we get to 7, 8, 9%. And I'm very confident that you will see this in the coming decade. And for low penetration industries like insurance, it's going to be a great decade ahead for us.
Well, you believe that it's going to be a growth decade ahead for the insurance sector, which continues to be underpenetrated. But it's also happening at a time where the FDI regime for the insurance sector has changed. And ostensibly, that's the reason I would imagine that Allianz has decided to exit this 24-year partnership, Sanjiv. So did it eventually boil down to the fact that they wanted majority?
Very clearly, I think that's something that you have to ask Allianz and have them answer. But as they have said, India continues to be on the strategic radar for them, and we'll hear more as they move ahead.
Do you believe that we are likely to see more foreign players looking at the India opportunity, specifically the India insurance opportunity, now with this FDI regime change and 100% FDI now on the table?
I think they should, because when you look at, again, as I said, the companies in the last 10 years, most of them have stayed small. They are not able to bring in the right amount of capital. They end up then cutting corners to build growth. We need good quality players, because keep in mind, insurance is a long-term business. It's a business with a very high level of risk. You get your risk assessment right, you can have one large incident in the general insurance space that can wipe out your capital, get you bankrupt. On the life space as well, guarantees, long-term guarantees have been known to wipe out businesses. Hence, you need good quality promoters, companies that understand these businesses. Plus, we have such low penetration levels in India that it doesn't worry me at all that as Bajaj continues to grow, there will be the opportunity for many more players, because we need so many more Indians to get that security cover.
You said that there's unlikely to be any operational change at this point in time, Sanjiv. But, it has been a partnership that's gone on for over 2 decades. So I would imagine that there will have to be a fresh roadmap of some sort that you draw up. And I'll ask you this in the context of another eventuality, which is, on the anvil now. Rajiv Jain, 31st March is just around the corner. What do you believe is likely to be the role that Rajiv is likely to play as far as each of these businesses are concerned?
So firstly, as I said, a board of both the insurance companies controlled by Bajaj has been running the business for over a decade. and there is going to be no change, I can tell you, on the ground. Day-to-day competitive activity continues, but there is going to be no significant change. As far as Rajiv Jain is concerned, we have a board meeting coming up later this week, and Rajiv is fully committed to the group and the business, and the board will evaluate. As we know, his term comes to an end of March. The board is evaluating next steps, and you will hear about it soon.
If I may, because this is something that the market and the street is watching very closely, and different scenarios are being painted at this point in time. I wonder if you've had a look at that. But, you know, if you could give us some color and clarity on what some of the options are that you are exploring, that the board may consider as far as Rajiv's engagement post the 31st of March is concerned with the group.
Well, I think the board meeting is in 2 days. This is the NRC and the board that will decide that. I don't have any absolute right on that, so let's wait 2 days.
But he's very much going to continue to be with the group in some form or fashion, perhaps in an elevated form or fashion.
2 days, he's fully committed to the group.
Okay, I'll leave it there. I did try, Sanjiv, but you know, I also want to understand from you the contours of this transaction. By when do you think the 6.1% will be done, and the funding for the transaction as well, as far as the promoter group companies are concerned?
So again, Shriram, this requires IRDA and CCI approval, which we hope will come in the coming months. But naturally, we have to leave it to those regulators to decide. We will be in the process of applying now post yesterday's signing of the agreement. The funding is where of the 26%, a little over 1% will be bought by Bajaj Finserv, so that Bajaj Finserv then is in absolute control of both the insurance companies. And keeping in mind the speed with which we needed to and moved ahead, and the funding opportunities available, because Bajaj Finserv is a unregistered CIC, a core investment company. It cannot borrow. So keeping in mind that the Bajaj Group has lent support and reinforced its commitment to Bajaj Finserv and to the two insurance companies by Bajaj Holdings and one of our group companies, Jamlal & Sons, chipping in for buying the rest of the stake. So that is the current plan right now.
Sanjiv, if I could understand from you in terms of prioritization now, you know, as you wait for the process of regulatory approvals to come in, what will the next steps be? I believe that you've also held an employee town hall this morning, I would imagine, to give clarity to internal stakeholders on what the future looks like. If you could share some of that with us as well.
It's a big event for us, and that's why it's our responsibility to reinforce our commitment, support as a group, as a board, as senior management, whether it's to our customers, to our employees, to our partners. And we've started that process from today, and that's why we had the town hall this morning. Our senior leaders will reach out now to all our large relationships, will reach out to the agents who've been supportive of us for over 2 decades. To give them the comfort that nothing changes. With our 74% ownership, I think that's reasonably obvious. But these are the times where we need to over-communicate, we need to reach out, we need to handhold if somebody has a worry or an apprehension. And we will do that in the coming weeks as we line up our funds as well, so that as and when approval comes, we can move ahead. Both Allianz and we are clear that we want to get this over with as soon as we can, so that we both go our own way into doing what we need to do. We are very excited, as I mentioned earlier, about the prospects about insurance in India. And with this additional flexibility that we have of 100% control of both companies in the group, it allows us to build these businesses with our own ambition, our own focus, our own entrepreneurship, our own assessment of risk.
So, you know, and I'll pick up from that last point that you made about your own growth aspirations, your own ambition, as well as your own risk-taking ability now that it's 100% controlled by you. You know, you said that you will, of course, try and deliver on industry-leading growth as you have been doing. But does the growth ambition, does the risk-taking appetite change now, Sanjiv, with you in full control? And if you can quantify that for us, what it could mean potentially as far as business outcomes are concerned.
when you look at both the companies, you will see a great balance in top line and bottom line. And this has been core to both partners. But naturally, each partner has their own priorities. You have one partner that works in a European environment where 2% growth is great. You have another partner that works in an Indian environment where 15% growth seems to be low. Now that there is one promoter running the show, we will review some of these opportunities going forward. I don't have an answer beyond that. The agreement has just got signed last week. As our board goes with the management into our long-range strategy plan later in the year, some of these things will evolve.
Yes, I would imagine that some of these things will fall into place. But if I may ask you two quick regulatory questions, Sanjiv, which of course the industry is grappling with at this point in time. One, of course, is the government and the regulators nudge as far as the bank assurance side is concerned, and the reliance or the over-reliance in the view of the government as well as the regulator on bank assurance. How do you see that impacting the sector, and what do you believe it could potentially mean as far as you're concerned? Do you imagine being a net beneficiary if the wheels were to be slowed down on that front?
Very clearly, we will be a net beneficiary because we don't have a exclusive tie-up with any bank. But having said that, our general insurance company has over 250 bank tie-ups, the largest in the country. Even though we are not promoted by a bank, our life company has, again, more than 50 partnerships with banks, and that's growing. But yes, as we open up distribution, it will naturally end up being beneficial to companies like us, which is not part of a banking conglomerate. I believe the interest and direction towards this should be based on what is right for the customer. Because on the other hand, you have also banks, they have their own ownerships, they have their own focus areas. So while in my own selfish interest, naturally as it opens up, it's great for us. If it's good for the customer, and I believe it is, it makes sense to open up. And most banks have opened up. There are just a few that are still closed. In addition, what's important is for us as an insurance company, we have de-risked distribution. So if you look at the business we get from banks, what we get from agency, what we get from direct channels, our own proprietary team is very well balanced. And this is something we have done in the last 7 or 8 years so that we are not reliant on any one large partner. Doing that makes you unnecessarily dependent.
Right. My other question, again, to do with the regulator, is on the possible capping as far as commissions are concerned. Again, nudging industry that, look, take self-corrective actions or we will have to step in. What do you make of that, and how do you believe industry is likely to respond?
So this is something that the regulator did a great job a couple of years ago by defining an overall cap on expenses, including commissions. And that is the right way to go. You don't want to be micromanaging below that. There are certain younger channels where we end up paying a higher commission, but we are still within the overall limit. When we go direct, we have no commission, but our expense costs are higher, especially the fixed cost of running a digital direct business. So if you micromanage, you end up losing on innovation. I think the overall cap has been a great direction that the regulators put in place. There are still some smaller companies that are busting that cap. They have to fall in line and the regulator has to work with them. But overall, as long as you're within the cap, the policyholder is protected.
Okay, so before I let you go, Sanjiv, and we do appreciate you joining us here on what has been a busy morning for you. But before I let you go, I just want to reiterate that no leadership changes at either business at this point in time. Is that what you're confirming to us? And two, you spoke about a decadal opportunity for growth. Again, leave us with some color of what the decade ahead could potentially hold.
So clearly no leadership changes in the insurance companies. The same senior leadership continues and is committed to building the business going forward. The next decade is going to see India moving from $2,700 to $2,800 per capita to 2.5 times that. We have seen in many parts of the world when per capita income crosses around $3,000, by and large, the savings required for somebody for security of the house, children's education, health, basic purchases are taken care of. And the remaining money ends up going into financial services. It goes into financial assets, because those then end up being productive and give a higher return. And that is something that we're going to see in the coming decade. This is what gives us that confidence that this, driven by high quality businesses that are focused on the long term with solid teams, a significant focus on technology, leveraging the cloud, leveraging AI, and you've heard about some of the early stuff that we're already doing in AI, is going to enable us to create competitive businesses going ahead.
Well, Sanjiv, it's been a pleasure. Many thanks for joining us and giving us some clarity on what the road ahead looks like. Important to note, Sanjiv Bajaj saying that they will go alone as far as the insurance businesses are concerned. They're not looking at bringing on a new partner post the exit of Allianz. No leadership changes at this point in time being envisaged, and the appetite for growth and for risk perhaps will be higher at the end of this. Sanjiv, many thanks. We look forward to having a deeper conversation with you as you crystallize some of your plans for the future. Appreciate you joining us here this morning. That's the Chairman and Managing Director of Bajaj Finserv, Sanjiv Bajaj, also clarifying that in 2 days a board meeting will take a call on Rajiv Jain's future with the group. Seems very clear that Rajiv Jain will be committed to the group, but what exactly the role will be is going to be decided by the board. That's the big CNBC-TV18 exclusive. We will take a break here.
Be speaking to President Putin on Tuesday. A lot of work's been done over the weekend. We want to see if we can bring that war to an end. Maybe we can, maybe we can't, but I think we have a very good chance. We're talking about land. It's a lot of land. It's a lot different than it was before the war, as you know.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Sensex and Nifty hit their highest level in a month. Nifty reclaims 22,800 mark. All sectoral indices end with healthy gains. Rupee rallies against the dollar. The ceasefire in Gaza breaks down. At least 325 Palestinians are killed in a fresh wave of Israeli airstrikes. Israel's Prime Minister blames the lack of progress in truce talks. Hamas calls it a treacherous attack on defenseless civilians.
With the right support from Allianz as and when required, but fully empowered board and management, and as a result, no, we don't need another part.
Bajaj and Allianz part ways, ending a 24-year alliance. Bajaj Finserv and promoter groups will acquire Allianz's 26% stake in life and general insurance JVs for over 24,000 crore rupees. Sanjiv Bajaj says Bajaj will go solo and doesn't need a partner now, adds there will be no change in leadership. Allianz will be released from the non-compete clause once the first tranche of the transaction is completed. LIC is all set to foray into health insurance. CEO Siddharth Mohanty says the behemoth will announce an acquisition in the health insurance sector by the end of this month, but will not hold a majority stake. Government sets up a panel to address regulatory challenges faced by the fintech sector. The new committee will bring all stakeholders together, signaling a concerted effort to streamline regulations and promote innovation. Get ready to pay more to fly in and out of Mumbai. Adani proposes an expansion plan to increase capacity, seeks to more than triple the user development fee for international passengers and introduce a 325 rupee fee for domestic passengers. Airport tariff regulator yet to take a final call. Aircraft maker Boeing is all in on India, says senior executive Brendan Nelson. The company is looking to increase manufacturing in India and expand its footprint. That's an exclusive. Over 50 people detained and 5 cases registered after violence in Nagpur. Vehicles were torched and 4 police personnel were injured after rumours that a holy book was desecrated during a demonstration by right-wing outfits, including Bajrang Dal. Chief Minister Fadnavis says the violence was pre-planned. Shares of Chinese electric car maker BYD hits a record high after it claims the new technology can charge the car almost as quickly as it takes to fill petrol. Claims the new technology can achieve 400 kilometers of range with just 5 minutes of charging. All right, let's start with the stock market action. A strong rebound on the last street as Sensex and Nifty posted their biggest single-day rally in nearly 2 months. Sensex gained over 1,100 points to move back above the 75,000 mark. All sectoral indices end in with healthy gains today. Prashant Nair is here with the market wrap.
Well, a strong session and a confident kind of price action today for the Nifty Bank, mid-cap, small-cap indices. Never looked back, no choppiness, and no chop really through the course of the day. Just steady upward kind of move. What that resulted in technically is the fact that all 4 indices today have crossed the daily near-term moving average, which is the 20-day moving average. Typically, a strong throwover over this level suggests further gains, at least in the near term. So we'll see how this proceeds. But if anything, in the last 30-40 minutes, the market actually did even better and piled on gains. What did well actually is also interesting. The capital market space did well. Real estate did well. And you also had the micro caps, small caps, etc., which participated quite enthusiastically. This is all high beta and kind of tells you about the texture of the kind of day that we had. Now, I'll just start with large caps and what did well and, where there was sort of action coming through. So on the Nifty, you had ICICI Bank, which was the biggest gainer, 3.5%. Mahindra & Mahindra was up 3%. L&T was up 3%. Shriram Finance was up 3% as well. So 4 names with gains of in excess of 3% today. On the downside, except Bajaj Finserv, which came off a little over 1%, there wasn't very much to really write home about. Now, as far as the broader space is concerned, that's, I think, where the enthusiasm really came through. 4:1, advances outnumbered declines. Zomato, after a long time, was the biggest volume-led gainer, 7.5%. Names like Triveni Turbine, Mastec, 14%. Ola Electric coming off very bombed-out levels, 13%. Mobi Quick was down 10, up 20 today. Paytm, after a long time,
is fixated with the AI race and where India finds itself in the race at this point in time, what's happening globally. It really depends on what tweet you're looking at and how quickly the world is changing depends on the news feed that you're broadcasting. But I've got a very astute set of panelists here with me, and we have 40 minutes. So without further ado, we're going to get cracking and get right to it. Vinod Dham, First of all, congratulations on your Padma Bhushan. So, big round of applause for Mr. Dham here. But if I could get started by talking to you about this AI race that we seem to be talking about at this point in time. One, where does India find itself in the race? Are we in the race? Are we outside of the race? Are we at the middle of the race? Number two, what should we prioritize at this point in time from an Indian perspective as we talk about the AI landscape?
Hello. Good evening. Thank you very much, and thanks for inviting me to this panel. I took a few minutes to jot down my thoughts for this question. The rest of it, I'll just go extempore. I think I have a 5-point plan for India to win the AI marathon. Of course, the first thing is you have to be in the marathon to win the marathon. So if you're not in the marathon, you don't win the marathon. And with that intent, actually, interestingly, I had come down here a couple of weeks ago and had the opportunity to meet with Honorable Ashwini ji, whom I meet in connection with being an advisor to the India Semiconductor Mission. And I had the same phone with these notes about what would it take to be in the marathon. And before I could even open my phone and talk about them, he had already gone the very evening, and I was waiting for him to inaugurate, I think somewhere in some hotel in Delhi, 14,000 GPU clusters for AI. So give him a big hand of applause. The reason I want to bring that up is this is not the India I knew 15, 20 years ago. This is India where they are one step ahead of even the ideas the advisors are bringing from abroad, which is really a remarkable thing to be knowing. So anyway, I think what I would like to talk about is there are 4 things needed to really succeed. First, of course, is skills. Now, skills for AI, if you already have IT or software skills, are not that hard to transform to. The reason is, fundamentally, people who are in software and IT services have a computer science degree. And if you have learned linear algebra, you have learned statistics, you have learned calculus, you can very quickly learn how to build neural networks, learn about deep learning, do the backpropagation, and learn about transformers, which was a single seminary event that really created ChatGPT and this whole OpenAI phenomenon in November of 2022. So I think it's not that hard for our kids to learn this technology. And we have deep talent and very wide talent, and that's the biggest strength India has when it comes to AI today. Now, when it comes to models, of course, there are companies like OpenAI and now a host of other companies who are also creating models, Google being one of them. And then there are open source models like Llama and Mistral and Falcon. So
you didn't mention DeepSeek.
I'm sorry?
You didn't mention DeepSeek.
I will mention DeepSeek, and I'll take a second to... Let me first deal with DeepSeek, because it seems like it's a thing waiting to be talked about. I will let actually Ronnie talk about DeepSeek. He's an expert. But my view of DeepSeek, that I deeply studied, and all the paper they published, and everything that went on, and me personally losing 18% of my value of NVIDIA stock for a stupid reason, is really DeepSeek was built on top of OpenAI's training. So it's not like DeepSeek existed in vacuum and they just came up with $6 million investment and showed us how to do inference. And by the way, it was an inference step where they did some reasoning and they paused, and they, of course, it required a lot of calculations and compute at that time as well. But really, DeepSeek is built upon OpenAI technology. It's built upon US technology. So I don't think they should, anyone should be misled to believe that by themselves, only with $6 million and 4 engineers, they came up with a thing like that.
Okay.
At least that's my view. I'll let Ronnie tell me whether I'm right or wrong.
Yeah, I'll get to Ronnie in just a second, but you want to finish your...
I want to. So I think India should approach models with a hybrid approach. That is, they should use open models. And since it's very expensive to build, by the way, models, LLMs. So we don't need to spend billions of dollars that Ronnie has spent already. We can just leverage that and then build models in our multilingual languages in a hybrid approach. So that's one thing. And we need those models for government, medical, military, defense, and they should be proprietary. We should not use Western models to do very confidential things that we need in this country. Okay. And the last 2 points are, you need lots of compute, and to run the compute, you need lots of energy. And lots of compute being, we need lots of GPUs. And one of my recommendations would be, beyond the government of India really doing some private public partnerships, do an ISM type funding. You know, the government of India, MITI, came up with $30 billion funding for semiconductor program. I think AI will need a similar kind of funding for next 3 years, $50, $100 billion type of investment to really run this marathon and stay competitive in this marathon. And energy is an important thing because these chips need a lot of power to run, and we will need to multiply our energy sources.
Well, thank you very much for setting the context for the conversation that we're about to have. So the big advantage really lies on the skills side. The big ask at this point in time is on infrastructure. Ronnie, I'll come to you in a second, but let me get Minister Vaishnav to respond to what we've just heard there from Vinod Dham. Minister Vaishnav, 1 year of the India AI mission, 14,000 GPUs on the table. You got a round of applause on that, but the ask now from Vinod Dham is we need the government to back this up with at least $20 to $30 billion of investment on the infrastructure side, do a semiconductor mission as far as the AI mission is concerned. Can you draw parallels with the experience that you've had on the semicon side? Can we expect you to replicate that on the AI side?
Absolutely, yes. And I thank Vinod for such a nice way of structuring the entire context. One, making GPUs available as a common compute facility. That's done. 14,000 GPUs already inaugurated. Two, the most important part of the entire AI journey is getting the data sets. So we have set up a common compute kind of structure called AI Kosh. That is also done. And today morning we signed an MOU, the India AI Mission and the Indian Parliament. We signed an MOU. So because Parliament has a very large data set in multiple languages over a period of time. So that will be a very good training resource for training our models. That's done. And many more other, like Doordarshan, All India Radio. There are many other sources of data which is available. Third, getting our own GPU chip. That's very, very important. And we have already started working on it, working with the industry, evaluating different options that we have. And we got really good, bright professors, bright startups who are willing to contribute to that journey. So that is also in place now. Hopefully we should be able to finalize the best option very soon. Fourth, having our own LLM, because whatever the world says, if it's open source today, it may not remain open source tomorrow, which we have seen in the case of OpenAI. I think we should also change the name. So better to have our own LLM. I don't think we should be shying away from that. So I think we are taking the problem in a very methodical, very systematic way. The part on talent is very important. And that's where we have a major advantage. And we have a template in front of us. In case of 5G, we set up 100 labs in universities so that the students can actually learn it on the real 5G environment, real tools. In case of semiconductors, 240 universities and institutes combined, 240 institutes we gave the latest EDA tools so that the students can actually learn what is a chip, how to design it, and really get their hands, get the real experience. Similar approach we are following on AI also. So I think we'll be in a good shape, I would say.
On the GPU, Mr. Vaishnav, a broad timeline by when you expect to finalize who you choose to partner with, just give some color on what we should expect on that front.
In short, 3 to 5 years, 3 to 4 years, I would say, to get your good, reasonably good capability GPU up and running. The approaches, basically there are two approaches which we are evaluating. seriously. Two different types of instruction sets. Which one we will finalize, or will we take both the instruction sets and move forward? That is something which the experts will decide.
Mr. Dham, he's keeping you on your toes. That was part of your wish list, that India should build its own GPU, and Ashwini Vaishnav has already taken up that challenge.
Absolutely. I'm proud of him and proud of him saying that. And I think we need it. And also, the time frame he's given you is very reasonable, if not on the aggressive side, because these things are very complex. They take a very long time. And I think there's a lot of realism in what Ashwini ji just said.
Okay, Ronnie, let me come to you now. Number one, are we likely to see a name change anytime soon? But more importantly, I want you to put on your OpenAI hat, but I also want you to put on your former White House CHIPS Act coordinator hat and tell us what you believe the future holds as far as public-private partnership is concerned, and how do you believe it's likely to play out for an emerging economy like India? How important will that be?
Well, Shriram, first, thanks for having me, and it's an honor to be on a panel with Vinod, who's the father of the Pentium chip, one of the greatest innovators and investors, and the Honorable Minister, who's really leading the way around technology transformation in India. We've been here basically to listen, to understand what's going on in this market, and it's incredibly impressive. So when you think about the meetings we've had over the last couple of days, one, the Honorable Minister mentioned data sets, huge ingredient to building large language models. And India, and the government in particular, has done a fantastic job in terms of making those data sets, public data sets, more available, which is going to be really important to the future of AI. Two, people. I mean, I heard a statistic today that India graduates about 1 million or more STEM graduates every year, depending on how you identify STEM. And when you think about the talent base and their ability to adjust to what's hot in the market, that's an amazing advantage. Even when we talk about the transitions that are going to happen around the world because of AI, if you have 1 million people coming out every year with a new set of skills and a population of 30 years old or younger for the next 30 years, it's a huge opportunity for India to stay on the cutting edge. So you have that ingredient too. And now these investments in AI infrastructure, which is such an important piece of it, the data centers, the GPUs, the energy hookup. I mean, even on the stage, we've now launched a new AI infrastructure initiative. So we're making good progress. Here's the things I think are really interesting in India. One is, what are those killer applications going to be? When you think about the impact of AI on the economy, us economists, I'm very sorry, we're all over the place. We predict it'll be 1% of GDP, 30% of GDP. People have tons of different estimates. Why is that? Because we're still figuring out how this is being used in organizations. We're still seeing frictions to adoption in government, in business, into SMEs. But over time, you'll see a convergence on a huge economic impact. The question is, what are those applications and key verticals going to be? In India, it could be in education, it could be in defense or healthcare. It's going to be up to the people in the Raisina Dialogue audience and around the country to figure that out. As someone who led the implementation of the CHIPS Act in the last administration in the United States, I can tell you I see a focus around the world, not just the United States and India, around investments in critical technologies, supply chains, infrastructure. And I think it's reflective of a world where national security and the subject of this conference, geoeconomics, is becoming predominant. When I did my PhD, we lived in a world that was very globalized, where everything was about sort of knocking down barriers, trading, right, and assuming the best intents of countries around the world. Now we're entering into an era of more contention, nationalism, populism, and you're seeing countries around the world adjust accordingly. It doesn't mean to me, though, that the US and India can't have a very strong relationship and that OpenAI can't be a good part of it. I don't expect any name change for OpenAI, but ChatGPT might be called Chatterjee GPT. But that is what I will promise the Honorable Minister, okay? That's my only.
Well, we look forward to that. But Mr. Vaishnav, that's a very important point that Ronnie mentioned there. You know, in the world that we live in today, when we're talking about the escalation of tariff wars, we're talking about export controls, and which is why Mr. Dham is suggesting that you need to focus on proprietary technology, proprietary models. I want to understand from you, you know, the partnership between India and the US, how do we build on that? We've had a partnership which is, of course, but in an AI era, in an AI age, what can India and the US do together? What do you foresee on that front?
I think we have very complementary strengths between India and US. If you look at it, today Stanford University ranks India as the biggest talent concentration in terms of AI. Every country needs the talent. Second, the diversity that we have, the kind of rich data we have, that would be one of the greatest resource for any country which wants to be in the race of AI. Two. Third, the way we have developed our relationship with the US, where the foundation of the relationship is trust. The foundation of the relationship is respect for IP rights. The foundation of relationship is to co-create and co-develop technologies. That thing is something which has happened over a period of last 10 years, and that is a very big strength for both the countries. I think the two of us will do a lot of things together. I think that will be a good win-win for the entire world.
But you don't believe that Make America Great Again could overshadow this partnership that you speak of?
See, I think today's world is quite different from the past when it was win-lose kind of situation. In the world of technology, I think it's more of win-win, and the pragmatism with which we are approaching our foreign policy, our Prime Minister is very clear in his mind, and our External Affairs Minister has a very practical approach. So with those two major ingredients, where we are looking at what can, how both the countries can really win and create things which are good for the humanity, good for the two countries, and they are following some of the most basic principles which in the world of technology are very important. I think that works well.
Yeah, I just wanted to add on to when Honorable Prime Minister Modi ji was in Washington last month, he talked about MAGA, which is what you're referring to, right?
Yes.
And he also talked about MEGA.
Yes.
And then he said both of them combined are like mega. So I think that's exactly what Ashwini ji is trying to indicate.
Well, that's the hope that we will be able to create that. But Mr. Tham, you know, you've likened the AI race to what we saw happen as far as the nuclear race is concerned as well. What do you believe we need to be mindful of? What are the guardrails that you believe we need to put in place?
Yeah, it's like a nuclear race, because if US decides to only proliferate it, only to trusted partners, like India is one of the trusted partners, then it will be restricted to few countries. And we are fortunately on the right side, and we bring a lot of value, like Ashwini said, and hopefully we can return significant amount of value back into the system.
You know, my question, Ronnie, also is, and as the chief economist at OpenAI, what are we talking about in terms of transformational impact? What is waiting for us at the end of the finish line? You talked about the killer apps that we need to really think about, that we need to focus on. At this point in time, what's the best estimate in terms of what happens on productivity uplift, what it means in terms of bridging the access deficits on healthcare, education, financial inclusion? I mean, take us through what you're reading into it at this point in time.
Sure. When I talk to folks around the world, their optimism about AI depends on the use case that they're familiar with. For a lot of people, ChatGPT is just typing something into a window and getting magic back, right? Editing your document, summarizing something. If you think about that, save you a lot of time at work, and you can spend that time on other more productive things. And what I'm seeing is 20 to 30% time savings in terms of return on investment for people using ChatGPT in that way. But if you really want to think about unlocking the economic impact at the scale of a place like India, I think you have to think further down the line. Think about our deep research tool that many people in the audience have worked with. Now you're moving from a helpful editor or summarizer to a PhD level research assistant. Somebody who I can type to prepare for this panel some speaker notes and the bios of my fellow participants and moderator, and I can spend more time thinking about jokes about ChatGPT, right? So as you think about now with helpful research, it can scale your work in a different direction and increase productivity. Now, and Shriram and I talked about this earlier, now think about agents who can go, agentic AI, and start entirely new organizations and transact with one another, creating products that we never could have done on our own. The productivity increases of those types of applications could be immense. But what you're going to need in a world of agentic AI is trust and governance. So it goes back to Vinod's point, and he's seen this from the beginning of really foundational technologies. And the government role, of course, is going to play a big role here as well. But I think when we move to that world of agentic AI, the productivity benefits are going to look much more aggressive. You're seeing some economists think between 7 to 10% increases in productivity. That's not what we're seeing today, but over time, those are within reach if we embrace what this technology can actually do. We're not there yet. with most technologies, there is a period between invention and adoption. It's called the between times. It takes a little while for us to figure out how to use the steam engine, electricity, or the semiconductor integrated circuit. That's where we are with AI as well. But Shireen, it's moving incredibly fast.
It is moving incredibly fast. And Mr. Vaishnav, since we're talking about being in the in-between phase at this point in time, and I think every government around the world is grappling with, at the end of the day, what do you do with this technology? What do you prioritize as far as the use cases are concerned? From an India perspective, if I were to ask you to list out for me where you believe you would like to unleash the power of AI to bring about true transformation, what would those areas be?
One, healthcare. Two, agriculture. Third, weather forecasting, basically meteorological matters. Fourth, education. These would be the top four.
These would be the top four. And how do you believe you will be able to address some of these? Do you see a deeper public-private partnership at the end use to provide a last-mile service, so to speak?
Absolutely. I think the AI revolution, or let's call it the new industrial revolution, this is just a beginning. What we have seen in the last 2 years is something that has been built upon what was happening in the industry, the mainstream industry. And what we are seeing now is probably just the chapter 1 of this entire book. It's really going to go far, far, far beyond what it is today. And what will really bring the productivity will be very frugal but very effective applications. That will change, let's say, one example of Baramati, where the farmers are today they have almost tripled their yield of sugarcane because of the use of AI. Let's say, take the case of some of the industrial applications where in case of maintenance, what was such a big, onerous, very difficult task to go under the machines and see what the situation of the different components is now getting very easily done using AI cameras with computer vision and getting those algorithms right and making sure that you are giving priority 1, 2, priority 3, priority 4 to the people who are actually going to maintain those equipment. So that's something which is going to change the entire thing in a very fundamental way. And I believe apart from the engine which is right now being talked about, that will just remain the engine, and that will also get commoditized in my personal opinion. I may be wrong, but that will get commoditized in coming years. And over and above that layer, the layer of applications is what is going to really make a big difference.
Yes, and I think we will get Mr. Dham to comment on that. But, as Mr. Vaishnav pointed out, one, of course, is the cost of compute, and we've already started to see that come down. Of course, not as much as we would like it to be. The commoditization as far as the engine layer is concerned and building on top of that. As we write the next few chapters in this story, Mr. Dham, what do you believe we should be looking forward to? What should we now expect as far as the next chapter is concerned? You talked about being in the race to win it. When we look at Ronnie and Stargate and $500 billion there in terms of infrastructure spend, I mean, it's an unequal race to start with. So, how do we kind of look at this in a way that provides us perspective?
I think the way to look at it is really to focus on our domestic needs. And like Ashwini said, healthcare, very important element here. And we don't need to spend $500 billion to bring AI into improving longevity of our people, whether it's diabetes, high blood pressure, or any of the cancer issues. AI can help us get to those answers much faster and even reach remote areas in the villages where we don't have doctors available today. So we don't need to adopt US-style $500 billion star projects. We can look at it in a distributed way. India is very good at doing things like that. India never really imitates West, which is one of the best things I've seen. We really have nothing truly to imitate. We are a very old civilization with our own culture. The food is out of the world here. Who the hell wants to imitate anything from anywhere else? So we need to keep that mindset going, even for the AI side. Pick the best of the things and apply them very intelligently, whether it's agriculture. I think one of the other areas that was not mentioned should be is warfare. in national security, in drone technology. The future wars will be fought,
So weaponizing AI or AI being used in
AI
weapons?
being used to weaponize. So all those things are very much likely in next 5 to 10 years.
Likely in the next 5 to 10 years. Let's talk about the capital that's going in. And I think, Ronnie, the question that's being asked today, and it's being asked by corporations, it's being asked by governments, is what is the return on investment? Stargate, $500 billion. What is going to be the timeline before we start to see a return on investments? How do you respond to the in-between phase of where you've got to put the capital in the hope of being able to see returns at the end of it?
So, the first thing I did when I took the job as the chief economist, I'm the first chief economist at OpenAI, so there wasn't really a predecessor. I spent time talking to the technologists and the people who are building these large language models. And those folks, they live in the future. You have to do that work, you have to live in the future and see the future in some ways. And when you understand the revolution that's happened over the last 2 or 3 years, where the capabilities of our models have grown so fast, things that people thought were impossible in the models are now possible. You start to understand that, the laws of scaling, as they're referred to, are going to require more compute. And that's why, as a company, right, we believe that infrastructure is destiny, and the investments in Stargate, properly calibrated with milestones in the right places at the right time, will make good sense. Now, there's been lots of challenges to these scaling laws over time, and you mentioned before, of course, the DeepSeek example. But even with our new models, our reasoning models, and you're seeing this rise of test time compute and the power of inference, which is also going to use a lot of compute. To me, just as Vinod said, I'm actually not too worried about these challenges to compute, because I think, as an economist, the cost of intelligence going down, the cost of compute going down is a good thing. And in fact, we're going to have so many applications to use it. Think about the applications that were already mentioned. I'll give you one more. In villages in India, when a child is born, we heard about this earlier today, there's often a question about low birth weight. But nobody knows exactly what the cutoff is and how to properly weigh the child. And you all know, if you're from India, some of the superstitions around handling children in that stage or having strangers handle a child. Well, now you can take a picture of that child, right, in a privacy-controlled way, and estimate the weight very precisely, which allows a healthcare worker, without visiting that village, to figure out whether the child is underweight and needs further medical attention. It's those kinds of innovations that can make the impact you're talking about. They don't require massive infrastructure investments yet, but they can be really useful. So this is kind of where I see a lot of opportunity here. If India decides also that this AI infrastructure bet is one they want to make, that's fantastic as well. But in the US, as we saw it, based on where the models are going, we think the return on investment is going to be very positive in the next 5 years.
I'd just like to add, the talk in the media on the ROI is that if you just imagine the next move in AI is agentic models. Yeah. And that's, agent is like a human. Just think of it like that. And if you have 10 agents working together, there are 10 humans working together. If they can create an output which can save, let's say at the minimum, one head count. One head count is like, in American terms, they talk about $10,000 a year, which is a reasonable number. Right? If you save $10,000 a year for a company, and you charge them $2,000 instead, which is a 5x saving for them, which is Microsoft charging its Copilot $250 a month. Suddenly their revenues and profitability will skyrocket. So this is the kind of thinking. I'm not saying it's going to come to fruition, but at least there is a thinking going on ROI as to how you're going to get there.
That's the assumption. Mr. Vaishnav, let me come to you, sir, to really get a summation, so to speak, of what you've heard from these two gentlemen here, but more importantly also, your vision as far as the next year of the AI mission is concerned. What should we expect as the short-term milestones? What should we expect as the medium-term milestones? What should we expect as the long-term milestones?
For summary, go to OpenAI, ChatGPT.
We need a proprietary vision, sir.
Immediate term, we must get our startups and academia and researchers and students the right tools, the right skill sets, making sure that our IT industry is geared up for taking it up as an opportunity, rather than thinking of it as a big challenge. That is the immediate term goal. Mid-term focuses on getting the LLM in place, making sure that our GPU strategy is progressing well, making sure that our universities have changed their course curriculums so that they are able to generate a continuous stream of well-trained, great talent. That is the midterm. Long-term, of course, we need to keep our eyes focused on our goal of 2047. We definitely want to take lead in some of the most important technologies.
You know, and again, I want to just go back to that 2047 goal as well and link that to what we heard there from Ronnie in terms of economic impact. There are assumptions that, economists are working with. What's the assumption that you're working with on how much AI and the transformative impact of AI you can harness to be able to get to the 2047 goals?
See, when new technologies come, getting the ROI equation solved for it, I don't think that's the absolutely the right approach. I think when new technology comes, we must invest in it. We may not know what exactly the returns would be, but for a country or for a company or for an organization to be able to compete ahead, that investment in technology must be continuous, for sure. How AI will play out in the next 20-30 years, I think it will be something that we'll have to kind of modulate our approach. We'll have to see how it plays out. As I said, this is just the chapter 1. And as AI evolves, and there's going to be a lot of mathematical innovation which will go into this. I remember my IIT days where I built the first text-to-sound transformer, that T in GPT, right? So that transformer which I built, from those days things have changed a lot. But some of the fundamental math behind neural networks, some of the fundamental math behind AI, that remains constant. So that math, when it gets applied into the newer AI models, that's going to bring about changes which we, at this point of time, we can't even imagine. What I would say is embrace technology, use it properly, make sure that it is good for society, and make sure that the harms which can come from it are also controlled.
What is exciting you the most as an engineer? Are you reliving your IIT days? Do you feel like you want to be back in a lab, Mr. Vaishnav, tinkering at this point in time?
A couple of days back, I was in IIT Madras, and the energy of that place was phenomenal. Those boys are doing some good work on Hyperloop, and I'm the 72nd member of that team, so it was real fun. That gives tremendous amount of energy. IITs have their own charm.
Yeah, they certainly do have their own charm. I'm going to end by asking you, because I know the minister has a hard stop at 6:40. Are we in the race? Are we at the starting point? Where are we today?
We are very much in the race. We are in the first inning of the race, not at the starting point. And like Ashwini said, it's a multi-inning race. This will go on for a long time. And we need to just stay there and continue to invest appropriately and make sure we don't fall too far behind.
I'm glad that you've moved from race to cricket, which is probably appropriate of an analogy to close the conversation when we talk about where India finds itself, the role and relevance of AI. Ronnie, I'll give you the final word.
Well, first, just thank you. And I think going back to the IIT Energy, the students and young people in India are really the future in a big way. And I think leveraging the universities to produce cutting-edge innovation, to improve on this is something that's worked in other parts of the world. And I think that's another opportunity here with India, given how many people are going to university and the kind of research happening at institutions all around the country. So I'm just excited to watch and support however I can.
All right, gentlemen, thank you very, very much for joining us here. There's plenty of optimism, confidence, and maybe get the three of you back to talk about where we find ourselves in the AI race and all the suggestions that you've made and the promises that the government has made to take that forward. Appreciate your time. Thank you very much, ladies and gentlemen.
Thank you.
Hello and welcome to a fresh edition of Startup Street. I'm Arundhati Ramnan and these are the top headlines from the startup world. Government sets up a panel to address regulatory challenges faced by the fintech sector. The new committee will bring all stakeholders together, signaling a concerted effort to streamline regulations and promote innovation. An ice cream brand, Go Zero, raises 30 crore rupees in its Series A funding round from existing investors DSG Consumer Partners, Sama Capital and V3 Ventures. The fresh investment will fuel supply chain expansion, innovation in product offerings and brand growth. iHub Robotics, a humanoid robotics startup, raises $520,000 in pre-seed funding from US investors. With this fresh capital, the company is set to establish a humanoid robotics manufacturing facility in Kerala. Telecom Minister Jyotiraditya Scindia tells Money Control the government remains open to competition in the satellite broadband sector. However, Starlink must check all the boxes to acquire its license. Shares of Chinese electric car maker BYD hits a record high after it claims the new technology can charge the car almost as quickly as it takes to fill petrol. Claims the new technology can achieve 400 kilometers of range with just 5 minutes of charging. Those were the headlines that we're tracking for you from the startup world. But on What's Brewing today, Simplify, a platform for sourcing and manufacturing specialty chemicals, has raised $40 million in a Series B funding round. The round was co-led by Axel and Bertelsmann India Investments, with participation from UMI and existing investors Omnivore and $254 million, following its seed and Series A rounds. Joining us now to discuss this further is Sachin Santosh, the co-founder of Simplify. Sachin, thank you so much for taking time out and being here with us on Startup Street. You know, first up, Simplify is a B2B fulfillment platform that operates across the product life cycle. If you could sort of take us through what it is that you exactly do, what's on offer, and how are you making sourcing more affordable for your clients?
Thank you. Thank you so much for having me on the show. So to give you a quick overview of what we do at Simplify, we are a science-first platform for specialty chemicals manufacturing, as you mentioned. So the approach that we take is very, very supply-first, which means that we develop molecules or technologies with our in-house R&D team. These technologies are cost-effective, highly effective processes for molecules that are already manufactured across the world. And then we take these to our network of manufacturing partners. We have over 200 that work with us actively. And this offering of the products, which is right from the development to the manufacturing stage, is what we are taking to our global base of customers. In terms of the kind of products that we've been working with, we've seen really good growth in our pharmaceutical and agrochemical sectors. We are doubling down on that, and we are seeing a lot of new sectors such as fragrances, industrial chemicals, where we are seeing a lot of interest.
Right, you sort of preempted my next question to you because I was going to ask you about the various industries that you are in. But if you could sort of take us through the kind of, clients that you're currently catering to, any new sectors that you're looking to eye. You just said fragrances, anything else that's looking exciting? And what are the kind of efficiencies you're bringing in for your clients?
Yeah, absolutely. So I think let me cover the clients part first. So, over the last 15 months, we've been around for about 16 months as a startup. The first 6 months was basically all capability and capacity building. So we got a lot of our supply right in terms of R&D, in terms of manufacturing. Initially, we were working with a lot of customers in India. Happy to share that in the last 12 months, we've actually expanded our base quite significantly outside the country as well. So now we are working with customers in similar industries across 16 countries now, and we plan to expand that a lot further. In terms of industries that we work with, of course, within industrial chemicals, for example, there's oil and gas chemicals, there's water treatment, there's textile chemicals, there's a lot of new industries where we're seeing interest in. But I think the model remains same. The efficiency that we bring to the customer is that they are looking to go to market faster with newer products. There's a lot of shift happening in the world in terms of new tariffs, new shifts in supply chain. And that's what we're helping them navigate and helping them find an efficient, reliable source on.
Speaking about these tariffs and, the trade wars that are currently going on across the world, what's the kind of impact that you're anticipating to see?
Yeah, I think there's going to be a lot of volatility and a lot of shift that's happening in the short term. The way I see it is that, India has this opportunity. Today, we have about 6% market share in the world in terms of specialty chemicals or chemicals in general, actually. And we see that, there are larger countries like China operates at about 50%. And there's, countries in Europe also which have a significant market share. Despite the fact that India has the best-in-class manufacturing and scientific capabilities in the world. So what we plan, or the way I see it, is that the next 5 years will be defining in terms of setting up new supply chains or setting up new supply centers. We are not only looking at India, we are looking at supply centers that are in other low-cost neighboring countries as well. And we see that once these supply chains are set and in place for the next 5 years, it's a multi-decadal opportunity in terms of how we can grow and how we can support innovators in their journey.
A multi-decadal opportunity is what you're calling this, and you've raised this, $40 million. If you could sort of take us through how you plan to spend this, what's on top of the agenda?
Yeah, I think the primary area, like I said, is on the international expansion. We wanted to get everything right in terms of the supply of the products and the manufacturing capacities that we have. Now that that's in place, I think we are very happy that Axel and Bertelsmann have also supported us in this raise, and we are looking at expanding this offering to a much wider base of customers. So a lot of the investments that we are doing over the next 6 to 12 months will be in terms of setting up offices, setting up teams physically in about 6 countries in the next 1 year. And we're also looking at, exporting to a lot of other countries by way of channel partners, by way of operations in these countries as well. So that's the first major area of investment. The other area of investment is also to double down in terms of the R&D capabilities that we have. So we are actually expanding the lab facilities that we have. We are also working with third-party R&D facilities where we are able to bring a wider offering of technologies and a wider offering of R&D capabilities to the customers.
Right. And, what about your revenues? If you could sort of take us through what you're currently making and the targets that you've set for yourself for this year. And, what about profitability?
Yeah. So in terms of revenue, we've seen that from where we were in FY24, we've seen a 4x jump year on year. In the coming year also, we are seeing that the growth will continue to be at about a 30 to 40% quarter on quarter is what we are seeing for the next 1 year. I think if we are on track, then, in the next 12 to 15 months, we should be looking at close to $100 million annualized in revenues. So that's what we are essentially looking for. I think the more we get into this market, it's an amazing market that there's more and more opportunity in that. And I think because of a lot of shifts that are happening, there's a lot of tailwinds that have been, we've been lucky to benefit from, and we plan to double down on that in the next year.
So plan to double down on that. A big part of our discussion has been about your expansion plan. You said that, you've got clients across USA, Europe, Japan, and you also added 16 other countries that they're in, right? If you could take us through the other markets that's on your radar to expand into, and what are the kind of challenges you face while exporting to these countries?
Yeah, I think so. It's also a challenge and an opportunity. I'll answer that part first. So in terms of the each of these countries that we are working with, we see a whole spectrum of regulations that come into play, right? And which is a very good thing because, the kind of industries that we are serving, pharmaceutical, agrochemical, etc., these are things that directly impact human lives as well, critical industries as well. So, that is an opportunity for us. So we're building a lot of strength on our regulatory side as well. So for example, we have a work with a completely different set of agencies in the US versus Europe versus Japan, and versus all the other countries as well. So that's something that we are navigating. It's something that is requires a lot of technical expertise and industry expertise that we are investing in. In terms of the countries, other than that, we also have an office in the Middle East in Dubai. So we are serving large parts of the Middle East and North Africa through that. We also have an office in Indonesia. So we are serving large parts of Southeast Asia through that. Apart from that, we, in the short term, we want to be focused on these geographies. But through our US office, we also plan to expand into other parts of Americas as well.
Right. And what's the current, mix between all the geographies, and where do you hope it to reach by the end of this year?
So today we are at about, a large part of our revenue still, as a percentage, still come from India. We have about 20% odd that comes from the export market. And, this is spread across different geographies. I think US, for example, is turning out to be a very exciting market for us. In terms of where we want to go by the end of this year, the next financial year, we see that this number would be close to 40% from the export business, with a large contribution from Europe and Japan as well.
All right, Sachin, thank you so much for joining us on the show today, and we wish you all the best going forward.
Thank you. Thank you so much for having me.
On to all the other news that we're covering for the day. The government has set up a committee to examine the regulatory issues that the fintech sector is facing. Government sources have said that the panel will submit the report in 3 months from the first meeting. Sapna Das joins us now with all of those details. Sapna, what are your sources telling you?
Well, what we've been given to understand is that the panel has been set up to basically assess the policy challenges that the fintech industry is facing, what could be the regulatory gaps that need to be filled in. And keeping all of this in mind, there is going to be representation from the Finance Ministry, from DPIIT Finance Ministry, basically DFS and DEA, these departments, then DPIIT, also METI, Niti Aayog, representatives from all these important government verticals, as well as the regulators, RBI and SEBI, representatives are going to be part of the panel. And of course, the industry, some of the founding members of the fintech industry are going to be part of this panel. And going forward, the expectation is that within a month of the first meeting, a report should be submitted to the government, and then we'll have to wait and watch and see what kind of recommendations come through and how will that impact the trajectory of the fintech sector going forward. But a beginning has been made in setting up this important panel, and we'll have to wait and watch and see what kind of policy challenges and regulatory gaps do come up in these discussions, and what kind of note the government takes of that.
Right, Sapna, many thanks for those details. Now from Zerodha to MobiKwik, top fintech executives have been clamoring for an easier regulatory regime. Listen in to what they had to say.
When you're sitting here in Delhi or Bombay and we are passing regulations and or taking action, we think positive or negative, we don't realize that the people who look at companies like us, whether it is private or public, how they think about these decisions and what they understand and comprehend, because it becomes like a pretty big black box where the clear conclusion for a lot of people is maybe the regulators and the government don't want fintech.
The thing what the regulator, especially SEBI, wants the brokers to do is to earn money only from brokerage and not from anything else. And since the entire industry is used to earning in a certain way, which is like a sum of all the parts, so it's going to be a big challenge especially for, I mean, I don't say incumbents, but then someone who has benefited the entire broking industry. It would be a challenge.
Telecom Minister Jyotiraditya Scindia has said that Starlink must meet all application guidelines to secure a license in India. Speaking to Money Control, Scindia added that the government remains open to competition in the satellite broadband sector. However, Starlink must check all the boxes to acquire its license. He also said that the TRAI is expected to announce spectrum pricing soon. After that, the government will allocate spectrum based on TRAI's recommendations. This has come after telecom giants Airtel and Jio platforms both announced partnerships with SpaceX to bring Starlink into India. Meanwhile, Google signed a definitive agreement to acquire cloud security startup Wiz for $32 billion in an all-cash deal. This will be the tech giant's largest ever acquisition, and Wiz will now become a part of Google's cloud business. In a statement, Google said that this acquisition will help Wiz make their solutions better and more scalable. The acquisition comes at a time when Google's cloud business is trailing behind Amazon and Microsoft. And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.
नागपुर के महल इलाके में जिस प्रकार से तनाव की स्थिति निर्माण हुई, ये बहुत ही निंदनीय है। जिस प्रकार से कुछ लोगों ने पत्थरबाजी की है, पुलिस पर भी पत्थर फेंके हैं, ये बिल्कुल गलत है। मैं स्वयं इन सारी घटनाओं पर नजर रखकर हूं। मैंने पुलिस कमिश्नर को ये कहा है कि कानून व्यवस्था बनाने के लिए जो भी कड़े से कड़े कदम उठाने की आवश्यकता हो वो उठाए जाए और शांति को बनाया जाए।
Are you pausing? I can hear you, barely hear you, but I can hear you, of course, over the words here at the big board. American Express celebrating its 175th anniversary.
For years, we've spoken about bridging the gender gap. We've debated, we've discussed, but now it's time for action. We take a decisive step forward as we unveil the Future Female Forward, Close the Gender Gap Charter, a blueprint for real measurable change. The charter sets clear, actionable goals for increasing female representation at all levels of leadership. And to lead this momentous unveiling, it is only fitting that we invite someone who represents a global institution that has actively championed inclusivity and leadership diversity. Please join me in welcoming Hitendra Dave, CEO of HSBC India, to the stage, and let's unveil the charter. Ladies and gentlemen, keep the applause going as we unveil the charter.
I am fearless, I'm driven, I'm a change maker. They think they can stop me.
Ladies and gentlemen, the Future Female Forward Close the Gender Gap Charter. And joining them for this landmark moment, we are honored to have some of the most influential voices driving change across industries. Now we turn to the core of our mission, creating equal opportunity workplaces. Research from McKinsey and World Economic Forum proves that diverse leadership teams drive higher profitability and innovation. Yet challenges remain in the form of persistent gender pay gaps and underrepresentation of women in leadership. So what does this mean for India's business landscape? How are top leaders addressing these challenges while unlocking the true potential of diverse workplaces? to lead this important conversation. I request Shireen to kindly join us back on stage and to bring us exclusive insights from the front lines of corporate leadership. It is my absolute privilege to welcome our distinguished speakers, Hitendra Dave, CEO HSBC India, Rajesh Warrier, EVP Global Head of Operations and Chairman and Managing Director, Cognizant India, Vartika Shukla, Chairman Engineers India. We've also got Prabha Narasimhan, MD and CEO Colgate-Palmolive India, Rajesh Jejurikar, Executive Director and CEO at Mahindra Group. We've also got Ameera Shah, Promoter and Executive Chairperson, Metropolis Healthcare, and Ashish Dhawan, Founder and CEO, the Convergence Foundation. Ladies and gentlemen, a huge round of applause for our panelists. Shireen, with that, it's over to you.
This makes me so happy, ladies and gentlemen. I've been doing this for 25 years now, and invariably, when I'm at one of these events, I'm usually the only woman on stage with a long line of men in suits. And this is what we're hoping to do, achieve gender parity, and we've done that starting here on our panel this evening. So many, many thanks to my panelists for joining us here this evening. Hitendra Dave, this started as a conversation that both of us had on a flight, and today, 3 years on, it has become a movement. As you look at where we are today, and Pooja was just giving us the data, while we have mainstreamed the conversation and progress has been made in some areas, there's a long road to cover. It's a long distance to go, Hitendra. From the experience that you've had so far with the movement as well as with HSBC, what's next?
You can argue with everything except facts. Right? So once the facts start to show that this conversation is beginning to have impact, now, we should be proportional in our expectations. I don't expect 10,000 companies in India to look at this program and say, hey, we need to change our diversity or hiring or inclusion policies. But it is very difficult today to be running a reasonable sized business and not be having this conversation. I think I can't believe any board or executive committee or top management teams don't talk about this, right? I think how to go about it, there is a debate. Should we have hard numbers? Like our board, right? I mean, I don't know if everybody is aware here, but we are a fairly large organization globally, right? I mean, 50% of our board is women. And that wasn't done as a conscious DEI thing. It just so happened that 50% of the directors that the bank was looking for were very, very brilliant women, right? So similarly, at some of our senior most executives, I think you are aware, our CFO is possibly not just a woman, possibly the senior most Indian woman in the banking industry, right? She's from India. It's like she's not grown up abroad. She studied here and went there, etc. So we have many stories to tell. But to answer your question, I think we need, and I know you're going to do this over the course of this session in this year, we need the real leaders, women leaders in particular. I think their insights, their stories, what it took them, was it such a significant sacrifice? How did they manage it? You need young girls and women in schools and colleges to get inspired, right? I mean, political leaders, business leaders, executive leaders. So that would be next, where it's, where it moves from being an agenda number 6 to just being a natural. It's like product innovation, or it's like customer centricity, right? When boards and executive managements get to the point where they talk about diversity and inclusion in the same vein as customer or things like that, I think that would be a good.
Vartika Shukla, let me come to you. We're talking about the private sector's involvement. Let's talk about the public sector's involvement as well. I don't know how many of you know this. Vartika Shukla is a graduate from IIT Kanpur and is today one of the few women leading a public sector organization. She leads Engineers India Limited. So Vartika, I want to understand from you, through your own journey and the arc that you've been able to make, what do you believe has changed, but what do you believe needs to change from here on?
Thank you, Shireen. It's a delight to be part of this very prestigious gathering, wherein we have thoughts from all sectors of the industry and both the genders together, working towards a common goal. One thing that differentiates public sectors, to put in point, is, and we talked about pay parity to begin the conversation about how to bring equality in the workspaces for both men and women. In the public sector space, one thing is very clear. Everybody gets the same pay and gets the same raise. So that settles one part of the issue, which is...
And it's an important issue.
It's a very important issue. Yes. And I have seen that. In fact, I was reading Sheryl Sandberg, and it's a big issue in terms of even negotiations which women have to do in spaces to actually achieve and get what they truly deserve. Going back to the point as to where we are, what needs to be done, I think the one thing is, and if I specifically look at the engineering space, or I look at, there are many disciplines where the parity is already achieved. You look at medical sciences, you look at the legal space, you look at the financial space, IT space. There are good spaces where we have equal representation at all levels, as Mr. Dave also mentioned. But looking at particularly in the engineering space, I think it needs to attract a lot more talent. We need to plug leaky pipelines as we go along the career journey of women. Public sectors are putting in a lot of enablers in terms of policy. We heard the allocation of the percentage of our budget into women development through a lot of programs from various ministries. But to enable that, to put it into force, to actually needs commitment at leadership level, which is there. I'll give you some examples. There are companies in the public sector space who have all manned process plants, who have, like we have now, women in construction, which is not easy as a space to be in. So looking at all these aspects, looking at conscious policy creation, looking at continuous monitoring, making sure that step by step we grow up in the percentage, and make sure that we give spaces in leadership position to women. I think that would, in a holistic way, kind of move the needle towards steering their careers to higher decision-making processes.
So this is the good news, that at least as far as pay parity is concerned, the public sector has been able to achieve that. So we're hoping that the private sector takes notes from that. But Ashish, to the point that was being made both by Pooja as well as Vartika, India perhaps has some of the most progressive policies when we talk about women in the workforce, whether it's maternity leave, maternity benefits, or it is gender budgeting, as was just discussed. So capital is relatively less of a constraint today. Why do you believe then that we're still at that 18% number as opposed to the aspirational 30% number that we're hoping to get to by 2030?
No, thanks, Shireen. I think a lot of it has to do with the mindset of our leadership. I mean, the data is very clear that 18% of the 12 million employees in the top 2,000 companies are women. So it's only 2 million women. I think we have to make a pledge that I think the top 2,000 will probably have 18 million employees by 2030. And if we can get to 30%, that's 5.5 million women. That'll be a dramatic change. It's almost 3x in terms of number of women. And these are some of the best jobs, because these are the largest companies in India. I think that even though companies pay lip service to this, I don't think they work hard enough on this issue. Because in every sector, we see outliers, and we don't see companies making the effort to achieve what's already been achieved by outliers in India. So if you take, say, the banking sector, 26% of the banking sector, the workforce are women. But there are 2 banks in India already that have crossed 40%. And there are others that are stuck at 10%. Our neighboring Sri Lanka is at 45%. Vietnam's at 68%. I think we can easily get to 40%. As a sector, if the leadership is committed to it and really wants to make it happen. There are often excuses about women working in branches or feet on street. Yeah. That's the challenge. But there are banks that have actually shown that it's possible to make it happen. Similarly, if you look at the pharmaceutical sector, it's only 11% women. But there are pharma companies at 25% and there are others at 2%. So I think what Pooja and team have done is really looked at those outliers to dissect what they've been doing, to make those role models, and companies can actually speak to their peers. These champions, in a sense, are more than happy to share what they've done. And I think if what we need is leadership to sign on for concrete targets in 2030, So I, company X, I'm at 25%, I commit to get to 35 or 40%, share it with the board, and I have an action plan you disclose publicly. I think that's what will get us there eventually. And you, Shireen, have to help us to get those CEOs to sign on the dotted line.
So here's the backstory. This is something that we discussed and debated. Should we, as part of the charter, put down a number where we get people to commit to that particular number? And finally, we pulled back because we said that, look, these are things that will perhaps require board approval. These are things that people will have to take to different stakeholders within the organization. So we didn't want a situation where we ambush people, because this is really not about that. This is about getting people to voluntarily sign up and come on board. But this was a discussion that we had between the CNBC and the Udayati team on whether we should put a number down as part of the charter. And we're hoping to get there. We're hoping that this conversation will lead us there. But Prabha Narasimhan, let me come to you now. And you know, my fear today, what we're seeing happen globally, and I did address that in the remarks that I made early on, there's this talk about the tyranny of diversity and inclusion. Do you worry that we're likely to see a pullback, a retreat from some of these issues that require urgent intervention and action?
So thanks, Shireen. I think firstly, Shireen, the minute you combine diversity and inclusion together, I think the likelihood of pullback is very, very low. Because what that says is that we're going to get in people who are different, gender being one of the ways you can get in people who are different, and make sure that they feel included in an organization enough to be able to stay and progress. So I'm really glad that you combined the two words together, because the concern really is, and if I may, to your point, the concern on putting targets is that it signals, whether you mean it to signal or not, that you are willing to compromise on meritocracy. And I don't think there is any woman in this room or anywhere else who wants a suggestion that there is a willingness to compromise on meritocracy. I think the answer may be a little bit to the question is, as you get them in for interviews, for discussions, that the slate is balanced, and then let the best person win to get the job. And if I may, sorry, to Mr. Dave's point on, if I may say to the women in this room and beyond, there are many jobs that we've traditionally thought are not a great idea for women. And coming from an FMCG background, sales is one of them. Attracting women into sales actually is very, very difficult, because all said and done, it is a difficult job. But honestly, it is fantastic learning. And if you put yourself out there, the rewards that it gives you are tremendous. So if I could just urge the women in this room to take these challenges and take some of these leaps, it would really help as well.
No, I couldn't agree with you more, and I think that does deserve a big round of applause, because, you know, very, very often, because of the biases and because of the societal construct and patriarchy, let's call it what it is, women often abdicate spaces for fear or because it's not in their comfort zone. And I think it is time that we challenge some of those norms. It's time that we challenge some of those roles. Rajesh Jejurikar, you know, this is something that Mahindra & Mahindra has decided to prioritize. I know this right at the leadership level, from Anish to you, you are championing the idea of making the workforce much more diverse and inclusive. Explain to me what you've done that's working, and what are you setting targets for yourself, for instance? What are you going about addressing by way of culture to ensure that this changes?
Yeah. Thanks, Shireen, and great to be on this panel. And let me just build from where Prabha left off, and which was the last part of your question. And that's around targets. And, you know, that's something we've debated at every level, including at our board, and taken a very conscious call that we will not have targets. And we actually consulted with many women leaders in the organization, and every one of them felt that that's the worst thing we can do. Because no woman, like you said, wants to feel that they made it because there was a target or a quota. So, you know, every woman wants to get there on merit. It's the role of the organization to create enablers and facilitate the process. And that, I think, is the key leadership role. So, you know, while we have targets on so many other parameters, I think this is one area we've got to realize that there is a sensitivity and a softness and an emotion which needs to be addressed, and a commitment which has to come truly from within. And also a mindset, especially in the industry some of us operate in, that it's not something that can happen instantly and overnight. And so I'll just take a couple of minutes talking about things which are important, things which need focus. So, and I'm going to talk starting from the workforce, because, you know, when we talk about overall numbers as a nation by way of contribution of women to the workforce, getting women in manufacturing, which is really the core of our business, really is a very high priority, and that's where we are putting most of our focus on. So firstly, you know, manufacturing lines which we are creating, concepts like paint shop will have only women. You know, some of the assembly lines, we've identified some cells which will have 40–50% women. The critical thing here, firstly, is reaching out to villages around the plant and creating a perception of it being a safe workplace, because that is very important in the society in which they live. So the ability to transport them in and back. When women go back late at night, we have a system by which you know, the HR gets message that they've got dropped home safely. So, you know, there are multiple things, cameras around the plant. So really, you know, creating a very positive word of mouth that it's safe for women to be here. So that we think is a key enabler. The other one is working closely with the training institutes like ITI and many others to create, we have a program called Kabil, and we were associated with 2,000 institutions, which is skill building. So firstly, how do you create the desire, then the education, and then, of course, the retention. So that's at the entry level. As we go up the rest of the leadership hierarchy, and, you know, I think the key challenge has been women dropping out of workplace. Yeah. And which is where you spoke about the maternity policy. So we've introduced a maternity policy a year back, which gives a lot of flexibility to women. Supports them with allowances during that period of time. But really what they need is the time flexibility. And we give almost a window of 3 years with complete flexibility on timing. And the other program we've launched is something we call SOAR, which is, we just started, and that's not S-O-R-E, it's S-O-A-R, which is to attract women back who've taken a gap in their work careers. And then run a mentorship and training program to help them get back. So we're starting with 25 women we've just started who have had 5 years experience and taken a break of 18 months to 3 years and then want to come back. So I think we've got to address this at multiple levels, starting from the entry level. We often try to solve for this in industries at the leadership level, and I think that's not the right place to start. The leadership is to focus on how to make it happen.
Absolutely, and we do need to have a bottoms-up approach. I completely agree with you there, and then work your way to the top. But, you know, you're talking about safety, and I remember one of our panelists here on Future Female Forward had spoken about when they were setting up their manufacturing facility, and it was in the hinterlands in I think, Rajasthan somewhere, and they decided to do something which was innovative. They decided to call the mothers-in-law into the workspace to come and have a look at where their daughters-in-law were going to go to work. And once you got the buy-in from mothers-in-law, you actually saw the rate of women joining the workforce go up significantly. So, you know, you've really got to customize solutions. You've got to think out of the box, and you've got to think on your feet. Speaking about maternity and return to work, Amira Shah, let me come to you, because Amira has got 3 children, twins, and her 5-year-old just celebrated a birthday yesterday. So I want to understand from you, Amira, because this is a big challenge, especially when we talk about women opting out of the workforce. As someone who's gone through this yourself, as a leader, how do you shape policy? How do you shape decisions that will provide a facilitating, enabling environment to ensure that women don't find it easier to opt out?
You know, frankly, Shireen, it's very easy to opt out, because I think once you have children, there's a nice cocoon at home in which you feel very comfortable and happy and safe, and you don't feel the need to go out at all. And honestly, salute to the women who actually choose to say, you know what, I'm going to give it my all at work, I'm going to give it all my home, and I can actually do it all. And it's amazing, because it's such a hard thing to do and to balance. It's really incredible. But I think if we truly want to see transformational change in India, I think we don't need to look that far. We need to also borrow from other countries. And just to bring up the elephant in the room, right? First, the question is, why should we close the gap? That's the first question. Honestly, when I've been on the board of so many companies, when I bring this point up, sometimes people just say, but why? It's neither helping my business, there's no business case, it's not helping my P&L, it's not doing this, so why should I do it? And in the US, you talked about the tyranny of diversity. I mean, in the US, you see with the new president coming in, a lot of that is getting, going backwards, right? So it just tells you that corporates react to either carrot or stick. The idea of doing the right thing is not necessarily so common and so prevalent. So there was a sort of a stick at that point in the US. People were pushing for D&I. Now it's not there, so everyone's sort of going backwards. So in India, we got to decide, hey, are we going to use carrot or stick? Because something is needed. Because people alone just to do the right thing, here we may be preaching to the choir of the converted, but that may not be true for the rest of the country, even the top 2,000 businesses in the country. So in my mind, we really need to talk about transformational policy. If you look at Vietnam, for example, they've created some amazing incentive programs for corporates who are hiring more women, right? They've created different tax structures. Besides creating, like you talked about, workplace safety, they've created, manufacturing companies have created all-night work women shifts. So only women work at night in that shift. So whether the mother-in-law is comfortable or not, she knows that, hey, there's no other man there, my daughter or my daughter-in-law is safe. So I think there are some very fundamental things other countries have done. We don't have to reinvent the wheel. We can borrow those ideas and make it true for India. But I think the most important thing is, you have men in power today. Getting those men in power to identify with a problem which they don't feel today because they have not gone through it is difficult. It's difficult for them, it's difficult for the women. I think we need a carrot or stick. We need a push from government, or we need a pull, an incentive scheme to drive it till it becomes a habit. Nobody questions, that's at some point, men's arms used to be cut off when they made a mistake. Taj Mahal and guillotine and all of that. And in today's corporate world, that would be just ridiculous. But that was normal at the time. I mean, today, the fact that we're talking about women getting paid differently just seems like a ridiculous idea.
Yeah.
I mean, 20 years later, I'm assuming this is not going to be common practice.
Well, we certainly hope it won't be common practice. That's really